Okay, so let's start with the revision of GST in India and introduction. A very simple chapter, yet the base chapter of your syllabus. Let's go through it once quickly. Yes, so we all know GST came into picture on which date? It came into picture on 1st July 2017. It is made applicable to whole of India, including the state of Jammu and Kashmir. Although the law became applicable to Jammu and Kashmir from 8th July 2017, but as on date, the situation is GST law is applicable to whole of India. Right? So, when this GST came into picture, at that time we were required to do constitutional amendment because earlier constitution did not give dual powers. Okay, it did not give dual powers to the government to levy and collect the taxes. Earlier it was individual powers for respective tax, respective government was there. But now when they want to bring this GST, central as well as state needs the power to levy and collect the taxes. So for that, first we needed to do the amendment in the constitution. So first the constitution amendment was done, the bill was passed, then it got converted into an act, and only after that the GST came into picture. Right? Once GST came into picture, different laws were formed. That is, CGST Act was made, multiple SGST Acts were made, UTGST Act was made, IGST Act was made. Then after that, your GST compensation cess act came into picture, and all these things happen, right? When we talk about interstate transactions and when we talk about intrastate transactions, okay, because basically I'm hinting towards CGST, SGST, IGST, just to give you a broad overview. Whenever we are doing any interstate transaction, two different states, interstate transactions, IGST is applicable. IGST is levied and collected by the central government. Okay, IGST is levied and collected by the central government. Then central government give some share to the destination based state government. When we are doing any intra-state transaction, okay, within the state transaction, at that time CGST and SGST is applicable. If it is done between two union territories, then in that case, okay, if it is done between a union territory itself, same union territory, then in that case CGST and UTGST will be applicable. Right? Now UTGST will be applicable to which union territories? So as you already know, Delhi, Puducherry and Jammu Kashmir. Okay, these three are union territories, but for the purpose of GST, they have made their own state legislations. So they will be considered as state. So SGST acts will be made for them. And then the other union territories, that is your Chandigarh, Andaman and Nicobar Islands, Ladakh, Lakshadweep, Daman and Diu and Dadra and Nagar Haveli, and any other territory. These will be considered as union territory, and they will have to follow the UTGST. Right? This was all that we had studied in the basics. Okay, now how does this GST work? Okay, how does this GST work? How is it better? Why GST came into picture, etc. So we know that there were deficiencies in the old law, right? What were the deficiencies in the old law? First of all, for some goods and for some services, there was no clarity that whether VAT will be applicable or whether service tax will be applicable. In some cases, we ended up applying both. So that led to double taxation. Then secondly, your excise duty was applicable at the time of manufacture. After manufacturing, on the total amount, including excise duty, the VAT or CST was levied. So that was leading to tax on tax. Makes no sense, increases the cost, cascading effect, right? That was another problem. Then there were multiple, multiple taxes were there, like your purchase tax was there, then your entertainment luxury tax was there, and so on and so forth. So those all multiple taxes have been removed. Ultimately, it was leading to cost on that way. Then after that, your excise duty, central excise duty was not allowed to be set off against VAT, right? So because the revenue was going to two different governments, so that set off was not possible. Ultimately, the cost of the products used to increase, right? The ultimate burden was going on the consumer. Then your service sector, India's service sector was blooming, and service tax collection responsibility or powers were there only with the central government, which caused a discomfort for the state government. So that was basically a loss of revenue for the state government. So that was another problem. Then after that, your suppose if you're providing any services, okay, you have to pay service tax to the government for providing these services. If you have purchased some goods, okay, let's say I'm providing you teaching services. For that, if I have purchased some goods, while purchasing the goods, if I had paid VAT, okay, if I had paid VAT, then that VAT credit was not allowed to be set off against service tax. Again, two different governments. Service tax, central government. VAT was your state government, right? So next thing is CST problem, central sales tax problem. Central sales tax powers were there with the central government. VAT powers were there with the state government. CST, central government. VAT powers, state government. Okay. So whenever we were purchasing the goods from other state and we were selling it within the same state, at that time again credit problems used to arise because two different governments were there into picture. And lastly is fundamentally your CST itself was a big problem. Why? Because all the indirect taxes are destination based tax, whereas CST was origin based tax. That is, CST revenue will go to that government from where the goods originated. Okay, and now when they have brought, because of these deficiencies, now when they have brought this GST into picture, please understand GST is a destination based consumption tax. Okay, consumption tax, only when the goods or services are consumed, this tax is going to be applicable. Next thing, the final revenue will go to central government as well as the destination based state government. I hope I am very, very clear with this. Yes. So now with this GST thing, okay, now with this GST thing, whenever there is any value addition, okay, at every level, whenever there is any value addition, that much amount of the GST on that much amount is required to be paid at every stage. Okay. Nextly, whenever you are purchasing anything, whenever you are purchasing any goods or whenever you are availing any services, at that time, if you have paid any taxes, then you will be eligible for its credit. Eligible for credit means whenever later you are going to pay the taxes, while paying those taxes, you can take the credit of the taxes which have been already paid. Right? Ultimate burden is going to be on the final consumer. Okay, what we are doing is we are just collecting from the next person and paying it to the government. Collecting from the next person, paying it to the government. So ultimately, from whom we are going to collect? Ultimately, we are going to collect it from the consumer. And because of this ITC funda, because of this input tax credit funda, your there is no cascading effect of taxes at all. Right? Okay. Then after that, going to the next one, that is framework of GST. Okay, framework of GST. Everyone here. Now, within framework of GST, few important things that we need to know is, first of all, GST is a dual GST model. That is, powers are there with central government as well as state government to levy and collect the taxes. Okay, which all taxes have come into picture? Your IGST has come into picture in case of interstate supply, which is levied and collected by the central government and then shared with the state also. Then CGST and SGST will come into picture in case of intrastate supply. CGST and UTGST will come into picture in case of intra-union territory supply. Yes, and one more was GST compensation cess, which has come into picture for compensating the states, okay, on some luxury goods, on some demerit goods, on some special products, etc. Earlier, a big, huge amount of chunk of revenue used to go to the state governments in form of taxes. But now after GST has come into picture, can we say even central government has come in between to take the amount of taxes? Because of that, the losses have been suffered by the state government. The losses have been suffered by state government. Because of that, GST compensation cess was introduced, which is valid till 31st March 2026, where the central government is going to compensate the states with the help of this GST compensation cess. Okay, now next point, there is a concept called as classification of goods and services. That is, whenever like any particular product, goods or services are going to be taxed, okay, in that case we are first supposed to do the classification. For goods, the classification is done using HSN. For services, the classification is done using SAC, Service Accounting Code. Yes, and by the coding method, each and every goods and services have been given a distinguished number, and besides that particular goods or services, the rate of GST is written. We can simply go and search our product and find out what rate of GST is applicable on the sale. Yes, now only when your turnover under GST, only when your turnover exceeds a certain limit, only when it exceeds a certain limit, only then you are liable to get yourself registered under GST. Okay, so this registration point that we discussed, we are also going to have a separate registration chapter where we are going to discuss these things in detail. Whenever you are getting registered, you have got two options. Either you can register yourself as a composition supplier, or you can register as a regular supplier or regular taxpayer. Composition taxpayer, they say, is these are small taxpayer whose turnover is below certain limits, and they are simply required to pay an ad hoc percentage of tax on your turnover. Straight away a flat percentage is paid on your turnover, but where you are not going to get the ITC of the taxes that you have paid at the time of your purchases. So small businessmen can opt for this scheme called as composition scheme. If you don't want to opt for that, you can normally go under your regular scheme, right? Now, if you are there under GST, now there will be certain goods and certain services on which are totally exempted from GST. See, it will come under the purview of GST, but it will be exempted by way of notification. Exempted means there will be no GST applicable on the same, right? Then the next important point is about GST common portal. Okay, the OG website of GST, that is gst.gov.in. Now this website is maintained by GST network, okay, which is a section 8 company. This is going to be a major interface between the user and the government. Means whenever I want to file any returns, etc., I will go to gst.gov.in and I will file the returns. Okay, so what is the main purpose of this website? The main purpose of this website is whenever I want to get myself registered, I will go to this website. Whenever I want to pay any taxes, I will go to this particular website. Whenever I want to file any returns, I will go to this particular website. Okay, for government, how is this particular website helpful? Whenever they want to find out about my profile, they can go to this particular website. When they want to do that sharing of IGST revenue, that can be done on the back end. Okay, whenever they want to check the MIS reports, like of any particular taxpayer or any data they want to check, they can go on this particular website. That's how helpful this particular website is. Okay, now either I can go on this particular website and file the returns and make the payments and all those things, or alternatively I can even go to GSPs, GST Suvidha providers, which are the softwares or which are the application providers. I can even file the returns on their application or their software, and then they further upload the data on the GST portal. So basically this GSPs, GST Suvidha providers, are coming between the taxpayer and the website, right? And for this purpose, the GSPs can take help from ASPs, application service providers. I hope I am very, very clear with this. Yes. Next, they are talking about the compensation cess. What is this compensation cess talking about? Just now we discussed luxury demerit products. The states were suffering the losses, so they decided to implement this GST compensation cess on certain products, not all the products, on certain products, where we are going to compensate the states for the loss that they have suffered because of implementation of GST. As of now, this is going to be there till 31st March 2026. Yes, next one is GST on goods and services. Is it applicable on all goods and services? The answer is yes, it is totally applicable on each and every goods and services unless something is totally removed. Okay, now first thing, alcoholic liquor for human consumption. Okay, alcoholic liquor for human consumption is totally outside the ambit of GST. Okay, no GST, but if GST is not applicable, then old laws are applicable. Ma'am, what are the old laws? So on that, state excise duty will be applicable at the time of manufacturing, and VAT or CST will be applicable at the time of sale. Okay, then when we go to your petroleum crude, high speed diesel, then your motor spirits, then your aviation turbine fuel, natural gas, these 5 products, on that also as of now GST is not applicable. Okay, but it will be applicable from the day which will be recommended by the GST council. Alcoholic liquor totally outside the purview. This 5 products, on that GST will be applicable right from the day when it is recommended and by the GST council and accepted by the central government and state government. Okay, till that time central excise duty will be applicable and VAT CST will be applicable on its sale. Okay, then 2 more special category of products. Tobacco. On tobacco, GST is applicable, along with GST central excise duty is applicable. Okay, opium, Indian hemp, narcotic drugs, etc. Again, GST is applicable, but along with GST, state excise duty is also applicable. Bad products, more amount of tax, right? Now, when GST came into picture, can we say when this GST came into picture, old laws were almost gone, except for few products that we studied now. Apart from that, old laws are totally gone. Means we cannot say on let's say I am purchasing AC. Okay, let's say I am purchasing AC. At that on that now excise duty, VAT, CST will not be applicable. Now only GST will be applicable when I am purchasing it. Right. So can we say old taxes have got subsumed under GST? Which taxes have got subsumed under GST? Your excise duty is gone. Then your countervailing CVD is gone. Special CVD is gone. Your VAT is gone. Your CST is gone. Your service tax is gone. Your purchase tax is gone. Tax on lottery betting gambling is gone. Your entry tax is gone. The surcharge and cess which were there, that is gone. Entertainment tax by state is gone. Entertainment tax by local authority is still there. Entertainment tax by state is gone, right? Luxury taxes, taxes on advertisement, etc. These are totally subsumed under GST, and a new law, that is GST, has come into picture, right? Okay. Then after that, we discussed about utilization of ITC and seamless flow of credit. In seamless flow of credit, we had basically done the numerical question. What we discussed there was, whenever there is a particular transaction happening, let's say first there is an intrastate supply that is happening. Okay, in case of intrastate, we have to pay CGST and SGST. You pay it to the government. Once you have paid it to the government, credit is available to the next person. Right, whoever has borne it, the credit will be available to that person. Okay, further when the transaction is done, any other type of tax is payable when the product is further sold. You can use the ITC of the ITC of the taxes which has been already paid to the government. Okay, so just try this seamless flow of credit question once. Okay, now whenever you have got the credit available, whenever you have got the ITC available, IGST credit can be used first for IGST liability, for paying the IGST liability. Then if you still have credit left, it can be used for CGST, SGST, no preference, no sequence. Whatever you want to, however you want to use, you can use. If you have got CGST credit available for you, it can be used only for CGST liability, then only for IGST liability, not for SGST. Similarly, for SGST credit, first use it for SGST liability. If still left, use it for IGST liability. Cannot be used for CGST liability at all. Manageable till here? Yes, this is what we had studied in the framework part. Now going on to the last part of the chapter, which was talking about the constitutional provisions. So I'll just take you through these constitutional provisions. What did we do there? In constitutional provisions, first thing that they told in article number 265 was, Constitution says that no tax can be levied without the authority of law. Means till the time the law does not allow you, you cannot levy any sort of taxes. That was the reason. That was the reason we did amendment in the constitution. We did changes in the constitution because we wanted to give powers to both central government as well as state government to levy and collect the taxes, right? Then next article number 245 simply said that Parliament, whenever it is making any laws, it will be applicable to whole of India. Whenever state legislature is making any law, it will be applicable to that particular state, right? Then we already know that in India we have got 3 lists. Okay, first is union list, second is state list, third is concurrent list. Union list contains those matters on which decision making can be done solely exclusively by the Parliament. Okay, state list has those matters on which the decision making can be done only by the state government, and concurrent list is such a list where the powers are there with central government as well as state government. So GST is going to fall under the concurrent list. Right now, why constitutional amendment is required, we have already discussed about the same. Please remember when under GST, all the decisions will be taken by central government plus state government, dual powers, right? But matters relating to IGST and matters relating to place of supply, concept will come later. Matters relating to IGST and matters relating to place of supply will be exclusively dealt by central government only. Okay, please remember that. Then going on to the next one, that is GST Council. Okay, GST Council, very, very important thing. GST Council, article number 279A. Okay, your constitution, article number 279 ने which talks about constitution of the GST Council, that gave the powers to the President of India that please form a GST Council. We need recommendations. We should know at least where should we do the changes, what changes we should bring, or what amendments we should do in the law, etc. So that will be recommended by the GST Council to the central government and state government. Right now, who all are going to sit in this GST Council? Chairperson is going to be our Honorable Union Finance Minister. Then we are going to have one member, that is Union Minister of the State, Union Minister of the State, who is in charge of revenue or finance. One person from the central government who is the Union Minister of all the states. And then we are going to have ministers from respective states who are going to be in charge of finance or taxation. Okay, every state is going to nominate such members. These many people, Union Minister of the state, and then ministers from various states. These many people are going to come and sit in the GST Council. Okay, what will be their work? To give recommendations. To give recommendations regarding what? Regarding what should be the rates of taxes, regarding what should come under GST, what should be exempted from GST, to make the model bylaws, okay, draft of the GST Act, etc. Then after that, to make provisions for special category states like Assam, Manipur, Mizoram, Nagaland, all those states. Then to decide the rates of GST, what should be applicable. Then to recommend the date from when the 5 petroleum products will come into picture. All those things will be recommended by the GST Council to the central government and the state government, and then they can take the decision. Whenever we are calling the meeting of GST Council, there has to be a proper quorum. At least 50% of the members should be present for a proper meeting. Once a proper meeting is conducted, and then if we want to take any decision in that GST Council meeting, then we should be having 75% weighted average votes. Okay, ma'am, weighted average means to whom we are supposed to give the weights? To central government weight, we are going to give 1/3 weight. To state government, we are going to give 2/3 weights. Only if we get a weighted average 75% voting, then only we can take the decision in that GST Council. And if later, if we want to do any changes in the GST Council, whatever we studied till here was there under article number 279A. Now if we want to do any changes in the GST Council, for that article 368 was inserted, that says that if we want to do any changes in the GST Council, first 2/3 majority from Lok Sabha should be taken. Then 2/3 majority from Rajya Sabha should be taken, and 50% of all the states in India should say yes for that. 2/3 Lok Sabha, 2/3 Rajya Sabha, and half of the states should agree, and only then we can do any sort of changes in the GST Council. I hope I am very, very clear with this. Yes, this was an overview. This you can use it on your last day for revision. Okay, thank you so much. Bye-bye. Okay, so let's start with the next chapter under GST, that is supply under GST. Yes, first of all, what is the purpose of this chapter? Purpose of this chapter is if a particular transaction is a supply. Okay, if a particular transaction is a supply, then only GST leviability will come into picture. Otherwise, if the transaction does not fit into the meaning of the term supply, then there cannot be any GST. Yes, so that important this particular chapter is to understand if it is a supply or it is not a supply. Right now, in the definitions, a few important definitions that we need to do is goods definition and services definition. First of all, goods means what? Goods means any type of movable property, but other than money and securities. Money and securities is excluded from goods definition also. It is excluded from the services definition also. But goods definition includes actionable claims, growing crops, grass, etc., or anything that is attached to the land which is going to be severed before supply. Right? So mainly any type of movable property will be included, actionable claim will be included, but money and securities will be excluded from the term called as goods. Okay, then anything which is not goods, okay, anything which is not goods, that is going to come under the term called as services. But from services also, the term money and securities have been excluded. So if there is any transaction happening in money or securities, example dealing of currency or dealing in securities, on that particular transaction GST will not come into picture. GST is not applicable. But if there is any transaction, if there is any such transaction happening relating to use of money for which a separate consideration has been charged, then that will come under the term called as services. Example, let's say there is exchange of currency that is happening. Okay, there will be no GST on the total amount of currency that is being exchanged, but currency exchanger would have charged commission from you for that. On that particular commission, there will be GST applicable, and that will be considered as services, right? So this was your mainly the definition of goods and services. And yes, one more thing, when the holding company is holding some shares in the subsidiary company, okay, holding company is doing the activity of holding the shares of a subsidiary company, then in that case also GST is not applicable, because again securities are totally outside the purview of GST. I hope this much is manageable. Yes. Then after that, another important thing that you need to remember is consideration definition. Consideration is anything in money or monetary value of any act or forbearance of any act. Okay, anything in money or money's worth will be coming under the term called as consideration. But any subsidy that you are going to receive from central government or state government, that is not going to be the consideration. And secondly, if there is any deposit, okay, let's say there is a refundable deposit that I have received, and I have to pay it back to that particular person, then even this is not a consideration unless I am going to forfeit that deposit. Okay, if I am going to forfeit that deposit, or if it is a non-refundable deposit, then you can call it as a consideration. Otherwise, you cannot call it as a consideration, right? Person definition, normal, you can manage it. See, this is the revision, so we have to do the most important things, right? Normally, recipient, who will be considered as a recipient? The most important person will be the supplier, and the other person will be the recipient. So if there is any consideration involved in the transaction, the person who is liable to pay the consideration will be called as a recipient. If there is no consideration, then the person to whom the goods are supplied or the person to whom the services are rendered, that person will be considered as a recipient, right? Then another one, this is important, this is something that you need to do, types of supply. Okay, this you have to remember till the end of your syllabus, right? Types of supply. Now there will be two types of supply. One is your taxable supply. Taxable supply is something on which GST is leviable. Okay, this includes your zero rated supply also. Example of zero rated supply is export. Okay, even that comes under the term called as taxable supply. And the other one, okay, please don't make the mistake of writing it as non-taxable supply. This will be called as exempt supply. Within exempt supply, there are three types. First one is nil rated. Nil rated means besides which 0% rate is returned. Next one is wholly exempted supply, that is wholly exempted by way of a notification of the government. And last one is non-taxable supply. Non-taxable supply, that is something which is outside GST. Example, alcoholic liquor for human consumption, 5 petroleum products, etc. Those things will come under non-taxable supply. Okay, so these are your types of supply. First one, taxable supply, on which GST will come. Okay, and the next one is your exempt supply. Exempt supply is a very broad term. Exempt supply has three things within it. One is nil rated, then your wholly exempt, and then your non-taxable supply, right? Okay, then after that, money definition, normal definition, only one thing to be remembered here is your collectible coins, etc. The currency which has got numismatic value, the currency which is held for numismatic value. Okay, it has some history associated with it, or you are very fond of collecting those currency notes or coins, that will be considered as, that is nothing but currency held for numismatic value. That is excluded. Okay, that is excluded from the term called as money. So that will be included in the term called as goods and services, right? Another important definition is the definition of family, because you're going to use it extensively. Definition of family here is, in my family, my spouse and my children will be included. Okay, compulsorily they will be included, whether dependent, whether independent, doesn't matter. And apart from that, my brother, my sister, my parents and my grandparents. Brother, sister, parents, grandparents, these people will be included. Okay, only if they are wholly or mainly dependent on me. If they are wholly or mainly dependent on me, then in that case, they will be considered as my family. Right? Ma'am, why are we studying the definition of family? Because later we are going to study the definition of related person. And in related person, family member is included. That's the reason we are studying the meaning of the term family. Right? Okay, another thing. Do you recollect we had studied something about actionable claim? Actionable claim was included in the term called as goods. Okay, now one of the type of actionable claim is your specified actionable claim. Okay, specified actionable claim. 6 things are included in the specified actionable claim. That is betting, casinos, lottery, gambling, horse racing and online money gaming. On these 6 activities, GST is going to be applicable. This we will see further in the chapter. Are you clear with this? Okay, this is not the meaning of actionable claim. These 6 things are going to be called as specified actionable claims. Right? Okay, then the next thing that we are required to do is related persons. Okay, now related persons are going to include whom? Related persons will include your employer-employee. It will include your family member. Okay, if one company is controlling the other company, then these 2 companies will be called as related person. If I am controlling 2 companies, then these 2 companies will be called as related person. If I am holding more than or equal to 25% of the shares in 2 companies, okay, 25 year also, at least 25 year also, at least 25 year also, these 2 companies will be called as related persons, right? Then same family members will be called as related person. If I have appointed you as my sole agent means you are working only for me, then in that case we both, principal and the sole agent, will be considered as related party. Business partners, okay, in a partnership firm there are partners, in a LLP there are partners. These people will be considered as related persons. I hope I am very clear with this. Yes. Okay. Then after that, going on to the next term, that is distinct persons. Okay. Now in GST, you should be already knowing that state-wise registration is required. Okay. Let's say there is a person. Okay. There is a person who is having his PAN, permanent account number. GST registration is PAN based. Okay. There is one person only having one PAN, but he is having 2 offices in 2 different states. Let's say one office is in Maharashtra, another office is in Gujarat. Then he will have to take, if he is doing taxable supply from these 2 states, then in that case he will have to take GST registration at both the places. So can we say he is having one PAN, but he will be having 2 GST registration number? So these 2 offices will be called as what? These 2 offices will be called as distinct persons. Okay, these 2 offices will be called as distinct persons. Similarly, let's say I have got one PAN and I have got one office in Mumbai, another office in Pune. Both of them are there in Maharashtra only. Then I have got 2 options. Either I can take one registration. Okay, if there is only one registration, then one PAN, one GST registration, no concept of distinct persons. But if I want to take one separate registration for Mumbai office, one separate GST registration for Pune office, GST department allows you to do so. So again, can we say here also, within one state itself, you have got 2 GST registration numbers or 2 registered offices or 2 GST registered offices. So these 2 offices will be called as what? These 2 offices will be called as distinct persons. I hope I am very clear with this. Yes. Okay, similarly, there is a concept of establishment of distinct persons. Okay, let's say in Maharashtra, I have got a particular business. Okay, I have taken registration in the state of Maharashtra. I have got GST number for Maharashtra. Okay, and I am doing some taxable business here. Means, let's say I am providing teaching services from Maharashtra. Okay, so I have to get myself registered in Maharashtra. In Tamil Nadu, let's say I want to start a petrol pump. Okay, I am going to deal in petroleum products, etc., on which GST is not there. So can I say I have one office in Maharashtra, I have another business, same person having one business in Maharashtra, one business in Tamil Nadu. But can we say Maharashtra is doing taxable supply, whereas Tamil Nadu is doing an exempt supply? So Tamil Nadu office is not required to get itself registered. So these 2 persons, can we say both of them are having same PAN? These 2 will be called as what? One is registered, one is unregistered. These 2 offices will be called as what? These 2 offices will be called as establishment of distinct persons. Okay, in distinct persons, there were 2 offices, 2 GST registration number. In establishment of distinct persons, one registered office and one unregistered under GST. I hope I am clear now, everyone. Yes. So that was what? That was nothing but your basic definitions and the introduction to the chapter. Now we have to do 2 sections in the chapter. One is section number 7 and the other one is section number 8. Okay, what is section number 7 talking about? Section number 7 basically talks about supply. Okay, 4 sections are included in the definition of supply. One is 7.1a. Can you see this on the board? I have summarized it already. 7.1a, 7.1AA, 7.1b and 7.1c. Whatever transaction falls under these 4 sections, that will be considered as a supply. Okay, if it is considered as a supply, then can we say GST applicability will come into picture? Okay, now let's start with one section. First of all, section number 71A. 71A says that there should be some supply of goods and services. Some supply, some sale, transfer, barter, exchange, lease, rentals, disposal. There should be something like that happening of goods or services for some consideration, something in return for some consideration, and that should be done in the course or furtherance of business. Means you are doing it for your business. See, in business there can be profit, there can be loss, there can be infrequent business, doesn't matter, it is still a business, right? So if there is any supply of goods or services happening for consideration in return, and I am doing this in the course or furtherance of business, then such a transaction will be considered as a supply as per section number 71A. Okay, these are the three parameters. First one supply, second one consideration, third one business. These three parameters must be met, then you can call that particular transaction as a supply as per section number 71A. Okay, now ma'am, what about donations? Donations which are received by charitable trust. Okay, now those donations, if there is anything in return that the charitable trust is required to do. See, normally when we give the donation, we do not expect anything in return. So that is not a supply. Okay, but if you are doing donation to the charitable trust and charitable trust is giving you something in return, example, it is promoting your business, it is putting a hoarding of your business outside the trust premises, etc., then there is something in return, then there is a consideration present. In such a case, GST will become applicable. We have done questions on this. Please refer to the same, right? Similarly, when you are sending, let's say you are an artist, okay, and you are making some paintings and you are sending it for an exhibition. Sending, not selling. Sending it for an exhibition. Will you get any consideration at the time of sending it for the exhibition? No. When will you get the consideration? You will get the consideration when that particular product is sold, when that particular painting is sold. So today there is no consideration. So today there will be no supply. If today there is no supply, there will be no GST applicable on the same. Right? Similarly, when the insurance company gives you a no claim bonus, because there was no claim against the policy, the insurance company will give you no claim bonus. Okay. Now on that no claim bonus, there is no GST applicable. Okay. It's not a contract. It's not a contract between you and the insurance company that if you refrain from claiming the amount, we will give you the no claim bonus. There is no such contract. Okay, it is just like an agreed discount between you and the insurance company. So whenever your no claim bonus is deducted from your premium, okay, let's say the premium on your two-wheeler, premium for your two-wheeler is equal to 1000 rupees and the company has given you no claim bonus of, let's say, 100 rupees. GST will be applicable on the net amount of 900 rupees. Okay, then one new circular was inserted, that was salvage in case of damage caused to the motor vehicle. Okay, let's say your motor vehicle has been damaged and now you go to the insurance company to claim certain amount. Okay, one option is that there was a particular part of your motor vehicle which is damaged, okay, but which can still be sold in salvage. So let's say if you tell to the insurance company that, sir, you please give me the claim, this part I will sell it in the salvage, I will sell it to the scrap dealer, etc. So insurance company will deduct the value of that salvage from the claim amount and then it will give it to you, because anyway you are going to earn from the salvage now. So here the insurance company is no more holding the salvage. You are having the salvage with you. Insurance company is not having the salvage. So there is no GST liability of the insurance company on the salvage, because it is not going to sell it. It is the customer who is going to sell it. Right? Another case is you tell to the insurance company, keep that damaged part. If you want to sell, you sell. So insurance company will give you the entire amount of insurance claim and then the insurance company will sell that salvage part to a scrap dealer. When the insurance company is selling that salvage part to the scrap dealer, on that the responsibility to discharge the GST is of the insurance company. Right? Okay. Then after that, this was all about, till here whatever we did, it was all about section number 71A. Right? Now going on to section number 71AA. Let's say there is any particular entity, okay, not an individual. Let's say there is any particular entity who is providing or who is doing any activity or transaction with its members. Example, joint venture, doing any activity or doing any transaction with its members, or a society doing some transaction with its members for some consideration. Okay, for some consideration. Then in that case, they are telling that even though these members belong to this entity, still these two people will be considered as two separate persons and GST will be applicable on the same, provided there is a consideration involved. Are you understanding this? Yes. Let's say a cooperative society is providing the service of depositing the electricity bill for the members by charging a small consideration of 5 rupees per bill, etc. Can we say society is providing service to its members, for which members are going to pay a consideration of 5 rupees? On that, GST will be applicable. The transaction will be considered as a supply. Right? That was section number 71AA. Okay, so 71AA, activity or transaction done by any person other than individual with its members, or vice versa, or members are doing the transaction with its members for some consideration, then the transaction will be considered as a supply. Right? Then going on to the next section, very nice section, important section, section number 71B. Section 71B talks about specific transaction, that is importation of services. Okay, importation of services. If you are importing any services, obviously from outside India, for some consideration, importing services, architect services, legal services, any such services, if you are importing from outside India and you are paying the consideration. Okay, now these services which you are importing, this may or may not be in the course or furtherance of business. Okay, whether or not in the course or furtherance of business. Okay, means you can import the services for your personal purpose also or for your business purpose also. Still on that, the recipient will be responsible to pay the taxes, because the supplier is sitting outside India. He will not come to India to pay the GST. So here the recipient, the importer of service, will be responsible to pay the GST to the government. Right? And this transaction, even if it is not in the course or furtherance of business, still it will be considered as a supply. Right? And the last one, that is section number 71C, very, very important. Section number 71C talks about deemed supply, assumed. Okay, assumed supply, even if there is no consideration. See, whatever 3 sections we did till now, in all the 3 sections above, there was consideration involved. Can you see this? I am highlighting. Consideration was involved. Consideration was involved. Here also consideration was involved. But in section number 71C, even if there is no consideration, okay, the transaction is done without consideration, then too the transaction is considered as deemed supply. Now, along with section number 71C, we have to read schedule number 1. Okay, we have to read schedule number 1. Within schedule number 1, we are required to do 4 paras. 4 transactions are going to be there. Now, what is para number 1? Try to recollect. You have already studied it once before. What is para number 1 telling? If there is any permanent transfer or disposal of business assets. Okay, there is some asset which you have been using it for business. Now that you are selling it, that you are permanently transferring it for zero consideration, for free. Let's say I have an AC in my office. I am selling it to my friend for free. For free. So you will say, ma'am, ideally it is for free, so there should be no GST applicable. But they are telling that if at the time of purchasing of this AC, if I had availed ITC, okay, if I had availed the benefit of input tax credit, okay, means government gave me the benefit of input tax credit, then today at the time of sale, even if it is for zero consideration, the transaction will be considered as a supply and you will have to pay the GST. At that time, government gave you the benefit, na? So now when you are selling it, government will take back that benefit. You will be required to pay the taxes on the same. But ma'am, zero consideration, on what value should we pay the taxes? That we will study later in the value of supply chapter. Right? Then after that, para number 2. What does para number 2 talk about? Para number 2 talks about a very, very important again. If there is any supply of goods or services, any supply of goods or services between related persons, between distinct persons, or between establishment of distinct person. Okay, if there is any supply of goods or services between related persons, distinct persons, or establishment of distinct persons, again for zero consideration, whatever we are doing, zero consideration, but in the course or furtherance of business. Okay, then in that case, even if the transaction is done for zero consideration, that transaction will be considered as a supply. Okay, let's say there are 2 related persons. They are doing some transaction for free. They are doing some business transaction for free. Government is not going to spare you. GST will be applicable on the same. Right? Then the next one, para number 3. Okay, let's say if the principal wants to sell any particular goods to a customer, and the principal is selling the goods through an agent. Okay, or let's say principal wants to purchase some goods from the supplier, but principal is purchasing the goods through an agent. Okay, there is a middleman in between, and here if the invoice is issued in the name of agent, example, principal wanted to sell the goods to the customer, so principal gave the goods to the agent, and agent is going to sell it to the customer. And if agent is giving his invoice to the customer, okay, or here the supplier is giving the invoice in the name of agent, means can we say this becomes actually two transactions? First, principal is selling it to agent, and then agent is selling to the customer. Similarly, supplier is selling it to the agent, and then agent is selling it to the principal. So here they are telling that if such a thing happens, okay, if invoice is issued in the name of agent, then the transaction between principal and agent, even if it is for zero consideration, even that will be considered as a supply. Similarly, here the transaction between agent and principal will still be considered as a supply, provided you have to check what? Provided we have to check that the invoice is issued in whose name. See, if principal is directly issuing an invoice to the customer, or supplier is directly issuing an invoice to the principal, then this section not applicable. But if invoice is issued in the name of agent, then even the transaction between principal and agent will be considered as a deemed supply of goods. Right? Okay. The transaction between principal and agent will be considered as a supply. And the last one is para number 4. Okay, again para number 4 is important, which talks about importation of services. Ma'am, just now also we studied about importation of services, na? Yes, we studied in 7.1b. 7.1b was talking about importation of services for a consideration, but 7.1c para 4 is going to talk about importation of services for zero consideration in the course or furtherance of business. From whom? From related persons or any of my establishment outside India. Let's say my branch office is outside India. Let's say my head office is outside India. From there or from your related person, you are importing some services. You are not paying anything, but you are using it for business. Then in that case, this will be considered as a deemed supply. Okay, you have questions. You have many questions coming on this. See, whenever you get a question, if you get a question on importation of services and if you feel like confused, first see whether consideration is involved or consideration is not involved. If involved, check for section 7.1b. If not involved, check for para number 4. I hope I am very, very clear with this. Yes. Okay. So this was all about the 4 inclusions. Okay, this was all about the 4 inclusions in supply. First was section number 7.1a, then 7.1AA, that joint venture example I gave you, then 7.1b, importation of services for a consideration, and then 7.1c, which was talking about deemed supply in case of no consideration. I hope I am very, very clear till here, everyone. Yes. Okay. Okay. So 7.1b done. 7.1c, para 1, para 2, para 3 and para 4 also done. Okay. Now a few important things in between that I want to tell you. Employer and employee. Okay. Now can we say even employer and employee are related person? Yes, can we say even employer and employee are related persons? So now in that case, what if employee is providing services and employer is paying him salary, allowances, perquisites? Can we say that is a service in relation to employment? Yes, but even this is supply of service between related person. So maybe your section 7 can become applicable there and GST will become applicable. But they say that this will be specifically excluded from the term of supply when we do schedule number 3. Okay, anything given to the employee in course of employment will be totally excluded. Okay, no GST will ever come. Imagine GST on salary also. Gone. Right? So there will be no GST on the same. But one exception there is if the employer, okay, this one very, very important. If the employer gives any gifts to the employee, okay, up to 50,000 per employee in a financial year, then no GST on that. But if the value of gift exceeds rupees 50,000 in a financial year to one employee, then GST will be applicable on the entire amount. Okay, gifts is an exception. Please remember, up to 50,000, no GST. Exceeding 50,000, GST will be applicable. Very clear with this? Okay. Okay. Then after that, a few clarification on sale promotion scheme. What if we are giving some free samples and free gifts to our customers with who are unrelated? If customers are unrelated, then they will not fall, and we are giving it for free, zero consideration. That will not fall under schedule number 1 because these are unrelated persons, right? So on that there will be no GST applicable. Okay, then you must have heard about BOGO schemes, buy one get one free schemes. You must have heard about it. So on BOGO, it looks free. Okay, but it is not actually free because you are paying some consideration. Consideration is paid. Instead of one product, they are giving you 2 products. So on that, normal GST will become applicable. Right? Okay, then going on to the next section. Next section is talking about section number 7.1a. 7.1a says that these transactions are supply. Okay, whatever is listed here, these are supply. Now you just need to bifurcate whether it is supply of goods or whether it is supply of services. Okay, so in short, let me tell you, whenever there is any transfer in title, okay, whenever there is any transfer in title, then in that case, it will be considered as supply of goods. I am selling this AC remote to you. Sale, na? So supply of goods. I am giving this AC remote to you for using it. Then this will be considered as supply of services. Hire purchase type of a transaction where I am giving you the goods, but the ownership will come to you, but at a later date. Doesn't matter. Still, it will be considered as supply of goods. Okay, lease, tenancy, etc. will be considered as supply of services. Job work services, where you are giving a particular raw material and you are telling to the job worker to do some activity on it. Even that will be considered as supply of services. See, even if the job worker is going to use some petty raw materials, etc., but the main thing there is the service that he is doing on your raw material. So even that will be considered as supply of services. Okay, if you are selling off your business assets, I'm selling off my AC, I'm selling off my system. Okay, then in that case, again, it will be considered as goods. Okay, office goods, goods, I'm using it for I've given it to someone to use it. Office assets or office assets, I've put it for my private use. It will be considered as supply of services. I hope I'm very, very clear with this. Yes, renting of an immovable property, renting of a house, renting of a commercial property. Again, it will be considered as supply of services. Along with that, tenancy premium. Okay, if you are paying any tenancy premium to the past tenant or to the owner, then even that is considered at par with rent, and on that also GST will be applicable and it will be considered as supply of services. Okay, then construction activity. Okay, construction activity will be considered as supply of services. But if there is any construction of an immovable property happening and entire consideration is received by the builder after the completion certificate. Okay, imagine you're a builder, you're building it. During construction, some people book the flats, book the houses, etc. At that time, if they are paying you any consideration, on that GST will be applicable. Okay, let's say your building is ready. Okay, people have started staying in it, or you have received the completion certificate. Then someone comes to you to book the house. Then it is no more a construction service, then it becomes sale of immovable property. Then there will be no GST applicable. Okay, but provided entire consideration is paid after. Okay, entire consideration is paid after the building is ready. Are you clear with this? Yes? Okay. Similarly, if you are paying any extra location charges, okay, if you are paying any preferential location charges for a good view for your house property, then again it will be taxable. Okay, if you are paying it at the time of that under construction property only above, then it will be taxable as supply of services. Suppose you are paying it after the property is ready. If you have paid the entire consideration after the property is ready, then again no GST will be applicable. So basically this is bundled. Okay, this is bundled along with the main property. Then after that, what about use of patent, use of copyright? You have given your patent or copyright to someone else to use it. Then it will be considered as supply of services. What if someone is tolerating your act and you're giving some consideration? Supply of service. What if you are telling someone to do something for which you're going to pay a consideration? Again, it will be considered as supply of service. What if someone is customizing a software for you? Again, it will be considered as supply of service. Right? Okay. Then after that, what about works contract? Okay, what about works contract? Works contract is nothing but again any contract for building, construction, fabrication, modification, improvement, repairs, etc. of any immovable property. If someone is doing this particular work, then we can call it as a works contract, and works contract always involves goods plus services. So ma'am, what should we consider? Should we consider it as supply of goods or should we consider it as supply of services? So that will be considered as supply of services. They have clarified it, right? And the last one, that is restaurant services. Restaurant was a problem under the old law also, because should we consider it as goods or services? So now GST is very clear that it will be considered as supply of services. Okay, even if food is involved, still it will be considered as supply of services, but exclude alcoholic liquor for human consumption. If you go to any restaurant for and if you have alcohol there, then in that case you will be getting two different invoices, one for food, one for alcohol. On alcohol there will be no GST, that you already know now, right? Okay, so these were the things that we had studied, right? Then after that, this was with section number. This was your section number 71A. Okay, whatever we did here was section number 71A. 71A was talking about your classification of a supply into supply of goods or services, right? Then after that, going on to the next part. Okay, next part is two transactions which the government has notified by way of a notification. First one, any activities or transaction done by whom? Any activities or transaction done by central government, state government, local authority, which was actually whose responsibility? Which was the responsibility of panchayat or municipality. Okay, but that work has been done by central government, state government, local authority, for which they are going to get the consideration. On that there will be no GST applicable. Okay, that on that there will be no GST applicable. Please remember that. This we are doing from section number 7.2. Okay, this we are doing from section number 7.2. 7.2 is going to talk about your non-supplies. Okay, I'll just show it to you. Section number 7.2 and schedule number 3. Okay, this is going to talk about your negative list, non-supplies. There 10 transactions are going to be there that we will come back to. Along with that, we have to do 2 more transactions. What are these transactions talking about? First one, any activity or transaction done by central government, state government, local authority, which was whose function? Which was the function of municipality or panchayat. Then there will be, this is not considered as a supply. And secondly, if any state government is granting any liquor license, okay, state government is providing any liquor license to any person for starting a liquor shop, etc., for which they charge license fee, on that also there will be no GST applicable. This will not be considered as supply of goods or services. This point is applicable only for liquor license, not any other license given by the state government. So these are the 2 extra points. These are the 2 extra points that you have to understand, right? Acha, 2 more points which the government has, the CBIC has clarified by way of a circular, that if there is any interstate movement of any vehicle, okay, interstate movement of any vehicle, that is from one distinct person to another distinct person. Okay, if there is any movement of vehicle, maybe they are moving for transporting goods, for transporting passengers, or the vehicle is moving for doing repairs and maintenance, etc., then they are telling that this should not be considered as supply of that vehicle. Okay, it should not be, see, the vehicle is just getting transported from one place to another, it will come back to its own place. So this should not be considered as supply of vehicle. We are not selling the vehicle, we are sending the vehicle to the other place, right? Similarly, at the time of movement, there can be some spare parts, etc., lying within the vehicle. So even that is getting transported from one place to another. That does not mean there is going to be GST on the value of those spare parts, etc., right? So these were the total 4 transactions extra of notifications and circulars, which will not be considered as supply. Now coming on to the most important part again is section number 7.2 read with schedule number 3. See, section number 7.1 was talking about what? 7.1A was talking about supply. Okay, 7.1A, 7.1AA, 7.1B, 7.1C was talking about supply. Those things will be included. Then there we also did schedule number 1. Okay, then we went to schedule number 2. Schedule number 2 simply did the bifurcation between supply of goods and supply of services. And now we are coming on to schedule number 3, which says following transactions. 10 transactions we are going to do here. These 10 transactions will neither be considered as supply of goods nor it will be considered as supply of services. First one, any services provided by employee to the employer in the course of employment. Okay, in the course of employment, not in any other capacity, but in the course of employment, then there will be no GST applicable on the same. Okay, there will be no GST applicable on the same. Example, perquisites given, allowances given, etc. No GST. Gifts, do you recollect? Up to 50,000, no GST. Exceeding 50,000, yes GST. Acha, what if that person is working in his professional capacity, a director working in a professional capacity? In that, GST is not applicable because there is no employer-employee relationship applicable there. Okay. Similarly, if the employees get any ESOP, then on that also there will be no GST applicable. It is just like my perquisite. Okay. We had a circular there. There is an Indian subsidiary company. Indian subsidiary company is having its holding company but outside India. Okay, Indian subsidiary company is giving to its employees. Can you see this? Indian subsidiary company is giving to its employees the shares of foreign holding company. Okay, now can we say this is a transaction in securities? If this is a transaction in securities, there will be no GST applicable. Next, employees are getting the shares at a discounted price. On that also there will be no GST applicable because it is a perquisite for the employees. Right? And the next one, if holding company, foreign holding company, whose shares are being given to the employees, if they charge any extra consideration for doing such a transaction, then on that extra consideration, GST will be applicable. I hope this much is manageable. Yes, so first point done, that is supply of goods. Sorry, supply of services by employee to the employer. Next one is any services provided by court or tribunal. Okay, court is giving us the judgment, court is doing the trial of the cases. So any services provided by any courts, tribunal, forums, etc. for which they are charging the court fee. If we are not talking about lawyer, we are talking about the court. So whatever amount we are paying to the court fees, on that also there will be no GST applicable. This is neither considered as supply of goods nor considered as supply of services. Okay, then after that, there are few important people who perform certain functions. Okay, any person who is performing any functions as MP, MLAs, okay, then members of local authority, or any person who is holding some position as per the constitutional powers. Example, Prime Minister, President of India, or any person who is a member, chairperson, director of a government body. Okay, example, SEBI chairman. Okay, or example, ICI president, etc. Whenever they are performing their duties on behalf of the entity, then in that case they will be getting some consideration. That is totally outside the purview of GST, and there will be, this is neither considered as supply of goods nor considered as supply of services. 3 points done. Okay, first one employer-employee, second one court and tribunal, third one, what was the third one? This MP, MLAs, president, etc. Then fourth one, if there is any person who is providing services relating to funeral, burial, mortuary, or crematorium, or someone is helping for transportation of deceased person from one place to another, he will charge some consideration, but on that consideration there will be no GST applicable. Right? Then the next one is sale of land. On sale of land, no GST at all. On sale of building, you should already be knowing the answer. Sale of building, if under construction, GST applicable. Fully ready, entire consideration is paid after the building is fully ready, and in that case no GST will be applicable on the same. Okay, acha, one more thing, we studied about sale of land. Okay, we studied about sale of land, no GST. It can be any type of land. It can be a barren land, it can be a developed land, it may be an unstable land, it may be a developed land or a leveled land, doesn't matter. GST will be applicable on GST will never be applicable on the same. Okay, then the next one, that is actionable claims other than specified actionable claims. Okay, do you recollect those 6 specified actionable claims, lottery, betting, etc.? On those 6, GST is applicable. On other actionable claims, it is considered as a non-supply. I hope I am clear with this. Okay. Then the next 2 points. Point number 7 that talks about merchant trading, out and out supplies. Okay, Arpita is sitting here in India. Arpita purchases some goods from USA and Arpita sells the goods to a person in UK and the goods have not come into India. Means I am purchasing from US, I am telling that person to directly ship it to UK. So here the GST will not be applicable. Okay, this transaction of that is supply of goods from non-taxable territory to another non-taxable territory will not be considered as a supply. Okay. Then similarly, let's say you have imported some goods and you have kept the goods in the warehouse, custom bonded warehouse only. You have not cleared it for home consumption. Then before clearing it for home consumption, you are selling it to someone else. Okay, you are selling it to someone else. Means can we say actually the goods have not come into the taxable part? So this will be considered as non-supply. Okay, another one. Let's say you were importing the goods from the other country. Let's say you were importing the goods from the other country by sea, by waterways. Okay, while the goods were in waters, you did the document title and you have sold the goods to someone else. Again, this transaction will not be considered as a supply. Means the transaction of selling it to someone else while the goods were in water, the goods have not even entered India, even that is not considered as a supply, right? Then after that, 2 points added. First point is about co-insurance. Okay, let's say a insurance company, we go to an insurance company and insurance company says that I cannot alone handle this risk. Let's appoint a co-insurer also. Let's take the help of one more insurance company. So in that case, 2 insurance company, let's say, handles my case, handles my claim, handles my policy. Okay, in that case, whatever premium I pay, can we say that will be shared between the lead insurer and the co-insurer, right? Now, if the main insurer pays GST on the total amount of premium, then in that case, no GST is required to be paid by the co-insurer. Why? Because whatever was his share also, on that also the GST has been paid by the lead insurer, right? Similarly, let's take the case of reinsurance. Okay. In co-insurance, the above point, the insured person knows that this is a case of co-insurance. He knows about both the insurance companies. But in case of reinsurance, I deal only with one insurance company. Okay, again, I go to an insurance company, I say that I want a policy of 100 crore. Insurance company says, okay, premium will be XYZ amount. Okay, then insurance company thinks that we should share the risk with some other insurance company also. So it goes to the second insurance company and tells it that I have got a business, will you share? So the other company says yes. Can we say both of them are going to share the premium here? Yes, the main insurance company, first insurance company is going to transfer some premium to the second insurance company. But now the second insurance company says that, the first insurance company says that, see, I have given you business also now, so I want some commission for that. I will give you premium, but I want some commission also. That commission is called as ceding commission. Okay, so let's say premium payable by first company to second company was 20 lakh. Okay, and commission receivable from the second company to first company is equal to 1 lakh. So can we say now instead of transferring 20 lakhs, I will only transfer 19 lakhs, that is after keeping my commission. But if the if the second company has paid GST on full 20 lakhs, that is 19 lakh plus 1 lakh, then the first insurance company need not pay any GST on the commission, right? Okay, we have discussed about this in detail in our main lectures. So please refer it. Okay, please refer it. These 2 plus 2 non-supplies we have already covered. So total, can I say 10 points in the above table and 2 plus 2 points in the below 2 paragraphs, notifications and circulars. So totally 14 transactions. Are covered under the term called as non-supplies. Yes. Okay, so this was a summary. Everyone here, this was a summary. In supply, 4 things included: 71A, 71AA, 71B and 71C. 71C plus schedule 1, 4 paras. This was deemed supply. Then section number 71A plus schedule number 2. That was talking about classification between goods and services. And then section number 7(2) plus schedule number 3, these are your non-supplies, 10 transaction plus 2 plus 2, total 14 transactions, right? All these things we have done in section number 7. Okay, all these things we have done under section number 7. Okay, please go through these carefully because we have questions coming from this, right? Acha, now ma'am, supply we have studied. When will GST get attracted on it? If the supply is a taxable supply, that diagram means on which GST is leviable, plus the supply is made by a taxable person. Taxable person means either a registered person or a person who is liable to get registered. Registered person or a person who is liable to get registered. If these two conditions are fulfilled, then GST will be applicable on that particular transaction. So first it should be a supply on which GST is leviable, so it becomes a taxable supply, and this taxable supply should be done by whom? This taxable supply should be done by a taxable person, then GST will be applicable on the same. I hope I am very clear with this. Yes, and then going on to the last part of the chapter, that is section number 8, which talks about composite and mixed supply. Okay, composite and mixed supply, simple concept, very simple concept. Now in composite supply, let's say you are making 2 or more supplies together. Okay, you are the supplier, you are making 2 or more supplies together, and generally these 2 supplies are naturally bundled together. Okay, naturally bundled together means these are generally given together only. Okay, these are naturally bundled together in ordinary course of business. Then all these supplies given together will be called as what? This will be called as composite supply. Okay, ma'am, so what? Now see, in this composite supply, whatever 2 or more supplies that we are giving, in that one of the supply is the principal supply, main supply, and all others are the ancillary supply. Okay, so example, let's say you are traveling by aeroplane. Okay, you pay for the flight ticket plus you pay for the food also. Flight ticket was 5,000 rupees, food is equal to 500 rupees, total amount is equal to 5,500. Okay, now listen, let's say the rate of GST on flight ticket is 18% and rate of GST on food is equal to 5%. But can we say the airlines has charged 5,500 from you? Now, what will be the rate of GST applicable on this? So, if it is a composite supply, the rate of GST applicable on the total amount is equal to the percentage of a GST which is applicable on principal supply. Now, can you identify in flight ticket and food, what is the principal supply? Did you go in the flight for having food or did you go in the flight for traveling? Obviously, we went into the flight for traveling, na? So, flight ticket is important. So, what was the rate of GST on air travels? That is 18%. So, on entire 5,500, 18% will be applicable. Are you able to understand this? You need not do you don't have to do the bifurcation. 5,000, 18%, 500, 5%. No. Because it is a composite supply, on the total amount, the rate of principal supply will become applicable. Okay, flight ticket plus food is there, laptop bag along with laptop is there, battery along with mobile phone is there, hospital plus food is there, hospital plus medicines is there. All these are naturally given together. So this will be called as what? This will be called as composite supply. Okay, and the next one, that is going to be your mixed supply. Okay, I will come to that clarification, don't worry. Next one is going to be the mixed supply. First, try to understand the concept. Okay, mixed supply. In mixed supply, again, there are going to be 2 or more supplies. Okay, one second now. Yes, in mixed supply, again, there will be 2 or more supplies given by the supplier to the recipient, but these 2 or more supplies are not naturally bundled together. Okay, these are not naturally bundled together. Do you recollect in the main lecture I had given you the example of gift hamper that I will be giving you after clearing, after getting exemption in IDT, etc. Yes, so I had, what all things had I included in the hamper? Okay, let's say I am adding different products. I am adding a wristwatch, I am adding a perfume, I am adding chocolates, I am adding sweets, and I am making a bunch out of it. Okay, the supplier is supplying this. Let's say the shopkeeper is selling me this entire hamper. Now, can we say, are these things ordinarily bundled together? No. Okay, so what he has done, what the supplier has done, he has artificially bundled it together and he is charging a single price. And he is not even showing the bifurcation in the invoice. He is writing a flat amount. Let's say hamper amount is equal to 15,000 rupees. So now in this case, this supply will be called as a mixed supply. Okay, basic difference in composite supply, those were naturally bundled together. Here it is not naturally bundled together. Okay, here they have just combined some individual supplies and they are charging a single amount for that and they are not even showing the bifurcation in the invoice. Then such a supply will be called as a mixed supply. What rate of GST will be applicable on mixed supply? Whatever products are there, whatever supplies are included, out of that, whichever product has the highest rate of GST. Okay, whichever product has the highest rate of GST amongst those products, that rate will be applicable on the entire mixed supply. Yes, this is the meaning of the term called as mixed supply, right? Acha, similarly, now few clarifications here. Let's say there is a goods transportation agency. Okay, let's say VRL Logistics is there. Okay, VRL Logistics main work is to do the transportation. Along with transportation, it is also providing me some loading services, unloading services, etc. Can we say even this is a composite supply? In which, what is the principal supply? Transportation is the principal supply. So this supply will be called as a composite supply, right? Acha, let's say I am an author. Okay, I have prepared the notes. I have the PDF available with me. I go to a printer and I tell him that I want to get my notes printed. He says, okay, I will use my own paper. I will use my own ink. I just need the content from you. I give the content to the printer. He does the printing and he gives me the final product. Now, will this be considered as supply of goods or will this be considered as supply of services? Now, they are telling here the raw material is not important. Here, what is important is printing of content is important. If printing of content is important, then this will be considered as supply of services. Okay, this will be considered as supply of services. Similarly, let's say I am owning Domino's. Okay, let's say I am the owner of Domino's. Domino's wanted to get its tissue paper printed. Okay, with its logo. So I go to a printer, I tell to the printer, see, this is the logo, please print this on a plain tissue paper and give me the tissue paper. Tissue paper belongs to the printer. So now here, what is important? What is important? The logo on the tissue paper is important or the paper itself is important? Here the paper itself is important. So this will be considered as supply of goods. I hope I am very, very clear with this. Yes, another one, cinema hall. Let's say you go to book my show, you are booking a movie ticket. While booking the movie ticket, you book for the food also. So you are purchasing movie ticket plus food. Can we say this is a composite supply? Yes, this is going to be a composite supply where movie exhibition is going to be the principal supply. But what if as of now you take the movie tickets only and later you will take the food later? Then this will be considered as individual supply. As of now, pay GST on movie tickets, later pay GST on food. I hope I am very, very clear till here, everyone. Yes, manageable, simple. Okay, done. Let me know if this was helpful for you, everyone. Okay, so let's start with a super quick revision of the next chapter, that is charge of GST. Important chapter for both CA inters as well as CA final. In this particular chapter, we are going to do section number 9. Okay, mainly section number 9 of the CGST Act plus section number 10 of the CGST Act and section number 5 of the IGST Act. Yes. Section number 9 of CGST Act and section number 5 of IGST Act is going to correspond with each other, and section number 10 of CGST Act is altogether different. Okay. Now, ma'am, what are we going to study in this particular chapter? This chapter is very varied chapter. We are going to study different concepts in it. Okay. But ma'am, then why charge of GST name is given? So yes, as we have already studied in the previous chapter, supply chapter we had done. Yes, in supply chapter we had discussed that which transactions will be considered as a supply, which will not be considered as a supply. Which will not be considered as a supply, that is gone. Okay, now the transaction which are considered as a supply, can we say on that GST will be leviable? On that, GST will be leviable means first we'll have to classify whether it is intrastate transaction or interstate transaction, and then on that, if it is intrastate, then CGST, SGST will be applicable. If it is interstate, then IGST will be applicable. All those things we have more or less discussed it somewhere, right? Now there is a charging section. Okay, there is a charging section, that is section number 9 of the CGST Act and 5 of the IGST Act, in which we are going to study that what will be the rates of taxes and on what transaction what tax is going to levy. That is one thing that we are going to study. Now, before we get into the levy thing, let us do a few important definitions. Okay, few important definitions. Here I have given all the definitions, but for the timing, let's do a few important definitions. First of all, we are also going to study a concept called as ECO. You must have already studied about ECO, e-commerce operator. Now, what do you mean by ECO? ECO is such a person who is doing some supply of goods or services online, okay, or digitally that person is doing. And e-commerce operator is a person who is owning a platform or who is managing a particular platform or who is operating a platform on which the goods are going to be goods or services are going to be supplied electronically. Right, these were the two things which I wanted to do with you. Another thing is aggregate turnover. Aggregate turnover means everything. Okay, aggregate turnover means everything. That is, your taxable supply will be included, your exempt supply will be included, your interstate transactions, your intrastate transaction, everything will be included except for two things. Okay, ma'am, what two things are not included? See, we are calculating turnover. Okay, so it will not include your taxes. Okay, it will not include your taxes. Basically, only the value of sales will be included, not the taxes on it. That is one thing. Another thing is your inward supplies, your purchases, your inward supplies on which you are paying tax under RCM. Inward supplies on which you are paying tax under RCM. That is not included in your aggregate turnover. Why? Because aggregate turnover is your sales. Okay, that is not your purchases. So, inward supplies on which tax is payable under RCM, even that will be excluded from the meaning of aggregate turnover. Okay, then ma'am, this is very normal na, that purchases is never included in turnover. Then why have they given this point here? Arey, you are paying tax under RCM na. On your inward supplies, you are paying tax under RCM. Normally, we pay tax on our outward supply. So, only outward supply is included in aggregate turnover. So, here they have specifically given, even if on your purchases you are paying the tax, that will still remain your purchases and that will never become your sales. I hope I am very, very clear now, everyone. Yes? Okay. Reverse charge concept you already know. Reverse charge is such a transaction, or reverse charge is such a concept where on some goods and services which is notified by the government, on that the supplier supplies the goods or services to the recipient and the recipient will be liable to pay the tax to the government in cash. Okay, recipient will be responsible to pay the tax. I hope I am very, very clear with this. Yes, other definitions are also given here. You can just go through it once. Yes. Now, as we have already studied in the first chapter, which all acts have come into picture? CGST Act has come into picture, UTGST Act has come into picture, IGST Act has come into picture, and multiple SGST Acts have come into picture, different states. So, which act is applicable to whom? Which act is applicable to whom? IGST Act will be applicable to whole of India. CGST Act will be applicable to whole of India. Ma'am, what do you mean by India? What do you mean by India? So, India is going to include its land territory as per our constitution. Okay, it is also going to include our territorial waters, seabed. Okay, up to exclusive economic zone, that is up to 200 nautical miles, it is going to come into India, right? And the last one is the airspace above our land territory and the airspace above our territorial waters. Even that will be included. In the term India. Right? So, IGST and CGST Act will be applicable to whole of India. Then ma'am, what about UTGST and what about SGSTs? So, UTGST, as you already know, it will be applicable to those union territories which do not have their own state legislature, right? That is called D and others, as we have been doing, right? Chandigarh, then your Andaman and Nicobar Islands, then your Lakshadweep, then your Ladakh, then Dadra and Nagar Haveli and Daman and Diu, and any other territory as may be notified later on. right? So UT GST Act will be applicable to these people, and SGST, respective state GST Act, will be applicable to that respective state. Example, Maharashtra GST Act will be applicable only to the state of Maharashtra. I hope I am clear till here. Yes, so what have we studied till now? Nothing conceptual. Okay, nothing conceptual we have studied. We have done a few definition, and we have done that these acts which are there under GST, this is applicable to whom. Okay, now we are getting into the provisions. Okay, now here we are talking about the leviability. Okay, we are talking about the leviability. We are going to do section number 9 of the CGST Act, and correspondingly we are going to do section number 5 of the IGST Act. Okay, all the provisions are going to correspond to each other, just that whatever we are going to talk in section number 9, that is going to talk about intrastate supply, and whatever we are going to discuss in section number 5, that is going to be your interstate supply, inter, that way. Okay, now we are going to have 5 subsections, 9.1 to 9.5, 5.1 to 5.5. Now ma'am, what does 9.1 say? 9.1 says that, I am highlighting the keyword, please try to connect now. Okay, 9.1 says that on all the intrastate supply, within the state supply, CGST will be applicable. Okay, CGST will be applicable, but it will not be applicable on alcoholic liquor for human consumption, then your undenatured extra neutral alcohol, which is the main product which is used to make the alcohol for human consumption, and rectified spirit. Okay, alcoholic liquor for human consumption, undenatured extra neutral alcohol, and rectified spirits. These are totally outside the purview of GST. So on this, GST is not applicable. Still it is there. VAT, CST, excise will be applicable on the same, right? On all the other interstate supplies, CGST will be applicable, and the maximum rate of CGST alone can be up to 20%. Okay. Similarly, can we say on all the interstate supplies, which tax will be applicable? IGST will be applicable, but excluding your alcoholic liquor for human consumption, extra neutral alcohol, ENA, and rectified spirit. This is totally outside the purview of GST. So CGST also, SGST also, and IGST also, nothing is applicable on this particular product, and the maximum rate of IGST is going to be 40%, double na? CGST plus SGST is equal to IGST. So CGST maximum rate was 20%. So IGST maximum rate is going to be 40%. Right? Acha, one more thing that you need to know is on imports. Okay, on imports, custom duty is applicable, and on imports, IGST will also apply. So whenever you are importing, at that time, customs duty is also applicable, plus IGST will also apply. Okay, but there are certain products, certain goods on which import duty will not come into picture, custom duty will not come into picture, but still IGST will be applicable. Okay, example, online money gaming. Online money gaming is your specified actionable claim. Specified actionable claim is a part of actionable claim, and actionable claim is it comes under goods. But can we say online money gaming is intangible? Right? So on that, customs duty cannot be made applicable, but on that IGST is applicable. So there are certain goods which the government will notify, on which IGST will be applicable without customs duty being applicable. I hope I am clear till here. Yes. Then your section number 9.2 and section number 5.2. What does these two sections talk about? Both of them says that those 5 petroleum products, petroleum, crude, high speed, diesel, motor, spirit, natural gas, and aviation turbine fuel. On these 5, as of now, GST is not leviable. GST will be levied from a future date, which will be notified by the government after taking the recommendation from the GST Council. Right? So on that, CGST is also not applicable, and IGST is also not applicable. Right? Then section number 9.3 and 9.4 is going to talk about 9.394 and 5.354 is going to talk about reverse charge mechanism, which we are going to discuss separately later on. Right? Then after that, section number 9.5 and section number 5.5, these two sections are going to talk about e-commerce operator. Again, I am not getting into the detail as of now, because separately we are going to now do the concept of e-commerce operator. Manageable till here? Yes. Yes, so now we have seen section number 9 and section number 5, overview of the same. Yes, two things, RCM and e-commerce operator, we are going to deal with separately. Right, now let's start with reverse charge mechanism. Just try to understand first of all what we are supposed to do here. Section number 9(3) of CGST Act and section number 5(3) of the IGST Act. Okay, within these, the government has notified certain goods and certain services on which RCM is applicable. Okay, ma'am, can you please tell us the concept of RCM? Yes. Now let's say there is a particular supplier. Okay, this supplier is supplying some goods or services to the recipient. Okay, and recipient is required to pay the consideration to the supplier. Now, if the supplier is providing those notified goods and services, okay, those notified goods and services to the recipient on which RCM is applicable, then in such a case, the recipient is required to go and pay the tax to the government. Okay, means supplier will supply the goods or services, recipient will simply pay the value of goods or services to the supplier, not the tax amount, and tax amount he will pay from his pocket to the government. And after paying that amount to the government, he can claim this amount he will pay in cash. Means he cannot utilize the ITC for paying this liability. This amount he will pay in cash, and after paying in cash, he can avail that amount. This amount, the amount that he has paid to the government, he can take the input tax credit of the same. Yes. This is basically the concept of RCM. And another thing is here all the responsibility, that is filing the returns, payment of tax, all the responsibility shifts. Okay, from the supplier, the responsibility shifts to the recipient. Are you clear with this? This is basically the overview of your reverse charge mechanism provision. I have also given it in detail in our book also. Yes. Chalo. Then after that, one important point I'll tell you later on when we do composition scheme. We will combine the provision of composition scheme and RCM later when we do the composition scheme. Okay, I'll not tell you now because as of now we have not discussed about composition scheme at all. Chalo. So now there are certain goods and certain services on which RCM will be applicable. Let's try to understand on which goods and on which services reverse charge mechanism is applicable. First let's do the goods category. 7 things are there under goods. First one is your cashew nuts, unshelled and unpeeled. Okay, not shelled and not peeled. If these cashew nuts, BD wrapper leaves, tobacco leaves, raw cotton, when it is supplied by farmer to a business entity, to a registered person, then they are telling that why to put the responsibility on the farmer, instead of that you can put the responsibility on the registered person. Similarly, when there is supply of any lottery tickets by the state government or union territory to any lottery dealer, to any lottery agent, government says, I will not take the responsibility, give the responsibility to pay the tax to the lottery agent. Okay, similarly, silk yarn. Okay, silk yarn. When it is supplied by the manufacturer of silk yarn to a registered person. Silk yarn happens generally, this sericulture etc., this happens generally in the rural areas. So they are telling why to burden the manufacturer, instead put the responsibility on the registered person. Then used vehicles, seized vehicles, used goods, waste, scrap etc. When it is sold by government to any registered person, again the responsibility is going to be on the registered person. But here in government, Ministry of Railways will be excluded. Means if Ministry of Railway is supplying it to any registered person, then forward charge mechanism will be applicable, normal mechanism will be applicable, that is the supplier will be responsible to collect the tax and pay it to the government. Okay, then the next transaction is of essential oils other than that of citrus fruit, that is peppermint etc. Okay, if essential oils, that is peppermint and other mint, when it is supplied by an unregistered person to a registered person, unregistered to registered, anyway unregistered was not going to collect the tax and not going to pay it to the government, so the responsibility is now on the registered person. Okay, then after that, priority sector lending certificate. Priority sector lending certificate is a certificate which is considered as goods and which is traded between the banks. So when it is supplied by one registered person to another registered person, still the recipient will be required to pay the GST on the same. RCM is applicable. And the last point was sometime back newly inserted, which talks about metal scrap. Okay, metal scrap when it is supplied by unregistered person to a registered person. Again, unregistered was not at all responsible, so this would have caused loss of revenue to the government. So the responsibility is going to be on the registered person. He is going to pay the tax from his pocket, and then he can take the ITC of the same. Okay, metal scrap is also going to have some connection with the TCS provisions, TDS provisions, which we are going to study later. So at that time we will again come back to this point. So these were the 7 transactions in relation to goods. Okay, 7 transactions in relation to goods on which RCM is applicable. If RCM is applicable, then the tax will be paid by the recipient. Simple pointer. Yes. Okay, so then let's go to the services. Okay, goods we have just completed. Now let's go to the services. These are those services on which tax is going to come under reverse charge mechanism, and this is the most important part of the chapter. In case of these services, the responsibility to pay the tax is going to come on the recipient. Yes, let's start with the transactions, everyone. Now, first transaction is going to be the GTA. Goods Transport Agency is providing the goods transportation services by road to some 7 people. GTA providing the services to these 7 people. That is your factory, that is your society, that is your cooperative society, then any person registered under GST, then partnership firm whether registered or not, any casual taxable person or any body corporate. Okay, ma'am, what do you mean by casual taxable person? We will do as in when we go ahead, but as of now you can just take it as a temporary businessman. Okay, temporary person who is doing business here in India. So if GTA is providing services to these people and these people are paying the consideration to the GTA, then in such a case RCM will be applicable and these people will be responsible to pay the tax to the government in cash, and then they can take the ITC of the same under reverse charge mechanism. Yes, so basically GTA providing services to 7 people, then reverse charge mechanism will be applicable. Okay, but here there are 2 exceptions. First exception is if GTA says I want to become a big person, I want to get registered under GST and I will issue the tax invoice, etc., then no problem, then forward charge mechanism will be applicable, right? Acha, that is one exception. Second exception is if in these 7 people there is any department of government, or if there is any governmental agencies, or if there is any government, example in registered person, let's say government is included, central government, state government, any governmental agencies, and if that government is registered only for the purpose of TDS under section 51 and not for doing any taxable supply, okay, then in that case government says please excuse me, I will not pay the tax under reverse charge mechanism. In such a case the GTA will have to pay the taxes. Are you clear with this? Either the GTA will pay the taxes or they will later on make the transaction as an exempt transaction. Okay, but anyway RCM will not be applicable in such a case. I hope I am very clear with this. Yes, I have also given the summary table for this. If recipient is 7 people, then either GTA can go under forward charge or normally RCM will apply. If other than 7 people, then RCM will never come into picture. Okay, and if the recipient is government, then in that case again RCM is not applicable. I hope I am clear till here. Yes, the next service talks about legal services. Legal services provided by advocate, individual advocate, senior advocate, firm of advocate, and if they are providing the services to a business entity, basically they are representing the case or they are giving legal advisory services to the business entity, etc. Again, business entity will be required to pay the GST on the same. Okay, then arbitration services, arbitrator, the person who resolves the disputes outside the court. Arbitrator or arbitral tribunal is providing services to a business entity. Again, the business entity will be responsible to pay the tax on the same, right? Then after that, sponsorship services. Sponsorship services means there is a person who is giving his platform, okay, to do the sponsorship, and the other person is going to pay. Okay, the person is going to sponsor that person is going to be the recipient. So now the person who is providing his platform is any person other than a body corporate, small person other than a body corporate is providing the sponsorship services to a body corporate or partnership firm. Okay, always remember partnership firm will also include LLP. So small person other than body corporate providing sponsorship services to body corporate or partnership firm, then this person will be responsible to pay the GST on the same under reverse charge mechanism. Yes, there is an amendment here. Earlier it was any person, now it is any person other than a body corporate. Yes, what if body corporate is providing these services? Then RCM is not applicable, then specifically FCM will be applicable. Yes, then going ahead to the next point. Next point is important. Here the services are provided by government. Okay, now they are telling any services provided by government to any business entity. Any services provided by government to the business entity, on that compulsorily RCM will be applicable except for a few services. Okay, few services have been removed from here. One is renting of immovable property, then services by Department of Post and services by Ministry of Railway, then services related to vessel or aircraft, maybe repairing services, etc., and transportation of goods or passenger services. Except for these four services, any other services provided by government to the business entity, that will be taxable under reverse charge mechanism. Government is very simple. Government will say, why do I take all the burden of paying the tax, etc.? Anyway, the other person is a business entity. He will be doing it in his course of business. So let's put the responsibility on that business entity. Yes. Okay. So the last one that we saw was government providing any services to any business entity, on that reverse charge will be applicable except for those four services. Now from that they have taken out renting of immovable property separately. If renting of immovable property service is provided by government, now when I am saying government means central government, state government, union territory, local authority, court, state legislature, parliament, these people will be included when they are providing renting of immovable property to any person registered under GST. Okay, government providing the service to a registered person, then in that case that registered person will be required to pay GST under reverse charge mechanism. So can we say here also renting of immovable property, when the central government is giving to any business entity, forget about that. Central government giving renting of immovable property to any registered person, on that reverse charge mechanism will be applicable. So renting of immovable properties point is considered separately, but the next three transactions, that is services supplied by Department of Post, Ministry of Railways, services in relation to aircraft or vessel, and transportation of goods and passengers, for these three, this point number 1, 2, 3, for this forward charge mechanism will be applicable compulsory. Okay, chalo. Then after that the next 2 points, 5AA and 5AB. 5AA talks about renting of residential dwelling. Okay, renting of residential dwelling. If any person, registered, unregistered, doesn't matter, if any person is giving this residential dwelling on rent, but to a registered person, responsibility of paying the tax is going to go on the registered person. Okay, we are going to see more things when we do the exemption chapter also. Then we'll again come back to this reverse charge mechanism. Okay, but as of now, just do the provisions from reverse charge mechanism point of view. Then after that 5AB, this was one of the missing point which was introduced some time back, that if like residential dwelling we understood, but what about commercial property? Okay, so if there is any renting of immovable property other than residential dwelling which is given on rent by a small person, that is unregistered person, giving it to a big registered person. Ma'am, why are you telling big registered person? Any registered person other than a person who has opted to pay tax under composition levy. Means can we say any registered person, but he should not be there under composition scheme. So if unregistered person is giving it to a big registered person, then big registered person will be responsible to pay the tax on the same. Okay, and later we will study if unregistered person is giving it to a composition registered person, then it is exempted. Okay, that we will study separately in the exemption chapter, right? Okay, Then after that, point number 5b and point number 5c, we can do it together. Whenever any person, okay, whenever any person is transferring the development rights, whenever any person is transferring the TDRs, or any person is transferring the floor space index or additional floor space index to a promoter. Promoter is nothing but the builder. Okay, I am the owner of any particular land, or I am giving it on lease. Okay, or I am having a particular building, I am giving it to a builder to demolish it and to redevelop it, etc. And then whatever consideration I get in return, on that consideration, the builder is responsible to pay the tax under reverse charge mechanism. Okay, we will study later on. Suppose if when this person transferred the TDR to the builder, on the value of the consideration, the builder is required to pay tax under reverse charge mechanism. Later, if the builder, after developing that property, later if the builder sells, okay, later if the builder sells that particular property, okay, again, if it is before completion certificate, then GST will be applicable on sale, and if it is after completion certificate, then GST will not be applicable on the same. So they are telling that, can we say for the builder, TDR is an inward supply? For builder, TDR is an inward supply on which the builder is going to pay tax under RCM, right? Now, builder is selling this particular property which is an outward supply. So they are telling that if on the outward supply GST is applicable, then GST on TDR will be exempted. Okay, and if GST on the final product is not there, why GST is not there if the property is sold after completion certificate? It becomes an immovable property. Schedule 3 we had studied. So can we say on the final sales there is no GST applicable? So if on final product the GST is not applicable, then the GST on TDR will be applicable and the builder will be required to pay it under reverse charge mechanism. Are you understanding this? Yes, we have done it in detail while we were doing the main lectures. Then going ahead to the next transaction, that is director services. If there is any director of a company who is providing, of any company or a body corporate, who is providing some services in professional capacity, just as a director, not any other services, only directorship services are provided by director to any company or body corporate, then in that case, that company or body corporate will be liable to pay the tax on the same. Okay, if that director is an employee of the company, then employee-employee relationship comes into picture. Then TDS under Income Tax Act section 192 becomes applicable. Then this is not applicable. Huh? Then if employer-employee relationship is there, then it is not a supply as per schedule number 3. So this provision will come into picture only when they are not acting in employer-employee relationship. Right? Okay. Then after that, insurance agent services. Agent is providing the services to the insurance company. It is helping the company to get more number of clients, etc. So in such a case, the insurance company will be responsible to pay the tax. Okay, similarly, recovery agent services, Vasuli Bhai services. Recovery agent is providing the services to a bank, to a financial institution, to a NBFC, etc. They are helping to recover the bank's bad debts. So again, these people will be responsible to pay the tax on the same. Okay, then about copyright. Okay, 2 points about copyright. Let's say there is a particular artist. Okay, and he has created something new. He has created something unique. Let's say a photographer. Okay, or let's say a music singer or something like that. Now, when they are giving their copyright to someone else for using it, okay, let's say a music singer will give it to a music director or a music producer company, etc. So, when they are giving their copyright for using it to someone else, for which they are going to get the royalty in return, in this case, there is no responsibility on the artist. The responsibility is going to be on such a person who is using that copyright and paying the royalty to you. Okay, similarly, if there is an author, okay, if there is an author, and this author he has written something unique, he has written some books, etc. And now he is giving the copyright to the publisher to publish that particular book, for which he is going to get some royalty in return. In this case also, the publisher will be required to pay the taxes. Okay, but if the author says, I want to get myself registered and I will pay the tax under FCM, no problem, do it. We were trying to give you the benefit, but if you yourself want to get yourself registered, then no problem. I hope I am very clear with this. Yes. Okay. Then after that, the next point, services provided by members of overseeing committee. Okay, within RBI there is a committee called as overseeing committee, okay, which does some activity, okay, which does some activity as entrusted to it by the RBI, and these people act in independent capacity, or we can say professional capacity. So can we say RBI is going to pay them some consideration in return? On that consideration, GST is applicable, but under reverse charge mechanism, so it will be paid by the RBI. Simple. Okay. Then after that, just like we did insurance agent services, similarly there are direct selling agent services who gets business for the banks, okay, who gets customers for the banks, etc. So they sell banks product to the customers, right? So now this can we say if DSA, direct selling agent, is working on behalf of the bank or for the bank, so can we say bank is going to pay him some commission? On that commission, GST is applicable, but it will be paid by the recipient, that is by bank or NBFC under reverse charge mechanism. Yes, so individual DSA is there. Now he is not a body corporate, he is not a big person, he is a small person. So why to burden him with all the responsibilities? Manageable. Yes. Okay, then after that, going to the next one, that is business facilitator. Business facilitator is such a person who gives strategies, okay, who gives strategies to the banks, etc., to how to improve their business, how to come up with a new scheme or something like that. So business facilitator provides his services to the bank, right, and bank pays him some consideration. On that consideration, GST is applicable, but the banking company is responsible to pay the GST on the same. Okay. Then after that, next one, agent services in relation to business correspondent. Agent services in relation to business correspondent. Now, what do you mean by this? Okay, now business correspondent is such a person who acts like a bank branch. Okay, a bank cannot open multiple branches if it is a new one. Okay, it will take some time. So the banks appoint a business correspondent who have their offices in different areas, which acts just like the bank's office. Right? Now this business correspondent is acting like a bank's branch. So now to expand its operation further, even the business correspondent will appoint some agents to expand the bank's business. Now, so can we say bank has appointed, I will give you the flow here. Bank has appointed the business correspondent and business correspondent appoints the agent. Okay, so he is the agent of business correspondent. So can we say first of all, agent is providing the service to business correspondent and then business correspondent is also providing the services to the bank. But this part which I have highlighted, this will be covered under reverse charge mechanism. That is, can we say business correspondent will be paying some consideration to the agent for which the agent is providing some services. On that GST will be applicable, but the business correspondent will be liable to pay the GST on the same. Yes. Okay. Then after that, security services, security watchman kind of a services, security personnel services or providing security personnel services. If these services are provided by a person other than a body corporate, small uncle, small person, providing these services to a registered person, to a big registered person. Ma'am, why are you telling big registered person? Because he should not be a composition person. Okay, he should not be a composition person. So, small person other than body corporate providing the security personnel services to a big registered person, then the big registered person will be responsible to pay the tax on the same. I hope I am very clear till here. Okay, and similarly, if this registered person is a government who has got themselves registered only for the purpose of TDS under section 51, then again FCM will be applicable, then RCM will not be applicable. Yes. Okay. Then after that, last 2 points, everyone with me. Next point is talking about what? Renting of motor vehicle. Renting, not passenger transportation services. Renting of motor vehicle means where we are taking a motor vehicle on rent. So now if any person other than a body corporate, okay, again a small person other than a body corporate is giving his motor vehicle on rent to a body corporate, okay, for which the body corporate is going to pay him the consideration including the cost of fuel. On this, the body corporate will be liable to pay the tax under reverse charge mechanism. Can we say here the consideration is going to be the rent which the person has charged? So on that, reverse charge mechanism is applicable and the body corporate will be required to pay the tax on the same. I hope I'm very clear with this. Okay, and this, the person who is supplying the motor vehicle should not be issuing an invoice charging 12% GST. See, if he issues an invoice charging 12% GST, means he is doing it under FCM. Then RCM will nowhere come into picture. But if he is not collecting any GST from the other person and the other person is a body corporate, then the body corporate will be liable to pay the tax on the same. Are you clear with this? And yes, please remember, renting of motor vehicle is different from passenger transportation services. Huh? In passenger transportation services, what happens is we use the services of an existing transporter. Example, we use the services of a bus, of a state bus, of a city bus. Okay, so there we cannot determine which route the bus will go or which route should be followed or what timing should be there. No, in that case that is decided by the owner. But in case of renting of motor vehicle, we are taking the motor vehicle on rent. So now when to start the motor vehicle, which route to follow, etc., that can be decided by us. Yes? Okay. And then after that, going to the last point talks about lending of securities as per SEBI scheme. Okay, normally securities is neither considered as supply of goods nor considered as supply of services, right? But if there is lending of securities happening for which a consideration is going to be paid by the borrower to the lender, on that GST is applicable and the borrower will be responsible to pay the same under reverse charge mechanism. Simple till here? Yes? Okay. Okay, so now whatever transactions we have done here, all these transactions were there under reverse charge mechanism of CGST. That is section number 9(3) of the CGST Act. Right? Now they are telling that whatever transactions you have studied till now, same are also applicable for IGST. Means if these transactions are intrastate or if these transactions are interstate, doesn't matter, RCM provisions will become applicable. And one extra transaction, okay, one extra transaction they have notified for the purpose of IGST, where they say that if there is any import of service happening, that is, where is the supplier located? Supplier is located outside India and recipient is located in India. Okay, but recipient should not be a NTOR. I will tell you what is that. First understand. The person who is supplying the service is sitting outside India. We are receiving the service here in India. So we will be responsible to pay the GST on that under reverse charge mechanism. Why, ma'am? Because the supplier is sitting outside India. Will he come to India only for the purpose of payment of GST, etc.? No. So here also the recipient will be responsible, provided the recipient is not a NTOR. Okay, NTOR means what? First of all, full form of NTOR is non-taxable online recipient. Okay, example in case of Netflix. Okay, let's say Netflix services are provided from outside India and we all are consuming it. People like you and me are consuming it. We all are unregistered persons. Okay, we are not consuming it for the purpose of our business. We all are unregistered person, but we are availing Netflix services. So in that case, will the government tell people like you and me to pay the GST, to get registered under GST and then to pay the GST? No, that will be nonsense. Considering India's population, that cannot be possible. So in that case, the supplier will be liable even if he is situated outside India. Okay, so only in case of NTOR, only if the recipient is NTOR, in that case forward charge mechanism will be applicable. But in case of other than NTOR, normal RCM will be applicable. Okay, example, if let's say I am importing architect service from outside India. Okay, I am importing architect service from outside India for my business purpose. I am already a registered person. Then in that case, in India, I will have to pay GST on that under reverse charge mechanism. Are you understanding this? Yes? Okay. So this was one of the pointers. Which has been added under the IGST part. Achha. Then after that, section number 9(4) and 5(4). Even this talks about reverse charge mechanism, but in case of builders. Okay, but in case of builders. Now let's say if there is any unregistered supplier. Okay, unregistered supplier supplying certain goods or services to the builder. Builder is registered. Unregistered supplier supplying something to the builder. Then in that case, they say that builder will be responsible to pay tax on the same. Because anyway, this person is an unregistered person. If we do not levy RCM in this case, then it will totally go untaxed. right? So the responsibility is going to be on the builder. That is told under section 9(4) and 5(4). 9(4) of the CGST Act and 5(4) of the IGST. I hope I am very, very clear with this. Yes. Okay. Then some GST rates for real estate sector, etc. is given. This is not relevant for your examinations. If you want, just for the purpose of knowledge, you can read it, but not at the time of last moment of exam. Right? Okay. Okay. So this was all about your reverse charge mechanism provisions, right? I'll again tell you the overview, right, that we had done. So we started with 9(1). 9(1) simply said that intrastate transactions CGST will be applicable. Okay. 9(2) on 5 petroleum products, no GST. Okay. 9(3) reverse charge, full goods and services that we just now completed. 9(4) applicable in case of builder. And last section that we are going to do now is the e-commerce operator. Okay. 9(5). And correspondingly, we have been doing the provisions under IGST also. So I hope you know what are we doing and in which flow we are going. Can we start with section number 9(5), everyone? Yes. Now 9(5) talks about e-commerce operator. E-commerce operator definition we had already done. Now what they are telling us here is, let's say, and I'll just give you an overview here in a diagram itself, so it will be very, very simple for you. Let's say there is a main supplier. Okay, let's say there is a main supplier of certain services. Okay, of some notified services. Main supplier of some notified services. Okay, he is giving some supply to a customer. Okay, he is giving some supply to a customer, but this is given through an e-commerce operator. Means there is some middleman in between, called as e-commerce operator. Then in that case they say that section 9(5) becomes applicable, and even if there is a main supplier in the picture and even if there is a recipient here in the picture, but the person liable to pay the tax, okay, person liable to pay the tax is going to be the e-commerce operator. Okay. This is the concept of your e-commerce operator and the taxation on e-commerce operator. There is a main supplier who is actually supplying the services, actually supplying some notified services to the recipient, but these services are supplied through an e-commerce operator. Then in that case, e-commerce operator will be liable to pay the tax under section number 9(5). Okay, ma'am, can you give certain examples? Yes, we will take the actual examples only. There are 5 transactions, okay, or I can say there are 5 notified services which fall under section number 9(5), and only in these 5 cases the responsibility to pay the tax is going to be on the eco. Okay, please note this section is not for goods at all. Okay, it is not for goods, it is only for services, and that too only notified services. Now, the first service that we are going to discuss about here is the transportation of passenger service. Okay, transportation of passenger service. Take the example of Uber, Ola, Rapido, etc. Okay, can we say there is a main cab driver who is going to supply? Okay, but it is supplied through Zomato or Uber. Okay, and then it is provided to the recipient. Basically, recipient goes to the app of Rapido, Ola, Uber, they book the vehicle, and then the cab driver comes, etc. He does the transportation, he gives the transportation service. But here the person liable to pay the tax is going to be the e-commerce operator. That is, Ola, Uber will be liable to pay the tax. Yes? Okay. So see what are they writing here? Services by way of transportation of passengers by a radio, taxi, motor cab, maxi cab, motorcycle or any other motor vehicle except omnibus, because omnibus they have given separately. So except omnibus, except for big bus. Apart from that, if there is any transportation of passenger service happening, then the eco will be liable to pay the taxes. Okay, then second transaction talks about accommodation services, accommodation stay services. Okay, now let's say there is a particular hotel who is allowing the customer, one second, there is a particular hotel which is allowing its customers to stay in the hotel, but the customer has done the booking through the e-commerce operator. Then again the e-commerce operator, example GoIbibo, Make My Trip, etc. they will be liable to pay the tax in this case. Acha, what if the hotel booking is done directly? Then there is no concept of eco applicable. Eco concept will come into picture only when there is eco in between, right? Acha, but here there is an exception. The exception is here if the main supplier, Okay, if the main supplier himself is liable for registration, okay, if he is liable for registration, then eco will not pay the tax, then the main supplier will be liable to pay the taxes. Yes, means if the main supplier himself is a big person, why to push the responsibility on the eco? Right? Then after that, accommodation services is over. Next, similarly, housekeeping services. Okay, housekeeping services like carpentry services, painting services, repair services, cleaning services. Okay, when there is a main supplier who is going to do all these things for the customer, but when the booking is done through an e-commerce operator, example, urban company. Right? So if the customer books through urban company, the main supplier comes and he provides the service. In that case, again, the e-commerce operator will be liable to pay the tax. Again, if the exception, same exception. Okay, same exception. What if the main supplier is liable to get himself registered under GST? Then in that case, main supplier will be liable to pay the taxes. Yes? Okay. Then after that, restaurant. Okay, after that, restaurant service, food, serving of food and drinks, etc. That particular service. In that case, again, there will be a main supplier, there will be a hotel who is providing the services to the customer, okay, for which the food booking has been done through the e-commerce operator. So again, the e-commerce operator will be responsible to pay the tax in this case. Yes, now here, what if that hotel is situated, what if that restaurant is situated in a big hotel? Possible, na? If that restaurant is situated in a big hotel, which is also available on Zomato, Swiggy, etc., then in such a case, they are telling that already it is a big hotel. So the restaurant is also a big person. So in that case, section number 95 is not applicable and the main supplier will be liable to pay the GST on the same. Are you understanding this? The main supplier will be liable to pay the GST on this. Ma'am, now what do you mean by a big hotel? Restaurant located in a big hotel means that big hotel is having room facility also and the tariff is more than 7,500 per room per day. Okay, it is that big. So then in that case, if that big hotel's restaurant is providing these services, then that big restaurant will be liable to pay the GST on the same. Yes. And the last one is again transportation of passenger services, but by omnibus. Okay, but by omnibus. Omnibus is such a vehicle where the capacity of the omnibus is more than 6 passengers plus the driver. Right, so if transportation of passengers is done through omnibus, example, the booking is done through Redbus app, right, or on Paytm also we can do the booking of the buses, etc. So in that case, again the e-commerce operator will be liable to pay the GST, but exception here is that omnibus, that main owner should not be a company. The main supplier should not be a company. If main supplier is a company, then he is a big person, then he will be paying GST on the same. I hope you are very, very clear with this. Yes, so these are the 5 transactions. When these transactions are supplied through an e-commerce operator, then in that case, the person liable to pay the GST is going to be the e-commerce operator. Ma'am, but what if e-commerce operator is not there in India? Example, Uber. Then in that case, it will have to appoint a representative. Okay, what if, ma'am, they do not even have a representative? Appoint someone who will be responsible to pay the tax in India. If you are not able to appoint, stop the business here in India. Right? But compulsorily, ECO is required to pay the taxes here in India. I hope I am very, very clear with this. Yes? Okay. And whenever the eco is paying this tax, okay, please be careful. Whenever this eco is paying this tax, he will have to pay it in cash. And once he has paid it in cash, later he can also utilize that amount as input tax credit against any other supply. Okay, see, when eco is doing this supply, at that time the tax will be paid by the eco and eco will have to pay that tax in cash only. And after paying the tax in cash, it can take the ITC. Now, ma'am, what to do with this ITC? So this can be used against some other outward supplier. Let's say eco is also charging something called as platform fees, marketplace fees, etc. On that GST is payable. So against that GST, this ITC can be claimed. I hope I'm very, very clear with this, everyone. Yes? Okay. Yes? So I hope this much is clear. Only for this, the mistake area that happens is only for these 5 notified services, eco provisions are applicable. For any other services, eco provisions are not applicable. For goods also, eco provisions are not applicable. Yes, and always remember, if section 9(5) is applicable, then TCS provisions under section 52 is not applicable, and vice versa. Okay, if 9(5) is not applicable, then TCS provisions under section 52 is applicable. Ma'am, what is that? We will do it when we do the TCS chapter, but as of now, just remember this much. Yes, acha. Then they have given certain clarifications in case of restaurant services. Okay, now what are they trying to tell us here is a common provision also. Let's say there is a supplier. Okay, there is a supplier, main supplier, who is supplying restaurant services to the recipient through an e-commerce operator. Now the question arises here is, we know that if it is not a restaurant which is situated in a big hotel, normal restaurant, then eco will be liable to pay the tax on the same. Okay, so now they are telling that eco will be considered as a supplier only for the purpose of payment of tax. Okay, eco will be considered as a supplier only for the purpose of payment of tax. Okay, and for the purpose of issuing the invoice to the recipient. Okay, that is the only work of e-commerce operator. But otherwise, the main supplier will only be considered as the supplier. Okay, means what? Now, when we talk about aggregate turnover, okay, when we talk about your aggregate turnover, when this value of food that is supplied to the recipient, that will be included in whose turnover? So that will be included in the main supplier's turnover. Imagine now, Zomato is doing so many orders every day. So whatever is the value of food, will that be the turnover of Zomato? No, turnover of Zomato is only the platform fee, the packing fees, or platform fees, or the marketplace fees which is charged by the Zomato. So this turnover, this amount will be included in the turnover of the main supplier and not of the e-commerce operator. Are you clear with this? Acha. Then eco is anyway required to get himself compulsorily registered. So here, for the purpose of paying the tax, he need not obtain a separate registration. The same registration is sufficient. And another important point is eco is required to issue the invoice. Okay, eco is required to issue the invoice to the recipient. It is eco's responsibility and not the main supplier's responsibility to issue the invoice. I hope I am very clear till here. Yes, these were certain important points that you had to remember. The most important part here is, what are those notified services? Which are those 5 notified services on which there is the liability of e-commerce operator to pay the tax? Manageable, simple till here. Yes, so this was your eco provisions. Please go through the provisions once. Okay, you can just read it from the textbook once. Okay, now going on to the next one. Next one is classification under GST. I am not doing this. Okay, classification under GST we have already studied in the first chapter. Goods are classified on the basis of HSN, services are classified on the basis of SAC, and depending upon that, besides the HSN and SAC, the rates of GST is written. Right, so you can just skip that also for the purpose of revision. It's absolutely all right. Right, now going on to the last part of the chapter, that is section number 10 of the CGST Act. Can we start with it? Section number 10 of the CGST Act. No corresponding provisions in the IGST provisions. Okay, ma'am, why? Now, section number 10 of the CGST Act talks about a scheme called as composition scheme or composition levy. Now, this scheme is applicable for small people. Okay, this is applicable for small businessmen who do not want to get into the details for the purpose of GST, who are ready to pay a flat rate of tax, etc. Okay, and next most important thing is, only a person who is doing intrastate supplies. Okay, only if someone is doing intrastate supply, then only you can go for composition scheme. In short, interstate people, interstate transactions. If you are entering into interstate transactions, then you cannot opt for composition scheme, and that is the reason this scheme is not covering the provisions relating to the scheme is not included in the provisions of the IGST law. Yes, so composition scheme is applicable only to those who have opted, who are doing intrastate transactions. Yes, now let's try to understand very important things, everyone. The notes are also prepared in such a manner that will give you a very good flow, okay, while studying. Now, mainly there are two broad sections under composition scheme. One is section 10.1 and 10.2, and the second one is section number 10.2a. Okay, 10.1 and 10.2 is applicable for goods and restaurant services. Means if any particular person is dealing in goods, maybe a manufacturer, maybe a trader, maybe a wholesaler, if he is dealing into goods, and if there is any person who is providing restaurant service, only one service is covered in this section. Okay, so if any person is engaged in supply of goods and restaurant services, then he can opt for composition scheme under section 10.1 and 10.2. If some person is engaged in any other services, example, tailoring services, repairing services, let's say salon hair cutting services, teaching services, etc., then you can go for composition scheme under section 10.2. Okay, only restaurant service is covered under section 10.1 and 10.2. Manageable till here? Yes? Okay. Now, ma'am, when will we be eligible? A small person means what? Okay, so if my turnover in the preceding financial year, if my aggregate turnover in the preceding financial year does not exceed 1.5 crore, then in the current year, I can opt for composition scheme up to a turnover of 1.5 crore. For last year, you check the aggregate turnover of the preceding financial year. It should not exceed 1.5 crore. If it has not exceeded 1.5 crore, then in the current year, you can select composition scheme till the time your turnover, or you can stay under composition scheme till the time your turnover does not exceed 1.5 crore. And as soon as it exceeds 1.5 crore, then you will have to convert yourself into the normal scheme. Okay, similarly, achha, one more point, because this is a revision lecture, one more point I will add here itself. Now, if your office is situated in any of the 8 special category states, right, 8 special category states, Arunachal Pradesh, Uttarakhand, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. Okay, if your office, if any of your office is situated in any of these 8 special category states, then in that case, instead of 1.5 crore, the limit will come down to 75 lakhs. So last year's turnover also you will check up to 75 lakhs, and in current year also you can opt for composition scheme only till the time your turnover is up to 75 lakhs. Right? And now similarly for services, that is section number 10.2a. So if any person is providing any services in the last year, if his aggregate turnover did not exceed rupees 50 lakhs, if its turnover did not exceed rupees 50 lakhs in the preceding financial year, then in the current year that person will be eligible to opt for composition scheme till the time his turnover does not crosses rupees 50 lakh. As soon as his turnover crosses rupees 50 lakhs, then in such a case he will have to convert himself into the normal scheme. Right? Okay. Now, what is a major benefit? What is a major benefit of this particular scheme? It is like you need not collect the taxes from the customer. Okay. You need not maintain multiple records, etc. You are just required to keep the details of your turnover. On your turnover, you will be paying a fixed rate of GST. Right? In normal GST, in normal scheme, multiple returns are required to be filed by them. Under composition scheme, you have to file only an annual return. Payment will be done on quarterly basis, but the return filing, etc. will be done on quarterly. Yes. Yes, so some benefits are there. If a person opts for composition scheme, he need not issue a tax invoice. He will be simply issuing a bill of supply. No need to collect the taxes. Straight away calculate your turnover. On the turnover, pay a flat rate of taxes, etc. These are some of the benefits. But drawback is that the person will not be eligible for ITC. Right? He won't be eligible for ITC. Okay, this point we have already covered, that 75 lakhs for 8 special category states. I am not doing it again. Yes, if any of my one office is situated in this special category states, then for my entire undertaking, okay, entire PAN, composition scheme will be applicable, and the limit for me will come down to 75 lakhs for goods. For services anyway, for everyone, for services anyway, the limit is going to be 50 lakh rupees only. Right, that is given here. 50 lakh rupees is the limit for the services. Okay, we had done it in the introduction also, and it is also written here. Manageable? Yes, again the same thing is shown in the diagram. Now, when we are checking the eligibility, can we say we went and we checked the turnover of the preceding financial year? Preceding financial year's turnover should not exceed 1.5 crore or 75 lakhs for goods and services, and it should not exceed 50 lakhs in case of services for section number 10(2)(a). But what is the meaning of aggregate turnover? So aggregate turnover, as we had already done, it will include taxable supplies, it will include exempt supplies, interstate transaction, intrastate transactions, but it will exclude taxes will be excluded, and inward supplies on which tax is paid under RCM, that will be excluded. Okay, same meaning of aggregate turnover is going to be there. And yes, your aggregate means under one PAN, whatever number of offices you have, all will be included in a single PAN. Okay, and you will aggregate the total turnover, and then you will check whether you are eligible for composition scheme or you are not eligible. Okay, now maybe you will get a doubt, ma'am, in aggregate turnover, how are we taking exports and how are we taking interstate supplies, etc.? Whereas a composition dealer is not allowed to export, he is not allowed to do interstate supply. I agree, but can we say here aggregate turnover we are checking for the preceding financial year? And for preceding financial year, there can be a possibility that he did some export sales, he did some interstate supply, that is possible. But when you are opting for composition scheme, in that year or during that period, you should not be doing any interstate supplies. Are you understanding this? And whenever you are taking your aggregate turnover, please make sure you are taking from 1st April till 31st March. Okay, again I am repeating, aggregate turnover, why are we calculating? We are calculating aggregate turnover just to check the eligibility. Okay, aggregate turnover we are checking of the preceding financial year to check my eligibility in the current year. Okay, so last year's turnover I am taking. So whenever I am taking all these turnover of last year, etc., make sure you are taking from 1st April to 31st of March. Full year's turnover will be taken. Yes, acha, one extra thing to be excluded here is, see, normally exempt supply is included, but one exempt supply is to be excluded. Okay, what is that exempt supply? Whenever you are providing any service of loans, advances or deposit, you are giving loans, giving advances, giving deposit, okay, for which you are getting a consideration in form of interest or deposit. Can we say that is also your turnover? But that will be excluded from the aggregate turnover. Okay, that will be excluded specifically from your aggregate turnover. Only this, interest or discount by giving loans, advances or deposits. Are you clear with this? Okay, now once you have checked your last year's turnover, okay, and you come to know that you are eligible. Okay, you are eligible in the current year till the time your turnover does not exceed the same figures. Now, let's say my turnover does not exceed the same figures. Then can I say you can pay tax under composition scheme? Now, ma'am, at what rate should we be paying the taxes? So, if you are a manufacturer, other than notified goods manufacturer, if you are a manufacturer, 1% of the turnover. If you are a restaurant and outdoor catering service provider, your tax will be 5% of the turnover. If you are any other supplier of goods, manufacturer was covered above. If you are any other supplier, example trader, example wholesaler, etc., then your rate of tax will be 1%, not of the turnover, but 1% of the taxable turnover. In your turnover, taxable is also included, exempt is also included. So only for this, your rate of GST will be 1% of the taxable supply, right? And last one, composition levy for services, that is under section 10(2)(a). Then in that case, your rate of GST is going to be 6% of the total turnover. Are you understanding this? Yes, 6% of the total turnover. Yes, so let's revise all the rates of taxes if you are there under composition scheme. Okay, again I'll tell you, did I write it here? Okay, I'll write it here. Let's say if you are going for composition scheme for goods or restaurant services, then in that case section 10(1) and 10(2) will be applicable to you. Okay, and if you are engaged into any other services, then section number 10(2)(a) will be applicable for you. If you are going under 10(2)(a), limit for you will be 50 lakhs for last year also, for the current year also, and the rate of GST will be 6% of the turnover. right? If you are going for goods and restaurant thing, then the limit for you will be 1.5 crore. If special category states, then 75 lakhs for the last year checking the eligibility also, and even for the current year for paying the tax on composition scheme also. Now here, what will be the rates of taxes? For restaurant, the rates of taxes will be 5% of the turnover. In case of goods, if you are a manufacturer, then 1% of the turnover. But if you are a trader or a wholesaler, etc., then in that case, it is 1% of the taxable supplies. Can we say it is even more better? Here it is 1% of the total turnover. Here it is 1% only of the taxable turnover. So can we say your tax payable will also reduce here? Understanding this? Yes. Okay, now we have examples given in our main book. You can just refer to those examples. And yes, again and again I am telling you, this is the mistake that happens whenever you are checking your eligibility. You have to check the aggregate turnover of the preceding financial year. That is the meaning of the term aggregate turnover. Okay, but when you are paying the taxes in the current year under composition scheme, you have to calculate the turnover. Okay, you have to calculate the turnover in your state. Can you see this? Besides the rate, what is written? 1% of the turnover in the state or union territory, 5% of the turnover. So aggregate turnover term is different. Aggregate turnover you use only for the purpose of checking your eligibility. Turnover in the state you are going to calculate for the purpose of payment of taxes. Are you understanding this? Yes. So now, ma'am, how do we calculate this turnover in the state for the purpose of paying the taxes? So again, all taxable supply will be included, all exempt supply will be included in your total turnover. But will it include your interstate supplies? No, because you are not allowed, because you are opting for composition levy. Can you have export supplies here? No, because you have opted for composition levy. Okay, so taxable supplies and exempt supplies will be included. Taxes will be excluded. Inward supplies on which you are paying tax under RCM, that will be excluded. Okay, then after that, that interest or deposit will be excluded, just like we saw for the aggregate turnover. Yes. Now, one important thing. Suppose if you have if you have started the business in the current year itself, okay, then the first 20 lakhs of your turnover, okay, or the turnover on which you are not liable for registration, that turnover will also be excluded. Why? Because can we say that turnover is your free turnover on which you are not at all required to pay the tax. And this is your first year of business. So first time we get some benefit now. So the turnover on till which you were not liable to get the registration, that will be excluded from this turnover. Why? Because on that we are not required to pay any tax. Are you understanding this? Why are we calculating this turnover? We are calculating this turnover for the purpose of payment of tax. So can we say, let's say the threshold limit for registration is 20 lakhs. So on the first 20 lakhs, you are not required to pay any tax. So that 20 lakhs will be excluded from your turnover. Yes, that will never be excluded from your aggregate turnover, because what did I tell you? Aggregate turnover last year you will always take from 1st April to 31st March. Understanding this? Yes, I have given the examples also. You can just try it once. Okay, now going on to the provisions. Now, who cannot opt for composition scheme? Now, first of all, if you are engaged in supply of such goods or services on which GST is not at all leviable, no need to come for composition. If you are a casual taxable person, temporary person, or a NRTP, non-resident taxable person, means non-resident temporary person doing business here in India, you cannot opt for composition scheme. Please go for the normal one. Okay, if you are supplying interstate goods or services, not allowed. If you are purchasing from interstate, no problem. But if you are doing interstate sales, then you are not allowed. Okay, if you are supplying any services through eco, on which 9.5 is not applicable. 9.5 is not applicable, means you are not falling under those 5 points. Then in that case, again, you cannot come for composition scheme. Go for the normal scheme. If you are manufacturer of some notified products like ice cream, pan masala, tobacco, aerated waters, fly ash bricks, etc. If you are manufacturer of these items, you are not allowed to come for composition. But if you are a trader, then no problem. Okay, if you are a trader, then no problem. Manufacturer is not allowed. So these people are basically not eligible for the composition scheme, right? Okay, now going ahead. Now let's say everyone here, something important. Okay, let's say if you have opted for 10.1 and 10.2, then can we say your primary work is goods or your primary work is restaurant services? Yes, still it is called as what? Still it is called as composition scheme. Still it is called as composition scheme of goods. Means goods are your primary thing. Along with goods, now you want to marginally, little start providing services also. Possible? Possible. Can you still stay under the same section? Answer is yes, you can still stay under the same section provided these services are provided up to a limit. And what is that limit? It is 10% of the turnover in the preceding financial year. 10% of the turnover in the preceding financial year or 5 lakh, whichever is more. 10% of the last year's turnover or 5 lakh, whichever is higher. Till this amount, you can marginally supply the services. And if you are marginally supplying the services along with mainly goods, then you can continue under 10.1 and 10.2. Yes, and yes, one extra point I would like to add here is while calculating this turnover, again, interest or discount will be excluded. Yes. Acha. Similarly, let's say if you have gone for 10.2a, composition supply for services, means this will be called as what? This will be called as composition scheme of services. Composition scheme of services. Now you want to marginally start what? Marginally start supply of goods. So they say you can do it, but for that the quantum is not yet defined. Okay, the quantum is not yet defined. Here the quantum was defined, but here the quantum is not defined. I hope I am very clear till here, everyone. Yes, see, that is also written here. Example is also given for the same. You can just go through it once. I hope I am very clear with this, everyone. Yes, okay. Now remember, I had told you I am going to combine composition scheme and RCM together. Yes, very important, can be tested in your numerical question. Okay, now let's say there is a supplier and who is supplying certain goods or services to whom? To the recipient. Okay, and this recipient is registered person, but he is registered under composition scheme. Okay, he is registered under the composition scheme. Composition people are also registered people only, right? Now, let's say for example, this supplier is a GTA. Okay, this supplier is a GTA and recipient is, let's say, a partnership firm. Possible? We did it today under reverse charge mechanism. Yes, GTA providing GTA services to a partnership firm. So the partnership firm will be responsible to pay the tax under reverse charge mechanism. Okay, now can we say recipient will be liable to pay the tax to the government? Okay, let's say this partnership firm is a manufacturer. If it is registered under composition, can we say a manufacturer will have to pay tax at the rate of 1% of the turnover? Okay, but this 1% of the turnover you have to pay on your sales, on your outward supplies or on your inward supplies. The 1%, 5%, 6% that we studied, that is applicable only for our sales. Now, on our turnover in the state, we were paying this. Okay, but if this person is receiving some inward supply on which they are required to pay the tax under reverse charge mechanism, on that they will have to pay the tax at normal rates. Let's say the normal rate of GST on GTA services is 5%. So this composition person, let's say he has availed a transportation service of 5,000. So on this 5,000, he will have to pay tax at the rate of 5%. Okay, let's say he pays a tax of 250 rupees there. Okay, can he avail the ITC of this 250? No. Why? Because he is a composition person. Okay, so if you combine composition and RCM, then you will not be getting the you will not get the composition benefits. Okay, you will have to pay the tax to the government and that too at normal rates, and you cannot even take the ITC of the same. Are you understanding this? Yes. Okay, when you do the question bank, you will find a question on this. Chalo. Okay, so these are certain, there are certain restrictions for this composition person. Achha, can composition person collect tax from the customer? No, he cannot collect tax from the customer. He will have to pay from his pocket only. Will he be eligible for ITC? No, he will not be eligible for ITC. Can he issue tax invoice? No, he will have to issue a bill of supply. Can he collect the tax from the other person? No, he cannot. And everywhere in his place of business and additional place of business, he will have to mention the fact that he is a composition dealer, so that if anyone wants to do a transaction with him, they should be aware that he is a composition person. Are you understanding this? Yes. Okay. Then after that, going ahead, intimation of opting for composition levy. Okay, now how to opt for composition levy and how to withdraw from the composition levy. In the main lectures I had made this chart. We can just revise it using this. Now, how to opt for composition levy? Let's say earlier you were an unregistered person, but now you want to get yourself registered. So from day one, can you opt for composition levy? Yes. Okay, so from day one we can opt for composition levy. The registration form that you use, okay, the registration form that you use, that is GST REG 01, in that itself you can specify in part B that you want to go for the composition scheme. So right from your date of registration you will come under the composition scheme. Now next, normally imagine you are a registered person and you are following the normal scheme, but now you want to go to the composition scheme. Can you go? Yes. Can you go from any particular date? No. You can go only from beginning of the next financial year. Means this conversion from normal to composition cannot be done during the year. This can be done only from a fresh financial year. So please inform to the government, please inform to the GST authorities that you wish to go to the composition scheme, and then from next year's 1st April you can start with composition scheme. Manageable? Okay. Now once you have come under this composition scheme, can you withdraw? Answer is yes. Okay, now there are 3 types of withdrawal. First is mandatory withdrawal, means you will have to get out of the composition scheme if you do not fulfill the conditions. Example, turnover criteria is not met. Okay, or if you want to start, or if you have, you are not eligible for composition scheme, but still you have opted for it, then in that case you will have to get out of it mandatorily. Then in that case, whatever day that event occurs for mandatory withdrawal, let's say your turnover is going to exceed 1.5 crore. The day it is going to exceed 1.5 crore, from that day, within 7 days, please inform to the GST authorities that you have come out of this composition scheme, and as soon as this event occurs of your turnover exceeding the limit, as soon as that event occurs, please start paying the tax under normal scheme. And now that you can start paying the tax under normal scheme, you can even take the ITC, you can start taking the input tax credit, right? Achha, next one is voluntary withdrawal. Voluntary withdrawal is you yourself say, okay, I will come from composition scheme to the normal scheme. So whatever day you have chosen, this can be done in between the year also. Huh? This can be done anytime. So whatever date you have chosen, you have to inform it to the GST authorities that I wish to withdraw voluntarily from the composition scheme, right? And the last one, that is where the tax authorities tell you come out of the scheme. Means whenever the tax authorities, proper officer is of the opinion that you have violated the conditions or you were not eligible for composition scheme, still you are going under the composition scheme, then in that case they will issue a show cause notice on you to tell you or to ask you why we should not pull you out of the composition scheme, and depending upon your reply, the proper officer will pass the necessary order of either keeping you in the composition scheme or withdrawing you from the composition scheme. Are you understanding this? Yes. Okay. So see this first table is talking about opting for composition scheme, and the next one is talking about withdrawal of the composition scheme. Are you understanding this? Okay. Then the last few points under composition scheme, he cannot issue a tax invoice. Yes, if he cannot issue a tax invoice, he cannot collect GST also from the customer. He will have to pay the tax from his pocket. Will he be eligible for ITC or he won't be eligible for ITC? He won't be eligible for ITC. He is totally outside the chain of ITC. Right? What if he violates any provisions? If he was not eligible, still he opts for it. First of all, he will have to come out of the scheme. Secondly, he will have to pay the due tax. Plus, you will be also liable for penalty. And plus, the provisions of section 73, 74, 74A will also be applicable on you. Basically, 73, 74 will now get scrapped because a new section 74A has come into picture. Right? And one important point is, let's say if a particular person, okay, let's say a particular person having one PAN, if he has multiple offices in multiple states, let's say one office is in Gujarat, another office is in Maharashtra, another office is, let's say, in Tamil Nadu. Okay, then in that case, can this person opt for composition scheme? Yes, he can. Okay, multiple office people can opt for composition scheme. They cannot do interstate transaction, but can they do the transaction in the respective states? Yes. Okay, now Gujarat says I don't want composition scheme. Tamil Nadu says I want composition scheme. Maharashtra says I am okay with anything. So in that case, this choice is not available. Okay, all of them are a single entity. All of them are a single entity. So either all of you go for composition or all of you come out of composition. Are you understanding this? So choice for individual office is not available. I hope I am very, very clear till here, everyone. Yes, was this manageable for you all? Yes. Okay, so we are done with the revision of charge of GST chapter. Yes, simple. Okay, so let's start with the next chapter, that is exemptions from GST. Very, very important chapter, scoring chapter, but you have to take care of many things, many small details you have to take care so that we are not losing out any marks in this particular chapter. Yes, now first of all, let's start with the chapter exemptions from GST. Exemptions from GST means we had studied about the types of supply. One is your taxable supply, second one is your exempt supply. Within exempt supply also you had, one was your nil rated supply, then exempted by way of notification, and then the non-taxable supply, right? These all things we have studied. Now we had already studied. Now in this particular chapter we are going to talk about those exemptions which are, or those transactions or those supply of goods or services which are totally exempted by way of a notification, right? Now section number 11 of the CGST Act and section number 6 of the IGST Act, they give the powers to the government that okay, you can notify a particular transaction as exempted, right? And that is what is written in section number 11 and section number 6. Then there was a new section that was inserted, section number 11A and section number 6A, which this was a new section where the government gave a clarification that suppose if since last few years, okay, if since last few years, if you have been following a particular practice, okay, regarding taxability of a particular item, let's say a particular item was exempted since you had treated that this particular transaction is totally exempted and you have not been paying tax on it since so many years, and now if the government is clarifying whether it is taxable or whether it is exempted, then it will not have a retrospective effect. Okay, whatever practice you were following since so many years, they are telling let it go. Okay, we will not ask for any tax from you on that. But now that we have inserted the clarification, then from this particular date, you please start following as per the law. Okay, and those if those transactions, let's say majority of the people were considering those transactions as exempted till now. Okay, but there were a few people who used to pay tax on it. So then those people should not come and ask for refund now. Okay, whatever is over is over. Okay, whatever was belonging to the past period, they are telling we are letting it go. But from now onwards, we will clarify the stand that whether this particular transaction is taxable or is it exempt, right? Okay, then after that, let's go to the next one. Now from here, your taxability and exemptions part is going to start. There is a notification. Okay, there were notifications that were passed stating that which services will be exempted from GST, and similarly in section number 11 and section number 6 they have given the list of goods also on which the GST is going to be exempted. Okay, now when we talk about goods which are exempted from GST, these are going to be your basic goods, okay, daily use goods or food items, etc. Like your vegetables will be there, milk will be there, curd will be there. On these things, very basic things, on these things there will be no GST applicable. These are totally exempted from GST. Okay, whatever items I have mentioned or whatever goods I have mentioned, it's not only those. Okay, it's not only those. There are many others, but we do not have it for the purpose of our syllabus, and it is specified in the GST Act, in the CGST Act, IGST Act, that what goods are exempted from GST. Okay, but for the timing, for the purpose of your exams, you can simply remember that some important goods, okay, some basic goods, those will be exempted from GST. Okay, similarly, now going on to the most important part of the chapter, that is list of services. Which services are exempted from GST, that is from CGST also as well as IGST. For that, this notification number was passed, that is notification number 12/2017, central tax rate dated 28th June 2017, and similarly under IGST notification number 9/2017 was passed with on the same day, and then this notification has been kept on amending from time to time. Right now, whatever we are studying here, this is your amended exemptions. Starting with the first one. First one is any services related to charitable and religious activities. Okay, now any services which are provided by a charitable or a religious trust which is registered under the Income Tax Act, when they are providing some charitable activities, only then such charitable activities will be exempted from GST. Ma'am, now what do you mean by these charitable activities? See, we are not defining this charitable activity. This is already defined under the GST law. What 4 points are going to come up here? First one, if they are providing some public health services by way of care or counseling. Can you see first block, care or counseling of terminally ill persons or the persons with some physical or mental disability, persons who are affected with HIV or AIDS, or the persons who are dependent on narcotic drugs or alcohol, etc. If you are taking care of these people, if you are providing them care or counseling, it is considered as charitable services, and if you are providing these charitable services, then on that there will be no GST applicable. And similarly, if you are creating public health for family planning, for HIV and all those things, then even that is covered under charitable activities. Okay, that is one point. Second point was advancement of any religion, yoga, spirituality, etc. Okay, so yoga camps, etc., which are conducted by some trust, that will be totally exempted from GST. Then similarly, if there is any advancement of educational programs or skill development programs or educational programs. Okay, when these services, when these things is related to whom, when this is for some some children who are there in the orphanage, okay, abandoned children, etc., or for any person who is mentally or physically traumatized, for those people, then for prisoners and for people who are staying in the rural area above 65 above the age of 65 years. So anyone more than 65 years plus staying in rural area, or for prisoners, or for abandoned children, or for abused or traumatized person. If for them we are conducting some educational programs or skill development programs, etc., then those will be again exempted from GST. And the last one is you are engaged in preservation of environment, including a watershed, forest and wildlife. Okay, you are providing these services for which you are getting some consideration in return, then that will be totally exempted from GST. No ifs and no buts. Okay, only these four will fall under your charitable activities. Any other service provided by charitable and religious trust will be fully taxable. Okay, example, hostel accommodation provided to students, taxable. Okay, advertisement provided in the premises of charitable trust, fully taxable, no issues in that. Okay, then going ahead, now let's say if there is a priest, okay, if there is a priest, Pandit ji, Bhatt ji, etc., okay, if they are providing some services by way of conducting the religious ceremony, okay, let's say there is a birth of a newborn baby and you're calling someone to do the puja and all those things, or let's say in case of death, or let's say at the time of marriage, etc., if you're calling any of such person, the services provided by such person will be totally exempted from GST. Okay, then after that, then going to the next one, let's say there is a particular charitable or religious place, or let's say there is a religious place, not charitable, let's say there is a religious, like a temple or something like that, and in the area, in the vicinity of that particular temple which belongs to that particular trust, there are certain rooms also which are made, and those rooms are given on rent, or let's say there is some community halls, etc., made which is given on rent for conducting some functions, etc., or let's say there are some commercial shops. See, it is there within the land of this charitable trust only. Okay, let's say in the center there is a temple, and then it is surrounded by some room, it is surrounded by a building, like rooms are there, commercial shops, etc., are there. So can we say the trust is going to earn from renting of rooms, etc.? So even that will be exempted, provided your rent, etc., is within the limits. Now ma'am, what is the limit? So if renting of rooms is up to 1,000, okay, or if it is, or we can say like this, if it is less than 1,000, if it is less than 1,000, not taxable. Okay, it is going to be exempted. If it is more than or equal to 1,000 per day, then in that case, the entire amount will be taxable. Okay, similarly, renting of premises, community hall, Kalyan Mandapam or any open area, etc. Suppose if the prices of that is more than or equal to 10,000 rupees per day, renting charges is more than or equal to 10,000 per day, then in that case, again it is going to be taxable. And the last one, if you are renting the shops, okay, commercial shops are there, you have given it to people for conducting business there. If the rent per month, okay, if the rent per month is rupees 10,000 or more, okay, more than or equal to 10,000 per month, then in that case it becomes fully taxable. I hope I am clear till here, everyone. Yes. If the renting amount or if the rent amount is lesser than this, if it is lesser than this, then in that case it is going to be fully exempted. Okay, now this presence of the religious place or this religious place should be owned by whom? This can be owned by a registered charitable trust under section 12AA and 12AB of the Income Tax Act, or it can be of a trust or institution which is registered under section 1023C of the Income Tax Act, or it can be of any body or authority which is covered under section 1023BBA of the Income Tax Act. If all these conditions are met, then we can say that yes, the renting income, if it is within the limits, then we can say that it is going to be totally exempted from GST. Yes, okay. If the limits are exceeded, then we cannot do anything, then we will have to pay the tax on the same. Then going on to the last two entries, which is somewhere related to this charitable and religious trust, that we have combined together. Now entry number 60 talks about religious pilgrimage. Okay, if there is a religious pilgrimage which is facilitated by Government of India under some bilateral agreement. Okay, example, Kumaon Mandal Vikas Nigam Limited is taking you for Kailash Mansarovar Yatra. Okay, or let's say the Hajj Committee of India or State Hajj Committee of India, including the Joint State Committee, if they are taking you to Mecca, okay, for religious pilgrimage, then in that case, these organizations are providing you the services of taking you there, for which they will be charging the consideration from you. On that consideration, the GST is going to be totally exempted. Okay, only these two will be totally exempted. Then after that, next one, last one, everyone. If this is important, you get questions on this, please pay attention to this. If let's say, for example, if there is an individual person who is providing training, okay, individual person who is providing training or coaching in recreational activities relating to arts or culture. Okay, now when I say arts or culture, then in that case, drawing, painting, sculpture, music, etc., everything will be covered there. So if I am teaching arts or culture, individual is teaching arts or culture, that will be totally exempted. And if sports, etc. is taught by whom? If sports, etc. is taught by charitable trust, okay, by any charitable trust which is registered under the Income Tax Act, if they are providing teaching, training or coaching in sports, then in that case, even that will be totally exempted from GST. Sports can be any sports, it can be cricket, it can be badminton, it can be basketball, it can be tennis, anything. If arts or culture is taught by individual, if sports is taught by charitable institutions, then in that case it will be totally exempted from GST. Manageable till here, everyone? Yes? Okay. Then going on to the next service, that is the agricultural related services. Again, this is going to be important. Okay, now any services in relation to cultivation of plants, okay, for food, fiber, etc., or for any raw materials, if you are cultivating the plants, or if there is any rearing of life forms of animals, except rearing of horses. Please remember, when you get any question related to horses, it has been totally made taxable under GST. Okay, if you are cultivating the plants, or if you are rearing the animals, okay, for food, fiber, fuel, raw materials, etc., or agricultural produce, means you are getting for getting the agricultural produce, if you are doing it, then any services in relation to agricultural operations, okay, like cultivation, harvesting, threshing, cutting, pruning, etc., all these will be totally exempted from GST. Supply of farm labor, if you are providing labor to work at farm, for that you are charging any consideration, even that is going to be exempted from GST. Then any processes which are carried out at the farm, okay, like tending, pruning, cutting, harvesting, drying, cleaning, trimming, any or fumigation also. if these are conducted at agricultural farm, because of which the main characteristic of the agriculture produce is not changing. Example, if let's say you are doing it for potato, okay, or if you're doing it at a potato farm, then in that case it is going to be totally exempted. But let's say for example you are doing something because of which potato is getting converted into potato chips. Okay, if potato is getting converted into potato chips, then in that case it is not a basic process, it becomes an advanced process, so that is going to be taxable, right? Acha, then after that, the next one, renting of any agricultural machinery or vacant land. If you are renting your agricultural machinery or a vacant land can be with a structure or without a structure, doesn't matter. Okay, if you are renting it, then in that case, whatever rent you are going to get by renting it, on that GST will be totally exempted. And then the next one, loading, putting the goods, unloading, okay, packaging, storing, warehousing of agricultural produce is going to be exempted from GST. Okay, again, rice is not an agriculture produce, paddy is an agriculture produce. Okay, potato chips is not an agriculture produce, potato is an agriculture produce. Tomato ketchup is not an agriculture produce, tomato is an agriculture produce. I hope I am able to make you understand this. Yes. Then after that, the next 2 points are agriculture extension services. Agriculture extension services is nothing but knowledge sharing services with the farmers. Okay, let's say there are Kisan Connects or there are some training centers, etc., which provide the know-how to the farmers, for which they charge some consideration. On that, the GST is totally exempted. And then the next one, so any services provided by APMC, Agriculture Produce Marketing Committee. Okay, they provide the kind of a platform to the farmers that okay, you can bring your produce and you can sell it here to the wholesalers, etc. So any services provided by APMC, let's say they are providing the place, they are providing electricity, water supply, etc., for which they will be charging the consideration. On that, the GST is going to be exempted. And last one, if there is a commission agent who is purchasing and selling agricultural produce and if he is earning any commission, on that commission the GST is going to be totally exempted. I hope I am very, very clear with this. Yes, these were your basic agricultural related activities which are exempted. Basic, I said, we are yet to do some more points there. Manageable, everyone? Okay. Okay, so now the basic agricultural operation exemption that we have already completed, entry number 54. Now let's go to the other small exemptions under agricultural related services. So first one was if any person was provided those services in relation to cultivation of plants or rearing of animals for agriculture produce, for food, fuel, raw material, etc. Those things we had already covered in the first part. Yes, here it is. And now we are starting with the next one, that is entry number 55, where there is a particular person who is providing some service as an intermediate. He is providing the service of intermediate production process. Okay, means once the raw material is or once the produce is ready, after that there is some other process that is being done. But again, this is not going to change the what do we say, the way of the product. That is, it is still going to be sellable in the primary market only. Example, let's say for example you are converting potato into potato chips, like I told you earlier. Not those types of work is done here. Okay, this is some work which is done at the farm itself. Okay, so those things are covered under entry number 55. That is, intermediate production process is being carried out as a job work, means someone has given this work to you on job work in relation to same cultivation of plants or rearing of animals or agricultural produce, right? Another thing that we need to know is your when miling the paddy into rice. Again, that is not an intermediate production process because it totally changes the produce. Okay, earlier it was an agriculture produce, now it is not an agriculture produce. So that is not covered under entry number 55. Yes, and also miling of paddy into rice is done not at the farm, it is done in the in a separate place. Right, so it is also not done by the cultivators, it is not done by the farmers, it is done by the rice millers. Okay, so here in entry number 55, only those things which are done at the farm and that relates to the basic agriculture produce, only those exemptions will be covered up here. Okay, then after that, similarly, Now, can we say till now all whatever exemptions were available, all those exemptions were related to agriculture produce only, right? So rice was not included there. Now they have given a specific exemption to the people who are into the rice product also. That is only not the not miling etc., but only loading, unloading, packaging, storage or warehouse of rice will also be totally exempted. Okay, only these 5 things in relation to rice is exempted, not any other thing. Okay, example, commission agent who is dealing into rice, no, that is going to be taxable, that will not be exempted. Right, then after that, warehousing of minor forest produce, flowers, fruits, etc. Even those, the warehousing of that is going to be totally exempted. Then warehousing of cereals, pulses, fruits and vegetables. So warehousing of your agriculture produce, warehousing of rice, warehousing of minor forest produce, warehousing of cereals, pulses, fruits and vegetables. These are going to be totally exempted. Then artificial insemination of livestock. Artificial insemination is nothing but making a particular livestock be able to give birth to its children, right? So artificially we are giving some treatment to that particular livestock with which it can give birth, but other than horses. So even that service is going to be totally exempted. Then after that, doing some activities on fruits and vegetables. Okay, example, ripening. Okay, waxing, you must have seen in case of apples, etc. Then your retail packaging, that is big bunches are being packed into small bunches. Okay, if these are done in relation to fruits and vegetables, but again it should not alter the characteristic of that fruit or vegetable. It should, earlier also it was apple, now also it should be apple only, right? If you are not converting apple into apple juice, that is not covered here, right? Okay, then after that, let's say government. Okay, central government, state government, union territory, local authority. Let's say they are assigning the right. Okay, they are assigning the right to a cultivator, to an individual farmer, and they are giving the right to the farmer. Okay, you can use this particular natural resources for the purpose of your agricultural activities. That is for the purpose of cultivation of plant or rearing of animals, except horses. So whatever the farmer is going to pay to the government, maybe in the form of royalty or maybe in the form of charges, etc., that will be totally exempted from GST. Right, then after that, let's say there is some electricity distribution utility. Okay, electricity distribution utility is providing the service to a farmer. What service is provided by electricity distribution utility to the farmer? Now the main work of electricity distribution utility is to distribute the electricity. Okay, transmit the electricity. Now let's say it has distributed it up to a certain level, but the farmer's farm is a little far. Okay, the place where the farmer wants that electricity, maybe to run the tube well, etc., that is far away. So the farmer tells the electricity distribution utility, sir, can you please extend the electricity connection till my tube well? So for that, the electricity distribution utility will definitely charge some amount. On those charges, GST will be totally exempted. Right? Okay, then after that, any services provided by NCCCD. Okay, any services provided by NCCCD. Now NCCCD provides the information. Okay, it provides the service by way of sharing of knowledge. Okay, it basically shares the knowledge with the farmers, etc., that how to store your products in cold storage. Okay, just like we studied about agriculture extension services, giving technical know-how to the farmers. Similarly, here also it is a technical know-how, knowledge, etc., but specifically related to cold storage. So that is going to come up here. Clear till here? Okay, then after that, going to the next entry. Next entry is going to talk about your education services. Education services is very simple but very important. Okay, for CA final, for CA inter, for both it is going to be very important. You can definitely see a question on this in your exam. Yes. Okay, so now let's start with education services. Before we get into education services, first let's try to understand who will be considered. Okay, who will be considered as educational institution for the purpose of GST exemption. So educational institution, I always divide it into 3 types. Okay, type 1, type 2, type 3. Type 1 talks about your educational institution from preschool to higher secondary school. Okay, preschool to higher secondary school. Type 2 is any such educational institution which is providing you any qualification which is recognized by law, colleges, IIMs, institutes, ICAI, etc. And the third one is any approved any institution which is providing approved vocational education course. Okay, now ma'am, what do you mean by vocational education course? So any course which is run by ITI, Industrial Training Institute or Industrial Training Center. Okay, any courses run by them which is affiliated to NCVET, or any particular institute which is providing modular employable skill course. That is, by doing this particular course you will be able to get the job, okay, employment. So these will be considered, and these should be only in designated trades. Okay, this should be, it can be related to carpentry, it can be related to tailoring, etc. So in designated trades, if they are providing you the qualification, then that will be, or they are providing you the training, that will be considered as an approved vocational education course. So type 1, preschool to higher secondary school. Type 2, any qualification which is recognized by law. And type 3 is going to be your approved vocational education course. I hope I am very, very clear with this. Yes. Okay. Now listen. Can we say, first of all, in education services, again, there is going to be output services and there will be inward services. Output services means the services which are given by an educational institution. Now, which services are given by an educational institution? Any services given by these educational institution to its students, faculty and staff. Educational institution providing service to students, faculty and staff. Okay, it can be education services, it can be transportation services, it can be free food services, or it can be food services, any services provided by these educational institution to its students, faculty and staff will be totally exempted from GST. Okay, similarly, if there is any educational institution which is providing the service by way of conduct of entrance examination. Okay, so there is an educational institution, any of these, they are conducting an entrance examination for which they are charging entrance fee. Okay, even that is going to be totally exempted. So that is not, now the second one which I told you, it is not necessary that it is being provided to its students, faculty and staff only. Entrance examination can be for any person. Right, so these outward services by an educational institution will be totally exempted, right? And then now what about the inward services? Okay, when the type 1, okay, when the educational institution receives any input services, okay, like transportation facility, means we have outsourced the transportation work to any outsider, and that outsider is going to provide the transportation facility to my students, faculty and staff. That can be one transportation facility. Second one can be catering facility, that is, we have appointed an outsider to run a canteen in our premises, okay, or any outsider is providing us the meals, or let's say midday meal schemes, etc., that type. Third one is security services, that is watchman, security guard services, okay, housekeeping services, cleaning services, provided those are done in the premises itself. Then next one is services relating to admission, okay, or services relating to conduct of examination. I wanted to conduct that entrance examination, okay, that is going to be exempted. For that I have taken someone's help for printing the question papers, for printing the admit cards, etc. Those services will be considered as your inward services. And last one is some outsider is providing me some online periodicals or journals, etc., magazines kind of a thing. So these are the inward services which can be taken by an educational institution. Now, which inward service will be taxable for which type of educational institution? Try to understand. The first three, okay, transportation, catering and your security, these three will be exempted, but only for when it is provided to a type 1 educational institution. Okay, imagine you are a van uncle, okay, you are a van driver and you are providing these services to a school. Then in that case, when you are providing these services to an type 1 educational institution, it is going to be totally exempted. Okay, fourth one will be exempted when it is provided to any educational institution. Okay, all the three. And the last one, supply of periodical journals, will be exempted only when these services are provided to a type 2 educational institution. Yes, you must have studied also. Now we are simply revising it. I hope I am very, very clear till here, everyone. Yes. Okay. Now see, there are a few other clarifications that we need to do. Now, any services provided by educational institution to its students, faculty and staff will be totally exempted. Any services provided by educational institution in the form of conduct of an examination, even that is going to be totally exempted. Now, even these boards, state board, central board, etc., they will also be considered as an educational institution for the purpose of conducting the examination. Okay, even they will be considered as educational institution. So whatever is their output service and whatever is their input service, on that the GST will be totally exempted. Right? Acha, now accreditation fees, which is accreditation which is provided by the boards. Okay, let's say someone has studied from outside India, but now he wants to practice in India, so he will have to go to a respective board and get the accreditation that okay, now you are eligible to practice here in India. For that, whatever fees is charged by the board, that will be taxable. Okay, that will be totally taxable. Please understand, this is an important point. Okay, similarly, there is an authority called as National Testing Agency which conducts the examination. So again, it will be considered as an educational institution for the purpose of conducting the examination. So any output service, any input service by it is going to be totally exempted. Okay, then when we talk about ITIs, Industrial Training Institutes, there can be two types of ITIs, private ITI or government ITI. Services provided by private ITIs will be exempted if it is provided, providing the services in designated trade, if it is providing the educational services in designated trade. Okay, and any services provided by government ITI is anyway exempted, because we will study ahead that any services provided by government to individual people is totally exempted. Right? Acha, now apart from this, okay, apart from these three type of educational institution, none of the institution can call itself as an educational institution. Example, private coaching classes, etc. No, it is not an educational institution for the purpose of GST, and hence if I am charging fees from you, on that GST will be applicable. Right? Acha, now going on to IIM, okay, Indian Institute of Management, which is formed under IIM Act 2017. Now in this case, IIM provides long-term courses to its students who get admitted there, who takes the admission, etc. there. So the services provided by IIM, okay, that will come under type 2 educational institution, and it is going to be exempted. Okay, but IIM also conducts some short-term certification courses, okay, and that is not provided to the students, that is provided to the participants. So that is going to be taxable, because there the educational services are not provided to its students. Right? Okay, then after that, food. Okay, food in case of educational institution. So an educational institution can have its own canteen also, run by itself. That service, if it is providing to its students, faculty, staff, it will be totally exempted. Okay, now if the school or if that educational institution is outsourcing the canteen to someone else, then can we say we are taking inward supply for canteen? That will be exempted. That will be exempted from GST only when these services are provided to type 1 education institution, that same catering services. Right? Okay, then there are colleges, okay, then there is ICAI, etc., who conducts the campus placements. Okay, they help their students to get the jobs in the college itself, or as soon as the college is over, or as soon as the course is over. So can we say these institutes call big companies so that they can take our students for employment. So these institutes charge some amount from the MNCs. Okay, in that case, when we are charging some amount from the MNCs, means we are providing the services to the MNCs and not to our students, faculty and staff, and hence it is going to be taxable. Okay, that is going to be taxable. Okay, then after that there will be some marine related courses, shipping related courses, maritime courses, etc., which are approved by the DG Shipping, Director General of Shipping, under Merchant Shipping Act 1958. So any services, any educational services provided by them will also be exempted, because it will be considered as a type 2 educational institution. Okay, then Anganwadi, please consider this. Anganwadi is same as your preschool. Okay, so whatever exemptions were available to type 1 educational institution, same exemptions will be available to Anganwadi also. Okay, giving of migration certificate, issuing leaving certificate to our students is totally exempted from GST. Okay, then after that, flying courses, okay, flying training courses, etc., which are approved by the flying training organization. So if you want to start flying a particular aircraft, helicopter or whatever, you will have to compulsorily do the flying training courses as approved by the FTO. Yes, and DGCA tells you, that is Civil Aviation Directorate General, tells you that you have to compulsorily do these courses. So even these courses are done as per the Aircraft Act 1934. So even these will be these organizations, these FTOs will be considered as type 2 educational institution, and whatever services they are providing, even that will be exempted from GST. Manageable till here? Yes. Then hostels, boarding schools, etc. Can we say they are providing education also, plus they are providing lodging, boarding and food, etc. also? So can we say this will be considered as a composite supply? And if that is considered as a composite supply, then principal supply will be taxable. If whatever is the tax effect of principal supply, that will apply to the entire supply. Principal supply is education services only, so the entire service will be totally exempted. Okay, and the next one was the new point that was inserted, entry number 66A, which was talking about affiliation. Okay, if any particular board, let's say state board or central board, etc., let's say if they are providing affiliation services to the government owned schools, okay, that is school owned by central government, state government, union territory, local authority, governmental authority or governmental entity, if we are providing affiliation services to them, then it will be exempted. But if we are providing it to a private school, it will be taxable. Okay, university providing affiliation services to colleges, taxable. Okay, only when the board is providing the affiliation services to government owned schools, only that is going to be exempted. I hope I am very, very clear till here, everyone. Yes, then a few more points, everyone. Now let's say there is a transporter, okay, who is providing services to the transport services to the educational institution, so that educational institution can further provide it to its students, faculty and staff. Okay, now can we say this transport services provided to educational institution will be exempted only for whom? This will be exempted only for type 1 educational institution. Yes. Now let's say this transporter does not have his vehicle. So can we say he can take a vehicle on hire? So then they say that if again it is going to be used only for type 1 educational institution, then even this is going to be exempted from GST. So hiring is also exempted, and giving transportation services will also be exempted, and then charging something from the students, faculty and staff will also be exempted. I hope I am clear till here. Okay, then after that, entry number 69. Okay, entry number 69 was already existing. Just one new point that was added there was about training partner. Ma'am, what was this entry number 69? So it was talking about any services in relation to some development programs, vocational skill program, vocational skill development programs, national skill qualification program, etc. If any such programs are conducted by these institutes, okay, that is National Skill Development Corporation, NCVET, awarding body recognized by NCVET, assessment body recognized by NCVET, etc. When these people are providing the notified development programs, okay, this is basically under some scheme of the government, then whatever services are provided by them, okay, by way of conducting a program, etc., that will be totally exempted from GST. Yes, and now the new point added here is a training partner approved by NSDC. See, any services provided by NSDC is anyway exempted. Let's say I am a training partner. Okay, I am a training partner who is approved by the NSDC, and now I can also start providing these particular courses. Then whatever service I am also providing, even that will be totally exempted from GST. Yes, then after that, the three more entries, everyone here. Let's say there is an assessment body. Okay, there is an assessment body which is empaneled by the Directorate General of Training, Ministry of Skill Development, etc. And now they have given me the work. Okay, they have given me the work to do some sort of assessment, to do some sort of checking under the Skill Development Initiative scheme. So I am providing the services of assessment. Okay, who told me to provide these services? The Directorate General, etc. told me to provide these services under Skill Development Initiative scheme. So whatever services I am providing, that is going to be totally exempted. Okay, similarly, any training providers who are providing the training under a scheme called as Deen Dayal Upadhyay Gramin Kaushalya Yojana. Okay, now what sort of training is being provided under this scheme? Okay, they are offering skill or vocational training courses. Again, vocational training courses are being provided by training partners under the specific scheme of the government of Deen Dayal Upadhyay Gramin Kaushalya Yojana. Even this is going to be totally exempted from GST. And the last one, entry number 72, super duper important. Put as many stars as you want to put. Now, if we are providing any services to only 3 people, central government, state government, union territory, under any training program, means government is telling us to do some training program where the government is ready to meet more than or equal to 75% of the total expenditure. Means, can we say majorly it is sponsored by the government? Yes. So whenever I am providing these or whenever I am doing these training programs, whatever amount I am getting by doing these training programs will be totally exempted from GST. I hope I am very, very clear with this. Yes, these were your most important pointers under your education service. Manageable? Okay. Okay, then let's continue with the next service, everyone. Healthcare services. Let's start with it. Again, simple but important. First of all, we are going to do entry number 74, along with that some clarifications, then entry number 74A and then entry number 46. Only 3 entries in this particular service. Healthcare service related to medical, etc. Now, any healthcare services which is provided by clinical establishment, just like hospitals, okay, provided by clinical establishment, provided by an authorized medical practitioner, individual doctor, etc. Or if it is provided by paramedics. Paramedics is nothing but your supporting staff like nurses, physiotherapists, lab assistants, etc. So when these people are providing healthcare services to any particular person at any particular place, be it at the hospital or be it at their place, okay, when these people are providing any healthcare services, then it is going to be totally exempted from GST. Right, ma'am, what do you mean by healthcare services? So healthcare services is, treatment, diagnosis of any injury or any particular illness under any recognized systems of medicines like your allopathy, homeopathy, naturopathy, ayurveda, unani, etc. Under these medicines, if you are providing the healthcare services for treating any particular person, then whatever charges like operation theatre charges, then the doctor charges, etc., that will be totally exempted from GST. Even pregnancy is covered here. IVF is also covered under healthcare services. Then your plastic surgery or cosmetic surgery that you have to do forcefully because there was a defect. Okay, because there was a defect or because there was a developmental issue in a newborn baby or something like that. Then in that case, even that will be covered under healthcare services and even that will be exempted. Okay, if I am doing this cosmetic surgery, plastic surgery just for fashion or just to look good, whereas there was no defect, etc., then in that case, that is done for fashion, that will be considered as luxury and hence it is going to be taxable. Right? Now, when a particular person gets admitted, okay, when a particular person gets admitted at that time, let's say he is getting a room, he is taking a room in the hospital, then the room rent is also applicable along with the medical charges. So room rent, if it does not exceed rupees 5,000 per day, then it is exempted. Once it exceeds rupees 5,000 per day, then it becomes taxable. Okay, but if a patient is critical, okay, let's say he is admitted in ICU or he is admitted in ICCU, your cardiac care unit, or if a newborn baby is there and it is admitted in the NICU or any particular patient is admitted in critical care unit CCU, then in that cases anyway the patient is very, very critical, so they are telling that whatever charges you have paid for ICU, CCU, ICCU, NICU, on that whatever be the amount, it will be totally exempted from GST. Okay, but once the patient gets shifted in a normal room, for that we have to see the applicability. If the room rent exceeds rupees 5,000 per day, then GST will be applicable on the entire amount. I hope I am very, very clear with this. Okay, one more point which is there under this entry number 74 is the B point, that is if hospital, doctors, etc., if they are providing ambulance services, okay, that will be covered under your healthcare services. But if ambulance services, transportation of patient, ambulance kind of a services is provided by any other person, Okay, any other person that is other than clinical establishment, medical practitioner or paramedics. Let's say if there is any person who is engaged in the business of providing ambulances, okay, then in that case, even that is going to be exempted from GST. Transportation of patients in ambulance will be totally exempted from GST. I hope I am clear with this. Yes. Acha, in recognized system of medicines, your homeopathy, allopathy, naturopathy, Ayurveda, yoga, siddha, unani, these will be covered. Or okay, or any other recognized system which is recognized by the government. Okay, this Reiki, healing, etc., Jadoo, Tona, etc., that is not covered under recognized system, so that will be totally taxable, right? Okay, then after that, what about the food provided to the patients? Okay, now listen, can we say food provided to, we have done this when we were doing the supply chapter also, food provided to the patients. Can we say that is a composite supply along with healthcare? He did not get admitted in the hospital for eating the food, right? So this is composite supply, and if the principal supply was exempted, then even this food is going to be exempted. But if the hospital is providing food to the outsiders, example to the visitors, to the attendants, etc., who comes to see the patient, etc., for them if there is a canteen facility or a hotel facility in the hospital, then that will be fully taxable, because anything provided to the patient, that we can exempt, but anything provided to outsiders, that will be taxable. Okay, nowadays in many of the hospitals you will see ground floor is given on rent to shops, etc. Big shops are there. Rent from that will be fully taxable. That is not your healthcare service. Okay, let's say advertisement services provided by a hospital. You can put banners outside our hospital. You can put a banner on the terrace, etc. That will be fully taxable. Only healthcare service and ambulance services, only these will be exempted. Right? Okay. And one important thing, that is about cord blood cells or stem cell banking, where you can preserve the umbilical cord after giving birth to a child. Those services are now taxable. Okay, earlier it was exempted, but those services are now taxable. I hope I am clear with this. Yes. Okay. Okay, then let's go to the next entry, which is talking about rehabilitation services. So now if there are some rehabilitation professionals, okay, rehabilitation means the people who are engaged in providing some therapy, some counseling, etc. Okay, so if rehabilitation professionals are providing any services, rehabilitation professionals are recognized ones. If they are providing certain services of rehabilitation, therapy, counseling, etc. at some medical institutions, okay, or medical establishments, or they are providing these services at educational institutions to the students, etc., or if they are providing this at rehab centers which are established by the government or by the charitable trust or institutions registered under the Income Tax Act, then in that case, even that is going to be totally exempted from GST. Okay, so services provided by rehab professionals at these places will be totally exempted from GST. Right? And the last one is animals. Okay, just like humans need healthcare, similarly animals and birds also need healthcare. So the services which are provided by their clinic, that is veterinary clinic, even those will be totally exempted from GST. Simple till here, everyone. Healthcare services is manageable. Yes. Okay. Now going on to the next one, that is services provided by government. Okay, this is one big services provided by government. I will also tell you which one you have to do compulsorily, means which one you have to remember compulsorily. I'll tell you all those also, don't worry about it. Okay, now services provided by government and some specific bodies. Means here they are not only going to talk about central government, state government, local authority, they will talk about governmental authority, they will talk about government entity, etc. Many other people they are going to discuss about. Okay, now entry number 4 and 5, whenever you are studying, you can study it together. So now let's say if there are certain services which are provided by a governmental authority. Okay, by a governmental authority. Ma'am, what do you mean by the term governmental authority? So governmental authority is such a person which is set up with any authority, body, corporation, body or board, etc., which is either set up by an act of parliament, central government, or by a state legislature, state government, or established by any government with at least 90% control with the government, and they are formed, a governmental authority are formed to do the work which is entrusted to a municipality or which is entrusted to a panchayat. Okay, now ma'am, what works are entrusted to panchayat, what works are entrusted to municipality, that I have already written in the book, you can just refer it once. Okay, See, when we talk about municipality, means we are talking about our urban areas. There, town planning is there, road development is there, infrastructure is there, then your maintenance of parks, garden, etc. Those things are there. So all these is the responsibility given to the municipality. Now, when the municipality wants to get this work done, then there is a governmental authority that is formed. Okay, now let's say, for example, when we talk about buildings, when we talk about urban planning, etc., when we talk about infrastructure, or when we specifically talk about stay, that is town planning, etc. For that purpose, they have even formed RERA. You must have heard about RERA. So RERA, it safeguards the interest, it makes sure that the project is done on time, etc. If not done on time, then what will be the consequences? So RERA is also considered as what? RERA is also considered as a governmental entity. Right, so now any services which are provided by governmental entity, ma'am, which services? Any services related to panchayat or municipality functions. Okay, so entry number 4 talks about municipality and entry number 5 talks about panchayat. But in both the cases, who is providing the services? Services are provided by the governmental authority. So that will be totally exempted from GST. Right? Okay, then after that, going to the next one, entry number 6 and entry number 7, I have combined and I have made the conclusion for that in your book. Please try to understand this. Okay, now what are they telling us here for entry number 6 and 7? This we have studied when we were doing the reverse charge mechanism also. If you recollect, any services provided by government other than those services, remember, services by Department of Post and Ministry of Railways, then services in relation to aircraft or vessel and transportation of goods and passengers. Do you recollect that? And one more was there, that is renting of immovable property. So we are going to talk about that. Whenever we are talking about the A point, means we are talking about services by Department of Post or Ministry of Railways, Indian Railways. Then in that case, when these services are provided by government, okay, by government means by 4 people, then in that case, remember, it was not covered under RCM, so it will be always taxable, and that too it will be taxable under forward charge mechanism. Means the Department of Post and Indian Railways will be responsible to collect the tax and to pay it to the government. Okay, then after that, the next one is any services in relation to vessel or aircraft. Any services in relation to vessel or aircraft. Again, it was not covered under RCM. So when these services are provided by government, it will be taxable, and that too under forward charge mechanism. Then when the government is providing transportation of goods or transportation of passenger facility, again RCM was not applicable. So this will be taxable under forward charge. Okay. Now when the government is providing these services to any person, registered, unregistered, small, big, doesn't matter. Okay. In these cases, forward charge mechanism will be applicable. That is, government will be responsible to collect the taxes and pay it to the GST department. Right. Okay. Then after that, point number D talks about any other services. Okay. Any other services. Now, from that, before doing this any other services, let me take this renting of immovable property services. This also we had seen when we were doing reverse charge mechanism. I'll try to connect that also. When the government is providing any immovable property on rent to any registered person, then in that case, reverse charge mechanism was applicable. This is what we had studied. Please remember one thing, whenever government gives renting of immobile property, or whenever government gives immobile property on rent, please remember it will always be taxable. Okay, it will always be taxable. Now, how it will be taxable, that we need to understand. So, when they are giving it to a registered person, okay, when they are giving it to a registered person, then in that case, obviously it will be taxable, and that too under reverse charge, because government is telling you bear the responsibility, you bear the headache. And but when it is given to a small business entity, ma'am, what do you mean by small business entity? Small business entity is such a person whose last year's turnover did not cross the threshold limit for registration. So when they are giving this to small business entity, then in that case they are telling, why to burden the small entity with that? We will pay the tax on the same. So government will be responsible to pay the tax under forward charge mechanism, right? Okay. And last, when the government is providing any other services apart from these services, okay, in that case, when it is giving to a large business entity, means normal, a big registered business entity, taxable under reverse charge, business entity will be responsible to pay the tax. But when they are giving other services to other people, okay, when they are giving these other services to other people, then it will be totally exempted. Okay, do you recollect we had studied ITI, government ITIs? Government ITIs, what did I told you? I had told you that when government is providing the services to individuals, etc., it will be totally exempted from tax. Yes, ma'am, then why renting is not exempted? I just told you, renting is always going to be taxable. Just the person who is responsible to pay the tax might change, but otherwise that person will always be taxable. I hope I am very, very clear with this. Yes, those three, A, B, C, that will be always taxable under forward charge mechanism. Renting of immovable property, if given to a registered person, RCM will be applicable. If given to any other person, forward charge mechanism will be applicable. Other services given to registered business entity, it will be taxable under RCM. Given to any other person, it will be totally exempt. Okay, so when government is providing services to individual people like you and me, then in that case, it will be totally exempted from GST. Yes, okay, then intergovernment services given by one government to another government, totally exempted. Okay, services given by government, apart from those three, apart from those three, if services are given by any government and if the value does not exceed rupees 5,000, then it will be totally exempted. And if it is a continuous supply of services, means in a year many times the government is going to provide the services, then 5,000 you have to check for the entire year for its applicability. Right? Okay, then let's say if a government entity is providing the services to the government, okay, government entity providing the services to the government for which the government is giving grants, again this is going to be totally exempted. Ma'am, before that, what do you mean by government entity? Again, 90% control of the government, it is formed to do the work of the government. Okay, it is formed to do the work of the government. Governmental authority was formed to do the work of panchayat and municipality. Right? Okay, then going to the next one, old age home, important to be remembered. Okay, old age home facility, if it is provided by government, central government or state government, or it is provided by any charitable trust. Okay, to whom? To the resident persons, means those who are staying there whose age is 60 years or more, and they are charging a consideration of rupees up to rupees 25,000 per month per member. Okay, for which they can stay there, they will get the food, etc. If it is up to 25,000 rupees per month per member, and if it is provided to residents whose age is more than 60 years, 60 or more, then in that case, whatever consideration is received by that old age home, that will be totally exempted from GST. Right? Okay, then after that, next one, entry number 9E was newly inserted some time back. Ministry of Railway, whenever Ministry of Railway is providing the services to any person, just now we saw, it is always taxable, and that too under forward charge mechanism. But where Ministry of Railway is providing these services like platform ticket fees, then your cloakroom services, your electric vehicle services on the platform, etc., then retiring room, waiting room services, for which if it is charging any amount, that will be totally exempted from GST. Similarly, when one division of railways is providing the service to another division of railways, normally services provided by railways is taxable, but inter-zone services, etc., will be fully exempted. Okay, then similarly, when any particular special purpose vehicle, okay, who has prepared some infrastructure for the railways, when they are providing the services to the Ministry of Railways, and Ministry of Railway is also providing the services to the SPV by way of maintaining that infrastructure which belongs to the SPV. Okay, let's say SPV has prepared a car shed for Ministry of Railways. Okay, and it is giving it to the Ministry of Railway for using it. The rent on that will be totally exempted. Similarly, Ministry of Railway is doing its maintenance for SPV. On that also GST is going to be totally exempted. Okay, then Department of Post, we had studied, any services provided by them will be totally taxable. Okay, but if they are providing any services by way of postcard, inland letter, book post, ordinary post, whose weight is not more than 10 grams, okay, it is less than 10 grams actually, then again this service is going to be totally exempted. Okay, then electricity distribution companies, electricity transmission companies are doing their work for which they are collecting some charges, again it is going to be exempted. Okay, if we are taking other services from the electricity department like meter testing, equipment changing, shifting of meters, okay, meter checking, etc., all these services will be again totally exempted from GST. Right? Then any services provided by pension fund, any services provided by provident fund, any services provided by NPS, when they are providing these services, okay, to its members, then again it is going to be totally exempted from GST. Okay, entry number 34A important. Let's say a government is giving guarantee. Okay, government is giving guarantee for its PSU. Okay, PSU is there, PSU has taken a loan from a bank. Bank asks for guarantee. Now the guarantor is going to be the government. Suppose if government is acting as a guarantor for its undertaking, then whatever guarantee commission the government is going to get on that, the GST will be totally exempted. Right? Okay, then when we go and obtain certain registrations with the government, example food license, FSSI, etc., or let's say we go and we take some fire license from the government, etc., or any other license that is required for our business, Gumasta license, if you must have heard about it, shop and establishment license, etc., on that the GST will be totally exempted. Okay, then entry number 59 is important. Services by a foreign diplomatic mission located in India. Okay, embassy offices located in India, when they are providing, if we are not providing services to them, if we provide any services to them, that is taxable, but when they provide any services, then that it is going to be totally exempted, right? Okay, then when the government is issuing passport, visa, birth certificate, death certificate, driving license, etc., again the charges on that will be totally exempted from GST, right? Okay, then after that, when the government is tolerating an act, okay, let's say you have done a breach of contract with the government is tolerating that act, and for which the government is asking compensation from you. So again, this is a supply, and that too it is when this particular supply where you are tolerating, where the government is tolerating an act, then it will be totally exempted from GST. Okay, when any other person is tolerating an act, then it will be taxable. Please remember that. Yes. Okay, so what we had studied in the supply chapter was tolerating an act, and for that, if we are going to get any consideration, then that is considered as a supply. But when the act is tolerated by government, then in that case, it is going to be totally exempted from GST. Yes, then after that, if we are taking help of the merchant officers, okay, for loading, unloading or clearance of any cargo after the working hours or on Sundays, etc., for that, if we are paying any merchant overtime charges, then it is going to be totally exempted from GST. Then if we are paying some charges for getting some information from RTI, then on those charges also GST is going to be exempted, right? Then after that, excess royalty collection contractor, that is when the government, the state government is providing some services to a person, to a business entity, to use the natural resources and then to do the mining. Okay, then whatever royalty this person was required to pay to the state government, now this will be first collected by the excess royalty collection contractor, and then he is going to pass on the amount to the state government. Okay, so whatever amount this person, first of all, the supply which is done by the state government to this person, can we say this is a business entity? So this will be taxable under GST under reverse charge mechanism. So the recipient will be responsible to pay the tax on the same. Okay, now let's say this particular person is ready to pay a royalty of 100 crore rupees. He has done the mining and he can pay a royalty of 100 crore rupees. Okay, and ERCC has a contract with the state government of a minimum royalty of 110 crore to the state government. So can we say on this 100 crore, the tax will already be paid by the recipient, by that particular business entity, but ERCC will have to pay extra 10 crore from his pocket to the state government. On that, the responsibility to pay the tax is of the ERCC, again under reverse charge mechanism. Here in this case, okay, in this case between state government and ERCC, again the responsibility to pay the tax on this 10 crore will be on the ERCC. Okay, and let's say, suppose if ERCC had entered into a contract with the state government to pay a fixed royalty of only 90 crore, then in that case, this business person will be paying 100 crore to the ERCC. Yes, on that already, on the entire 100 crore, the recipient would have paid the tax. Now ERCC will be transferring only 90 crore out of it. So in that case, ERCC will not be liable to pay any GST because 90 crore is the part of this 100 crore on which already the tax has been paid. This we had seen under entry number 65B. Right? Okay. Then services provided by police. Okay, police personnel, etc. for any private events. For any private events, example for IPL or for any personal security, etc. Whenever the police is providing any such services, then it will be normally taxable. I hope I am very clear till here, everyone. Yes, so these were your services provided by government. Okay, now going to the next one, that is services provided to government. Services provided to government. A few entries are there. Yes, big entries, like big services are these, and these are now coming to an end. Services provided to government. Now when we are providing any pure services 100% labor services, when we are providing these services to the government only. Okay, whenever we are whenever we are providing this 100% pure labor services to the government in relation to that panchayat and municipality services, then in that case, whatever consideration we are going to get from the government, on that the GST will be totally exempted. Okay, example, I am changing this, I am repairing the roads, or I am repairing the street lights, etc. for the government, and I am providing only labor service. Material is provided by the government. Then whatever GST is there, whatever charges of labor are there, on that the GST is going to be exempted. Okay, similarly in entry number 3A, this is very important. Let's say I am providing composite supply of services, of goods and services to the government. Means I am providing goods also to the government, plus I am providing services also, but the proportion of goods should not exceed 25% of the total. Then in that case, on the total amount, on the entire composite supply, the GST is going to be exempted. Right? Okay, so similarly everyone, when I am providing ambulance services to the government under a government scheme. Okay, if I am providing only ambulance transportation services or ambulance services, it will be totally exempted. If along with ambulance, I am providing certain goods also within the ambulance, then in that case, you have to check that proportion of 25%. Similarly, when I am doing miling of wheat into wheat flour or paddy into rice, in that if I have added certain minerals also. See, one service that I was providing is miling. Okay, another one is if I am adding certain minerals also, means goods is also involved in that. Then in that case, if the proportion of the goods is more than 25%, then in that case, it will be taxable. If it is within 25%, it will be totally exempted. Right? Okay, then after that, if we are providing certain services to army and other central government, state government department, okay, which is in relation to sanitation and conservancy services. So they say sanitation and conservancy services are in relation to your municipality panchayat services. So any services in relation to this, if you are providing it to the government, it will be totally exempted. Otherwise, it will be totally taxable. Okay, then if you are providing any services to CPWD, okay, if you are providing any services to CPWD, that is Public Works Department, if you are providing any services for maintaining the garden, for maintaining the playground, etc., if you are providing them any services, again, if it is pure labor services, fully exempted. If it is labor plus material, it will be exempted if the value of material does not exceed 25%. Okay, services, horticulture related services. Okay, then this one is a different point altogether. DMFT, District Mineral Foundation Trusts. Okay, now District Mineral Foundation Trust are the trust which is set up by the government in the districts where mining takes place. Okay, now because mining takes place, the environment of that particular place gets disturbed. Okay, there are there are environmental issues there, education related issues are there, water related issues are there. So the government has set up this fund called as DMFTs, and out of the now who contributes in DMFTs? The companies who do the mining, they contribute to they have to compulsorily contribute to the DMFTs, and from this DMFT we use the money for the welfare of children, welfare of ladies, women, etc. in that particular area. So this, what they are trying to say is, this DMFT which is formed by the government, this will be considered as governmental authority. Okay, this will be considered as governmental authority. So whatever exemptions are available to governmental authority, same will be available to DMFTs also. Okay, similarly, let's say some facility services, some housekeeping kind of a services have been provided to Municipal Corporation of Delhi for its own headquarters. If we are providing some services to the headquarters for itself, for headquarters itself, then we are not doing this for municipality and panchayata. In that case, it will be totally taxable. If we are providing some services to the municipality which is in relation to panchayat or municipality, then it is a different thing. But we are providing like personal services to the municipal corporation, then that will be totally taxable. Right? Okay, then after that, if we are providing some services to governmental authority, okay, services provided to governmental authority, do you recollect entry 4 and 5 that we had done, everyone? Entry 4 and 5 was talking about services by governmental authority, that was exempted, and now we are studying services provided to governmental authority, that is we are providing services to the governmental authority, these 5. Okay, public health, water supply, slum development and improvement, sanitation conservancy and solid waste management. When we are providing these services to the governmental authority, again if related to panchayat municipality, it will be totally exempted from GST. Okay, then after that, if we are providing any services to government under any insurance scheme, okay, let's say we are the insurance company, we are providing insurance policies to the government for which the government is going to pay us the premium, insurance premium, that will be again totally exempted from GST. Then after that, regional connectivity scheme, airports. Okay, now when we are providing the services to the government, requested that can you please start your airline service on this particular route. So I agreed that okay, I will start, means I am agreeing to the government that okay, I will start the airport on this route which is not so common. Okay, you please make an airport in this small city, we will start our service there. So can we say we are providing the services to the government for which the government is going to fund it to me. Okay, in this regional connectivity scheme, it is financially not viable. So some amount we collect from the passengers and some amount the government gives us. So the amount which the government is giving to me, okay, for funding, for starting this particular route, then on that the GST will be totally exempted only for the first 3 years when the airport had started. Are you able to understand this? Yes? Okay. Okay. Then going on to the next entry, that is entry number 11A, which talks about services which are provided by fair price shops to the government. Okay, now these particular shops provide services to the government, that is they sell food grains, kerosene, basic edible oil, sugar, etc. under public distribution system, that is when the government wants to do the public distribution system, and for which this fair price shops get some commission or margin. On that commission or margin, the GST is going to be totally exempted. Then any services provided by STEP or TBI, that is Science and Technology Entrepreneurship Park or Technology Business Incubator, that is who is providing the startups, okay, for research, or they are helping the startups, etc. So when the services are provided by TBI, or when the services are provided by STEP, or when the services are provided by bio incubators, then in that case GST will be totally exempted. Okay, whatever services they are providing, that will be totally exempted from GST. Okay, similarly, now incubators are providing the services to the incubatees. Okay, now these incubatees will take the help of incubators and then they will finally provide services to the public, to the business persons, etc. So any services provided by incubatee up to a maximum turnover of 50 lakh rupees in a financial year will be exempted from GST. Up to 50 lakhs exempted, more than that taxable. Condition for that is the total turnover should not have exceeded 50 lakhs during the preceding financial year, and the time period for which they have entered into the agreement as an incubatee with the government, a period of 3 years should not have elapsed. So basically, as an incubatee, 3 years should not have elapsed. Last year, turnover should not have exceeded 50 lakhs. If all these conditions are fulfilled, then in the current year, you will be eligible for exemption up to rupees 50 lakhs. Yes, so basically incubatee is the entrepreneur which is actually developing something new, okay, which is actually developing maybe some technology, etc. And with the help of that particular technology, it is taking the help from the incubator and it is trying to develop some innovative products. Right? Acha, similarly, research and development services, if we are providing to the government entity or some scientific research association for which they are paying us some grants, on that also GST will be totally exempted. Okay, new point this was inserted. Then after that, the next one, entry number 22, very important. You have to remember this. You can see questions coming from this particular part. Now, let's say if a state transport undertaking only if it has taken some motor vehicle on hire, okay, to further provide the transportation services, then it will be totally exempted from GST. Okay, state transport undertaking has taken a motor vehicle on hire, and this motor vehicle is having a capacity of more than 12 passengers. If they have taken this motor vehicle on rent, on that the GST will be totally exempted. Okay, similarly, if you have given a motor vehicle, same electronic vehicle, okay, now EV, you have given it on hire to a local authority, again that vehicle has a capacity to carry more than 12 passengers, then again it is going to be totally exempted from GST. Above one was a normal motor vehicle given to STU. This one is an electronic vehicle given to on hire to a local authority, it will be totally exempted. Similarly, if you are giving any goods carrier to a GTA who is further going to do transportation of goods, then it is going to be totally exempted from GST. Okay, then after that, you are giving your motor vehicle on hire to a transporter. We have already done this point. You are giving your motor vehicle on hire to a transporter, and transporter is then going to provide the services to the educational institution. Then this is going to be totally exempted, provided the education institution is a type 1 educational institution. I hope I am very clear till here. 4 points we did in entry number 22. That is very important. Please be careful. Yes. Okay. Then after that, going to the next service, everyone. Construction service, very small service. Let's take it. Now, construction services, in that if you are providing pure labor contract services, maybe of construction, erection, repairing, renovation, alteration, redevelopment kind of a services under housing for all scheme. Okay, under housing for all scheme or Pradhan Mantri Awas Yojana, housing Yojana. Okay, if you are providing any services under this particular scheme, then it is totally exempted from GST. Even though it is a labor, even though it is a supply of service, still it will be totally exempted because it is specifically exempted. And similarly, if you are providing pure labor services of construction, erection, commissioning or installation, okay, means there is no repairing happening here, there is no renovation happening, a new structure is coming. For that, if you are providing pure labor services, not of the entire building but of a single residential unit. Let's say someone wants to build a bungalow for which that person has taken your labor services. On those labor services also there will be no GST applicable. It will be totally exempted. Okay, please remember in entry number 11, it is talking only about the original works, or it is talking only about a new construction. It is not talking about any repairs or renovations, etc. Yes, please be careful with that particular point. Yes, okay. Okay, then let's go to the next service, everyone. Passenger transport services, and then we will look goods transportation services. So in passenger transport services, in entry number 15, first of all, these things are going to come up here. Entry number 15, first one is air travel. Okay, if you are doing air travel in economy class, and if your journey is going to start from these airports, or if your journey is going to end at these airports, then in that case GST on the flight tickets will be totally exempted. Ma'am, which airports or which airports are you talking about? Arunachal, Northeastern and West Bengal. Okay, Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim or Tripura. Normal, same. Those 8, or at Bagdogra located in West Bengal. See, in West Bengal you have many other, like Kolkata etc. is also there, but in West Bengal only one, that is Bagdogra. So if your journey is starting or ending at these airports, okay, then in that case the airline ticket of economy class will be totally exempted from GST. Okay, then next one, if you have entered into a contract for hiring a availing the passenger transport services through a contract carriage. Okay, means non-AC contract carriage means you have contacted a particular company and you are telling him that can you help in transportation of passengers, okay, as per your schedule, as per your routes. Okay, just that we need the transportation services from you. It should not be for tourism purpose, it should not be for tour purpose, etc. Normally if you are availing the services of a transportation company, okay, and it is being done in a non-AC contract carriage, then in that case it will be totally exempted from GST. Example, let's say a particular company contacts a transporter and asks him, can you help my employees for daily transportation from home to office and office to home? Then in that case, if they are availing the services and the employees, and the timings and the routes is not decided by the employer, it is decided by the transportation company. It's just that the employees will sit in the carriage. Okay, employees will sit in the carriage, and that in that particular carriage only the employees of the company will be sitting, because we have entered into a contract and the cost of that will be borne by the company. So in that case, non-AC contract carriage will be totally exempted from GST. Next one, non-AC stage carriage. Non-AC stage carriage. Stage carriage means, let's say there is a roadway bus which is going to go from one point to another point. There can be passengers who can enter into this particular bus. They can enter at any point, they can exit at any particular point, and they will be charged for their individual tickets. On that, if it is a non-AC stage carriage, on those ticket charges, GST will be totally exempted. See, stage carriage is basically, first of all, it is such a motor vehicle which can carry more than 6 passengers, and it is such a place where separate fares are paid by individual passengers. Okay, either for whole of the journey or for part of the journey. So normal bus traveling you can assume. Whereas what happens in a contract carriage is, you enter into a contract with that particular person. You tell him, can you provide transportation services? He says, okay, I will provide you transportation services. But in that vehicle, when you are sitting, no one else will enter, because we have entered into a contract, na? Okay, let's say I want to go from one place to another. Okay, I want to go from one place to another for work purpose, not for tourism, nothing. I want to go from one place to another for work purpose. And then that person says me, okay, I will take you from this place to another, but in a non-AC vehicle. I say, okay, no problem. So then only I will occupy that vehicle. No one else will occupy it, and I will be paying him the charges. On those charges, GST is going to be totally exempted. Right? Same employees example is given up here. Then after that, next one, transportation of passengers. That one was with air in economy class, then non-AC contract carriage and non-AC stage carriage. Achha, one more thing. What if this contract carriage or stage carriage is booked through e-commerce operator? If it is booked through e-commerce operator, example Red Bus, etc., then in that case it will be fully taxable as per section number 9(5) that we have already studied. Okay, then other modes of transportation. If transportation of passengers takes place by railways, okay, then first class and AC is always taxable. Apart from that, it will be exempted. Okay, metro, monorail, tramway, always exempted. Okay, e-rickshaw, auto rickshaw, metered cab, always exempted. But if it is done through 9(5), Uber, auto, then in that case it will be taxable as per section number 9(5). Okay, then inland waterways, that is through rivers and canals, by not touching the sea. Okay, Ganga river, etc. If we are doing our transportation through that, whatever charges they take for transportation will be totally exempted from GST. Then if you are using any public transport means which is open for everyone, okay, other than predominantly for tourism purpose in a vessel between places located in India. Let's say you are going from one island to another in Andaman and Nicobar Islands, from one island to another by vessel. You don't have any other option, and it is a public transport. Everyone uses there in daily course of business, not only for the purpose of tourism. So the purpose of that vessel is not tourism. The purpose of the vessel is a public transport. So whatever charges are there on that, GST will be exempted. A cruise, Cordilla cruise, etc., that is taxable because that is predominantly for tourism purpose. Yes, okay. Auto rickshaw, etc., we have discussed, it will be exempted, but if done through e-commerce operator, it will be totally taxable. Okay, if you go to Kashmir, etc., okay, shikara rides, etc., then that is purely for tourism purpose, fully taxable. Okay, you go on a cruise, Okay, 1 night, 2 night, etc. There you get sightseeing, water seeing, food, enjoyment, etc. Fully taxable. I hope I'm very, very clear with this. Yes, this was your passenger transportation services. Then going on to the next one, that is goods transportation service. Now, goods transportation service. If you are transporting the goods, if you are transporting the goods through GTA, and if you are transporting the goods through a courier agency, fast courier agency, GTA slow. GT is also a person who compulsorily issues a document called as consignment note. So if you are doing the transportation of goods through these two, then it is taxable. Okay, any other mode by road will be exempted. Example, you hire an individual tempo driver, you tell him, take my goods from here to there, then it is going to be exempted. But if you go to a GTA is any person who issues a consignment note compulsorily. Okay, or if you go to a courier agency, then in that case it will be taxable. If you go to other people, okay, if you go to other people who do the transportation by road, it will be totally exempted. Okay, then if you are doing the transportation by inland waterways, for goods also, for passengers also, it is always going to be exempted. I hope I am very, very clear with this. Yes, okay. Then if you are doing some transportation by railways or vessel, okay, railways or vessel, then in that case normally it is taxable. But if you are transporting these items, if you are transporting relief material for flood affected areas, disaster affected areas, etc., defense or military equipment materials, then your newspapers, then your milk, salt, can you see, milk, salt, food grains, etc., agriculture produce, organic manure, when you are transporting this through railways or vessel, then it is going to be exempted. Any other thing transported through railways and vessel will be taxable. Okay, then satellite launch services provided by Antariksh Corporation or by ISRO, etc., again exempted. Toll charges that you pay, double toll charges if you don't have the fast tag, that if you pay, or overloading charges of your vehicle that you pay, totally exempted from GST. It charges is not free, only GST is exempted. Then if whatever charges you are paying to the RTO for getting the national permit is written on the trucks, etc., if you must have seen, that is where you can take the vehicle anywhere in the country, even that will be totally exempted from GST. Okay, then this is what we studied under goods transportation, and GTA specifically we had studied that GTA will be taxable. Okay, now they have taken the GTA point separately. Normally they say that if we are availing the services of GTA, then it is taxable, but there are some services of GTA that is totally exempted. Now, if GTA is same transporting those notified items, agriculture produce, organic manure, newspapers, etc., if GTA is transporting this in a goods carriage by road, it will be totally exempted. So, when GTA is transporting this, when vessel it is getting transported, or in railways, it will be totally exempted. Okay, then after that, if GTA is providing the services, to other than those 7 people, do you recollect? Other than those 7 people, or if GTA is providing the services to government which is registered only for the purpose of TDS, then in that case it is going to be totally exempted. Okay, in third chapter we had seen, charge of supply chapter we had seen, if you are giving to 7 people, then RCM is applicable. To other than 7 people, now they are telling it is fully exempted. Why? To burden. Okay, similarly, when you are giving it to the government registered only for the purpose of TDS, again it is going to be totally exempted. I hope I am very, very clear till here. Yes. Okay, so then let's go ahead to the next type of service, that is renting of immovable property. Very, very important, and I have summarized these in our books for residential unit also and for commercial property also. You won't face any problem. Okay, first of all, what is the entry number 12 telling us here? Entry number 12 specifically says that whenever you are renting any residential dwelling for use as residence, okay, residential dwelling given for use as residence to a particular person for his personal use, it is always going to be exempted. Okay, but if you are renting it to a registered person who can further use it indirectly for his business purpose, maybe for his employees, etc., then in that case it will be taxable under reverse charge mechanism, because you are renting it out to a registered person, right? So again I'll tell you, if you are renting it, let's say I'm renting it to a particular company, okay, and that company is going to use it for commercial, residential dwelling used for commercial purpose, always taxable. And just because we have rented it to a registered person, put the liability on him, that is RCM will be applicable. Okay, if you have given it to a registered person for residential use, and he is going to use it for his employees, etc., again taxable under reverse charge mechanism. But if you have given it to a registered person, imagine an individual is also a registered person, can also be a registered person. If you have given your property, residential property, on rent to a registered person, and that registered person is going to use for herself or himself, then in that case it is going to be totally exempted from GST. Okay, now let's say you have given your residential property on rent to an unregistered person, and but he is also going to use it for commercial purpose, taxable, and forward charge mechanism will be applicable provided I am registered, right? And if you are giving it to an unregistered person, and if he is going to use it for his personal use or for his employees use, both, then in that case it is going to be totally exempted from GST. Right? Similarly, let's talk about commercial property renting. See, always remember one thing, to the extent possible, commercial property they will always try to rent, always try to make it taxable. Okay, always, either it can be FCM or it can be RCM, but they will try maximum level to make it taxable. Okay, so now let's say if you are giving, see, if first of all, if you are a registered person, okay, if you are a registered person, you are giving it to a registered person, registered to registered, registered to unregistered, registered to composition person, doesn't matter, in all the three cases it will be taxable and FCM will be applicable because you are registered. Okay, next, if both of us are unregistered, forget it, no GST. Okay, now unregistered person is giving it to a registered one, unregistered giving it to registered, commercial property, RCM, and this person will be liable to pay the tax. Unregistered giving it to a composition person, composition is registered but a small one, so they are telling this is going to be exempted. We had studied this in RCM, on this there will be no RCM, and now we are studying this is also going to be exempted from GST. I hope I am clear till here, everyone. Yes, okay. Then one explanation they had inserted in that entry was, whatever we are studying in entry number 12, that is not applicable for hostel accommodation, accommodation for students, etc. It is not applicable for that. Right? Now let's say there is a particular premises which is simply providing you hostel facility. See, hostel facility, one is it can be provided by educational institution itself, along with studies they will provide you hostel facility, and another one is only hostel. So here we are talking about only hostel, student accommodation, student residences, etc. So if they are supplying any such services and they are charging the amount from you of less than or equal to 20,000 per month, up to 20,000 per month, and they are giving it to you for a continuous stay of 90 days, then it is going to be exempted. If any one of the condition is also not met, then it is going to be taxable. Again, less than or equal to 20,000 per month for a continuous period of 90 days, exempted. Yes, okay. Then after that, going to the next one is leasing services. Okay, now let's say there is any particular plot of land or industrial plot of land which is there with the government or government corporations, that is your industrial development corporations of every particular state is having some or the other industrial plot with them. Now they are giving this on long-term lease to a business unit or to an industrial unit or to a developer, so that they can develop something on that particular line. Maybe they can develop some big industry there, right? And if you, now the industrial development corporation is giving this plot of land on lease to some other person, can we say he is going to charge something in return? Whatever lease rentals he is charging in return, on that GST will be totally exempted. Okay, services provided by whom? Services provided by government. Okay, by government corporations, etc. Right? Just like in Maharashtra, we have got MIDC. So if MIDC is giving any industrial plot of land to a business unit to develop something on it, and it is going to charge some lease premium from them, on that lease premium GST is going to be exempted. Similarly, if this industrial development corporation is charging some good preferential location charges also, just to give you a good location, for that also if we are charging along with rent, if they are charging something from you, even that will be exempted from GST. I hope I am clear till here. Yes, okay. Then after that, going to the next one, that is banking and financial services. Important. Okay, banking and financial services. Now, if there is any particular person who is extending deposit, advances and loans, advances and deposits is extended, for which in return we are going to get interest or discount. On that interest or discount, GST is totally exempted. This we have seen earlier also. Okay, but when we talk specifically about interest on credit card for delayed payment, etc., that will be specifically taxable. Otherwise, interest or discount will be totally exempted. Bill discounting happens, bills of exchange. At that time, discount is charged by the bank, discount is collected by the bank. Again, it is going to be exempted from GST. If you have taken a loan from the bank, on that interest, GST will be totally exempted. If you have kept savings deposits or fixed deposit with the bank gives you interest, on that interest also GST is totally exempted. Okay, if there is sale or purchase of foreign currency, okay, if there is sale or purchase of foreign currency between banks, between authorized dealer, between a bank and an authorized dealer, then in that case again GST will be totally exempted. Okay, see, if it is happening between we and the bank or we and the authorized dealer, and whatever commission they are charging, on that GST is applicable. Yes, but if it is happening between banks and authorized dealers, then it will be totally exempted. I hope I am clear till here. Okay, then I have given some list of items here. Okay, I'll just tell you a few out of this. Now, let's say whenever you're taking a loan from a bank charges you something called as processing fees, documentation fees, etc. That is fully taxable. On that GST is applicable. Okay, then credit card, please don't forget this. Credit card interest, GST will be applicable. You are not maintaining minimum balance with the bank, on minimum charges, on that minimum balance charges, GST will be totally applicable. Okay, then after that, any other extra charges that the bank is collecting from you, on that also GST will be applicable. So anything which is not in the form of interest or discount on loans, advances or deposit, that will be liable to GST. Okay, then after that, next one, let's say a bank is providing you some services, okay, in relation to a saving bank account which is opened under Pradhan Mantri Jan Dhan Yojana. You have opened a bank account under this particular scheme for which the bank is providing you some services and charging you some charges. On those charges, GST will be totally exempted. Okay, then let's say let's say there is a particular transaction happening, there is a particular online transaction that is happening. Okay, you are purchasing my books or lectures through my website arpitatulsyan.com. So whenever you are doing the payment to me, it happens through a particular intermediary. Okay, it happens through a particular payment aggregator, right? Or in that case, can we say your bank, the money should come from your bank to my bank account? That is done by a payment aggregator, that is done by acquiring bank in between, right? So now if the transaction that has happened between us, if that is up to rupees 2000 in a single transaction, and if the transaction was done through card, then in that case, on such a transaction, the intermediary, on such a transaction, whatever charges the intermediary collects, he is an intermediary. Now, he will collect some charges either from you or from me. Whenever he is collecting any such charges, okay, on those charges, the GST will be exempted, provided the transaction value between you and me was up to 2000 and it was done through card. Okay, this exemption was given just to promote online transactions. Okay, so intermediary, it will collect the charges from either the seller or the purchaser. But if the value is up to 2000, there will be no GST applicable on the same. Okay, and secondly, one more clarification was issued when the government wanted to bring this RuPay debit card and Bhim UPI transaction. Government told that if the transaction was done between the buyer and the seller using RuPay debit card or UPI, then the intermediary will not collect any charges at all. In the above paragraph, on the charges, there was no GST. Here, in this one, there will be no charges itself. So, ma'am, how will the intermediary survive? To the intermediary, the government is going to pay some incentive. And on that incentive also, there is no GST applicable. I hope I am very, very clear till here. Yes? Okay. Then after that, do you recollect in reverse charge mechanism, we had studied something about business facilitator and business correspondent? Yes. So if there are any services provided by business facilitator to a bank, then on that RCM was applicable. Okay. Now, if business facilitator is providing any services to a bank in respect to its rural area branch, then the services will be totally exempted. No RCM, no FCM. Okay. But if it relates to urban area, then normal RCM will be applicable. Then if business correspondent is providing the services to a bank, it was normally taxable. Okay, but if it is provided in relation to rural area branch, it will be exempted. Okay, agent of business correspondent providing services to business correspondent, RCM was applicable. But again, if it is provided for rural area, it will be exempted. So any services provided by business facilitator, business correspondent or its agent, okay, if it pertains to rural area, it will be exempted. Okay, if not exempted, go and check if RCM is applicable or not. If RCM is applicable, well and good. If RCM not applicable, then FCM applicable. Okay, similarly, when these services are provided in respect of insurance. Okay, if these services are provided in respect of insurance, just like business facilitator was helping a banking company, if business facilitator helps an insurance company, same logic. Okay, then after that, yes, intermediary of financial services located in SEZ, okay, with IFSC status. Let's say there is a financial service provider. Okay, intermediary of that financial service provider is located in IFSC SEZ and they are catering to the customers outside India. So when they are providing the services to a customer outside India, on that, see, this will be considered, anyway IFSC is considered as a place outside India only for the purpose of taxation. So it is considered as if the services are provided both outside India. So on that the GST will be totally exempted. Okay, then after that, let's say this was a very nice circular which was inserted last time. Let's say a loan is granted by a person to its related person, or let's say when a loan is granted by an overseas entity to its Indian entity. Okay, where loan is given, so we are going to pay the interest or discount. Now that interest or discount on that GST is totally exempted, right? Now, can we say here the transaction is happening between related persons? So there will be no background checks happening. There will be no other credit accessibility that will be happening. So can we say there will be no processing fees kind of a thing? So if there is no processing fees kind of a thing, then there will be no GST also. Okay, so please don't deem that there is a processing charges, or if the transaction would have happened between unrelated person, then 5,000 rupees of processing fees would have been applicable. No, keep it very, very simple. The transaction happened between related persons, so there is no background checks, so there are no other charges involved, so no GST on the same. I hope I am very, very clear with this. Yes. Okay, then after that, insurance related business, I think you can do this on your own. When any LIC business and LIC services are provided, maybe under any annuity plan, or if it is provided under the Army, Navy insurance funds, or if it is provided under the Naval Group insurance funds or coastal insurance funds, etc., to the specific employees, on these there will be no GST applicable. Similarly, if life insurance is taken under any of these or any of these schemes, on that also there will be no GST applicable. Whenever you are going for any general insurance schemes under any of these schemes, again there will be no GST applicable. In case of reinsurance business, including retrocession, that is again giving it further. Reinsurance is one insurance company sharing the risk with another. Retrocession with that one is sharing it with a third one. So whenever there is sharing of premiums happening, on that also there will be no GST applicable. Okay, then for third party insurance, I hope you know the meaning of third party insurance of motor vehicle. That is, when you take the insurance, you also take a third party insurance. That is, if because of your mistake something happens to the third party, you will have to pay the claim to the third person also. So third party insurance in case of motor vehicle, the money is deposited with whom? The money of premium that you have paid is anyway deposited under the MVAF, motor vehicle accident fund, and whenever you want to withdraw that amount, whenever you want to take that amount as claim, then the services are provided by motor vehicle accident fund, on that also GST is not applicable. Or when the MVAF is insuring the third party, at that time also there will be no GST applicable. Okay, similarly, any amount deposited under Atal Pension Yojana, on that amount no GST is applicable. Any amount that we have contributed to the government under pension scheme, that is government will say after so many years you will get the pension, again no GST on such deposits. Yes, insurance schemes is one time read, you can just read it once and you can go ahead, not very important. Yes. Okay, then go to the next service. Right to admission to various events, that is you are taking entry into some particular event or you are going to a particular place for which you have to pay the entry fee. What about the GST on the same? So if you are going to a museum, or if you are going to a wildlife sanctuary, or if you are going to some national parks, or if you are going to some reserve, some zoo, etc., to see the animals or whatever, then in that case whatever entry fee you pay, that is totally exempted, fully exempted from GST. Similarly, if you go to see any monument, archaeological monument, history, that kind of a monument, again it is going to be totally exempted from GST. Okay, but if you are going for some event, like to watch a circus, to watch a dance show, to watch a music show, to watch a fashion show, to watch any particular sports event, be it a recognized sporting event or an unrecognized sporting event, or if you are going and watching some dance performance, any type of that, if you are going for any concerts, if you are going for any stand-up comedy shows, okay, or if you are going to any planetarium, etc., then in that cases, if your ticket value is up to rupees 500, okay, if your ticket value is up to rupees 500, then it is exempted. If it is more than rupees 500, then it will be fully taxable, right? Award functions, etc., all those are going to come up here. Okay, recognized sporting event means any sporting event organized by recognized sports body. Okay, ma'am, what do you mean by recognized sports body? So that is already defined for the purpose of GST. Please read this once. Okay, any event which is organized by recognized sports body, that will be called as your recognized sports event. Yes, that is one thing, and plus other organized by some specific associations, even those will be considered as recognized sporting event, right? So please remember, okay, mistake that happens is planetarium is given in this one, okay, whereas zoo, museum, etc., that is given in the above point. So whenever you see museum, zoo, etc., fully exempted. When you see planetarium or any particular events, okay, planetarium or any particular events, then the limit of 500 rupees is going to be applicable. Okay, then in this entry number 77, services by way of an unincorporated body or a non-profit entity. Okay, in that I will take the point relating to cooperative societies or resident welfare association. Now, resident welfare associations are formed for the purpose of providing some goods or services to its members. Okay, it is basically formed for mutual benefit. So let's say in a cooperative society or in a housing society, can we say a society is formed? It collects maintenance from its members and it provides services to its members. So if that amount is up to rupees 7,500 per member per month, then it is totally exempted. But if it exceeds 7,500 per month per member, then it is going to be fully taxable. Okay, there, provided the cooperative housing society is a registered one. If it is a registered one, and if the charges are more than 7,500, GST will be applicable. If not, GST is not applicable. But if the society itself is unregistered, then forget about the limits, forget about 7,500. Then in any case, GST is not payable, because till now we are not liable for registration. Okay, and while calculating this 7,500 per month per member, in this the property taxes, the electricity charges, etc., that the society collects from you to pay it to the government, that is statutory dues, that will not be included here. Yes, okay. Yes, so I'll again repeat, if there are any statutory charges which are included in this maintenance which is collected by the association from its members, then that will not form part of 7,500. Okay, 7,500 is basically that amount which the society collects from its members so that it can further provide services to them. Example, we are collecting maintenance. Okay, society is collecting maintenance and it is providing, let's say, housekeeping services, cleaning services, swimming pool services, etc. to its members. Yes, This much is manageable, everyone. Okay, then I am going on to the next entry, that is entry number 45, which talks about your miscellaneous services, legal services. Now, within legal services, please try to understand, we had done one point under reverse charge mechanism, legal services or arbitration services which are provided to a business entity. Okay, then that is going to be taxable under reverse charge mechanism. Now, related to that, what exemptions they are giving? If I have summarized also, can you see this? When arbitral tribunal or a partnership firm of advocates or an individual advocate or a senior advocate, okay, when these people are providing services to any person other than a business entity. See, if they are providing services to business entity, RCM was applicable. To other than business entity, exempted. To a small business entity, last year turnover less than registration limit, exempted. To government authority, government entity, totally exempted. So if it is given to a large business entity, only when it is given to a large registered business entity, only then it will be taxable under RCM, otherwise it is going to be exempted. Are you clear with this? Yes. And another one, if suppose partnership firm or individual advocates, if they are providing services to another advocate or partnership firm, then in that case also it is going to be exempted. Not senior advocate, normal individual advocate or firm of advocates providing services to other advocates, even that is going to be exempt. Manageable till here? Yes. Yes. So when the legal services or arbitral tribunal services are provided only to a registered business entity, then it will be taxable under RCM. Otherwise, when it is provided to other than business entity, when it is provided to government, when it is provided to small business entity, then in that case it will be fully exempt. Okay. And another thing that we studied was when individual advocates or firm of advocates, when they are providing services amongst themselves, that is to any other individual advocate, etc., then in that case also it is totally exempted. This point is not applicable to senior advocate. Senior advocate providing services to another advocate, no, that is not included here. Senior advocate providing it to other person, senior advocate providing to small business entity, senior advocate providing to government, that will be totally exempted from GST. Yes. Okay. Then after that, sponsorship. Sponsorship of sports events. Sponsorship we had studied, that was different. Do you recollect? Yes. Sponsorship services that we had studied was any person providing sponsorship services other than body corporate to a body corporate or to a partnership firm or LLP. Then in that case, reverse charge mechanism will be applicable. Yes. So now here, when the sponsorship is provided, whenever any sponsorship is provided of the following sports event, which are organized by the given federation or by the sports board or by some sports council, etc., whenever it is provided, then even that is going to be totally exempted. Can you see this? Services by way of sponsorship of sporting event organized by these people. When the events are organized by these people and there is any sponsorship services that is provided, then that will be totally exempted from GST. Okay, then public conveniences, public toilets, etc., for use of that, whatever charges you pay on that, GST will be totally exempted. Performance of artist, important point. Performance by an artist is an important point. Whenever any particular artist is performing in folk or classical art forms, which is in the form of music, dance or theatre. Okay, music, singer, dancer or any theatric drama performance in the theatre, etc. And if that artist is charging a consideration of up to rupees 1,50,000, it will be totally exempted, provided it should be folk or classical forms only, Bollywood, Western, etc. It will be anyway always fully taxable. Okay, and if any artist is charging any amount as a brand ambassador, then in that case it will be again fully taxable. So only this case, that is where the artist himself or herself is performing, okay, in music, dance or theatre, in any folk or classical art forms, and the consideration charges up to 1,50,000 rupees, then in that case it is going to be fully exempted. If it exceeds 1,50,000, then it is going to be fully taxable. Yes, then transfer of the entire business as a going concern or as a slum sale, fully selling it without individually assigning the values, again it is going to be fully exempted. Then services provided by independent journalist, by Press Trust of India or United News of India, again that will be fully exempted, right? But let's say if for any particular TV show a guest anchor is invited and we are paying honorarium to the guest anchor, that will be fully taxable. Okay, then public libraries, where you pay the amount and you take the books on rent, it is they lend the books to you, on that again the GST is going to be exempted. There is an organizer, okay, there is an organizer who is organizing, who is helping you for a business exhibition which is there outside India. Okay, there is a business exhibition outside India. I am going to an organizer and I am telling him that I also want to put up a stall there, or I want an entry there. So whatever charges, and he is doing all the necessary arrangements for you. So whatever amount he is charging from you, even that will be totally exempted from GST. Okay, then entry number 68 also important. Business exhibition outside India, fully taxable. Business exhibition in India, that will be always taxable. Outside India, fully exempted. In India, fully taxable. Yes. Okay. Then after that, now this one, entry number 68, very, very important. Let's say, now if any of these people, which we are going to discuss now, if any of these people are providing services to a recognized sports body, okay, only 5 people, please understand this: a player, umpire, referee, coach and team manager. If any of these people are providing services to a recognized sports body by playing, by doing the umpiring, etc., or if these people are providing the services to another if one recognized sports body is providing the services to another recognized sports body, okay, either these 5 people are providing the services to a recognized sports body, or another recognized sports body is providing services to a recognized sports body, then in that case it is also going to be, then this is going to be totally exempted. Okay, these 5 means these 5 only, don't add the word etc. Okay, they will test you, selectors, commentators, etc. What about these people? These people, if they are providing any services to recognized sports body, it will be fully taxable. Okay, then the next one, that is services provided by tour operator. If there is a tour operator who is providing services to a foreign tourist, okay, for a tour which is going to be wholly conducted outside India, if it is going to be wholly conducted outside India, then in that case, whatever charges you have paid to the tour operator, on that the GST is going to be exempted. I hope I am very, very clear with this. Yes. Yes, so these were, even this is important, tour operator. So these were your most important exemptions. Okay, we have tried to cover almost all of them. Yes, please use this for the purpose of revising. And yes, again, on YouTube, you will find one power pack question on exemptions also, where in one question itself, I think we have covered around 87 adjustments, 83 or 87 adjustments are covered. So once you do the theory, after that, if you go and try the questions, it is altogether a different ball game. Yes, so please do the revision properly. Yes, the chapter is also important from exam point of view. Okay, let's start with the revision of place of supply chapter, everyone. Yes. So, purpose of this particular chapter, place of supply, to come to know whether the transaction is an interstate supply or it is an intrastate supply. For that, we need to find out about the, if we want to find out whether the transaction is interstate or intrastate, we need to know the location of the supplier and place of supply. Location of supplier and place of supply. So place of supply we are going to determine in this particular chapter, and location of supplier means what? Location of supplier is, if he is doing the supply, let's say for services, if he is doing the supply from his place of business, then that place of business will be the location of supplier. If he is doing from some other place, example fixed establishment, then fixed establishment will be the location of supplier. If he is having more than one establishment, then the one which is more directly related, that will be considered as the location of supplier. And if nothing is present, then his residential address will be considered as the location of supplier. So location of supplier is easy to find out. You can find out the location of supplier. Next most important thing that we need to find out is the place of supply. Okay, next most important thing is going to be the place of supply. That we are going to do in this particular chapter. Yes? Okay. Now, before we enter into the main provisions of place of supply, we had a few sections in the beginning, section number 7, section number 8 and section number 9, which is talking about interstate supply and intrastate supply. Okay, now which supplies will be interstate, which will be intrastate, all those things. So now what will be considered as interstate, two different, interstate supply. So when the location of supplier and the place of supply, okay, when the location of supplier and place of supply are in two different states or in two different states or two different union territories or one state and one union territory, then such a supply will be considered as interstate supply. This applies for supply of goods also, this applies for supply of services also. Similarly, when the goods are imported into India till the time they cross the customs barrier, then even that will be considered as interstate supply. Similarly, supply of services into India from some other country, even that will be considered as interstate supply. Okay, import of services, export of services, import of goods, export of goods, these will always be considered as interstate supply. Similarly, when the goods are supplied, when the goods or services are supplied from SEZ to non-SEZ, okay, from SEZ to non-SEZ, then also it will be considered as interstate, because for taxation purpose, SEZ is considered as to be situated outside India. Even if SEZ is within the same state, still it will be considered as outside India, and hence either taking from SEZ or giving to SEZ, it will be always considered as interstate. Yes. Okay, and another thing is, one more thing that we will study ahead is, if we are supplying the goods to the tourist, okay, who is going to leave India and who is going to take the goods to his own country, even that is considered. If we have the information available, even that will be considered as interstate supply, right? And now the balancing thing. Okay, now the balancing thing, intrastate. When will the supply be called as an intrastate supply as per section number 8? So whenever the location of supplier and place of supply are situated within the same state or same union territory, then it can be called as intrastate, right? So only then it will be called as intrastate. And specifically only then it will be called as intrastate. For intrastate, we have already studied it separately. I hope I am clear till here, everyone. Yes, and the last one, that is section number 9. Section number 9 talks about supply in territorial waters. What if the location of the supplier is in the territorial waters, or what if the place of supply is in the territorial waters? Then in that case they are telling that place of supply will be deemed to be that particular state, okay, that particular state or that particular union territory where the nearest point of the appropriate baseline is situated. Means wherever the place of supply is happening, from there check if you want to reach to the baseline, then which is the nearest state or union territory, that state or union territory will be considered as the place of supply. This we had done in section number 9. Okay, yes, and very important thing which I forgot to tell you is, whatever section numbers we are doing here in the place of supply chapter, that belongs to the IGST, because we had studied in the first chapter that everything relating to place of supply will be determined by the central government and not by the state government. So all the provisions are given in the IGST. I hope I am clear till here. This was a basic introduction thing. Yes, now going ahead to the main two sections of the chapter, that is section number 10 and section number 12. Everyone ready with me? Yes. Now, from section number 10, we will determine the place of supply of goods in domestic transactions. Okay, first of all, goods, and second one is domestic. Domestic means where the location of supplier and location of recipient, both of them should be in India. Okay, both of them should be in India, then only section number 10 is applicable, right? Now, example, when the goods are imported, can we say supplier is outside India? That will not come under section number 10. Similarly, in case of export, that will not come under section number 10. So only when both of them are situated in India, then only you can find out the place of supply relating to goods as per section number 10. Okay, now everyone quickly try to recollect. We have done many questions when we were doing the main lectures, right? So now what will be the place of supply when supply involves movement of goods? If supply involves movement of goods, the place of supply will be the place where the movement of the goods is going to get terminated. Right? Second one, what will be the place of supply when supply involves movement of goods, and that too in case of bill to ship to model. Bill to ship to model. A was supplying it to B, then B was supplying it to C. So A was directly shipping the goods to C. Do you recollect that diagram that we have been doing? So in that case, there will be two place of supplies. Okay, for the first one, can we say for A to B there was actually no movement of goods? So for that, the place of supply will be the location of the recipient. Okay, place of supply will be the location of that recipient. Recipient means the second person. If A to B, B to C, then place of supply will be location of B. Okay, and then for B to C, can we say for B to C there will be actual movement of goods happening for C? So for that we'll go back to section number 10(1)(a). For that second transaction, place of supply will be the place where the movement of the goods terminates. Are you understanding this? Yes, let's say I am again telling it to you everyone. A supplied the goods to B, B supplied the goods to C, and there was a movement of goods from A to C. Then for the first transaction, the place of supply will be location of this person. And for the second transaction, that is for B to C, can we say there is going to be a movement of goods happening here? So the place where the movement of goods terminate, that will be considered as the place of supply for the second transaction. Yes. Okay. Then after that, next section, section number 10(1)(c), which talks about supply not involving movement of goods, means there is no movement of goods. The goods is sold as in where it is. So the place where the goods are made available to the recipient, that will be considered as the place of supply. The new section, section number 10(1)(ca), which was talking about supply of goods to an unregistered person over the counter sales. In case of over the counter sales, earlier we used to consider everything as intrastate supply, but now they are telling that if you have recorded the address of the recipient, address means just the state's name is sufficient. If you have the state's name of the recipient and if it falls under the other state, then that place, the other state, will be considered as the place of supply. But if you do not have his address, then in that case your location, that is location of the supplier, will be considered as the place of supply. Yes, and whenever let's say any particular person is sending, let's say you are taking some goods from the Amazon, okay, and in Amazon your billing address is different and shipping address is different. Normally what will be the place of supply in this case? Normally what will be the place of, if suppose there are both the addresses printed in the invoice, then shipping address, delivery address will be considered as the place of supply. If you have only one address, then that address. If you have two addresses, then delivery address will be considered as the place of supply. Manageable till here? Then going on to the next one, that is section number 10(1)(d). Section number 10(1)(d) talks about supply involving installation or assembly of goods. Means there is such a supply where the supply will be completed only after the goods have been assembled. So the place where the goods will be assembled, that will be considered as the place of supply, or where it is going to be installed, that will be considered as the place of supply. And the last one, that is section number 10(1)(e). 10(1)(e) says that whenever there are going to be some goods supplied on board a conveyance, vessel, aircraft, train, etc., then in such cases, the place where the goods were taken on board, okay, where the goods were loaded, that will be considered as the place of supply. Are you clear with this? Yes, and if you are not able to determine the place of supply as per these provisions, then in that case 10(2) will be applied. That is, your place of supply will be determined in a prescribed manner. Manageable. This was all about your section number 10. Yes, in section number 10 we determined the place of supply for goods, and that too for domestic transactions only. Domestic transaction, by that I mean that location of supplier and location of recipient is in the same state. Manageable till here, everyone? Yes. Then I am going to the next section, that is section number 12. What will happen in case of section number 12? We are going to determine the place of supply in case of services. Okay, many provisions are going to come up here. Place of supply of services, again domestic services, where supplier and recipient. Supplier recipient is situated here in India only. Okay, please be careful with this, everyone. Now, section number 12 simply talks about the same thing. Section number 12.2 is the by default provision. That is, if you are not able to find out the place of supply with the other provision, then you will have to come back to 12.3 for services. So for 12.3 to 12.14, if you are not able to find out, or if your service is not listed in these sections, then you will have to go as per section number 12.2. Now, what does section number 12.2 says? That if the supplier is providing the services, if the service provider is providing the services to a recipient, and if the recipient is a registered person, then his location will be considered as the place of supply. But if he is an unregistered person, if the recipient to whom I am providing the supply, if he is an unregistered person, but I have your address, then your address will be the place of supply. But if I don't have your address, then I am left with no choice. Then location of the supplier will be considered as the place of supply. Manageable? Okay. Then after that, yes, one new circular had come here last time, that whenever the suppliers are doing 3 supplies to unregistered persons. Okay. One was online money gaming. Second one was OIDR services, and third one was online or digital services. Whenever these services are provided to unregistered people, it is mandatory for them to take their addresses. Because otherwise everything will go in intrastate supply. You have to take their address. If that belongs to other state, then it will be considered as intrastate supply. Okay, this was a nice circular which they had put. Now going on to the main provisions of section number 12. Now section number 12.3. Section number 12.3 talks about services in relation to immovable property or lodging accommodation in a hotel, boat or vessel. Now whenever we are providing any services in relation to this, example architect services, example construction services, example interior designer services, example real estate agent services, or accommodation services, conference services, like taking on rent, etc. If we are providing any such services, then normally the place of supply will be the place where such immovable property is located. Okay, place where such immovable property is located, or if it is under construction, then the place where it is going to be located, that will be considered as the place of supply, right? But if that property is located outside India, then what? You cannot take the place of supply outside India. Then in that case, the place of supply will be location of the recipient. Who is receiving? Recipient is receiving the services. So location of recipient will be considered as the place of supply. I hope I am clear till here, everyone. Yes, many questions come from this section, everyone. Okay, now listen. Now multiple things. Now, can there be a possibility that this immovable property is situated in multiple states, or this immovable property is spread across 2 states? Or let's say if you are traveling in a houseboat, that houseboat is passing through multiple states, then in that case, can we say the location of immovable property will be multiple? So can we say there will be multiple place of supplies? Okay, so how do we bifurcate the total amount between the states? For that, go and check the agreement. If something was already decided in the agreement, go as per the agreement. If nothing was decided in the agreement, then in that case, go as per rule number 4 of the IGST rules. Now, what does rule number 4 of IGST rule says? If multiple properties are there, let's say I am staying in multiple properties of Taj, and they have done me they have given me a single amount, then in that case, how will they divide this amount? On the basis of number of nights stayed in each property. Okay, on that basis the amount will be divided. What if a single property is spread across 2 states, let's say on the border? Then in that case, the total amount decided between supplier and the recipient, that will be divided on the basis of area, square feet, that area of the property lying in each state or union territory. Similarly, if I am traveling in a houseboat or a vessel and it is passing through multiple states, then in that case, multiple states will be my place of supply. And how will I divide that total amount? I will be dividing it on the basis of time spent in each state or union territory. On that basis, the invoicing will be done by the service provider, and accordingly the place of supplies will differ. Manageable, simple? Okay. The next one is also important. Restaurant services, catering services, personal grooming services, makeup services, fitness services, etc. Here it is very, very simple. Only one answer. Place of supply will be the place where the service is performed. Let's say I go to some other state to have food. Okay, so the place where I am eating, that will be considered as the place of supply. Right. Similarly, I am taking a makeup artist to let's say Jaipur for my wedding. Then in that case, Jaipur will be considered as the place of supply. Manageable. Okay. Then after that, next one, training and performance appraisal services. Training and performance appraisal. Let's say I am providing training to some company's employees, or let's say I am providing training to some individual person. Then in that case, what will be the place of supply? If I am providing it to a registered person, then location of recipient. If I am providing it to an unregistered person, then the place where the training services have been performed. I hope I am clear till here, everyone. Yes. Okay, going on to the next section, section number 12.6, place of supply in case of admission to an event, admission to an amusement park, admission to some other places, entry fee to some national parks, museum, planetarium, etc. If I am taking entry there, then in that case, place of supply will be the place where such park is located or where such event is taking place, location of that particular place. One more thing, this training services, they are tested many times, important. Then after that, next one, organization of events is also equally important. I know I am telling everything as important, but it is. Okay, when you refer the question answers, you will realize that. Now, everyone, for organization of events, for organization, let's say I have appointed an organizer who is going to organize an event for me. Now, in this case, if it is B2B, both of them are registered. Place of supply will be location of recipient. If it is B2C, then place of supply will be the place where the event is held. Okay, by chance, if the event is held outside India, then location of recipient is the only option available with us, because you cannot make the place of supply as outside India under this section. Right? Then after that, now what if the event is held in multiple states, that organizer is organizing the event for me and the event is going to be there in multiple states. Then they are telling that as per generally accepted accounting principle, logical basis, you can do the bifurcation. Okay, let's say the 2-day event is held in one state, 2-day event is held in another state. Then in the ratio of 2:2, you can divide the amount that way. Then going on to the next one, that is section number 12.8, which talks about transportation of goods. Okay, not passengers. Passengers will be doing it separately. Transportation of goods. Then in that case, if it is B2B, okay, let's say which company? DTDC. DTDC is providing the services to my classes, to my office. Can I say this is B2B? Then in that case, place of supply will be location of the recipient. Okay, if let's say DTDC is providing the services to you, personal, you want to send some gift, etc. to your friend, etc. and you are using the services of DTDC. Then in that case, place of supply will be the place where you are handing over the goods for transportation. Where you are handing over the goods to DTDC for transportation. Okay, and similarly, when the goods are transported outside India, then also, see, LOS, location of supplier and location of recipient is in India. But what if I want to send the goods outside India? Then also same way you have to determine the place of supply. That is B2B, location of recipient. B2C, the place where the goods are handed over for transportation. So place of supply will be India only. Yes. Okay. Then after that, next one, a passenger transportation service. Very simple. Passenger, earlier one was goods transportation, here it is passenger transportation services. So now let's say I am booking an airline ticket or I am booking a railway ticket and I am a registered person. Means B2B transaction is happening. Okay, I am doing it for my business purpose. It is a B2B transaction. Place of supply will be location of recipient. But if I am an unregistered person, then the place where I am starting on that journey, where I am embarking on that conveyance, where I am loading myself on that particular conveyance. Yes, and please remember here, if it is a return journey, like Mumbai to Delhi, Delhi to Mumbai, then this will be considered as two separate journeys. Okay, because this is not continuous. So for Mumbai to Delhi, the place of supply will be Mumbai. For Delhi to Mumbai, the place of supply will be Delhi, because I am starting from there. Okay, in case of unregistered people. For registered, it is simple, location of recipient. Right? Acha, similarly, let's say I am taking a metro card, means which I can use it for some number of months now, and where I don't know where, in such a case I don't know from where I'm going to start my journey. It can be different stations. So in such a case again, if it is B2B, then in that case place of supply will be location of recipient. If it is B2C, then if address of that customer is available with the metro person, that address. If address is not available, then only one option left, that is location of supplier. Manageable? Yes. Okay. Next one, everyone. Section number 1210. Section number 1210 was talking about services supplied on board. Just like we did goods supplied on board, similarly services supplied on board a conveyance, movie on demand, etc. Place of supply, very simple. Place of supply will be the first scheduled point of departure of the conveyance. From where was that aircraft scheduled? First point of departure, not where you started. The place from where the aircraft started, that will be considered as the place of supply. Manageable. Then after that, section number 1211. 1211 is talking about telecommunication service, everything related to mobile data or mobile network and all those things. So if there is a fixed landline or leased circuits or internet leased circuit, cable or dish antenna, etc., means wherever it is wired, then the place where the device is installed. Okay, the place where the device is installed. Suppose in case of internet lease circuit, there are multiple points connected. Then in that case, multiple place of supplies will be there and the total amount will be divided in the ratio of number of points in each state. Right? Then in case of postpaid mobile connection, for postpaid will be getting a bill. So billing address will be considered as the place of supply. If billing address is not available, it doesn't happen, but if it is not available, then the place of supply will be the location of the supplier. See, if LOR is not available, then LOS is the only option available with you. Right? Then in case of prepaid, if you are getting the recharge done through an agent, selling agent, etc., then his address. If you are getting it done from any other person, then the place from where it is sold, place from where the voucher is sold. If you are doing online recharge, online prepaid recharge, then obviously the address of the recipient. Okay, and in all the other cases, if address is available, location of recipient. If address is not available, location of the supplier. Simple. Okay, then after that, next few sections, everyone, couple of sections. Section number 1212. Section number 1212 talks about financial services and stock broking services, bank related services, etc., ATM cash withdrawal related services. Then in that case, location of place of supply will be location of recipient in the records of the supplier. Okay, means if you are doing the transaction, let's say through your own bank, then your address will be available with the bank, so location of recipient. But if you are doing the transaction through some other bank's ATM, then your address will not be available with the other bank, so in that case it will be the location of the supplier. So if my address is available with him, then my address. If my address is not available with him, then the location of the supplier in case of financial services and stock broking services. And the next one is your insurance services. In case of insurance services, simple. In case of B2B, let's say I am taking insurance for my business purpose, then location of recipient. If I am taking insurance for my personal purpose or it is given to an unregistered person, then in that case, whatever is the address of the recipient available in the records of the supplier. So basically in both the cases, it is location of the recipient. Location of recipient or address of recipient in the records of the supplier. Manageable till here? Yes. And the last point is section number 1214. 1214 talks about what? 1214 talks about the advertisement services given to the government only. Okay, advertisement services given to the government only. Now in that case, whatever is the now whenever we are providing advertisement services to the government and the government wants us to display that advertisement in multiple states, then those multiple states, each of those states will be considered as the place of supply. Okay, we have entered into only one contract with the government, so now that amount will be divided amongst multiple states. I hope I am very clear till here, everyone. Yes, manageable. This much was good for you. Yes. Okay. Now then, once this is done, once your section number 12 is completed, then we have got clarifications, right? We have got two basic clarifications here. First of all, what if you have provided some immovable property related services to a SEZ? Okay, immovable property related services to the SEZ. In case of immovable property, can we say the place of supply will be the place where the immovable property is situated? Okay, let's say LOS, POS and LOR, supplier, recipient and the property is situated in the same state. Then in that case, can we say it will be considered as intrastate supply? Okay, but can we say here we are providing the services to SEZ? And we had already studied in section number 7 that any services that we are providing it to the SEZ will always be deemed to be interstate supply. So can we see there is a clash? There is a clash between section 7 and there is a clash between section number 12. In this case, always the specific provision will override. Okay, specific provision will override. Therefore, your SEZ provisions will override, and hence, even if all of them are in the same state, still it will be considered as interstate supply. Manageable? Yes. Acha. And another clarification is about the advertisement sector. Okay, now in case of advertisement services, there are multiple types of contracts that is possible. Now let's say there is one such contract where where we want to put the advertisement. Okay, there is a client with me and that client has come to me, that is advertisement company, and client says that he wants to put his hoarding here. Okay, now I will go and check that this hoardings belongs to whom. There will be some owner of that space, right? So now I go to that person and I tell him that I want, can you please give this particular place on rent to me? Can you allow me to put my hoarding here? He says, okay, I will allow you, and for that the rentals will be so and so amount. So now in this case, this will be considered as the supply of services relating to immovable property, or grant of right relating to immovable property. So in this case, the place of supply will be location of the immovable property, because here the contract between me and that company is only restricted to taking the place on rent. Okay, that is one thing. So your section number 12.3 will be applicable. Okay, there can be another case where I just bring a client and I pass on the client to the hoarding owner or that space owner, and he will do everything. Okay, he will only print the advertisement, he will only stick it on the hoardings. I am just bringing the client for the hoarding company. Then in that case, can we say this is specific advertisement service that he is providing? So that is not specifically covered. Advertisement service we have done, but that was advertisement service only to government, 12.14. But this is a normal advertisement service. So for this will go under section number 12.2. Okay, this is not only related to immovable property. This is proper advertisement service. So this will go as per section number 12.2. I hope I am very, very clear till here, everyone. Yes. Section number 7, section number 8, section number 9, section number 10, section number 12. And the basic clarifications are done. Yes. Okay, then let's start with the revision of the next chapter, that is time of supply. Yes, section number 12 and section number 13, mainly section number 12 and section number 13 of the CGST Act. Same provisions are applicable to the IGST Act also, that is to the interstate transactions also. First of all, purpose of this chapter. What is the purpose of this chapter? Purpose of this chapter is whenever there is any transaction in supply of goods or supply of services happening, there can be multiple dates involved in a particular transaction. If there are multiple dates involved in a particular transaction, then what will be the time of supply? Okay, what will be the actual date when the transaction has happened for the purpose of GST? That date we will get as the time of supply. And once we get the time of supply, then from that we can find out when are we supposed to actually go and pay the taxes to the government. That was the main purpose of this particular chapter. Now going on to section number 12. Section number 12, which talks about time of supply of goods. Right, time of supply of goods. Section 13 is going to talk about time of supply of services. Now, in case of time of supply of goods, first of all, about forward charge mechanism. I am the supplier, you are the recipient. Normal forward charge mechanism where I will collect the tax from you and I will go and pay the tax to the government. In that case, what will be the time of supply? Time of supply will be date of issue of invoice, or the last day when the invoice should have been issued as per section number 31 that we will study separately. So the actual date of issue of invoice if the invoice was issued on time, or if the invoice was issued late, then the last day when the invoice should have been issued, or the date of receipt of payment, or the date of receipt of payment by the supplier, whichever is earlier. So the invoice date or the date of payment, whichever is earlier. Yes, what do you mean by date of payment? Now, since this is forward charge mechanism, recipient will be doing the payment to the supplier. Then the day when the supplier records it in the books of accounts, or when it is credited to his bank account, whichever is earlier, that will be considered as the date of receipt of payment. Right? This is the basic provision. Date of invoice, last day when the invoice should have been issued, or the date of payment, whichever is earlier. Right? Now, suppose if in case of forward charge mechanism goods, there was a benefit given that if you have received any advance payment, okay, if you have received any advance payment, then you can postpone your time of supply to the date of invoice. That is, see, if we do whichever is earlier, invoice or payment, whichever is earlier, then in that case, in advance payment, definitely we have received the payment in advance, so that date will come as earlier and that will become your TOS. But here they have given the benefit that in case of time of supply of goods where you have received advance payment, what will be the time of supply? Date of issue of invoice or last date when the invoice should have been issued. Are you clear with this? Yes? Okay. Then after that. Okay, then after that. Now ma'am, what will be the last date when the invoice should have been issued as per section number 31? What will be the last date for that? So that last date is given under section number 31. For goods, what is the last day? When the supply involves movement of goods. Okay, when the supply involves movement of goods, what is the last day when the invoice should be issued? On or before the removal of goods. Okay. So when the goods are removed from the supplier's premises for the recipient's premises, on or before that the invoice should be issued. Okay, if the transaction does not involve movement of goods, then in that case the invoice should be issued before the goods are made available to the recipient. Right? If there is continuous supply of goods, if there is any such contract where there is going to be a continuous supply of goods, then in such a case, we will be issuing periodical statements, or the other person is going to be doing us periodical payments at some intervals. On or before that the invoice should be issued. And whenever the goods are sent for approval basis, sale or return basis, sale or approval basis, then in that case, normally, whenever the other person communicates on or at that time the invoice should be issued. If the person has not communicated to us till a period of 6 months, then at the end of 6 months, as soon as 6 months get over, then we will have to prepare the invoice. Okay, this is the time period within which the invoice should be issued. Right? This is what we have studied. This was about section number 12.2, forward charge mechanism in case of goods. Now going on to section number 12.3, where they are going to talk about time of supply of goods, but in case of reverse charge mechanism. Now in case of reverse charge mechanism, the entire responsibility shifts to the recipient. So recipient will be liable to pay the tax and then he can take the ITC of the same. This is what we had studied, right? Now, in case of time of supply, what will be the time of supply? They have given 3 parameters. Out of those 3 parameters, whichever is earlier. Okay, you have to think from recipient point of view. So, the date when he has received the goods. Okay, so date of receipt of goods or date of making the payment. Date of making the payment means when the payment is recorded in the books of accounts or it is debited from my bank account, whichever is earlier, or 31st day from the date of issue of invoice by the supplier. When the supplier would have issued the invoice from that day, 31st day. Out of these 3 parameters, whichever is earlier. Okay, date of receipt of goods, date of making the payment, or 31st day from the date of issue of invoice by the supplier. Out of these 3, whichever is earlier. Okay, then after that we had already discussed section number 12.4 relating to vouchers is totally omitted. 12.5 talks about the residual cases. In that case, if you have disclosed the transaction, then in whichever return you have disclosed the transaction, whatever is the due date for filing that periodical return will become the time of supply. If you have not disclosed, then the GST officer would have caught you. Then in that case, whenever you are paying the GST, the date of payment of GST, that will be considered as the time of supply. right? And last one is section number 12.6, that is whenever there is any addition in the value on account of interest, late fee, etc., then in that case, whenever you are actually going to recover that interest or late fee, that date will be considered as the time of supply, right? This was all about your section number 12. Now going on to section number 13. What does section number 13 says? Section number 13 talks about time of supply in case of services. In that also 13.1 simply says that for services we have to check section number 13. Right? Now what is section 13.2 talking about? 13.2 talks about forward charge mechanism services. I am providing you certain services, FCM is applicable. So what will be the time of supply in this case? Again there, suppose if the invoice is issued within the time prescribed under section 31, then in that case the date of invoice or date of payment, whichever is earlier. Date of invoice or date of payment, whichever is earlier. Now this is forward charge mechanism, so we have to think from the supplier point of view only. If the invoice is not issued within the prescribed time, then in that case the date of provision of service, that is date of completion of service, or the date of receipt of payment, whichever is earlier. So we have to first check whether the invoice was within the time or it was not within the time. I hope I am very clear till here. Yes, and yes, one more benefit was given here, that is if you have received any excessive amount, that is if you have received any advance amount from the recipient, okay, and if that advance amount is up to rupees 1000, then in that case for that excessive amount you need not pay the tax now, you can pay it when the invoice for the same is raised. But if the advance is more than rupees 1000, then you have to pay the tax on it right away. Right? Okay. Now, ma'am, what is the time period for issuing the invoice for services? For goods, we had already seen under section number 31. For services, what is the time period? So, when there is a normal registered person is providing taxable services, invoice should be issued either before the completion of service, before the provision of service, or maximum within 30 days from the provision of service. Okay. And if that registered person is a bank, insurance company, NBFC, financial institution, then instead of 30 days, they should be issuing within 45 days, right? That is one thing. Another thing, what if insurance company, banking company, telecom company, NBFCs, what if they are making taxable supplies between their distinct persons, then in that case, invoice should be issued at the time of recording such supply in the books of accounts or before the end of the quarter, normally whichever is earlier, recording in the books or end of the quarter, whichever is earlier, right? That is one thing. Another thing, in case of continuous supply of services, if due date is ascertainable, then before the due date. If due date is not ascertainable, then at the time when the supplier receives the payment. And if there is a milestone marked, a milestone linked to the payment, that if this much work is done, this much payment is to be done, so generally it happens in case of construction services, then in that case on or before the date of completion of that milestone event, before that time, on or before that time, the invoice should be issued. And last, if there is any cessation of supply of services in between there is some disruption, then as soon as the disruption happens, you will have to issue an invoice for the proportion of the work that is already complete. Okay, what did we study here? We studied that what is the time period for issuing the invoice in all of these cases, right? Then going on to the next section, that is section number 13.3. Section number 13.3 talks about taxability, time of supply of services under reverse charge mechanism, GTA. Remember GTA services, then the government related services, immovable property related services, and all those things which we had studied under the RCM provisions. For that there was an amendment here. So time of supply will be 3 parameters they have mentioned. Actually they have mentioned as 3, but it is actually 2 only. You will understand why. So if the supplier is a registered person, okay, if the supplier is there, recipient is there, it comes under RCM, so responsibility is on the recipient, but you have to check who is issuing the invoice. If supplier is registered, then supplier can issue the invoice. In that case, what will be the time of supply? The date of payment. Think from recipient point of view. So date of making the payment or 61st day from the date of issue of invoice by the supplier, whichever is earlier. Date of making the payment or 61st day from the issue of invoice by the supplier, whichever is earlier. But what if it is a case of RCM plus the supplier is unregistered? If supplier is unregistered, then recipient will have to issue the invoice on himself, right? As per rule number 47A, he will have to issue the invoice on himself. So in that case, he will have to issue an invoice on himself within a time period of 30 days from the date of receipt of the said supply. Whenever that recipient is receiving the supply from the supplier, within 30 days, he will have to make an invoice on himself. That is the time limit for issuing an invoice. Now, what will be the time of supply in this case? Date of making the payment or the date of issuing the invoice by the recipient, whichever is earlier. Date of payment or date of issue of invoice, whichever is earlier. I hope I am very, very clear with this. Okay, summary is also given in your main book. You need not worry about the same. And yes, then what if there is import of services between associated enterprise, import of service between associated enterprise, where your associated enterprise is situated outside India. Can we say even that will come under RCM? Associated enterprise outside India, from them you are importing. They are the service provider, you are the recipient. But can we say because they are outside India, you will have to pay the tax here in India under RCM? So in that case, what will be the time of supply? The time of supply will be when you are making the payment. You have imported now. So when you are making the payment, or when you are recording that service in the books of accounts, whichever is earlier. The date of making the payment or recording it in the books of accounts, whichever is earlier. Manageable till here? Yes. Then similarly, now next 13.4, 13.5, 13.6, it is proportionate, or it relates to it is corresponding to section 12.4, 12.5 and 12.6. 13.4 related to vouchers, it was totally omitted. 13.5 was talking about residual cases, same provision. 13.6 is talking about interest, late fees, etc. in case of supply of services. Provision is going to be same as 12.6. Manageable till here. And last thing that was talking about your TDR, FSI and long-term lease was, whenever your TDR, FSI, long-term lease, it is taxable. First of all, RCM is applicable. This we had studied earlier. So developer will be liable to pay tax whenever he is purchasing any TDR, FSI or long-term lease. Now, whenever this TDR, FSI or long-term lease is taxable, whenever it is not always taxable, but whenever this is taxable, at that time, the time of supply will be not at the time of purchasing this TDR, FSI, but it will be the time when the property is completed, the CC is received or the first occupation is done, whichever is earlier. So not at the time when he is initially purchasing the TDR, at that time TOS does not apply, but TOS will apply when the developer receives the CC or first occupation happens, whichever is earlier. I hope this much is manageable, everyone. Simple. Yes, okay, it's done. Okay, let's start with the revision of value of supply chapter. Important chapter, conceptual chapter. Questions generally come from this particular chapter in the form of numericals. Yes, let's start with it. First of all, the most important section in the chapter is section number 15, where we are required to determine the value. Okay, in the earlier chapters, we have already discussed whether the transaction is a supply or it is not a supply. If it is a supply, when will it be considered as a supply and at what point of time it will be taxable? Whether it will be considered as interstate, whether it will be considered as intrastate, that also we have studied in place of supply chapter. Now the question arises as to what is going to be the value of that supply on which we are going to calculate the GST, right? So now your first thing that we are going to do is, suppose if the transaction is done between unrelated person and price is the sole consideration, then in that case valuation needs to be done as per section number 15. Okay, and section number 15.1 says that this valuation should start with transaction value. Okay, value of supply is equal to transaction value, means the value at which actually the transaction has been done, not the market value. Okay, the value at which actually the supplier and recipient have entered into the transaction. Yes. Acha, what if, ma'am, then if they are related, or what if price is not the sole consideration, then in that case valuation will be done as per the rules. Okay, otherwise we will do it as per section number 15. So now first of all, can we say whenever we are assuming only that one case where the transaction is done between unrelated person and price is the sole consideration. So they clearly say that value of supply is equal to transaction value. Okay, value of supply is equal to transaction value. Again, I am repeating, transaction value is the value at which that transaction is done. Okay. Now just try to understand. As per section 15.1, value of supply is equal to transaction value, but 15.2 and 15.3, these two subsections says that there should be some adjustment. Okay, there will be some adjustment in the value of supply, and only then we can arrive at the final value of supply. So first, talking about section number 15.2, there are going to be 5 clauses in that, clause A to clause E. Okay, if you are falling under any of these 5 pointers, then it will be added to the value. Okay, that will be added to the value. Now, 5 things that will be added to the value. First one, any non-GST taxes. Okay, like municipal taxes, property taxes, entered any particular tax. Okay, not exactly property tax, but any particular tax which is levied by any authority other than GST. Okay, other than CGST, SGST, UTGST, IGST, GST, that is not to be added, because those are the taxes that we are trying to find now, and that tax amount we will get only once we get the taxable value. Right? So all the other non-GST taxes, that needs to be added. Okay, but TCS, okay, TCS under income tax, that is the extra amount that we collect from the recipient and we pay it to the government, that need not be added here. Okay, that will not be added here in our value. I hope I am very clear with this. Yes, why it is not required to be added in the value? Because that is an interim levy. You are just collecting it from the other person, you will be paying it to the government, and that other person will be getting a credit of the same. So that TCS is to be ignored, that will not be added in the value. Right, this is the first one. Second, B clause, 15.2b. 15.2b says that, let's say there is a supplier and there is a recipient. Okay, and supplier was obliged to provide some service to the recipient. Okay, for which the recipient is making the payment to a third party. Okay, recipient is making the payment to the third party, whereas it was the responsibility of the supplier to make that payment to the third party and provide it to the recipient. So what did the supplier do? Supplier thought, let's make the recipient pay to the third party directly, so that it will not be included in our invoice value and we will not have to charge GST on that. So here it was determined that if there is any payment done by the recipient to the third party on behalf of the supplier, or when the supplier was responsible to do that, then in that case that amount will be added to the value of supply, that is, it will be added to the invoice value and there will be GST applicable on the same. Right? Okay, then after that, clause C. Clause C is very important because it will be repeated in every numerical question asked, that is incidental expenses. Now, incidental expenses include your packing expenses, then your freight expenses, insurance related expenses, commission, packing, testing, all these expenses which are charged by the supplier. Supplier is going to charge it from the recipient for anything done before or at the time of supply. Okay, that is, I have done something for you before the supply or at the time of supply, for which I am charging something from you. Such incidental expenses will be added to the value of supply. If I am charging anything from you for anything done after the supply, that will not be added in the value of supply. Right? And the next one, that is clause D, which talks about interest or late fee or penalty for delayed payment of consideration. Let's say supplier has supplied something to the recipient and recipient was supposed to do the payment to the supplier, but he is delayed in doing the payment. So supplier is also collecting some amount of interest or penalty or late fee. Now ma'am, what about that interest? So that interest exclusive of GST, okay, that interest before GST needs to be added to the value of supply. Are you understanding? Again I am telling you, interest will be added but not directly. That whatever interest you are adding to the value of supply, that has to be excluding GST. Because GST now we are going to calculate once we get the final value of supply. Are you understanding this? Yes. Ma'am, what will be the rate of interest, rate of GST applicable on this interest? Same as that of the main goods or services, because this will be considered as a composite supply, right? Okay. Then after that, the next one, that is clause E. Clause E, very, very important, which is talking about subsidies, right? If we are receiving any subsidy, means we are receiving some price benefit, the price of the product will fall for us, right? So if the supplier is receiving some subsidy, means let's say if the product was for 100 rupees and it is receiving a subsidy of 20 rupees, then in that case, now I am supposed to collect only 80 rupees from the recipient. Okay, government has provided a subsidy. So if it is now they are telling that if it is a subsidy given by government, then you have to pay the tax on the net amount that you are collecting from the customer. That is 100 minus 20, 80. On 80 you will have to pay the GST, right? Another thing, suppose if the subsidy is given to you by any person other than government, then in that case, no benefit of that subsidy and GST will be applicable on the total amount of 100 rupees. I hope I am clear till here. Yes, now the subsidy should be a price linked subsidy. Only then, if it is a price linked subsidy and if it is received from non-government, then it will be added to the transaction value. Okay, now the example which I gave you, 100 minus 20 is 80. Can we say we would have collected 80 rupees from the recipient? So transaction value is equal to 80 rupees. To this transaction value, if we have received any price linked subsidy, from other than government, okay, then that 20 we will have to add here and the value of supply will be 100. That is, price link subsidy received from other than government is fully taxable, means on that GST will come. Whereas if this would have been government, then my value of supply would have been 80 rupees only. Are you understanding this? So government subsidy is basically not taxable, but subsidies from other than government is going to be taxable under GST. Okay, ma'am, what about blanket subsidy? What about a subsidy which is not price linked? Then that will not at all come into this calculation and that is not taxable. Are you understanding this? Yes, so these were the 5 clauses, A, B, C, D, E. These were the 5 clauses under which we studied what all things will be added to the value of supply. And the last one, that is section number 15.3. 15.3 talks about exclusions from the value. Now there is only one thing which can be excluded from the value and that is discounts. Okay, any discounts which is given by the supplier to the recipient before or at the time of supply, and if it is recorded in the invoice. Okay, it is already deducted in the invoice, then in that case you will get the benefit and the discount will be reduced and whatever is the net amount, on that net amount GST will be leviable. Okay, so only if this condition is fulfilled, then only you will get the benefit of discount and benefit of lesser amount of GST. Okay, and ma'am, what if the discount is given after supply? If the discount is given after supply, then also you can get the exclusion from the value provided few conditions are fulfilled. Okay, now what are the conditions, ma'am? So, see, suppose if the discount is given to you afterwards, then they will allow you to deduct that amount, but provided the condition that should be fulfilled is the discount should be agreed before itself. Okay, now you cannot say, okay, I will give you discount. No, the discount should be pre-agreed. Okay, that is one thing. Another thing is the discount should be invoice specific, invoice related. It should not be an ad hoc discount. Okay, discount should be apportioned invoice wise. And third one, because earlier already on higher amount, we would have paid the GST, the supplier would have paid the GST. So can we say the recipient would have taken the ITC of that? Now we are reducing the value by way of discount. Now we are reducing the value by issuing the credit note. So the recipient will have to reverse back that ITC. Only then this discount can be reversed. Are you understanding? If this condition is fulfilled, only then the post-supply discount can be allowed as deduction. Otherwise, no discount. Are you understanding this? Yes. So this is what we have studied in the chapter. And yes, one very important circular which I need to do with you all is about no claim bonus. Whenever we are receiving no claim bonus, see, generally when do we receive no claim bonus from an insurance company? Whenever there was no claim in the last year. Okay, that was, we did not go to the insurance company at all to get any claim amount, means my vehicle etc. did not met with any accident or there was no claim against my vehicle. So in that case, now in the next year when I go to the insurance company for getting a claim, for getting an insurance policy, it will ask me whether you have any claim in the last year. I say no sir, I drive very nicely, so there is no claim. So so in that case, the insurance company will now give me a discount on that premium. Okay, and that discount is called as no claim bonus. Whenever I am getting this no claim bonus, always remember, first of all, it is recorded in the invoice, in that premium receipt, and secondly, it was decided beforehand. Okay, it is a policy, it is always decided beforehand that if you do not have any claim in the last year, you will get a discount on your policy this year. So in that case, no claim bonus, when it is deducted, when that discount is deducted from your premium amount, the GST will be applicable on the balance amount. That is, value will be after deducting the no claim bonus. Okay, so this will be considered as a proper discount for which we will get an exclusion under section number 15.3. I hope I am very clear with this. Yes, and in your main book you have some examples etc. coming. You can just refer it once. Now in case of other situations, that is when, let's say, if the supplier and recipient are related persons, or when price is not the sole consideration, then in that case, as per the rules we are required to find out the value of supply. And for some specific transactions like life insurance service, air travel agent services, then purchase or sale of foreign currency, then online money gaming, then your actionable claims, casinos, etc. For these, they have specified separate method for valuation. We will have to find out the valuation, or we'll have to do the valuation as per those special methods. I hope I am very clear with this. So your basic part of valuation gets over here. Yes, in valuation, when we talk about sections, mainly section number 15.2 and section number 15.3. 15.2 is inclusions and 15.3 is exclusions. These two sections are super duper important for the chapter. I hope I am very clear till here, everyone. Yes, okay. Okay, so let's start with the revision of the lifeline of the GST chapter, that is input tax credit. Everyone, I know it is a big chapter, I know it is an important chapter, but let's compile all the provisions in a limited time so that you are able to revise it all properly. And also I have put the questions video on YouTube. If you want to refer it, you can refer it, and it will be definitely helpful for you. Yes, can we start, everyone? Okay, now input tax credit, as you already know the meaning. What is the meaning of input tax credit? Whatever inputs we are purchasing, whatever input services we are taking, whatever capital goods we are purchasing, while purchasing we would have paid some amount of tax on it. The tax that we have paid at the time of purchase, that tax will be allowed as a credit. That is, we can take a set off of it against the output tax payable. Okay, and now if you want to take the set off of that, can we say after that your output tax payable will get reduced, or your net GST liability will reduce if you are taking the benefit of this input tax credit? So now they have given you certain conditions, certain terms and conditions that you need to fulfill. Only then you will be eligible to take the input tax credit that we are going to study here. Now we are going to study from section number 16 to section number 21. Like section 16 to section 21 basically talks about input tax credit, and some rules also we are going to take from the CGST rules. Now you have got some definitions given here. Capital goods definition, you already know. Anything, any value, any such goods which you have capitalized in your books of accounts. Example, your plant and machinery. Example, any particular vehicle. Example, any particular asset, computers, etc. That will be called as capital goods. Whenever we are purchasing this, okay, we will generally capitalize it in our books of accounts. If you are capitalizing it in your books of accounts, then that will be called as your capital goods. Right, and at the time of these purchases also you would have paid some GST on it, so you will be eligible for ITC on that, subject to the provisions of the ITC chapter. Right, then input means anything else that is other than capital goods, other purchases other than capital goods, purchase of goods other than capital goods, that will be considered as your inputs. Example, raw materials, example, some consumables, spare parts, etc. right? Okay, then next one is input services. Let's say I have availed some services. Okay, I have availed some repairing services, I have availed some professional services, etc. So that will be considered as my input services. While availing, if I have paid GST on that, then I will be eligible for input tax credit. And yes, obviously input tax credit will be available only when you are using all of these things in the course or furtherance of business. Right? Next one is your input service distributor. Now, what do you mean by input service distributor? It is such an office. Okay, it is such an office who is supplying goods or services, and that particular person has registered himself as an input service distributor. Means he is availing some services or he is getting an invoice of some services. Input service distributor pertains only to services. That person is getting an invoice, okay, inward invoice of some services, and these services are not actually used by him. This is used by his other offices. Okay, let's say there is a head office and let's say there are the branches. So services are actually availed by the branches, but the invoicing is done in the name of the head office. So can we say head office has got the invoice in its name? So what will the head office do here is whatever is the input service or whatever is the tax on that input service, that the head office will distribute to its branches. And that's why for this case the head office will have to get itself registered specifically as an input service distributor. And whatever are the input service, not for goods, only for input services, the credit can be distributed by the HO to the branches. Both the tax paid on inward services under forward charge mechanism also, plus the tax paid under reverse charge mechanism also. That is, see, now we are the HO is the recipient here, right? Let's say there is some service on which HO paid the tax under reverse charge mechanism, GTA service, legal services, etc. But that service is actually availed by the branches. So in that case, whatever tax I have paid of that also under forward charge mechanism or reverse charge mechanism, that I can distribute it to my branch offices, right? Okay, then after that, so you will get the credit, whatever ITC, whatever tax you have paid on your inputs, whatever tax you have paid on your input services, whatever tax you have paid on your capital goods, plus whatever tax you have paid under reverse charge mechanism. We have been studying about this. Whatever tax we pay under reverse charge mechanism, after we pay it under reverse charge mechanism, then we will get the credit for the same. Then whatever input tax credit or whatever IGST we pay at the time of imports, whenever we import at that time also we are required to pay the IGST. So after paying that IGST, we can take the credit of the same, right? So all these things will come in your input tax. Yes, but please remember, whatever tax a composition levy person is paying, do you recollect? Composition person was paying a flat tax from his pocket. He cannot collect it from anyone, plus he was not eligible for ITC. So if there is a composition dealer who is selling some goods on which he is paying a 1% or whatever 6% or 5% taxes, whatever tax he is paying, he is not eligible to get any credit of the same, right? Okay, then after that, yes, another thing which I wanted you to do here was the meaning of the term quarter, because when we do reversal of ITC, etc., at that time we'll do it as 5% per quarter, etc. So quarter means your normal calendar quarter, Jan to March, April to June, July to September, October to December. This is going to be the quarter, right? Acha, other definitions are there. Okay, one zero rated supply definition I wanted to. Other definitions we'll do it as in when we get into the chapter. So zero rated supply means what? Zero rated supply means supply of goods or services in course of export. Okay, so export of goods or export of services will be considered as a zero rated supply, or when there is a supply of goods or services to a SEZ, okay, to a SEZ unit or to a SEZ developer. Means when we are supplying some goods or services to SEZ unit or SEZ developer, even though that SEZ unit or developer is in India, it will be considered as if it is situated outside India. The same thing we had discussed when we were doing the place of supply chapter also. So this will also be considered as export, and if it is considered as export, then it will be considered as zero rated supply. Please be careful. Okay, there is no tax on it, so please do not call it as exempt supply. This will be called as zero rated supply. Yes, and then we will study ahead in the chapter. In case of zero rated supply, it will be considered as a taxable supply only. Okay, taxable with zero tax. Ma'am, what will be the effect of that? So let's say if I am exporting the goods or services. Okay, if I am exporting the goods or services, the tax payable on that will be 0. Then ma'am, what about the inputs that you have purchased for exporting these goods? On those inputs, I will be eligible for the input tax credit even if my outward is 0. What happens in case of exempt supply? If my outward is exempted, 0 tax, okay, then in that case I will not get my input tax credit, right? But in case of export, even if the tax paid on export is 0, still I will be eligible for the input tax credit, which I can claim it as a part of a refund. Yes, that's the reason this export and SEZ is considered as 0 rated and not exempted. Okay. Chalo, now I am going to the important section, that is section number 16. Very, very important. 100% question is going to be there from here. Please be careful. Yes. So now eligibility and conditions for taking ITC. What is the eligibility for taking ITC? That is given under section number 16. Multiple eligibilities are there. First one is the person, two basic eligibilities. First one, that person who is taking this ITC should be registered under GST. Okay, only then I can take the ITC. And secondly, whatever goods and services on which he is taking that input tax credit, those goods or services should be used in the course or furtherance of business, or it should be used for business purpose. Okay, only if these two primary conditions are fulfilled, only then you will be able to take the input tax credit under section number 16, right? Okay, then there was a circular here relating to molds and dies. Do you recollect we have done this circular earlier also? Now what are they trying to tell us here is, let's say there was an original equipment manufacturer. Do you recollect we had taken the example of, let's say, Samsung or Apple, who is the original equipment manufacturer, and it has contacted a person called as component manufacturer who is going to do manufacturing for the original equipment manufacturer. So component manufacturer is going to do the manufacturing and it is going to provide it to OEM, for which the molds and dies, okay, the small parts, molds and dies can be provided by the OEM to the component manufacturer, and OEM can give it to the component manufacturer free of cost, no problem in that. So we had studied this, that will this be considered as a supply? So here we had studied this in the supply chapter, that here both of them are unrelated person and this is done on free of cost, means there is no consideration, so this will not be considered as a supply. This is what we had considered. Now they are asking whether this will be considered as if this is given in the course or furtherance of business. So now here, this will not be considered as a supply. This we have already discussed, because there is no consideration involved and they are unrelated persons. Now the next question which comes into picture is the molds and dies which are provided by OEM to the component manufacturer. Now this is obviously given by the OEM to the component manufacturer in the course or furtherance of business, so that the component manufacturer will use those molds and dies, do the manufacturing and give it back to the OEM. So in this case, can we say OEM is giving it to CM for free? The outward of OEM to component manufacturer is 0, that is free. So now the question arises, should OEM reverse, or can OEM claim the ITC on those molds and dies which was supplied to CM for free? So now they are telling that OEM is transferring this to the component manufacturer for free, and it was the responsibility of the OEM to provide it to the CM for free. That's why no reversal is required at the end of the original equipment manufacturer, because it was OEM's responsibility. Okay, but if there was a contract, between OEM and the CM, suppose if there was a contract between these people, that components will be made, okay, whatever components the CM was going to manufacture, that is going to be made using molds and dies belonging to the component manufacturer. Means CM will use his own molds and dies, but still, even after having such a contract, still if OEM has provided it to the CM free of cost, means he was not under any obligation to provide, but still if he has provided it free of cost, then in that case whatever will be the inputs, okay, whatever will be this input tax credit on these molds and dies, that has to be reversed, that cannot be taken by the OEM, because then in that case we'll assume that OEM has not transferred it in the course or furtherance of business. Are you understanding this? Yes, this was the circular. Then after that, going to the next section, that is section number 16 subsection 2. Okay, section number 16 subsection 2 talks about conditions, further conditions for taking the ITC. What are the further conditions? Now they have prescribed 6 other conditions where you have to fulfill all the 6 conditions. Only if all the 6 conditions are fulfilled, then only you will be able to take the ITC benefit. Right, now going ahead, first one, section number 16(2)(a), which talks about having a proper document for availing the ITC. So whenever a registered person who is doing his business, if that particular person wants to avail any ITC, that ITC can be availed only on the basis of a original proper tax paying document. Means he should be having some proof of availing that particular ITC. Ma'am, what all documents can be there? So it can be a tax invoice, or it can be a revised tax invoice, right? Or it can be an invoice which is issued by the recipient, in case the supplier is an unregistered person. Do you recollect we had studied about this? In case of RCM, if the supplier is unregistered and the recipient is registered, then the recipient will have to issue a invoice on himself. So that invoice will be considered as the proof for paying the document and then taking the ITC. Then debit note, which is issued by the supplier. Suppose if you want to increase the value, then the supplier will issue a debit note. If the supplier issues a debit note, can we say recipient's ITC credit will increase? So on the basis of this debit note, he can take the ITC. Then in case of import, I told you the IGST that we are paying, that we can take it as credit. So the bill of entry which is there under the Customs Act, that document will be required. Or then in case of input service distributor, do you recollect ISD was distributing the credit to its offices, so the offices will be taking the ITC. So on the document which is issued by the ISD, that should be kept as a proof with the offices. On that basis, it will take the benefit of input tax credit. And in that invoice also, everything should be mentioned properly. Okay, supplier's GST number, recipient's GST number, description of the goods, HSN code if required, then the taxable value, means the value of supply, the tax amount on it, and the total. Everything should be mentioned in that properly. Only then you will be able to take the credit of the input tax on that particular invoice, right? And suppose if you have done any fraud and you have got caught, okay, after getting caught, the department told you to pay certain amount of GST. After paying that GST under fraud, okay, you cannot ask for the input tax credit of the same. You had done a fraud, on that you have now paid the taxes plus the interest, penalty, whatever. So whatever taxes you have paid, you cannot ask for a credit of the same. Okay, this was the first condition, proper document. Second condition was only if the supplier puts all the details in GSTR1. Okay, supplier is going to file either GSTR1 on monthly or quarterly basis, or he will be putting your details in the IFF, invoice furnishing facility. Only then the credit will be reflected in the recipient's GSTR2B. Okay, only if the credit is reflected in your GSTR, in the recipient's GSTR2B, only then you will be able to take the credit. If the supplier has not filled your details in GSTR1 or IFF, then in that case the recipient will not be eligible for the ITC as of now. Ma'am, what if later he puts in GSTR1? No problem. Then later it will be reflected in your 2B and then you can take the credit of the same. Do you recollect what was your GSTR1 and IFF? GSTR1 was a statement of outward supplies in which the supplier is required to fill all his sales details, right? And I suppose if the supplier is filing his GSTR1 on quarterly basis, so for the first 2 months of the quarter, the supplier can put the B2B sales invoices details in the invoice furnishing facility. If he is doing that, the benefit is the recipient will be eligible to get the credit. Means the recipient will not have to wait for the quarter end to take the credit. He will immediately get the credit. I hope I am very, very clear with this. Yes. Okay. Then after that, these were the pointers. So please be careful. This is generally tested in your numerical examples. What if your input tax credit is not reflected in the GSTR 2B? Then in that case, you will not be able to get the input tax credit of the same. Then the third condition was you should actually receive the goods or services. Okay, you should actually receive the goods or services. Only then you will be able to take the ITC of the same. Okay, let's say there is a supplier. Okay, let's say there is a supplier who has supplied you the goods or services. Only when you have actually received it, only then you can take the input tax credit. The only exception is bill to ship to model. Okay, in case of bill to ship to model, I'll just make the diagram here. A was supplying it to B, then B got the same order from C. So B that is a third party, told A to directly ship it to C. Do you recollect? It used to be like this. So in that case, can we say C is actually, so first of all, can we say there are two transactions? First is between A to B and second is between B to C. Okay, so C is the ultimate purchaser here. C, let's say if he is purchasing the goods in the course or furtherance of business, can we say C is actually received the goods or services? So whatever is the invoice for B to C, on that basis, C will take the input tax credit, no problem in that. But then ma'am, what about A to B? B never actually received the goods was directly sent to C. So in this case, it will be deemed as if B has also received the goods or services, and then for the transaction between A to B, B will also be able to take the input tax credit of the same. Are you understanding this? Yes, and one more point which is going to come later, but I am telling you now itself. Let's say in case of a normal supply from A to B, A is supplying the goods to B in lots or in installments. Okay, it is supplying to B in lots or installment. Then in such a case, A will have to pay the tax on entire goods, on the entire invoice now itself. That is when on the entire invoice at the time of the first supply itself, right? But B will be able to get the credit only when he receives the last lot or installment. Did you see how smart the government is? The supplier will have to pay tax on the entire invoice at the time of first supply itself, but the recipient will get the original invoice as well as the ITC only when he receives the last lot or installment. Okay, please be careful with this particular point. Then there was a circular about X works model, generally which works in automobile sector. Okay, I'll explain it to you from this particular diagram itself. It will be very simple. Now let's say this person is the OEM factory. OEM factory is the manufacturer's factory. Okay, and then there is a dealer. Now here they have given the example for automobile sector, but it applies to every other sector also. Now there was a contract. Let's say Maruti Suzuki is there, and then let's say there is a dealer. Let's call it as Navneet Motors. Okay, Navneet Motors is one of the dealers of Maruti Suzuki. So there was a contract. Maruti Suzuki was supposed to supply the cars to Navneet dealer so that it can further sell it to the customers. Now in this case, there was a contract between them that this contract is going to be X works contract. X works contract, that is Maruti's responsibility will get over, like its responsibility will get over as soon as at its factory gate, means transportation etc. is going to be the headache of the dealer. So Maruti is saying, I will simply manufacture and you can get it collected from my factory. You can get it transported from my factory to your place. My responsibility gets over here itself. Right? After that, okay, I can arrange the transporter for you. I will, but rest of the things, the responsibility, risk, etc., gets passed on to the dealer at the factory gate of the manufacturer itself. Right? So now let's say Maruti has removed one car from his factory on, let's say 29th March 2025, for example. Okay, then in transportation it takes some time and it reaches Navneet Motors, let's say on 4th April 2025. Means in 5 to 6 days the dealer is going to get the delivery of the same. Then in that case, my question is, when will Navneet Motors be able to take the credit of the same? Will Navneet Motors be able to take the credit on 29th March or will it be able to take the credit on 4th of April? Then what difference does it make? My dear, the year and the date, month, quarter, everything has changed now. If your answer is 29th March, then it will go in 24-25 year financial year. But if you say 4th of April, then it will come in 25-26 financial year. So now here they had given a clarification that because this was a X works contract or a X factory contract, then in that case it will be deemed that Navneet Motor has got the delivery of goods on 29th March itself, or Navneet Motors has received it on 29th March itself. So it can take the credit there itself. Are you understanding this? Yes, even though physically it is received on 4th of April, doesn't matter. But the day when the supplier's responsibility gets over, or he passes the risk and reward, it will be assumed that the supply is done and the recipient has received the goods also. Okay, so here basically 29th March will be considered as the date when Navneet Motors has received the goods. Are you understanding this? Yes? Okay. Now going ahead to the next condition. As of now, we have completed 3 conditions, right? First one was your tax paying document. Second one was it should be reflected in the recipient's GSTR to B. Third condition was you should have actually received the goods or services. Fourth condition is whatever ITC is being shown to the recipient in his GSTR to be, it should not be falling under the restricted ITC. Okay, when you see the format of GSTR to be, one is the ITC which is allowed, okay, which can be availed, and another subsheet in that GSTR to be is the ITC which is restricted. Restricted means whenever the supplier is the defaulting person, maybe he has done a default in paying the taxes, or his tax payable in GSTR 1 is more than the tax payable in GSTR 3B, or there is a default of rule number 86B, any such type of default, if it is done by the supplier, then the recipient's ITC get restricted. If the recipient's ITC is put in that restricted sheet, then it cannot take the ITC for that. Okay, next one, fifth condition is tax on that particular supply. Okay, tax on that particular supply should be actually paid to the government. See, supplier has supplied you. Okay, supplier will be collecting the invoice amount, that is the value plus the taxes from you, and he will, what is the responsibility of the supplier? The value amount he will keep in his pocket, and the tax amount, okay, tax amount he will have to pay it to the government. What if the tax is not paid to the government? If tax is not paid to the government, then will the government give you the ITC? No, then the government will not give you the ITC. So supplier should have actually paid the tax to the government, only then the recipient will be able to avail the ITC. Now here generally what happens is recipient assumes that he has paid the tax. Recipient assumes that the supplier has paid the tax to the government, so recipient normally avails the benefit of ITC. Okay, and later if we come to know that the supplier did not pay the tax to the government, then in that case recipient will have to do the reversal of such ITC. Okay, recipient will have to do the reversal of such ITC. Please understand this point carefully. And when he is doing the reversal, okay, suppose if he is not doing that reversal, then in that case he will be liable to do the reversal later with interest under section number 50. Are you understanding this? Now ma'am, are there any timelines for this? Yes. So can we say supplier should pay the tax to the government? Okay, whenever the supplier pays the tax to the government, it is through GSTR 3B. Okay, it is through GST return, that is GSTR 3B. So the supplier should have furnished his GSTR 3B till next year 30th September. Means if the transaction is falling in this year, then next year ka 30th September. By then the supplier should have filed. His GSTR 3B. If he is filing his GSTR 3B, that means that he would have paid his taxes. Then in that case, the recipient will be able to take the ITC. Okay, recipient will be able to take the ITC by filing its GSTR 3B on or before 30th of November. Okay, again, whenever 30th September happens, by that time we'll come to know whether he has paid the tax or he has not paid the tax. If he has paid the tax by 30th September, then the upcoming before 30th of November, the recipient will be able to avail that ITC. Okay, but if what if it is not paid, then the recipient will have to reverse that ITC along with interest. Now generally what happens here, everyone please try to understand. Let's say that particular credit belongs to a financial year 24-25. Okay, then in 24-25 recipient will, while filing his GSTR 3B, he will normally take the He will normally take the credit. Okay, he will normally take the credit irrespective, or he is totally unaware whether the supplier has paid the tax to the government or not. Okay, please try to understand. Recipient has already availed the credit. But later we will come to know that the supplier has not paid the tax to the government. Can I say if the supplier pays the tax to the government till 30th September of the next year, then well and good, no problem. The recipient has anyway availed the ITC. But what if he does not pay the tax till 30th September? If he does not pay the tax till 30th September, then by 30th November, the recipient will have to reverse that ITC. Okay, whatever ITC is already availed, he'll have to reverse it along with interest under section number 50. I hope I am very clear till here. Yes. Acha, ma'am, what if later the supplier goes and pays the tax to the government? Then no problem. Then in that case, the recipient can re-avail that ITC. Whatever he had reversed till that 30th November, he can re-avail it. If forget about the interest, interest that is gone. He can just re-avail the reversed ITC by filing its GSTR 3. Manageable till here? Yes. Okay. Then after that, last point, that is filing of return. That is only if, see, from the above point, it was clear that supplier was also compulsorily required to pay the tax to the government, means he was required to file his GSTR 3B. One more condition that they are putting on us is the recipient should also file its GSTR 3B. Okay. The recipient who wants to take the ITC should also file his GSTR 3B. Only then he will be able to avail the ITC. Yes. These are your basic 6 conditions which are required to be fulfilled if you want to avail the benefit, if the recipient wants to avail the benefit of ITC. Okay, then there are certain provisos. This first proviso we have already done. Do you recollect? What if the recipient is getting the goods in lots? When will he be able to avail the ITC? He will be able to avail the ITC only on receipt of last lot. Okay, another second proviso is super duper important. What does the second proviso talk about? Second proviso says that whenever there is a transaction between a supplier and the recipient, supplier will supply the goods to the recipient and recipient is required to do the payment to the supplier. From that, the supplier will pay the tax to the government. But what if this recipient has not done the invoice payment to the supplier? If recipient has not done the invoice payment to the supplier, then supplier has an excuse that how will I pay the tax to the government? Right? So they have put a condition there also that recipient should complete that or should discharge the invoice payment within a time period of 180 days from the date of issue of invoice by the supplier. So whenever the supplier is issuing the invoice to the recipient should be doing a payment within a time period of 180 days. Ma'am, what if recipient has not done a payment within a time period of invoice payment within a time period of 180 days? Then in that case, can I say recipient would have already availed the ITC. On the basis of invoice that he has received, he would have already availed the ITC. He still has 180 days time period to do that invoice payment. Then in that case, the recipient, he first availed the ITC. Now he was supposed to do the invoice payment within a time period of 180 days. If he does the invoice payment within 180 days, well and good, no problem, nothing to be done. But what if he is not able to do the invoice payment within a time period of 180 days? Then this recipient is required to pay. Okay, not reverse, words changes, provision changes. Then in that case, the recipient will have to pay an equivalent amount of ITC. Whatever amount of ITC he has availed, that amount of ITC. That ITC which is pertaining to the unpaid invoice amount. Let's say 100% of the invoice is unpaid. Then 100% of the ITC in that invoice along with interest, that the recipient will be liable to pay it to the government. Okay, and this has to be paid. As soon as that 180 days period expires. Okay, it's not that the recipient will have to reverse the ITC. No, this amount will be added to the output tax liability of the recipient. Right? Now, ma'am, your interest will be from which period to which period? That calculation is very, very important. Please be careful. Acha, before I explain you the interest period, before that, let's revise this. What are they telling? So whenever the supplier has done the supply to the recipient is required to do the invoice payment within a time period of 180 days from the date of issue of invoice, right? If the recipient fails to do the payment within 180 days, then whatever amount of ITC the recipient has availed on that invoice, that is required to be paid back to the government, right? Because you have taken a wrong credit, that ITC amount plus the interest amount you will have to pay to the government whenever that 180 days time period expires. Okay, ma'am, what if proportionate, like what if part of the invoice is paid? Okay, can I say, let's say 60% of the invoice is paid by the recipient to the supplier, 40% is still unpaid. 40% is unpaid even for 180 days. Then only 40% of the ITC you are required to be punished. Are you understanding this? Yes, interest will come under section 50, that is interest will come at the rate of 18%. Now from where to where? Now let's say the invoice was pertaining to the month of October. Okay, so acha, whatever is the due date for filing GSTR 3B for the month of October. Okay, whatever is the due date of filing the GSTR 3B for the month of October. Let's say this person is a monthly return filer. So let's assume that his GSTR 3B will be is required to be submitted on 20th November. On 20th November, he will be filing his GSTR 3B. Okay, so the day succeeding this day, that is from 21st of November till whenever the 180 days from the date of invoice will get over. Okay, let's say for example, I am simply assuming, let's say it gets over in the month of April. 180 days expires in the month of April. So whatever is the due date for filing the GSTR 3B for the month of April, let's say it is 20th of May. So from this 21st of November till 20th of May, for this period, the interest will be applicable. Interest will be calculated at the rate of 18% on that proportionate ITC amount which is still unpaid to the supplier. So basically the interest here goes from a due date to due date. Okay, ma'am, which due date to which due date? In whichever month the invoice was issued, that month's GSTR 3B due date. Okay, from the day succeeding the due date till whenever the 180 days time period is going to expire, till this date we have not done the payment. So whenever you are going to file your GSTR 3B for that month, okay, till that date, please calculate the interest, and whenever you are filing this return, in this return you will have to pay that amount along with interest to the government. Are you understanding this? Yes, very, very simple. Okay. Acha, now, ma'am, this 180 days time period, is it compulsory for all? So this is not applicable in 3 cases. Okay, means the recipient is not required to pay any ITC plus interest back to the government in these 3 cases. Ma'am, what are those 3 cases? So let's say in case of reverse charge. Okay, in case of reverse charge, can we say the recipient's responsibility will be to pay the tax directly to the government? He will not be required to pay any tax amount to the supplier. To the supplier, he will be simply doing the value of supply payment, but tax has to be paid by the recipient. So as soon as the recipient pays the tax to the government, the recipient will be able to take the credit of the same. No need to compulsorily do the payment to the supplier within a time period of 180 days. Okay, that is one thing. Second one, what if it is a deemed supply having no consideration? If there is no consideration, then what will the recipient pay? Nothing, na? Then in that case, this 180 days time period is totally not applicable. And third one comes from your value of supply chapter. Do you recollect in value of supply chapter, we had done some addition under section 15(2)(b), that there was a contract between the supplier and the recipient, that supplier will provide this to the recipient, but for that, the payment was done by the recipient directly to the third party. Do you recollect that example? Yes. So in that case, can we say that portion, the recipient directly paid to the third party, recipient did not pay to the supplier, but recipient directly paid to the third party. So it will be deemed as if the recipient has paid it to the supplier. So in these 3 cases, this 180 days time period condition is not applicable at all. Are you understanding this? Yes. Acha, ma'am, what if later the tax is paid to the government? if later whenever the invoice value is paid, not to the government, whenever the invoice value is paid later on, at that time, the input tax credit can be claimed. Okay, whatever amount we had paid to the government here, ITC plus interest. So out of this, whatever ITC we had paid to the government, we can take the benefit of the same. Are you understanding this? Yes. Okay. This was till here basically your conditions. Okay, till here basically your conditions for availing the ITC gets over along with the provisos. Then going ahead to the next section, that is section number 16.3. What is section 16.3 says that, let's say if you have purchased some capital goods, for example, if you have purchased it for 1 lakh rupees and on that you have paid a tax of 18,000, total value of capital goods is equal to 1,18,000. Now let's say if you are taking this entire 1,18,000 to the balance sheet and if you are capitalizing it and if you are claiming the depreciation on this total 1,18,000. See, on 1 lakh you can definitely claim, but if you are claiming it on 18,000 also, means you are claiming depreciation on the tax amount also, then they are telling that you cannot take the benefit of this ITC. Okay, you cannot take the benefit of ITC on capital goods because any one of the benefit will be available, that is either depreciation or the input tax credit, right? Next point that is coming up here is, ma'am, is there any time limit for availing the ITC? I am not telling for utilizing the ITC. Yeah? For utilizing the ITC, there is no time limit. Whenever in your life you want to utilize the ITC, you can utilize. Here we are talking about availing the ITC, that is crediting it to your electronic credit ledger. Is there any time period? So yes, there is a time period. For a particular financial year, the time period will be 30th November of the next financial year or the date of filing annual return. Or the date of filing annual return, whichever is earlier. Till this you will have to avail your input tax credit. Are you understanding this? Yes. So for a particular financial year, it is 30th November of the next year or the date of filing annual return, whichever is earlier. Okay, but please be careful in case of debit notes. Okay, for debit notes, let's say the original invoice was issued in one particular financial year and for that a corresponding debit note is issued in this year. Then you do not have to link that debit note with the original invoice. In whichever year the original debit note was issued, for that year till 30th November or the date of filing annual return, you can take the ITC. It's not that you will have to go and check the 30th November of that year. No. Original invoice is separate, debit note is separate. So government says that debit note you can issue whenever in the life you want to issue, and for that, see, whenever the supplier issues the debit note, it is just like a sales invoice for the supplier. Okay, whenever we are increasing the value of our supply, the debit note by the supplier is issued. So whenever the value of supply increases, can I say recipient will have to take the ITC also? So he can take the ITC on the basis of date of the debit note and not the date of the original invoice. Are you understanding this? Yes. Okay. Then after that, next point. In the next point, they had issued a clarification in case of reverse charge mechanism. Okay, let's say there is some supplies which are done by an unregistered person. Unregistered supplier has supplied something to a registered person and on which RCM is applicable. So can I say recipient will be required to pay the tax on it? Now in this case, the recipient will pay the tax to the government and then he can avail the benefit of ITC. So ma'am, for this, what year or which year will we be taking? Then in that case, what are they telling us here is the relevant financial year for calculation of time limit for availing the ITC will be the financial year in which the invoice has been issued by the recipient. See, supplier will anyway not be issuing any tax invoice because he is unregistered. So can I say the recipient will have to issue an invoice on himself? So in whichever year he is issuing the invoice, that year, like succeeding that year, whatever is the 30th November or the date of filing annual return, whichever is earlier, that will be the time limit for availing the ITC. I hope I am very, very clear with this. Yes, and the last point here is section number 16.6. Section number 16.6 is very, very nice provision where they are talking about availing the ITC in case of revocation of cancellation of registration. Okay, now let's say I'm just making a timeline here. I had explained this to you in the main lecture. We had taken many examples on this also. Let's say a particular taxpayer was normally earlier registered. Okay, let's say he was normally registered. The financial year, let's say it gets over here on 31st of March. Right? Can I say the time limit for availing the ITC is 30th November? For this particular year, it will be the subsequent 30th November or the date of filing annual return, whichever is earlier. Okay, annual return due date is 31st of December. So, anytime before 31st of December, you can file the annual return. So, here it is 30th November or the date of actually filing the annual return, whichever is earlier. This is the time limit for availing the ITC. Okay, now let's say for example, this person's registration got cancelled somewhere here, let's say on 15th November. On 15th November, that particular person's registration got cancelled, right? As soon as the person's registration is getting cancelled, can we say his facility for furnishing the returns on the website of GST is totally blocked? He won't be able to file the returns. Right now he is very much tensed that okay, my registration is cancelled and yet to avail my ITC for this particular year. Now that his registration is cancelled, he cannot file his GSTR 3B etc. and he is not able to avail the ITC also. Okay, now let's say after few days, he made an application to the department and his cancellation was revoked. Okay, cancellation was revoked means his registration will again become effective. And let's say that happened on 28th of November. Okay, just 2 days before the due date, on 28th of November, his cancellation got revoked. Now can he start filing his return? Yes, he can start filing his return. But now can we say only 2 days are left for availing the ITC? Yes, so we have given him a time period that okay, whenever your registration is revoked, from that day within a time period of 30 days. Okay, from that day within a time period of 30 days, that is by 28th of December, maximum till 28th of December, you can avail the ITC. Okay, even if your 30 November time limit has gone, then too, maximum till 28th of December, you can file the return and avail the ITC. Are you understanding this? Yes, so this extension is available only in this one circumstance. And another thing here is, there is one very important condition that as on the date of cancellation, your time limit for availing the ITC should not have expired. Means as on 15 November, can we say we were still eligible to avail the ITC? The due dates have not yet expired. Yes, okay, then you will be getting this extension benefit. Okay, but what if my cancellation is happening on 1st of December? If my cancellation is happening on 1st of December, then were you sleeping till now? Can we say your due date has already expired? Then in that case, you will not be allowed this 30 days extension. Understanding this? Yes. So this is given under your section number 16.6. I hope I am very, very clear with this, everyone. Okay. Then going on to the next provision, which is talking about utilization of ITC. In case of utilization of ITC, we have already studied in the first chapter also what is the sequence of that. So first you should start with the ITC of IGST. Okay, IGST credit will be used first for IGST liability, then it can be used for CGST or SGST in whatever proportion, in whatever manner you want to use it. Okay, once your IGST credit is 0, then only move ahead. Then going on to the CGST credit. CGST credit we can use we will use it first for CGST liability, then we will use it for IGST liability if any. Okay, once your CGST credit is 0, then I will move to the SGST credit. SGST credit will be first used for the same SGST liability. If anything is left, then we will use it for IGST liability. But C cannot be used for S and S cannot be used for C. Right? This is the sequence that we have already studied. Okay. Now, if you have taken my lectures, then in the questions, we have done a couple of questions where we have done the set of calculations. We have understood it. If you have not taken the lectures on YouTube, I have put the lectures in which we have done the calculations in Super 30 also. Okay, I have put some Super 30 questions also for CA Final as well as CA Inter you can check it from there also, but please make sure that you try a couple of questions on doing this set off so that it becomes very, very simple for you. Right? Okay, then I'm going to the next two rules, that is rule number 86A and rule number 86B. 86A is okay, but 86B is important. Okay, 86A talks about restriction on utilization of ITC. So there are some few conditions on which the commissioner, okay, the commissioner level person will intervene in between, and that person will put a restriction on your utilization of ITC even though it is reflected in your GST. Even though it is reflected in your GSTR 2B, then too they can put a restriction. Now ma'am, what are those cases in which my ITC can be restricted? Now let's say if the supplier is a non-existent supplier. Okay, what if he is a non-existent, or if he is issuing any bogus supply invoices? What if he has actually not done any supply but he has just made a invoice? What if the recipient has never received the goods or services and still he is availing those credit? Right? Or what if he is not having a proper tax document or the invoice has gone missing? What if the person who is availing the ITC, that person is a bogus person? Then in such cases, the restriction can be imposed by the commissioner. Okay. Now different level of commissioner has been prescribed for different amount depending upon the intensity of that particular case. In that case, they can put a restriction on you that you cannot avail the ITC, and this restriction can be for a maximum period of 1 year, maximum for a period of 1 year. And if they think that they want to withdraw the restrictions, they can withdraw it even before a time period of 1 year. This was your rule number 86A. Now going on to the next rule, that is rule number 86B. Rule number 86B is very important. Especially for CA final students, you will also get some calculations in case of rule number 86B. So please be very careful with it. Now rule number 86B, first of all, it is for very big people. Very big people means if you are such a person whose value of taxable supply, not exempt, whose value of taxable supply other than exempt and other than zero rated, means export etc, excluding that and excluding the exempt supply, if your value of taxable supply in 1 month, if it exceeds, okay, if it exceeds rupees 50 lakhs, please don't get confusion more than or equal to or what, if it exceeds rupees 50 lakhs, then in that case rule number 86B will be applicable to you. Okay ma'am, if rule number 86B is applicable, then what will happen in that case? Then even if you have sufficient amount kept in your electronic credit ledger, still at least 1% of your output tax liability, 1% of your output tax liability should be paid using your electronic cash ledger, even if you have sufficient amount kept in your electronic credit ledger. 1% at least to be paid from electronic cash ledger. Rest 99% you can continue paying from the electronic credit ledger. We do not have any problem in that. Okay, but there are four exceptions where you can pay the entire amount through the electronic credit ledger. The government does not doubt on you. Okay, now first one, if you have done, okay, if some people have done income tax payment of more than rupees 1 lakh, income tax payment of more than rupees 1 lakh in each of the last 2 financial years. Okay, last 2 financial years income tax return you have already filed, and for that, and in that you have done the income tax payment of more than rupees 1 lakh, then the GST department says that okay, you are a true person, so you will not do any ghapla. Then in that case rule number 86B is not applicable to you. Now ma'am, who should have done this payment? So either the registered person has done this income tax payment, or in case of company, its whole-time directors have done this payment, or in case of partnership firm, the partner have done the payment, or in case of HUF, the Karta has done the payment. Similarly, okay, if they have done this income tax payment of more than rupees 1 lakh in the last 2 financial year, for which the 139(1) time limit has already expired, then in that case rule 86B is not applicable. Okay, secondly, if you have received a refund, GST refund, if you have received a GST refund of more than rupees 1 lakh in the current year, okay, in the preceding financial year, if you have received the GST refund of more than rupees 1 lakh on account of 2 things. First one, if you have done any zero rated supply, that exports or to SEZ, if you have done some zero rated supplies, okay, without payment of tax, then can we say you will get the refund of your input tax credit? Output is zero na, so whatever is your ITC, you will get a refund. And if you have got a refund of more than rupees 1 lakh in the preceding financial year, then in the current year you need not follow rule number 86B. That is one thing. And secondly, in case of inverted duty structure, that is where the rate of tax on your outward supply is less, but the rate of tax on your inputs, is more. So can we say most of the times you will be having a GST refund only? Yes, you will be having more amount in your credit ledger, and if you are taking a refund of that on account of inverted duty structure, then in that case, and if you have taken a refund of more than 1 lakh in the preceding financial year, then in the current year you are not eligible for, you are not allowed to follow rule number 86B at all, right? Then after that, the next one, that is if throughout the year or cumulatively during this particular year for all the months taken together, if you have already paid more than 1% of the output tax liability by electronic cash ledger for the preceding months of this particular financial year taken cumulatively, then in that case, for this month you will be exempted from following the rule number 86B. Okay, let's say I am standing in the month of April. Okay, first month of the year. For April, you are left with no choice. You have to follow rule number 86B. Okay, now you go to the next month. Okay, now let's say you go to the next month, that is for the month of May. For the month of May, you will go and check the preceding month. Okay, preceding month of this year. You have only 1 month, that is April. So for April, you will see, have you paid at least 1% of the output tax liability by cash ledger? If yes, for May, you need not follow that. Okay, for May, you need not follow that. Similarly, let's say now you go to the month of June. Okay, now let's say you go to the month of June, then you will do the cumulative of April and May. Okay, if you do the cumulative of output tax liability for April and May, multiplied by 1%. See if you have paid this much amount by electronic cash ledger during April and May. If yes, then for June, you need not follow rule number 86B. Are you understanding this? So basically what are they assuring us here is, let's say in some month you have paid a huge amount by electronic cash ledger, then for the subsequent months you can just check it. You can check the cumulative of all the months till now, and accordingly you can decide. Okay, accordingly you can decide whether rule 86B is applicable or not applicable. We have done the examples on this also. And last one. Acha, one more thing. Whenever we are talking about reverse charge, taxes payable under reverse charge, then that is totally separate, that you have to pay separately as under your reverse from your electronic cash ledger only. Okay, and that is not to be considered in the third point. This is payment of output tax liability. That RCM that we pay, that is tax on inward supplies. Are you understanding? So please do not consider that. You have to anyway, unconditionally, that you have to pay from your electronic cash ledger only. And the last one, some specific people are exempted from the requirement of rule number 86B. That is your government, department, public sector, undertaking, local authority and statutory body. These people need not follow rule number 86B. They are always exempted, and they need not follow rule number 86B at all, and they can continue paying from the electronic credit ledger. Manageable till here, everyone? Yes? Okay. Okay. Then going ahead to the next section, very, very important section, that is section number 17, which talks about apportionment of credits. Okay. Now, we know what is ITC and all those things. What are the conditions for availing the ITC? Now, here they are telling that sometimes it can so happen that whenever we are purchasing any inputs, or we are availing any input services, or we are taking any capital goods, then in that case we are eligible for the ITC. Okay, we have already crossed those hurdles that what if ITC is not available? That is over. Now we know that okay, ITC is available. Sometimes it so happens whatever you have purchased, you are either going to use it. Okay, whatever is your inputs, okay, please, inputs or input services or capital goods, okay, that you are going to use it either for making some taxable supply, or you are going to use it for making some zero rated supply, exports, or you are going to use it for making some exempt supply, or you are going to use it for maybe for giving some free samples, or maybe you are going to use it for personal purpose, etc., etc. Something like this can happen. Then what are they telling us here is, whatever inputs you have purchased, if you are using it, okay, if you are using it for taxable supply, then we do not have any problem, because if you are doing a taxable supply, you will be paying the GST on it, so you will be eligible for ITC also. Okay, but next, if you are using it for doing zero rated supply exports, then also we are okay with it, because you are doing good for the country. Okay, next one, if you are doing an exempt supply, if you are doing an exempt supply, then anyway on this exempt supply you will not be paying any GST, so we will not give you the input tax credit of the same. If output is zero, then ITC will also be zero. Okay, similarly, if you are using it for making any product which you are going to give as free samples, not allowed, input tax credit will not be allowed. If you are purchasing some inputs which you are going to use it for personal purpose, etc., input tax credit is not going to be allowed. Are you understanding this? Did you understand the logic behind this? All those things are written in section number 17.1 and section number 17.2, and in this we just need to be careful for the zero rated. On zero rated also the tax payable is zero, but that is for exports na. If you block the ITC here, people will not do exports at all. So that's the reason, if you are doing exports or if you are doing taxable supply, then in that case you will get the input tax. Otherwise, go Goa, go. I hope I am very clear with this. Yes, so if you are using it partly for business purpose, if you are using it totally for non-business purpose, inputs is gone. What if you are using partially for business, partially for non-business? Then only that much ITC which pertains to business purpose, you should be eligible to get that. Okay, so that apportionment comes in rule number 42 and 43. Similarly, what if you are using it for taxable supply? Input tax credit is available. What if you are using it fully for exempt supply? ITC will be totally not allowed. But what if you are using it partially for exempt supply and partially for taxable supply? Then you will have to do the apportionment. Again, that will come under rule number 42 and 43. Okay, rule 42-43 is not applicable for CA inter students. It is applicable directly for CA final students. Right? Okay. Now, before we get into the details, more details of rule 42-43, I'll cover it later for CA final students. Yes. Now I'm going to this particular circular where they were talking about the input tax credit in case of warranty replacement. Okay, warranty replacement of spare parts or repair services during the warranty period, etc. Now, this circular may be in your book. It will be there in the supply chapter, or it can be there in the ITC chapter. But if you do it after ITC chapter, it makes more sense as compared to the supply chapter. Yes. Now let's say, common thing in this particular circular is, there is an original equipment manufacturer who has manufactured a particular product. Okay, he is going to sell it to the dealer, and the dealer is ultimately going to sell it to the customer. Okay, now sometimes what happens is the dealer gives the warranty, and sometimes what happens is the manufacturer gives the warranty. Generally the warranty is given by the original equipment manufacturer only, right? So if the customer has any problem, he can contact the dealer, and dealer can help with the warranty by taking the support from the original equipment manufacturer. Now in this case, there were certain clarifications which were required in case of input tax credit. Right? Now let's say original equipment manufacturer has offered the warranty for the goods which were ultimately sold to the customer, and the original equipment manufacturer, he says that either I will replace your goods. If something happens within the warranty period, either I will replace the goods, or I will provide the repair services to the customer free of cost without charging any consideration. Can we say, if OEM is directly providing this to the customer, and that too he is doing this free of cost, then can we say there will be no GST on this? Right? There will be no GST. Why? Can we say, because these two are unrelated person, and whatever service has been provided by the OEM to the customer free of cost, this will not be considered as a supply. This is done in the course or furtherance of business. Are you clear with this? Now, because this is done in the course or furtherance of business and this was already put in the warranty condition, can we say here OEM would also have used some spare parts etc. for providing this repair services? So OEM is not required to reverse the ITC on this. Even if the output is 0, okay, even if the value of supply here is 0, still the OEM is not required to reverse any ITC. Ma'am, why? Because this is provided in the course or furtherance of business. Okay, that is one case. Now, what if the distributor provides the replacement? Here the replacement was provided by the OEM. What if the distributor provides it? Then in that case, ma'am, what are we supposed to do? Now, here they have given you 4 circumstances. I will simplify it and put it for you. Now, let's say OEM is there, distributor is there, and customer is there, and the distributor is providing the services to the customer because it is in warranty period. Let's say it is free of cost. Then in that case, first case, the distributor raises the requisition to the original equipment manufacturer for the parts which are replaced for the customer, and let's say if the OEM is also providing this part to the distributor free of cost, then in that case, can we say again there is no supply happening here? Yes, there is no supply happening. Now here, can we say OEM would also have purchased those spare parts etc. Is OEM required to do any reversal? So answer is no, the OEM is also not required to do any reversal because it is further provided to the distributor free of cost, and distributor has also provided it free of cost to the customer, and this is done in the course or furtherance of business, right? Acha, another thing, second circumstance, one more circumstance which is given here is, yes, now let's say for example OEM is there, OEM is providing it to the distributor is providing it to the customer. Okay, now there was a agreement between OEM and the distributor that distributor will provide it free of cost to the customer. Means here it is going to be free of cost, and the distributor is going to take that part from the OEM, and it is going to charge a consideration. Means it is not a free replacement that is happening. So in this case, let's say the distributor does it free of cost for the customer. Yes, and either the distributor is having the parts with him, or let's say the distributor avails the parts from a third party, but the contract was that OEM is going to reimburse for that. Means it is not going to be the distributor's cost, ultimately it is going to the OEM's cost. So can we say the distributor is going to charge the consideration from the OEM? So can we say distributor will raise an invoice on the OEM and OEM is going to do the payment to the distributor? Means it is as good as that distributor is raising an invoice on the OEM and OEM is going to reimburse it to the distributor. So here in this case, anyway, because there is a consideration involved, this will be considered as a supply. So distributor will collect the tax from the OEM, pay it to the government, and then OEM can take the input tax credit of the same. Okay, so basically what is the difference here? In this A point, the distributor is doing it free for the customer, right? But distributor is taking that as a reimbursement, or he is charging it from the OEM. In the second point, what happened was OEM was providing this part. OEM was providing this part to the distributor for free without charging any consideration. Then in that case, everything was for zero. There will be no GST payable, and OEM is also not required to reverse any ITC. Okay, another thing is, again, OEM is there, distributor is there, and customer is there. Distributor is replacing that part for the customer. Now, ma'am, from where is the distributing replacing that part? OEM has already done some supplies, okay, sales. OEM has already done some sales to the distributor for normally selling it. But here, can I say distributor is using one of those part? Distributor is using one of those part for giving free replacement to the customer. So can we say actually it is a loss for the distributor? He has already paid it to the OEM, and that the distributor is using for replacement for the customer, right? So now here, can we say the manufacturer will issue a credit note for that one part? right? See, manufacturer has already sold that and he has already charged the consideration also from the distributor. But now the distributor wants a free part. So OEM issues a credit note to the distributor and accordingly the transaction is getting reversed. Are you understanding this? Yes. So in that case, value will get, in case of credit note, the value gets reduced. Yes, so if the value for the OEM is getting reduced, can we say even the ITC for the distributor will get reduced? So he will have to reverse that amount of ITC that he has availed against that one part which has got replaced, right? And the last one is, let's say the distributor is replacing that part. Distributor is replacing that part for the customer using his own stock, and then he is raising a requisition with the original equipment manufacturer, and original equipment manufacturer is sending it to the distributor again free of cost using a delivery challan. Means again, who is bearing the cost? OEM is later bearing the cost and he is giving it to the distributor free of cost. Distributor is replacing it for the customer. Again, can we say this? There is no supply here. And the OEM would have purchased that. So OEM is not required to do any reversal on his ITC. Manageable till here. And last one here is, what if the distributor provides repair service also? Repair service also. He is providing it free of cost to the customer, but distributor is taking a reimbursement from the manufacturer. Then in that case, normal GST will be applicable. The distributor or the dealer will be raising an invoice on the OEM. From there, he is going to collect the GST. He will pay it to the government. OEM will be eligible to take the ITC on the same. So here basically, along with replacement, what if there is a repair service also? Then normal provisions will become applicable. Are you understanding till here? Yes. Okay. Then I am going to the next part. Chalo, then going ahead to the most important section, that is section number 17.5, which talks about your blocked credits, right? Now, blocked credits is such a concept where even if as per the earlier provisions, whatever we have studied in section 16 and 17, even if you are eligible, even if you are allowed to take the ITC, but then comes the section number 17.5 which says no, it is not allowed. Okay, that's the reason they are calling it as blocked credit. Even if as per other provisions the ITC is allowed, still if you fall under 10 points, we are going to study in this section, if you fall under any of these, then your credit will be totally blocked. Okay, let's start with the first one. Now, because this is a revision lecture, I am assuming that you have studied. Still, I am trying to keep the revision as much as detailed as possible. Yes, everyone. First point is about motor vehicle and other conveyances and related services. Now here they are telling that if there is a motor vehicle means motor vehicle as per the Motor Vehicles Act, but excludes vehicle which is running on fixed rails, that is railways will be excluded. Any particular special vehicle which is used within the factory premises for transportation of goods, etc., that is gone. And any vehicle with less than 4 wheels, okay, any vehicle with less than 4 wheels and which is fitted with a 25 cc of up to 25 cc capacity, even that is excluded. So basically 2-wheelers and 3-wheelers, 2-wheeler or 3-wheeler fitted with a capacity of up to 25 cc, even that is excluded, means that will not come in the definition of this motor vehicle. So if we are purchasing any particular motor vehicle which is used for transportation of passengers, not for goods, motor vehicle used for transportation of passengers having a seating capacity of up to 13, okay, maximum 13, total 13 including driver. Motor vehicle used for passengers, seating capacity up to 13, then in that case it will be considered as an ineligible motor vehicle and any ITC on that will be totally blocked. So ma'am, what if a company is purchasing a car for transportation of its directors, employees, etc.? No, nothing, it is going to be totally blocked. Ma'am, but what if a company is purchasing a motor vehicle having a capacity of 25 for transportation of its employees? No problem, it is going to be allowed. Okay, even though you are using it in the course of business, doesn't matter. That's what I told you, it is a notwithstanding section, that is, it is going, if it is written here, means it is going to be totally blocked. Okay, but in 3 cases, the credit will be allowed. Ma'am, what are those 3 cases? First one, if you are purchasing such a motor vehicle to make a further supply, Example, a car dealer. Okay, Navneet Motors is purchasing the motor vehicle for further supplying it to customers. Then in that case, it is his business. Then in that case, the credit on that will be allowed. Second, if you are purchasing such a motor vehicle for making further supply of transportation of passengers, transportation of, example, you are purchasing some car to use it as a taxi, cab, etc., then it will be allowed. And third one, if you are going to use it for teaching driving on it, means for driving schools, etc., then in that case, again the ITC on such motor vehicle will be allowed, right? Okay, then similarly, the first point was about motor vehicle. Second one, similarly for vessels and aircrafts. Vessels is nothing but your ships, right? And aircrafts you already know. So whenever any person is purchasing any vessel or aircraft, even though it is in the course or furtherance of business, doesn't matter, ITC on that will be blocked, except in case of three circumstances. First one, if you are purchasing it for further selling it, ITC will be allowed. Second one, if you are using it for further providing transportation of passenger service, example, airline companies, etc., or cruise companies, etc., purchasing it for further providing transportation service to passengers, then it will be allowed. And third, when airline companies, let's say it is purchasing it for imparting training, how to fly an aircraft, if they are teaching that, or any other company purchasing it for providing training of that, then it will be allowed. And similarly, when any company is purchasing a ship for teaching how to navigate a vessel, etc., then also it is going to be allowed, right? Example, a company is purchasing a vessel, company is purchasing a private jet for one of its directors, ITC on that will be blocked, right? Acha, similarly, any expenses relating to that, example, any insurance services relating to that, or repairs and maintenance services relating to these ineligible vehicles, even those will be blocked. So if your main vehicle is blocked, then the related expenses ITC will also be blocked, except in few cases, if you are using those vehicles for eligible purpose, then the related expenses will also be allowed. Example, if you are using it for motor training school, then in that case, if you are doing any repair maintenance expenses and if you incurred any ITC on that, it means you have paid any ITC on that, then in that case it will be allowed. So if the main vehicle was, ITC on the main vehicle was allowed, then related expenses will also be allowed. If the ITC on the primary transaction was blocked, then the related expenses will also be blocked, right? Acha, let's say if there is a manufacturer, okay, if there is a manufacturer of these vehicles, motor vehicles, vessels, aircraft, if those people are taking any insurance, etc., or if those people are availing any insurance services, then in that case for them it is going to be allowed, right? Acha, now the question which comes from here is, what if you have purchased a motor vehicle for transportation of goods? Then in that case there is no problem. The problem comes only when it is used for transportation of passengers. Okay, please understand that. Fine. Then after that, then you thought that okay, when I am purchasing some motor vehicle, etc., then the credit is blocked. What if I take it on hire? What if I take it on lease? Then also, okay, then in that case, you must have paid some hiring charges, leasing charges, etc. So ITC on that will also be blocked, right? But what if you are taking it on hire and then using it for transportation of passengers or for motor driving, etc., then it will be allowed. Okay, but please try to understand this point. If such services are provided by the employer to its employee under a statutory obligation, means a company has taken a motor vehicle on hire and given it to its employees because there was a law which was compulsorily telling you to do that, then in that case we are left with no choice because we'll have to provide it to the employee. So we plead it to the GST department, sir, please allow me the credit. So they have allowed us the credit. Are you understanding this? Yes. Chalo then, let's go ahead. Now there was a circular which was released in the year 2024 which was talking about demo vehicles which are motor vehicles. Okay. Now you must have seen now whenever you go to a car showroom, etc., you must have seen some demo vehicles and demo cars, motor vehicle, etc. So what if a dealer, okay, what if a dealer is purchasing some demo vehicles where a customer goes, he can, take a trial run, etc. So in that case, what will happen? If that dealer has purchased some demo vehicle which he is using for providing trial run to the customer, on the basis of which the customer will decide whether he is liking it or not. So here it was clarified that because it is used in the course or furtherance of business, and that too for making further supply of such motor vehicle, then ITC on that will be allowed and it will not be blocked. Right? Acha, but what if the demo vehicles are used by the authorized dealer for the purpose other than making further supply of such motor vehicle? Let's say the company is using that, the dealer is using the demo vehicle for transportation of its employees, management, etc. Nonsense, ITC will be blocked. Right? Acha, similarly, what if the dealer purchases demo vehicle from the manufacturer for providing vehicle test drive to the potential customers and is not directly involved in purchase and sale? Means that dealer is just acting as an agent for the main manufacturer. Means the dealer is not going to use himself for making further supply, because the dealer is not at all engaged in making further supply. Further supply will be done by the manufacturer. In my showroom, I have just kept the car. In that case, ITC will not be allowed, because you are not using it. You are not using it for making a further supply. Right? Okay. Then going on to the second point. Out of 10 points, now we are going to the second point. Second point is very, very simple. Food and beverages, outdoor catering, health services and other services. Now here they are talking about multiple services, food and beverages, providing free food, etc. Outdoor catering services, beauty treatment, plastic surgery services, then life insurance, health insurance services, etc. Now whenever we are availing these services, okay, even if it is in the course or furtherance of business, we are availing these services, and even if it is in the course or furtherance of business, ITC on this is going to be blocked. Example, I am availing plastic surgery services for my employees in the company. ITC will be blocked. I am availing catering services because I want to keep a small get together in my office. ITC will be totally blocked. I am availing health insurance service because I want to provide this service to my employees. ITC will be totally blocked. Okay, no questions asked. ITC will be totally blocked. But what if you are doing a same outward supply? Okay, what if you're doing same outward supply? Let's say I am normally engaged into catering business. Okay, I provide catering business. For that, now I have availed some catering services from other person, or let's say I have outsourced the work to someone else. Then in that case, it will be allowed. Okay, then in that case, it is not a problem. Let's say I am a doctor who is providing plastic surgery services, and I have availed some specialized services from a plastic surgeon. Then in that case, ITC will be allowed. Okay, and very, very important point is, if you have to provide these goods or services to your employee, you are the employer and you have to provide it to your employee under some statutory obligation, means some law is telling you to provide, then in that case ITC on this will be allowed. See, if you are providing it to your employees as per company policy, then it will be blocked, but under statutory obligation, then in that case it will be allowed. Right? Okay, then within that only, same thing applies for membership of a club, health and fitness center. Let's say you have bought some club membership for your employees. It will be allowed only if it is under some statutory obligation. Okay, what if you have extended some travel benefits to your employees? Again, I know you are doing it in the course of your business for your employees, etc. It should be allowed, but it will be allowed only if it is done under some statutory obligation. Manageable. Generally, companies give it to the top performing employees, etc., right? Or to the next high level employees, etc. So in that case, it will be allowed only if it is done under some statutory obligation, right? Then after that comes the next point, third point and fourth point. In the third point, they are talking about works contract services for construction of immovable property. Okay, let's say here, you want to construct an immovable property, and for that you are availing the services of a works contractor. Okay, let's say I want to get my office building constructed, or I want to get a staff quarter for my employees constructed. So how will I do it? What I did was I contacted a works contractor, and I told him that please help me in doing the construction of immovable property. So he says, okay, he will do the construction of the immovable property, no problem in that. Can he say he will be charging for me? For me, it will be an input service. We had studied in the second chapter itself, works contract involves goods plus services. So, and it was deemed as a service. So can I say it will be an input service for me? If it is an input service, now the question arises, will I get the ITC for that? So you will say that, ma'am, it is for office business, it is for office purpose, so ITC will be allowed. But now they are telling that if you are entering into any works contract service, or if you have availed any works contract service, then in that case ITC on that works contract will not be allowed, except when your immovable property is a plant and machinery. Okay, means building, staff quarters, etc. No ITC will be allowed. But if you are constructing a plant and machinery, anything that is a plant and machinery, then in that case ITC will be allowed. Are you understanding this? Yes. Now, ma'am, in this case, please try to understand. See, immovable property. If immovable property is plant and machinery, then the ITC will be allowed. And here, plant and machinery affixed permanently to earth constitutes an immovable property, but ITC on that is allowed as an exception. And yes, most important thing which I wanted to do here was the meaning of the term plant and machinery. That is any apparatus, equipment, machinery which is fixed to the earth by some foundation or structural support that are used for making outward supply, and include such foundation or structural support. So the plant and machinery which you are going to get constructed, which will be affixed to the earth, okay, and along with that, whatever is the foundation or whatever structure you are constructing, even that will come under the term called as plant and machinery. Okay, now you might get some questions. Like, ma'am, what if there is some telecommunication tower? Okay, what if there is some telecommunication tower that is not considered as plant and machinery? Then, ma'am, what if there are some pipelines which are laid outside the factory premises? Even that is not considered as plant and machinery. See, it is written here, but excludes land, building, other civil structures, telecommunication towers, pipeline laid outside the factory. This is not plant and machinery. So, if you are getting these constructed, then the ITC will be totally blocked. Right? So, exception in case of works contract is only if you are constructing the plant and machinery, only then the ITC on that will be allowed. And secondly, if your main business is also to provide works contract service, means you are a works contractor, you are also going to provide works contract service, and now you have availed works contract service from a subcontractor, then this ITC will be allowed, because again you are going to enter into the same business. Okay, but what if I am not a works contractor? If I am not a works contractor, then I will not get the ITC on works contract. Are you understanding this? Yes. Okay. Then the fourth point, which is again talking about self-construction of immovable property. Point number 4 was works contract services on construction of immovable property. Your self-construction of immovable property. Now, ma'am, what do you mean by self-construction of immovable property? Means I want to get my office building constructed, for which I am only buying the material. Okay, I am buying the material. I am taking the help of some laborers. I am taking the service of some laborers, and I am doing the construction of the immovable property. Then in that case, whatever ITC, okay, whatever ITC is there on this material, or whatever ITC is there on these services, this ITC will not be allowed for you. Okay, this ITC will be totally blocked. So see, you here tried to take the help of a works contractor, they blocked it. So you thought, okay, I will do the construction on my own self. That is, I will buy the materials, I will take the help of some laborers, and I will give them money, and I will get the construction done. So whatever is the inputs on this material and services, that input will also not be allowed. Okay, except when there is a construction of plant and machinery happening. Same thing. Except when there is the construction of plant and machinery happening. Are you understanding this? Yes. Okay, please remember here, now what they have done is, in this fourth point, that is 17.5D as well as 17.5C, that is third point and fourth point, where they are talking about this works contract and self-construction. 17.5, this one, 17.5C and D. 17.5C and D. Now, because of a case law, Safari Retreats, what has happened that wherever you are finding the word plant or machinery, now they have replaced the words with plant and machinery. Means the asset on which you are going to get the ITC, that was plant and machinery, right? So it should qualify under the term called as plant and machinery. Means it should not be plant. Earlier it was plant or machinery. Means even if whatever you are constructing, if it was a plant or a machinery, then too you were allowed to take the benefit of ITC. But now they are telling that if you want to take the ITC on construction of that immovable property, then that immovable property should be a plant and machinery. Only then you will be able to get the ITC on the same. Are you understanding this? Yes. And one more circular that was issued here was regarding this ducts and manholes used in network of optical fiber cables. Now, ma'am, what is this ducts and manholes used in network of optical fiber cables? Now, whenever there is a telecommunication tower that they are going to lay, for that, they generally make a manhole, a gadha type of a thing, a big hole kind of a thing, and in that they put all the wires and all that. It is not one single wire that is going, there will be a bunch of wires. Okay, and for that bunch of wires, they will have to make a pipe. Okay, a pipe will be there, and through that pipe, you must have seen the fiber cable, na? So through that pipe, like in that pipe, there will be many wires which will be connected from one place to another or from one point to another. So now this construction of this ducts and manholes which is used in network of optical fiber cable, this is basically so that the wires do not get destroyed. For that purpose, they make that entire pipe is there, and through that pipe, the wires etc. flow. So this is mainly used for giving a proper signal and for for a proper outward supply of telecommunication services, so that the transmission signals etc. work properly. For that, they make this ducts and the manholes which are there in the network of optical fiber cables. So now here the question was, will this come under plant and machinery or will this not come under plant and machinery? So what they clarified here was, this will come, okay, this will come under the term called as plant and machinery also, because this is not specifically excluded from plant and machinery definition. From plant and machinery, what was excluded? From plant and machinery, what was excluded? Land was excluded, building was excluded, civil structure, some structure kind of a thing was excluded, telecommunication tower itself was excluded, and pipelines laid outside the factory premises. Only these things were excluded. So rest, any of such asset which is used for providing the proper services, that will come under the term called as plant and machinery, and hence ITC on this will not be blocked and the ITC will be allowed, right? Okay, then after that, next point, fifth point is talking about composition levy. What if you are providing, you are a registered person but registered under composition scheme. Now, if you are purchasing some tax in some inputs, first of all, if you are purchasing some inputs, you will not be eligible to get the ITC of the same. Why? Because you are engaged in providing some outward supplies which is taxable under composition scheme. So composition dealer never gets the ITC. Okay, and secondly, whenever a composition dealer is selling some goods, can I say someone else is also purchasing it? That purchaser will also not get any ITC, because composition dealer cannot charge anything from him. If that purchaser has not paid any tax, then in that case, he will not be eligible to get any ITC. Then the next one, inward supplies received by a NRTP. Do you recollect NRTP, non-resident taxable person, temporarily coming to India, not having a fixed place of business in India, but carrying out some supplies of goods or services here in India. So here they are telling that whenever a NRTP, let's say if he is purchasing some goods or services here in India, on that he will not be eligible to claim any ITC. But if NRTP is importing some goods, only goods, if he is importing some goods, on that he would have paid some IGST, that IGST will be allowed as ITC. Okay, if he has imported some services, ITC is blocked. If he is importing some goods, on that ITC is allowed. If he is locally purchasing some goods or services, ITC will be totally blocked, right? Next one, what if you have purchased something, or what if he has used something for providing CSR activity, corporate social responsibility, for plantation of trees, etc., etc., ITC will be totally blocked, right? What if you are using something for personal consumption, go Goa gone, anyway it is going to be totally blocked. Let's say I purchased an AC and I have installed that AC in my house, ITC on that will be totally blocked. Okay, what if you have purchased something and you're going to distribute as free samples, or what if you're going to supply it as gift, give it as gift? What if you have purchased some inputs and those inputs got lost? What if you have purchased some inputs and those got stolen? What if you have purchased some inputs and those got destroyed? Can we say on the outward On the outward, now there will be no tax. If on the outward, if there is no tax, then the input on that will be blocked. Okay, ITC on that will be totally blocked. And the last one, what if you have paid some tax under section 74? Okay, section 74 was for a period up to the financial year 23-24. We'll study this ahead. Okay, if you have paid any tax, means you had done some fraud, you got caught, and now you have paid some tax under section 74, that taxes ITC will not be available. We discussed about this in the beginning of the chapter. Are you understanding this? Then a few circulars, samples and free gifts. Now you already know ITC on that will not be available. What if you are purchasing something and then you're going to supply it under buy one get one free offer? Buy one get one free is not totally free. Okay, it is like you are giving two products at a price of one. So ITC at the time of purchases, whatever ITC you would have paid, whatever taxes you would have paid, you will be eligible for its ITC because it is not totally free. Okay, ITC is blocked when it is totally free. Then after that, what if you are giving any discounts, etc. So this we have already discussed in the value of supply chapter, that whenever you are providing any discounts, then in that case, the discount will be reduced from the value if you are fulfilling the conditions given under section 15.3. Okay, then the value of supply goes down, and if the value of supply goes down, the recipient will also be eligible for the lesser amount of ITC. Okay, and in case of secondary discount, the value of supply does not reduce, so the recipient is also not required to reverse any amount of ITC. Right? Then in case of time expired medicines, drugs, etc., if those are treated as fresh supply. Okay, let's say manufacturer has supplied it to the distributor has given it to one retailer has given it to another retailer, and now the medicines are kept in stock of this R2. Okay, so then can we say in case of medicines, they are allowed to return it to the original manufacturer. Whenever they are returning it to the original manufacturer, in every chain, they will have to treat it as if they are treating it as a free supply. So basically R2 is selling it to R1. So when R2 is selling it to R1, R2 will pay the tax to the government, R1 will take the credit of the same. Okay, similarly, then R1 will sell it to the distributor. When R1 sells it to the distributor, R1 will collect the tax paid to the government and distributor will get the credit of the same. Okay, last, when distributor is selling it to the manufacturer, it will collect the tax from the manufacturer and pay it to the government, but manufacturer will not be able to take the credit of the same. Ma'am, why? Because can we say the manufacturer is going to destroy those medicines which are time expired, so manufacturer will not be eligible to take any credit on the same. I hope I am very clear till here, everyone. Yes? Okay. Right, so whatever we have studied in section number 17.5, the 10 circumstances, in those, if you fall under any of those circumstances, then the ITC will be totally blocked, even if you were eligible for ITC as per section number 16. Okay, still if you are falling under that, blocked credits, then the ITC will be totally blocked. Manageable till here? Yes. Okay, then after that, going to the last part, that is section number 18. Section number 18 talks about credit in some special circumstances. Now here they are telling, section number 18 along with rule number 40 that we have to do, that in some cases, whenever there is any change in your registration status, or whenever there is any change in the tax status of your product, like earlier it was taxable, now it has become exempted, or if earlier you were a registered person and now you want to come, earlier you were a regular taxpayer, now you are a composition one, or vice versa, then in that case, what about the credits? Okay, let's discuss one by one in detail. Now, first section, that is section number 18.1a. 18.1a says that you were an unregistered person. Okay, till now you were an unregistered person, but now you have become liable for registration and you have applied for registration within a time period of 30 days from becoming liable, and now you have been granted the registration. Right? So can I say till now you were unregistered? So till now whatever purchases you did, you were not at all eligible for its credit. But now you are becoming registered. So from now onwards, whatever stock you are going to sell, on that you will have to pay the taxes to the government. So you are asking for, sir, whatever goods I have kept in my stock, okay, whatever raw materials I have, whatever finished goods I have, whatever WIP I have, can I please now take the ITC on that? So government says, okay, no problem. If now you have become a registered person, then you can take the credit of the inputs, not of input services, not of capital goods. Okay, ma'am. Okay, so in that case, of what or of how many stock I can take the credit. So whatever was purchased during the last 1 year. Okay, whatever was purchased during the last 1 year. Ma'am, last 1 year means the calculation will start from where? The day when you become liable for registration. Can we say from that day you applied for registration within 30 days? So the day you became liable for registration, can we say that is your day of effective registration? Okay, so the day preceding this day, can we say till this date you were considered as an unregistered person? So whatever you purchased during this last 1 year, okay, whatever you purchased, whatever inputs you purchased during this last 1 year, on that inputs you can now avail the ITC. Are you understanding this? Yes. Okay, then the second case is you were not liable for registration. Okay, you were not liable for registration, but you obtained the registration voluntarily. Okay, khujli, you obtained the registration voluntarily. Then in that case, can we say effective date of the registration is the date of grant of registration? Okay, on whatever day the registration certificate was granted, that day you become as a registered person. So the day preceding this day you were unregistered. So whatever you purchased during this last 1 year, okay, whatever inputs, not services also, not capital goods also, whatever you purchased during this last 1 year, that will be allowed to you. That will be allowed to you as as ITC, provided you have a proper invoice given by the supplier, right? Okay, then the next one, like 18.1c, 18.1d, very crucial. You can see one question at least coming from this part. Now, registered person, there is a difference. See, 18.1a and 18.1b was, both of them were as of now unregistered. Now in 18.1c as well as 18.1d, the person is already a registered person who ceases to pay composition tax and switches to regular scheme. Means he was already registered under composition. Now can I say, because he was already registered under composition, so he was not eligible for ITC, right? But now he wants to switch to regular scheme, maybe because his turnover has exceeded that 1.5 crore and 50 lakhs, etc. Then in that case, now he wants to come under regular. Now if he is going to come under regular, he will have to start paying taxes on his supplies. So he will say that, sir, I have already purchased some stock with me and on that I have already paid the tax. Can I now get the credit? So GST department says that, okay, the day when you became liable under regular scheme, preceding that day you were there under composition scheme. So whatever you purchased during the last 1 year, whatever inputs you purchased during the last 1 year, you will be eligible to get the credit of the same. Now you said, sir, what about input services? So they say, in case of input services, we cannot have a track. So in that case, input services, no ITC will be available for the past period. But now you say, sir, what about capital goods? So they say that, okay, if you have come from composition scheme to the regular scheme, then in that case, you will be eligible for the ITC on the same. But the problem here is, please try to understand this. Can I say I purchased some capital goods? Okay, I purchased some capital goods when I was registered under the composition scheme, right? On that I did not take the input tax credit. Now I am coming into the regular scheme. Now, should you get the full ITC on that capital goods, or there should be some deduction? Can we say there should be some deduction because for some time you used it as a composition scheme dealer? Right? So now what are they trying to tell us here? Whatever was the ITC on those capital goods, minus 5% per quarter. Okay, minus 5% per quarter, this much amount of ITC will be available for you. Ma'am, this 5% per quarter will start from when? Whenever you had purchased. Okay, whenever you had purchased that capital goods till now, that is before, when you got converted into the regular scheme. Okay, even part of the month will be considered as a quarter. Let's say you purchased on 15th of March. So that March quarter, one full quarter will be considered there. Manageable till here? Yes, so right from the day when you purchase this capital goods till the day when you are getting converted, for that period, whatever number of quarters are coming into between, 5% per quarter. Okay, and yes, for capital goods, you don't have to check that was it purchased during the last 1 year. It can be before that period also. For inputs, you have to check that 1 year time period. Yes, and the last one, that is, what if registered person whose exempt supplies now become taxable supplies? The person is a registered person, no composition, no nothing, normal person, but till now whatever goods he was dealing in was exempt goods, and now that has become taxable. Maybe the government has announced a tax rate applicable on that. So can I say whatever he was purchasing till now, he was not getting a ITC on that because his outward was exempted, right? So now in this case, now it is becoming taxable, right? So now onwards, whatever he is going to sell, he will have to pay the tax on that. So he says that, sir, I have so much in my stock on which I did not get the ITC. So he is requesting, can I get the ITC? So yes, he will get the ITC. He will get the ITC on inputs also, and he will get the ITC on capital goods also, which was exclusively used for this exempt supply. Now inputs, same, whatever inputs you purchased during the last 1 year, that credit you will get. Okay, and what about capital goods? Same way, whatever was the ITC on the capital goods, minus 5% per quarter for the period when you used it for exempt supply, that much balance amount credit now you can avail. Simple, everyone. Yes, please don't underestimate this. Section number 18 is very important. Yes, and whenever you are taking this credit, you will have to make a declaration in form GST ITC 01 on the GST portal, that so and so amount of credit I am now availing on my inputs or capital goods, as the case may be. This you have to submit it within a time period of 30 days from the day when you become eligible to avail this. Means whenever this conversion etc. thing is happening, from that day within 30 days you have to submit this form, and this time period is extendable by the commissioner, no problem in that. And if your total amount of ITC that you are claiming, if that goes above rupees 2 lakh, then your declaration needs to be attested or certified by a practicing chartered accountant or cost accountant. I hope I am very clear with this. Yes. Okay, then I am going to the next one, that is section number 18.4. Okay, we did 18.1 year, right? Now here you will see 18.4, 18.6, 18.3 is coming later on, everyone. Yes, simple pointers. Now most important thing is done. Yes, and one more thing I want to tell you. Can you see here in the heading, it was written as 18.1 and 18.2. Now 18.1 main provisions you have studied, and do you recollect this 1 year time period? That is only of the last 1 year it is available, and what if it is older than 1 year, then the ITC will not be available. This 1 year point is given in section number 18.2. Okay, so I've just combined it and I have put it there. 18.3 will do it later, like next. Okay, let's do 18.4. 18.4 is very simple. Now see what are they telling us here. Reversal of ITC on switching to composition levy or exit from composition status or tax paying status. Now let's say you are as of now there under regular scheme, everything was going good, ITC was available etc. But from regular scheme now you are going to the composition scheme, or till now your product was a tax paying product, like taxable product, and now your product is going to become an exempt product. Then what will happen? As of now we did a reversal of this, right? Now here again ulta thing is happening. So can we say here you would have already taken some ITCs, because till now you were there under in that cycle of ITC. So now can I say you will have to reverse some ITC? Right? Now what amount of ITC is required to be reversed? So see what are they telling? Two things, na? ITC on inputs and ITC on capital goods. So ITC on inputs should be reversed proportionately on the basis of corresponding invoices on which credit has been availed. If invoices are not available, ITC can be reversed on the basis of prevailing market price of such goods on the date of such switchover or exemption. The details furnishing on the basis of prevailing market value needs to be duly certified by the practicing chartered accountant or cost accountant. So what are they trying to tell us here is whatever inputs you have with you in your stock, okay, whatever inputs are held in your stock or semi-finished goods or finished goods, whatever is the ITC on that. If you have the invoice, then as per the invoice, please reverse the ITC. If you do not have the invoice, then please calculate the market value of your stock and on that calculate the tax and reverse that amount. Okay, reverse that amount, or we can say debit that amount in your electronic credit ledger. Okay, that is you have to do for your inputs. Now, for capital goods, ITC involved in the remaining useful life. Okay, ITC involved in the remaining useful life in months of the capital goods should be reversed. Ma'am, why remaining life? Can I say for now you have been using it for regular scheme or for the tax paying product only? So for that period you can take the ITC, no problem in that. But from now onwards, that is for the remaining period. Now you are going to use it for composition scheme or exempt. So for the remaining life, whatever is the proportionate ITC, that you will have to reverse it. Okay, now let's say they have given an example also. Let's say, see, and in capital goods you should be knowing now that the life is considered as 5 years, 60 months. 5 years or 60 months. So now let's say if you have used it for 4 years, 6 months and 15 days, right? Then in that case, 4 years, 6 months and 15 days. Then can I say you have already used it for 4 years and 7 months, 6 months and 15 days. I am taking it as 7 months. So can I say you have already used it for 4 years and 7 months. Remaining life is equal to 5 months only. Right? So whatever is the ITC on that capital good, let's say ITC on that capital goods is 6 lakh rupees. So 6 lakh divided by 60. Can I say this is my per month ITC? 6 lakh divided by 60 will give me 10,000 rupees per month. Right? Now, can I say remaining life is 5 months? So can I say 50,000 of ITC is yet to be availed? So this 50,000 of ITC is already availed, but that pertains to the future period, that is I am going to use it for composition scheme or exempt. So this 50,000 of ITC is required to be reversed now. Yes, earlier I would have taken full ITC of 6 lakh now, but from that 6 lakh 50,000 I cannot claim it, so I will have to reverse it. Are you understanding this? Yes, after doing all these reversal etc., whatever balance is left in your ITC, that will automatically lapse. Okay, you cannot do anything now. Now there is nothing called as ITC in your life. So you will have to reverse it. Are you understanding this? Yes. Okay, and whenever you are doing this reversal, please do it individually for CGST, SGST and IGST. Manageable? Yes. Okay, then going to the next one, that is section number 18.6. Okay, 18.6 is very simple and important also. That is whenever you are selling or whenever you are supplying any capital goods on which ITC has already been taken. Okay, if you are, let's say you purchase some capital goods, at that time you would have taken the ITC on that, and now you are selling your capital goods. So what will be the tax payable? So they have given a very simple thing, that the tax payable will be higher of the following. Ma'am, higher of following means what? Whatever ITC you had already taken at the time of purchase minus 5% per quarter. Okay, minus 5% per quarter for the period that you have used it. Okay, let's say you've used it for 2 years. Means you have used it for 8 quarters. So whatever total ITC you had taken minus ITC for those 8 quarters means you will be left with a balance period ITC. So that balance period ITC, now you are going to sell it now. So that balance period ITC cannot be availed. So the balance ITC or tax payable on transaction value. Tax payable on transaction value means now you are going to sell this capital goods at whatever value you are selling it multiplied by tax rate. So out of these two, whichever is higher, this is going to be my tax payable. Are you understanding this? Manageable till here? Yes. Okay. Then after that, yes, here one very important thing was if refractory bricks, molds and dies, jigs and fixtures are supplied as scrap. Means if they are given as scrap, then you need not do all these calculations. The taxable person may pay the tax on transaction value. Whenever you would have purchased this refractory bricks etc., you would have capitalized this. So ultimately you are considering it as capital goods. But now when you are giving this as scrap, then in that case no need to do this detailed calculation. Directly whatever is your taxable value multiplied by GST rate, you can directly pay that. Manageable till here? Yes. Then going on to the next one, that is section number 18.3. 18.3 is talking about transfer of ITC on account of change in constitution of registered person. That is whenever any of this thing happens, sale, merger, demerger, amalgamation, leasing, transfer of business from one person to another, and there they have entered into an agreement for transfer of assets as well as transfer of liabilities, then whatever is the unutilized amount of credit available with me, that will be transferred to the newly constituted entity. Are you understanding? Yes, there are some other details etc. also here. You can just read it once. Yes, I have put some examples also in our main book. You can just read it once, right? And then the last one, that is rule number 41A, where they are telling transfer of ITC and obtaining separate registration for multiple place of business within same state or union territory. Let's say I am already registered in Maharashtra. I am having my office in Mumbai. Okay, and now I am planning to open one more office in Pune, Maharashtra, right? So you need not take a separate registration for Pune, Maharashtra. We have already studied. But if I voluntarily wish to take a separate registration for Pune office, then you are most welcome. Now, can I say now, till now, whatever activity was happening, that was happening only in Mumbai GST. Now you're going to have a Pune GST number also. So whatever is the unutilized ITC that you have in Mumbai, can you transfer some part of it to Pune, Maharashtra office also? Yes, you can do it, and that is done on the basis of value of assets. Okay, whatever is your unutilized ITC, that you can divide it in the ratio of value of assets held by them at the time of registration. So value of assets with Mumbai is to value of assets with Pune. On that basis, you can do this bifurcation. I hope I am very, very clear with this, everyone. Yes, and with this, your basic part of input tax credit provisions are totally over. Yes, I hope this detailed revision helped you to understand the basic provisions of ITC, and short question you're going to get from this chapter. So please don't neglect it. Now that you have the revision with you, plus you also have the question answers uploaded on the YouTube. On my YouTube channel, you have the question answers also of ITC. Please don't leave it. For the question answers, the question answer sheet also I have uploaded on the website in the free resources section. You can go to my website arpitatulsyan.com. In the free resources, you can just download the question answer sheet also. What more you need, right? Okay. Okay, so let's start with the revision of the next chapter, that is the registrations under GST. Right, simple chapter, important chapter, will be tested in the examination, and also practically this chapter is very, very important. Yes, can we start with it, everyone? Now, first of all, why is registration important under GST? The reason is, only if you are a registered person, then only you can collect the tax at the time of your outward supply, and you will be, at the time of your purchases, you will be able to get the input tax credit of the same, only if you are a registered person. Right, now whom will you call as a registered person? Any person who has obtained registration under this GST law, that person can be called as a registered person. But a UIN holder, we will study about it, unique identity number holder, that person cannot be called as a registered person. Right, now we are going to divide this revision into three parts. Okay, first part is going to be section 22, 23 and 24. 22, 23, 24, which is going to talk about registration, like a threshold limit for registration, who is eligible for compulsory registration and who is not at all liable for registration. That is going to be our first part. Second part is going to be about the procedures for taking the registration, and the last part is going to be amendment in registration and cancellation and revocation. This is how we are going to divide it. Okay, so now I am starting with the first part, section 22, 23 and 24. Out of that also I am starting with section number 22. Section number 22 simply says the threshold limit for registration, that is, when are you supposed to, okay, when are you supposed to obtain the registration? Okay, as soon as my threshold limit of my turnover, that is, as soon as my aggregate turnover exceeds a particular limit, then I will have to get myself registered in that particular state from where I am doing such taxable supply. Okay, from where I am doing such taxable supply. That also means that if, let's say, I am having my offices in two different states, and from this particular state I am doing a taxable supply, then in that case I will have to get myself registered in this state. There is some other state from where I am doing only exempt supply, then I am not required to get myself registered in such other state. But while calculating the threshold limit for registration, I will have to check the aggregate turnover. Okay, aggregate turnover is nothing but the turnover of all the registrations under the same PAN. Right, aggregate turnover will be your taxable supplies, it will be your exempt supplies, it will be exports, plus it will be your interstate supplies of all the, yes, plus outward supplies on which tax will be paid by the recipient under RCM. My outward supplies on which tax will be paid by the recipient under reverse charge. Okay, but my inward supplies on which I am going to pay the tax under RCM, that is not counted in my aggregate turnover, because that is not my turnover, that is my inward supply, that is my purchases, that is not my sales, right? So this all taxable supplies, exempt supplies, everything in my turnover will be taken for the purpose of calculation of aggregate turnover, and all my offices which are registered under the same PAN, I am going to take the turnover for that. Yes, please remember, in this turnover, taxes are not included. Okay, your GST, CGST, IGST, etc. is not included. Only the value, like amount before tax, that will be used for the purpose of computation. That will be used for the purpose of computation of your aggregate turnover. Yes, so please understand this very, very carefully. For calculating aggregate turnover, you will consider everyone. Okay, you will consider everyone. But registration will be taken only by that office who is doing taxable supply. Okay, the one who is doing exempt supply only, no registration required. Okay, the one who is doing taxable plus exempt, then taxable is there now. So that person will have to take the registration. Are you understanding this? Yes. Another point, let's say if I have supplied some goods to my job worker, and the job worker is going to do the work on those goods, and then he is going to send it to my customer. Okay, actually he was my customer, but there was some work to be done by the job worker. So I gave it to the job worker completed the work, then he is going to give it to my customer. Then it will be included in my turnover and not the job worker's turnover. Okay, that sale will be counted in my turnover and not the job worker's turnover. I hope the logic is clear, because he is just sending it on my behalf, whereas that turnover is my turnover, or that sale is my turnover. I hope I am very, very clear with this, everyone. Yes, okay. Then after that, going ahead to the applicable threshold limit. Now, ma'am, what are the threshold limit? Now, you must have already studied, you must have already revised. See, normally the threshold limit for registration is rupees 20 lakhs in a financial year. Not preceding, nothing. In the current financial year, if your turnover exceeds rupees 20 lakhs, then you are liable to get yourself registered in that particular state or union territory from where you are making a taxable supply. Okay, but if you are situated in those 4 states, okay, MMNT, that is your Manipur, Mizoram, Nagaland, Tripura. Okay, Manipur, Mizoram, Nagaland, Tripura. If you are situated in these 4 states, then instead of 20 lakhs, your limit will get reduced to 10 lakhs. Okay, instead of 20 lakhs, your limits will get reduced to 10 lakh, provided the office which is situated in these 4 places are doing taxable supply. Okay, see, listen, try to understand. My one office is in Maharashtra, one office is in Tripura. Let's say, for example, as soon as we see Tripura, we will see that, okay, the limit will come down to 10 lakh. Okay, but you have to make sure that Tripura office is doing taxable supply also, right? If it is doing only exempt supply, then anyway it will not take the registration. So in that case, the limit will not get reduced to 10 lakh. In that case, the limit will be 20 lakh rupees only. Okay, so if normal threshold limit for registration 20 lakhs, if any of your offices, or even if your PPOB is situated in these 4 MMNT states, then in that case the limit will come down to rupees 10 lakhs. Right now, then they had given us some criteria, that is if you are engaged in exclusive supply of goods, okay, exclusive supply of goods, then in that case, instead of 20 lakhs, you can take the threshold limit of rupees 40 lakhs. Okay, instead of 20 lakhs, you can take the threshold limit of 40 lakhs. I did not say that instead of 10 lakhs, you will take 40 lakhs. See, if any one of the office is in those 4 places, and if you are doing taxable supply from there, then the limit will be 10 lakh. There is no other substitute. But for other states, etc., where the limit was 20 lakhs. Okay, then in that case, if you are exclusively engaged in supply of goods, then instead of 20 lakhs, you can get the limit of 40 lakhs. But goods plus services is not allowed. If it is goods plus services, if you are engaged in supply of goods plus services, then it will be 20 lakhs. Right? If it is exclusively goods, then in that case, instead of 20 lakhs, you can take a higher threshold limit of rupees 40 lakhs. And yes, it is very, very important here, everyone. Now let's say if you're doing exclusive supply of goods, plus you have some income in the form of interest or discount, that is by giving loans, advances and deposits, then in that case, can we say such income, that interest or discount was anyway exempted as per the exemptions chapter? So it will be still considered as if you are dealing only in goods, right? But now if you want to avail this higher threshold limit of 40 lakhs, then you need to fulfill certain conditions. What are the conditions that you need to fulfill? First one, you should not be eligible for compulsory registration. If you are going for compulsory registration, anyway threshold limit is not applicable, right? Second, you should not be engaged in supplies of those restricted products which we had studied in the composition scheme. Do you recollect that? That pan, masala, tobacco, ice cream, fossil meals, etc. Those products, those same list of products, if you are engaged into that, 40 lakhs limit is not applicable. 20 lakh limits will be applicable. Okay, next one is that if you are engaged in intrastate supplies in some 10 states, okay, in some 10 states, those 10 states are OM, STP, MMNT. Okay, MMNT, we already know those 4 states. If you are situated in these 4, then anyway 40 lakh limit is not applicable, then the 10 lakh limit will be applicable to you. Okay, AUN stands for A for Arun, Arunachal Pradesh, U for Uttarakhand, M for Megha, Arun with Megha. Okay, Meghalaya. S stands for Sikkim, T stands for Telangana and P stands for Puducherry. If you are engaged in intrastate supplies in these states, means you are having offices in these states, then also this 40 lakh benefit is not available. For this either 20 lakh or 10 lakh as the case may be, that benefit will be available to you. Right? And the next one, if you have opted for voluntary registration, then again the threshold limit concept is totally invalid. Then in such a case, the threshold limit of 40 lakhs is totally not applicable. I hope I am very, very clear with this, everyone. Yes, so if you are, again I am telling you, if you are engaged in exclusive supply of goods, then in such a case, you can take the enhanced limit of rupees 40. Yes, and one very, very crucial point, this 40 lakh limit will be available to you. Okay, this 40 lakh limit will be available only if you are engaged in intrastate supply of goods. Okay, intrastate supply, not interstate, because we will study ahead. If you are engaged in interstate supply of goods, then anyway you are liable for compulsory registration. Okay, so in that case, anyway this limits etc. is not applicable. Okay, so to sum it up, we have got a summary table. Can you see this summary table? I'll just remove the marking so that you will be able to read it properly. Can you see this, everyone? Can you see this? Now I'll do the marking, this point and this point. Okay, this is going to be your summary. Now, who will be eligible for that 10 lakh? Okay, any person who is situated in MMNT. Okay, if the main office is situated in MMNT or any other office is situated in MMNT, then in that case the threshold limit of 10 lakh rupees will be applicable. For goods or services, doesn't matter, right? Then 40 lakh will be applicable for whom? 40 lakh will be applicable if you are exclusively engaged in intrastate supply of goods except for those restricted products. That is applicable for all the states except for those 10 states, OM, STP, MMNT, right? And in all the other cases, that is if you are not fitting in that 10 lakhs and if you are not fitting in that 40 lakhs, then the normal threshold limit of 20 lakhs will be applicable, and that 20 lakhs is applicable for all the states except for MMNT, right? Except for MMNT. I hope I am very, very clear with this, everyone. Yes, basic requirements is done. Now, can I say registration has to be taken in that particular state or union territory from where we are making the taxable supply. Okay, let's say I am in Maharashtra, I am making the supplies from Maharashtra. So registration is required in Maharashtra. By sitting in Maharashtra, I am supplying to all the, let's say I am supplying to 20 states. That does not mean I have to take the registration in 20 states. From where are you supplying? There you are required to take the registration. I hope I am very, very clear with this, everyone. Yes, and please remember that point compulsorily, that if one office is in Maharashtra and let's say one office is in MMNT, okay, one in Maharashtra, one in MMNT, then as soon as MMNT comes into picture, we reduce the limit to 10 lakhs. But if MMNT is exclusively engaged in supply of exempt goods only, exempt goods or services only, then in that case, anyway, they will not have to take the registration. So now the threshold will not get reduced to 10 lakhs. Please remember that point compulsorily. Okay, that is written here in our book also. Then after that, let's say I have got one office in Maharashtra from where I am supplying normal goods or services, and I have another office, let's say in Gujarat, for example, in Gujarat, or not in Gujarat, let's say in Rajasthan, and from there I am making supply of petrol, for example. Supply of petrol is an exempt supply. So for Rajasthan office, I need not take any registration, but for Maharashtra, I will have to take a registration. And for Maharashtra, when I am taking the registration, I will have to check the threshold limit, aggregate turnover. For aggregate turnover, I will take everyone together. Are you understanding this? Yes. Okay. Then after that, what if there is a transfer of business happening, okay, maybe in case of succession, maybe in case of death, etc., then the registration will be transferred to some other person. Okay, example, in case of merger, amalgamation, etc., also the registration changes. The person liable for registration, that person changes. And in other cases like death and the closure of business, passing on the business, sale of business, etc., also there is a change in certificate, right? Then going on to the next one, that is section number 24. Okay, 22 is done. Now we are going to section number 24. 24 talks about compulsory registration. In which all cases, okay, they have listed 11 cases. They have listed 11 cases where you are required to register yourself compulsorily. I think I have, during the class, we had discussed about it. Yes, can you see this? Compulsory registration that is coming. So first, if you are engaged, just like I told you, if you are engaged in interstate taxable supply, then in that case you have to, you will have to get yourself compulsorily registered. But okay, now in this interstate taxable supply, you will have to get yourself compulsorily registered. But the exception here is if you are doing interstate supply of services, interstate taxable supply of services, then up to 20 lakhs or 10 lakhs, you are exempted. Okay, means up to that you need not take the compulsory registration. After 10 lakh and 20 lakh, you have to take the registration. Ma'am, why didn't you include 40 lakh here? Because 40 lakh is for goods exclusively. We are talking about services. And second, if you are providing interstate supply of notified handmade goods or handicraft goods, interstate handicraft or handmade, then in that case up to 20 lakhs and 10 lakhs you need not get compulsorily registered. But for rest of the goods, if you are doing any interstate supply from one state to another, then in that case you have to take compulsory registration irrespective of the turnover. Right. Next one is the CTP, casual taxable person, who was temporarily registered in a particular state where he was not having his fixed place of business. So if a CTP is making a taxable supply, irrespective of his turnover, he will have to get himself compulsorily registered, and we will study ahead. He will have to take the registration 5 days in advance before commencement of business. But again, there is an exception here. If there is a CTP who is making interstate supply of handicraft or handmade goods up to 20 lakhs or 10 lakhs, then in that case, he need not take the registration up to 20 lakhs and 10 lakhs, right? Otherwise, interstate supply of goods, compulsory registration. CTP making a taxable supply, compulsory registration, right? Next, third and fourth point is very, very simple. Now, let's say if you are such a person who is getting some inward supplies on which you are required to pay the tax under RCM. So, it is your responsibility to get compulsorily registered. Okay, you as a recipient, because you will be paying the tax to the government, then you will take the credit of the same because the supplier is not liable. So, you will have to get yourself compulsorily registered. Then the next point was NRTP. NRTP who is making a taxable supply. NRTP person coming from outside India to do some supplies here in India. If NRTP is making a taxable supply, compulsory registration. You can run away whenever you want to. Just like that. Right? Then after that, going to the next one, I have compiled all the points relating to e-commerce operator together. Okay, now listen, just try to understand. Okay, just try to understand here. If there is any notified service that is provided, e-commerce operator, you remember, na? There is a main supplier, then there is eco in between, and then there is the customer. Now, if the main supplier is supplying any services notified under section 9(5), do you recollect? That passenger transportation service, then your housekeeping services, then your restaurant services, transportation services in that big vehicle, etc. So all those things we had studied under charge of GST chapter. So in that case, do you recollect eco was liable to pay the taxes? Yes, omnibus, I had forgotten the word. right? So do you recollect all these things we had studied under section number 9.5? So there, if 9.5 was applicable, then ECO was responsible to pay the tax. Can you see the diagram here on the board? If ECO is required to pay the tax, ECO will have to take compulsory registration. And then ma'am, what about the main supplier? Main supplier, no compulsory registration, but he will follow the normal threshold, that is 20 lakhs and 10 lakhs, because anyway the government is getting the tax from the e-commerce operator. Right? Achha, what if the main supplier is supplying any services other than 9.5? So ECO is not responsible, right? ECO is not responsible to pay the tax in this case. ECO's responsibility will be just to collect the TCS. If ECO has to collect the TCS, he will have to take the compulsory registration. Okay, ECO will have to take the compulsory registration. And here in this case, what about the main supplier then? The main supplier will be coming, here they are telling that okay, he will be liable for compulsory registration, but the limit of 20 lakhs and 10 lakhs is still applicable to it. So can we say if the supplier's threshold limit has not yet exceeded, then there will be no tax liability in this case, and therefore there will be no TCS also. Okay, this was about the services. What if goods are provided? What if goods are sold through the e-commerce operator? If goods are sold, okay, if goods are sold through the e-commerce operator, then what will be the scenario? Then in that case, there will be a supplier through the ECO and the final customer. So here, goods were not at all coming under section number 9.5. 9.5 was only talking about services. So can we see here, ECO is not liable to pay the tax. So the liability to pay the tax is going to come on the main supplier. Okay, ECO will be responsible only for TCS. For TCS, anyway, he has to get himself compulsorily registered. ECO's point is clear. Now, what about the main supplier? Main supplier will have to get himself compulsorily registered. This is what they have told, but subject to certain condition. Now, what is the condition? Please try to understand. If the main suppliers, okay, main suppliers last year turnover and this year's turnover has not exceeded the threshold limit for registration, means he is a really very small supplier and he is engaged only in doing intra-state supplies within the same state supplies, and now he wants to supply the goods through ECO, and to ECO also, through ECO also, when he is going to do the sale, he wants to do the sale within the same state. Means it is going to be intrastate, and anyway he is a very small person, then in that case he is not required to get himself compulsorily registered. Are you understanding this? Yes, but this person, the main supplier, should be having a PAN. He will have to furnish the details on the GST common portal that he wants to do the supply through e-commerce operator. For that, he will have to furnish his PAN. He will have to give the details of the state in which he is selling, and then he will have to apply for an enrollment number. Okay, he will have to apply for a unique enrollment number, and then even the ECO is given the responsibility that when ECO is filing his GSTR 8, in that GSTR 8, he will be mentioning the details of sales done by this main supplier. Okay, so if they are telling if it is intrastate, then last year also, this year also, they have not crossed the threshold, then in that case, the main supplier need not get registered. Can we say if the main supplier is not getting registered, then ECO will also not be required to collect the TCS? Why then tax liability? If main supplier is unregistered, means there is no tax liability. So ECO will also not collect the TCS in such a case. Are you understanding this? Yes. Okay. Then after that, any person who is going to deduct the TDS under section number 51. Okay. That we are going to study in the TDS chapter. So there are specified recipients like government, local authority, etc., who are required to collect the TDS while making the payment to the supplier. So for the purpose of deducting the TDS, you will have to take a separate registration as a tax deductor. Right? Okay. Then after that, if you are a person who is doing the supplies on your own account as well as on someone else's behalf also, if you are doing the supply. Example, agent. Agent is doing the business on his own account also plus on account of someone else also. He will have to take compulsory registration. You will find questions on this point. Please be careful. Right? Then input service distributor, his work was to, take all the invoices and then distribute it to the different offices. So maybe he would have taken a normal registration, but for the purpose of distributing the credit on input services, he will have to take a separate registration. Okay, then point number 9 and 10, please be careful. Whenever someone is providing OIDR services or someone is providing online meaning giving services from outside India, we have already studied this earlier, I'm just revising. Whenever these people are providing the services from outside India, Then remember, they were providing it to people like you and me, unregistered people. So we will not go and pay the tax to the government. So what did the government of India tell them? Government of India told them that, boss, please come to India, open an office here in India, or appoint some representative here in India, and you will have to collect the tax and pay it to the government. Even if you are belonging to outside India, still for these two cases, you will have to come to India, get yourself registered and pay the tax here in India. So they will have to get themselves compulsorily registered. And last, 11th point was an etc. point, that is any other person whom the government may notify for what? For the purpose of registration. So that person will have to get himself compulsorily registered. I hope I am clear till here, everyone. Yes, so in the textbook also same pointers are given. Same pointers are given here. Chalo, then after that, let's go ahead to the next section, that is section number 23, last section of our first part of revision. Yes, now section number 23 talks about persons not liable for registration. Okay, persons not liable for registration, divided into two subsections, subsection 1 and subsection 2. Subsection 1 says that if you are exclusively engaged in making non-taxable supplies, that is a part of exempt supply, if you are exclusively making exempt supply, then you need not get yourself registered. Okay, not at all responsible. Go on. And second one is if you are an agriculturist, okay, farmer, but individual or HUF only, and you are selling some produce which you have cultivated out of your own land, either by doing the self cultivation or by hiring some laborers, the cultivation was done. Then in that case, such agriculturist, this individual or HUF is not required to get himself registered. Are you understanding this? Okay. Then after that, going to the second subsection. Second subsection talks about the other cases. Okay, other cases who are not liable to get themselves registered. Now let's say if you are making any such outward supply on which RCM is applicable, means you are not responsible to collect and pay the tax, but your recipient will be responsible to collect and pay the tax. Then if you are making only these supplies on which RCM is applicable, then you need not get yourself registered. Okay, but the exception here is metal scrap. Okay, on metal scrap, in case of metal scrap, we know RCM is applicable. So if I am making outward supply of metal scrap, I know the tax will be paid by the recipient, but still here the supplier is required to get himself registered. Okay, next one. Now start taking it from the earlier points. Now, do you recollect who else was not liable for registration? Any person who was making interstate supply of services. Interstate supply of services up to rupees 10 lakh or 20 lakh, that person is not liable to registration. Up to 10 lakh, 20 lakh. Any person who is doing interstate supply of notified handicraft or handmade goods up to 10 lakh and 20 lakh was not liable for registration. Any CTP who was making interstate supply of notified handicraft and handmade goods, even that person is not liable for registration up to 20 lakhs and 10 lakhs. Then do you recollect any person, main supplier who was supplying services through ECO, other services other than 9.5 through ECO, then that person was exempted up to 20 lakhs or 10 lakhs. If you want, I can just show it to you. Other services, can you see this? Other services, this point. Through ECO, then in that case ECO's responsibility was only for TCS and the main supplier. They had told that he is liable for compulsory registration, but then he was given the benefit of that 20 lakhs and 10 lakhs. Right? Similarly, if there is any main supplier who is supplying goods through the ECO, okay, who is supplying goods through the ECO, and that too he is doing only intrastate supply through ECO also. Then and if his turnover in the last year and in the current year does not exceed the threshold limit, then that person need not get registered. Do you recollect? We had done this also. So these are some of the cases where the person is not liable to get himself registered. Right? All these things we have taken here from the textbook only. I have just summarized it here. right? Then I'm going to the next set of sections, that is section number 25, 26 and 27. Okay, what does 25, 26, this is second part of the chapter. 25, 26, 27 is going to talk about the procedure for registration. Now, as soon as I become liable for registration, I have to go and apply for registration within a time period of 30 days. Okay, within 30 days, I will have to go and apply for registration in that particular state from where I am making the taxable supply. Okay, from where I am making the taxable supply. Acha, what about CTP and NRTP? CTP and NRTP will have to get themselves registered at least 5 days before they commence their business. Right? And what if I am providing some services from territorial waters? In that case, I will have to get myself registered in that state or union territory where the nearest point of the baseline is located. Right? We had studied this when we were doing our place of supply chapter. Now, ma'am, how does registration work? Is it a centralized registration for the entire country? No, in GST we do not have a centralized registration. We have got state specific registration. That is, if I am having multiple offices in multiple states, then for each state I am required to take at least one registration. That's how it goes. But sometimes it can so happen. Sometimes can there be a possibility in Maharashtra I am having my 2 offices. So then for the entire state of Maharashtra I can take one registration, and one office I can show as principal place of business and another office I can show as additional place of business, but only one registration I am taking. Right? Similarly, they have also given you an option within one state. Generally, one registration is given, but if you want to take multiple registration in one state itself, let's say I am having my office in Mumbai and Pune and I want to take 2 registrations within the same state of Maharashtra, then they are telling, okay, your wish, you can take separate registrations also. Are you understanding this? Yes. And whenever you are having multiple offices, please be careful. If you are opting for composition levy, then whatever the other office is doing, you have to also go in the same line. Example, one office is following composition levy, the other will also have to compulsorily follow composition levy. You cannot just go as per your random choice. Okay. Now, whatever provisions we have studied is not applicable for voluntary registration. For voluntary registration, no threshold limit, nothing. Okay, you yourself wanted to get voluntarily registered. Okay, and you will have to pay the tax even though your threshold limit does not get exceeded, because in case of voluntary registration, threshold limit concept is totally gone. Then distinct persons, establishment of distinct person, this concept we have already studied earlier. Yes, now the registration that you are going to take under GST, this is going to be a PAN based registration. Okay, PAN based registration. So having a PAN is mandatory, except for whom? Except for NRTP. Right, except for TDS deductor, TCS collector, except for OIDR and online gaming service providers. See, NRTP, OIDR, online gaming, they are anyway situated outside India, they will not be having PAN, right? So they will be getting their registration on the basis of other documents. And in case of TDS deductor, then in that case, even if he does not furnish his PAN, but he gives the reference of TDS number under Income Tax Act, even that is sufficient for the purpose of taking the registration. Right? Then going on to the next number, that is a unique identity number. Do you recollect this? UIN. Now, United Nations and the embassies of the foreign countries who are going to establish their offices here in India, they need not get themselves registered, because whatever service they are providing, that is totally exempted. We have already studied that. Right? But now, can I say these offices would be purchasing some goods or services here in India? So on that they would have paid the GST. Now they want to take the credit of that GST. They want to take the refund of that GST. For that they are required to have this unique identity number. Are you understanding this? Yes. Okay. Then after that a different point is coming. What if you were liable for registration but you never took the registration? You thought, okay, chal raha hai, chalne do. Means you are thinking that, okay, if it's happening, if it's like if we are working without registration, let us continue without registration. But if the proper officer, that is the officer from the GST department or the commissioner level officer, if they come to know that you were liable for registration but you have not taken the registration, then they will temporarily issue you the issue an order and they will grant you the temporary registration. Okay, so ma'am, now what will that person do who was granted this forceful registration? So if he knows that he is guilty, okay, then he should go and submit a normal GST registration application within a time period of 90 days from that temporary number. Okay, but if he thinks that no, he is not guilty, so he can go and fight. Okay, he can go to the appeal authority. If appeal authority says that you are correct, then over. If appeal authority also says that boss, you are liable for registration, what are you doing, you haven't taken the registration, then in that case I cannot argue further, and within the next 30 days I will have to go and take the registration. Are you understanding this? Yes. Okay, then going ahead, that is to the procedure of registration. Now, whenever we are going for registration, we will have to apply in form number GST REG 01. But this GST REG 01 is not applicable for NRTP. This is not applicable for OIDR, not applicable for online money gaming. Not applicable for TDS and TCS. Okay, NRTP online gaming, you know, because it is PAN based, so they do not have, and for TDS TCS also they have specified a different format altogether. Right now, if you are not at all tech savvy, technology savvy, then in that case, instead of going on the common portal, you can go to the facilitation center set up by the GST department, and they will help you in making the applying for the registration. Right now, then about the SEZ. Okay, let's say if there is a person, there is a company which is having one of its unit in SEZ and another unit outside SEZ. Even if it is in the same state, it will have to take two separate registration, because one is in SEZ and the other one is outside the SEZ. Are you understanding? Then going on to the next point, which talks about input service distributor. In case of input service distributor, we have already studied that person will have to take a separate registration. Even if he is normally providing taxable goods and services, doesn't matter. But he will have to take for the purpose of distributing the credit, he will have to take a separate registration. Yes, now whatever registrations we are talking about, that has to be filled in form number. For registration, we will have to apply in form number GST REG 01 on the common portal. First, we will put our PAN in PAN. Okay, in part A. First, we are filling the part A. So, we'll put our PAN. The PAN will get validated from the CBDT website. We'll get the OTP, mobile number based and the email ID based OTP. We'll have to fill it. Once this is done, all our basic data is fetched. Then I will be granted a temporary reference number. Okay, TRN will be granted. Right now, using this TRN, I will start my part B of the application. Using this TRN, I will put all the other details relating to my business. What is the nature of business? I will put the details of my bank account. I will put the details of the authorized signatory. I will put the details of all the partners, members, etc. And all those details I will do. And plus, there will be an option of doing the Aadhaar authentication here. I can choose for the option of Aadhaar authentication. Once this is submitted, once this part B is submitted, then an acknowledgement will be generated. Are you understanding this? And as soon as the acknowledgement is generated, basically your application goes to the proper officer. Once it goes to the proper officer, then he will decide now what to do with this particular application. Are you understanding this? Yes, and here itself, in case of CTP and NRTP, as soon as after you get the TRN, after you get the temporary reference number, after that first go and pay some advance deposit of tax. After that only come and fill the part B. Are you understanding this? Yes. Okay. Then when we talk about the next part, that is what happens when the registration goes or when the application goes to the proper officer. If the application goes to the proper officer, then in that case, he will check whether all your documents are proper or not proper. If the documents are proper, if you have done the Aadhaar authentication, and if there is no site verification required, then the proper officer will issue you the registration certificate within a time period of 7 days. 7 days from the date of submission of application. Ma'am, what do you mean by submission of application? Submission of application. Submission of application means the date when you did the Aadhaar authentication, or 15 days from the date of submission of your part B, whichever is later. Okay, from that day, within a time period of 7 days, you will be granted the registration, right? Provided Aadhaar authentication was done. Okay, now let's say the registration, you submitted the application was proper, but you did not do Aadhaar authentication, or if PO thinks that site verification should be done, or if on the basis of risk parameters, like after doing Aadhaar authentication, suppose if he has undergone Aadhaar authentication, and if the authority proper officer thinks that on the basis of risk factor, this is a risky person, so we should check all the details before granting. Then in all of these application, everything was proper officer has got some doubt. So now in this case, registration will be granted within a time period of 30 days after the verification and after doing the verification of the documents and after doing the site verification. Right? But what if the document itself are not proper? If the main application itself is not proper, okay, and in that case, let's say if the person has failed to do, the person has not done the Aadhaar authentication also, or if the proper officer is of the opinion that site verification is required, or if Aadhaar authentication was done but it has been marked as a risky person on the basis of risk parameters, it has been identified to do the site verification, then in these cases the registration will not be granted immediately. Then in that case, the proper officer will issue a notice to that person that please give us the clarification. Okay, please give us the clarification within a time period of 30 days from the date of submission of application. And in all the other cases, it will tell you to submit the documents within a time period of 7 working days, right? Other than these. Now here the main thing is the initial document itself was not proper, and if you are falling under these 3 criteria, then they will give you a notice then they will issue you a notice within 30 days. Okay, and if it is any other case, then they will issue you a notice within a time period of 7 days. Right? Now once we receive, then the applicant will have to submit a clarification within a time period of next 7 working days. Okay, whenever we are receiving that above notice, from that day we have to submit a counter reply within a time period of 7 days. Now if within 7 days, what if we don't reply? Gone, application will be rejected. What if we reply but it is an unsatisfactory reply? Again it will be rejected. So only if we reply, and if the reply is a satisfactory reply, then within the next 7 days the proper officer will grant me the registration. I hope I am very, very clear with this. And what if they are not able to take any action? Like let's say, for example, just focus here on the board, everyone. Now let's say in case of this, okay, in case of this, where everything was proper, within 7 days they did not grant me, then at the end of 7 days it will be deemed as if it has been granted to you, right? Similarly, what if application was proper but they wanted to do extra check, so they were required to issue me the registration within 30 days. What if they did not issue? Then in that case, at the end of 30 days, it will be deemed as if the registration has been granted. Okay, and in this case, where I have submitted a satisfactory reply, I should have got the registration within the next 7 days. What if I did not get it within the next 7 days? Then in that case, it will be assumed that the registration has been granted. It will be considered as deemed approval of application. I hope I am very, very clear till here. Yes, then in case of Aadhaar authentication is mandatory now. Okay, it is mandatory for the new applicants also, plus it is mandatory for the people who were already registered under GST before the Aadhaar provisions came into picture. Are you understanding this? Now, how are we supposed to do the Aadhaar authentication? So that will be done as at the time of making the application for registration itself. In part B, you will be given an option for Aadhaar authentication. A link will be sent. Like basically, you will have to put your Aadhaar number, then click on Aadhaar authentication. Then it will take you to the outside website. Then you will be required to put your OTPs, mobile number and email based OTPs, and then once that Aadhaar authentication is done, okay, then within the next 7 days they will grant you the registration. Do you recollect? We just now studied, if no site verification is etc. is required, then they will grant you the registration within the next 7 days. Are you understanding this? Yes. Acha, this was in case of new registration, that is, you can go to the part B and do the Aadhaar authentication. Now, what about the existing registrations, existing registrants, that is, who all are already registered under GST? Then whenever they have got their Aadhaar, after that they will have to go to the GST common portal, they have to do the Aadhaar authentication or submit your eKYC documents, and it will be done. Okay, and whenever we are doing the Aadhaar authentication, it will be of 2 people. One is the authorized signatory, and second one is someone from the owners, that is maybe the partner or maybe the managing director or whole-time director. Someone from there should be doing the Aadhaar authentication. Are you understanding this? Yes. Then this point we have already done. If Aadhaar authentication is done, then within 7 days of submission of application, you will get the registration certificate. Ma'am, what do you mean by submission of application? Submission of application is nothing but the date of Aadhaar authentication or 15 days or 15 days from the date of submission of Part B, whichever is earlier, right? Whichever is earlier. Did I write it here as whichever is later? No, na? Okay, anyway, whatever it is, whichever is earlier, from that day I will be getting, from that day within a time period of 7 days, I should be getting the registration. I hope I am very, very clear till here, everyone. Yes. Now, whose Aadhaar number is to be verified, etc., that we have already done. Then, yes, in some cases, if the system identifies as a risky matter, then in that case, you will have to go to the GST facilitation center. You will have to give your biometric, submit all the original documents, the in-person verification will be done, and only then it will be considered as if your Aadhaar authentication is done. Right? Now, what if he does not opt for Aadhaar authentication at all? Then in that case, again, if you are not opting, then please go to the GST facilitation center and get all the things complete. Right? Acha, what if you do not go for Aadhaar authentication? Okay, let's say you are an existing person, existing registrant, work is going on, so you think that, okay, why to do the Aadhaar authentication? So they say that if you do not do the Aadhaar authentication, then in that case, you cannot file an application for revocation of cancellation of registration. Whenever you are doing the export, you cannot take the refund of the duties paid, and in other cases of refund, you cannot file a refund application. Okay, this is the punishment that they are giving it to you if you have not authenticated your Aadhaar, right? Acha, what if Aadhaar number is not allotted to you at all? Then it is not possible to do the Aadhaar authentication. Suppose if you are in the process of getting the Aadhaar, then please submit the Aadhaar enrollment number, okay, that temporary number. Or if you are not at all taking the Aadhaar, if you are exempted from taking the Aadhaar, let's say senior, super senior citizens, etc., then in that case you can submit your all the other documents, other ID proof, that is maybe bank passbook, or you can submit the passport, or you can submit the driving license, and on that basis your authentication will be done. Right? And there are some people who are totally exempted from Aadhaar authentication, that is everyone relating to government, local authority, statutory body, public sector undertaking, government department, government undertakings, persons who is not a citizen of India, etc. All these people will be exempted from Aadhaar authentication. And yes, UIN also, the person who is opting for UIN is for that United Nations organizations, then your embassies, etc. From where will they get the Aadhaar? Right? So Aadhaar for them is not at all possible. If Aadhaar for them is not possible, then even Aadhaar authentication is not possible. I hope I am very, very clear till here, everyone. Yes. Okay. Then after that, whatever is written here, this is already covered in your table, that diagram that we just now did. So don't worry about that. Okay, next point. Next point is very, very important. Do you recollect I had told you while filling your Part B, you are required to fill your bank details also, right? What if you do not fill the bank details? Then no problem. Okay, as of now, if you don't want to fill the bank details, no problem. But whenever you are granted the registration from that day within 30 days, or whenever you are filing your first GSTR1 or IFF, that is the statement of outward supplies, whenever you are filing that, or 30 days from the grant of registration, whichever is earlier, within this time you have to furnish the bank account details. If you do not do this, then it can lead to cancellation of registration, right? Okay, then after that, next one, physical verification of business, site verification. Sometimes it can so happen. Do you recollect we had studied? Sometimes the officer will think that we should do the verification even before granting the registration. If they want to do, then they can definitely do it. But whatever pictures you have taken and whatever photos etc. you have taken, please upload it on the common portal along with all the necessary documents and your commentary. Please upload it on the common portal at least 5 days before the time period, before the completion of time period which is specified in the proviso. That is, do you recollect where Aadhaar authentication was done Okay, Aadhaar authentication was done, documents etc. was proper, but the officer thought that site verification should be done. If site verification was done, do you recollect 30 days was given for granting the registration certificate? So whenever this 30 days is going to get over, at least 5 days before that, all these photographs etc. should be uploaded on the common portal as a proof that you have done the site verification. Right? Acha, this is when you, before granting the site verification is done. What if after granting they want to do the site verification? Then again it can be done. Again the same photos, documents etc. should be uploaded on the common portal within 15 days of such verification. And once all of these things are satisfied, like the proper officer is satisfied with all of these things, then he will issue the GST registration certificate, which will be in form GST REG 06. Okay, and on that your place of business will be shown, additional place of business will be shown, name of the business will be there, date of incorporation, all those basic details will be there. And this GST number, this GST IN identification number is a 15-digit number. Out of that, okay, first 2 digits will be your state code, next 10 digits will be your PAN, and last 3 digits will comprise of your entity code and a special character. Right, so this way 15 digits of your GST number will be there, and this GST number you have to paste, you have to show on your name board also outside your office, and plus the GST certificate you have to affix it on the notice board so that it is clearly visible to everyone. Yes, then after that, going to the next very important point where we are talking about effective date of registration. Now, when will the registration become effective? See, whenever you are liable for registration, we studied that you will have to apply. As soon as you become liable for registration, you have to apply for registration within a time period of 30 days. If I apply within a period of 30 days, then I am a good person. Then my registration will be effective from the date I was liable for registration. Means maybe the date when the threshold limit got exceeded, or the day when I became liable for registration, that will be considered as my effective date of registration. Right? Acha, what if I did not apply for registration within these 30 days? I applied it late, means a defaulter kind of a person. Then your registration will be effective from the date of grant of registration. Manageable till here? Yes. Okay, then after that, going to the next concept, which is talking about NRTP and CTP. Okay, very crucial. Now listen, let's first talk about CTP, casual taxable person. Now let's say I am having my place of business in a particular state. Okay, and I am having my place of business in this state, and I am registered in this particular state. But now I want to do some supplies from the other state. Okay, from the other state, and in that other state I am not having a place of business. So in that case, can I say I want to just do a temporary business from that other state? If I want to do a temporary business from such other state, means where I am not having a fixed place of business, then I can get myself registered as a casual taxable person. Are you understanding? And then, ma'am, what do you mean by NRTP? NRTP is a person who is not a citizen of India, who is coming to India and who wants to do some taxable supplies here in India. So, and now he cannot opt for composition levy. That is one big restriction. And another thing is, because he is doing a business here in India, he will be liable for compulsory registration. Do you recollect? We had studied NRTP is liable for compulsory registration. No ifs, no buts, right? And then for CTP will also be liable for compulsory registration, except when CTP is doing interstate supply of handicraft or handmade goods up to 20 lakhs and 10 lakhs, he will not be liable. Otherwise, for all the other goods, etc., CTP will be liable. Are you understanding this? Yes. Okay, then the next point is talking about the registration procedure. So we have already studied something about their registration procedure. Whenever a CTP and NRTP wants to start doing their business, then at least 5 days before commencement of business, they should have got themselves registered under GST, and they will get the registration only if they pay some estimated tax liability to the government. Right? Now, CTP can take the registration on the basis of PAN, but NRTP cannot get the registration on the basis of PAN, because he might not have a PAN, so he can maybe take it on the basis of a valid passport, etc. Are you understanding this? For NRTP, they have specified a different form for registration. For CTP, he can use the GST REG 01 form for the purpose of registration, and whatever certificate is then granted to CTP and NRTP, that will be valid for a period of maximum 90 days. See, either they will write in the application that they want the registration for X number of days, but that X number of days should not exceed 90 days. Okay, and in some cases, if you satisfy to the proper officer that you need some extension, then it can be extended for a further period of maximum 90 days. Are you understanding this? And this CTP and NRTP can start doing the business only after they get the registration certificate. Right? Advance tax deposit they have to do when they are taking the registration, and later if they are getting the registration renewed. Okay, later if they are getting the registration renewed, at that time also they will have to pay some advance tax liability that will be credited to their electronic credit ledger. Are you understanding this? Yes. Okay. Then after that, please try to understand. CTP will be eligible for normal ITC. Okay. But NRTP, we have already studied this in the ITC chapter. NRTP will not be eligible for ITC except on the goods that he has imported. Except on the imported goods, he is not eligible for any ITC. Are you understanding this? Yes. And then they are commonly telling us that if you are registered under one act, let's say I go to the Maharashtra government and I give my GST registration application. That means I am registered under CGST, UTGST, IGST. Everywhere I am registered. You need not take a separate registration for separate acts. Right? Then after that, going on to the persons who are responsible for deducting the TDS or collecting the TCS. So they will also have to get themselves compulsorily registered. Once they apply for registration, they will be granted the registration within a time period of 3 days. Okay, within a time period of 3 days. Now, let's say, please try to understand. See, wherever I am having a physical presence, I will take the registration in that particular state. Now, let's say I want to collect the TCS or I want to deduct the TDS of the person who is there in some other state. Then I will have to mention those other states at the time of taking the registration. Okay, please try to understand here. And later, if this person is no more responsible for deducting the TDS or collecting the TCS, then in that case, he can apply for cancellation of his registration. And last point that is coming up here is about the OIDR services. In case of OIDR services provided from outside India or online money gaming provided from outside India, then in that case, again, a different form for them has been prescribed because these people do not have the PAN, but registration for them is mandatory. Okay, they will have to apply for the compulsory registration. I hope I am clear till here. Yes, second part of the chapter is done till here. Now going on to the last part of your registration, that is amendment of registration, right? Amendment of registration. Here we are going to study section 28, amendment of registration, and then 29 and 30 is going to talk about cancellation of registration, suspension of registration, and revocation of cancellation of registration. Now, what if I have already taken the registration and now I want to do some amendment, I want to do some changes in the registration. So, changes in the registration can be of two types. It can be a core field amendment or it can be a non-core field amendment. Okay, core field amendment means what? Okay, see, non-core means mobile number is changing, email ID is changing, etc. For that, proper officer's approval is not required. You can simply go to the GST common portal, put the new data and the changes will be done. Right, but for core fields like name of the business is changing or the address of the business is changing, obviously within the same state, if state changes, registration has to be cancelled, right? Within the same state, if the address is changing or there is a changes in your stakeholders, like partners are changing, Karta is changing, something like that. So in these changes will be called as your core field changes. If you want to do the core field changes, then there is a procedure for that. Whenever that change has happened, okay, within 15 days, you will have to go and submit an application on the GST portal to the proper officer. Okay, then after that, the proper officer will check whether all the documents etc. is proper or it is not proper. Okay, if it is proper, then in that case, within the next 15 days, that is whenever we submitted the application, from that day, within the next 15 days, it will grant us the amended registration certificate. But if it is of the opinion that no, the documents that you have given are not proper, then in that case, within these 15 days, instead of giving the approval, within these 15 days, it will give us a show cause notice that why we should not reject your application. To that notice, we will have to reply within a time period of next 7 days. And if the reply is by us, either if it is not done or if it is not satisfactory, then forget it, application is gone. But if I have replied within these 7 days, then within the next 7 days, my application will be accepted. My application will be accepted and the changes will be done in the registration certificate. Are you able to understand this? Acha, what if he does not reply here within the 15 days? Or what if he does not reply here within the next 7 days, like the final levels? Then it will be deemed as if the corrections have been already done. Yes. What if my PAN is changing? If my PAN is changing, GST registration is PAN based. If my PAN is changing, go Goa gone, change the registration, cancel the registration. Okay, what if my address is changing outside the state? Go Goa gone again, right? Chalo. Then going on to the last two sections of the chapter, that is section number 29 and section number 30. Section number 29, let's start with that. Now before that, everyone, now if I want to do the cancellation of registration, it can be done in two ways. Either it can be done voluntarily by me. Okay, let's say there is a death of any person, death of proprietor happening, then the legal hire can apply for cancellation. Or let's say there is some demerger or something like that is happening, or there is a discontinuation of business that is happening, or your threshold limit is not going to exceed the limits at all. Your turnover is never going to exceed the threshold limit. In such cases, you can apply for voluntary cancellation, right? And other way around, if you have done some defaults or if you are found in some not proper activities, then in that case, the department can also, after giving you a reasonable opportunity of being heard, it can cancel your registration. Yes, total there are 13 points, right? Total there are 13 points because of which your registration can be cancelled. Now I'll show you, I had made a summary of it. What are the 13 points because of which your registration can be cancelled? So first of all, these 3 points. What are the 3 points? If you had opted for voluntary registration, but 6 months have elapsed and you have not yet commenced the business. Okay, 6 months have elapsed, you have not commenced the business, then the registration can be cancelled by the department. Okay, or if you are a composition taxpayer and for the financial year you have not yet filed the return and 3 months have already elapsed from the due date, means after the due date also for a period of 3 months no return was filed, then your registration can be cancelled. Or if you are a non-composition person, normal regular taxpayer, and you are a monthly filer and you did not file your returns for a continuous period of 6 months, or if you are a quarterly return filer and you did not file your return for 2 tax periods, that is 2 quarters, then in that case your registration can be cancelled. Right? Acha, if they come to know that your registration was obtained by way of fraud, by suppressing the facts or by misstatement, then also your registration can be cancelled. Are you understanding this? Yes. Okay. Then after that, what if say, let's say for example, if you have issued some invoices whereas there is no supply of goods or services happening, means bogus invoices, your registration can be cancelled. Okay, you have availed the ITC by contravening the provisions of section number 16(16). Conditions for availing the ITC, you have contravened that and still you have availed the ITC, your registration can be cancelled. Okay, monthly and quarterly I have already done. Then if you have not furnished your bank details, do you recollect just now also I had told you, if you have not submitted your bank details as per rule number 10A, even within 30 days after the grant or before filing your GSTR 1 or 1A, whichever is early, if you have not done till then it can lead to cancellation of registration. If you have violated rule number 86B, means where you were a big person and you were responsible to pay at least 1% of your output tax liability through your electronic cash ledger, but you did not do that, then your registration can be cancelled. If there are mismatches between your GSTR 1 and GSTR 3B, okay, the turnover shown in your GSTR 1 is more than the turnover shown in your GSTR 3B, then there is a mismatch, boss, your registration can be cancelled. If you have contravened the provisions of section 171, that is anti-profiteering, whenever there is a reduction in GST, now you must have heard about anti-profiteering when GST 2.0 came into picture. At that time, whenever the government is reducing the GST, government is telling the companies, please pass on this benefit to the customers, don't increase your profit margin. If you are doing that, then your registration can be cancelled. Okay, or if you are physically not carrying on any business from your place of business, we happen to do a site verification and there was no business carried on from your place of business, gone, right? Then let's say for example, when your registration is going to be cancelled, okay, and later your registration cancellation is going to be revoked. So can we say for this period after cancellation but before revocation, for this period you are required to file your returns within a time period of 30 days after the date of revocation. Okay, if you have not filed it, then in that case, again your registration will be cancelled. I hope I am very, very clear with this, everyone. Yes, and whenever, okay, so these are the 13 reasons. These are the 13 reasons where your registration can be cancelled. Now, please try to understand, whenever they are going for cancellation of registration, before that, compulsorily, there will be a suspension that will be happening. Means they will temporarily cancel your registration, they will check everything and then only they will pass the final cancellation order. Now, suspension will be with effect from which date? See, when the cancellation is proposed by the department, suspension will be with effect from the date decided by the department. But when we were voluntarily going and applying for cancellation, then suspension will be with effect from the date of application for cancellation or the date from when we are seeking this cancellation. Okay, the date when we made the application for cancellation or the date from when we want to cancel our registration, whichever is later. From that day, your suspension of registration will become valid. I hope I am very, very clear with this. Yes, and now see here, let's say for example, if you have not furnished the bank details. Okay, if you have, where is it? Here, if you have, I am highlighting it here, if you have not furnished the bank details. Okay, if you have not furnished the bank details or whenever there was a difference between your GSTR 1 and GSTR 3B, then in such cases, when the department will inform you about the suspension, it will also give you a time period of 30 days. Okay, it will issue a show cause notice to you to reply within a time period of 30 days to tell you, it will also tell you to explain the differences, why such differences are there, why didn't you submit the bank account details, and it will issue a show cause notice to you that why we should not cancel your registration. Are you understanding this? So here the government is very much interested that why such differences between GSTR 1 and GSTR 3B and why have you not submitted your bank details on the GST common portal. So please reply to that within a time period of 30 days from whenever you are receiving this notice from the GST department. Right? And during this period of suspension, please remember you cannot issue tax invoices. Okay, you cannot collect any GST and you cannot even issue any tax invoices. And during this period, you may not file GSTR 3B. Okay, it is not mandatory, but you are not required to file the GSTR 3B during this period of suspension. If you want to file, you can file. Portal is open, but you may not file your GSTR 3B. That is absolutely okay, and that will not be considered as a contravention for not filing the return. Are you understanding this? Yes. Okay. Now. Please try to understand. Here, the few small points are coming up. Now here they are telling that, now let's say for example, your registration was getting cancelled because you did not file the return. Okay, remember in case of composition person, even for a period of 3 months after the due date, you did not file the return. But now during suspension, you say that, can I file my return? And you have directly uploaded the return on the common portal. Then in that case, your suspension will be removed and your registration will become active. If provided the cancellation order is not passed. Yes, and similarly, if you are a monthly filer and I had not filed it for 6 months, 6 continuous months, then now if I am filing it and paying the dues, etc., then no problem. Your suspension will be removed and the registration will become active, and same for quarterly. Okay, similarly, if my registration was cancelled because of non-furnishing the bank account details, now if I am furnishing the bank account details on the common portal, no problem. My suspension will be removed there. Yes, and yes, please try to understand. Let's say first your registration was suspended. Okay, then there was a revocation of suspension, means the suspension was removed. Then for this period, that is from suspension to revocation of suspension, for this period you will have to issue the revised tax invoices. Please remember that you will have to issue the revised tax invoices. right? Okay, now then going ahead, please try to understand, this is very, very important. Whenever you are applying for voluntary cancellation of registration, you will submit the form online on the GST common portal. Whenever the event happened for cancellation, let's say death, etc., whenever the event happened for cancellation, from that day within 30 days you have to go to the GST common portal and apply for cancellation, and along with that please submit the details of all your inputs which are held in stock, finished goods, semi-finished goods, etc. If there is any output tax payable, if you have paid that amount, etc., please submit all these details while making an application for cancellation. Are you clear with this? Yes, and once the department receives your application, then within the next 30 days, it will have to cancel your registration. Yes, okay, then going ahead to the next point, that is when suo motu cancellation was done by the department. If suo motu cancellation is done by the department, then in that case it cannot directly cancel it. First it will issue us a show cause notice. It will tell us, give us the reasons why we should not cancel your registration, to which we are supposed to reply within a time period of 7 days. Okay, to which we are supposed to reply within a time period of 7 days. If we have replied satisfactorily, then in that case within the next 30 days it can cancel all these things and it will make my registration effective. If my reply is still not good, then it will cancel my registration within the next 30 days. Are you understanding this? Yes, and please try to understand. Please try to understand, if my reply is satisfactory. If my reply is satisfactory, proper officer will drop all these proceedings and it will say, okay, continue the business properly now and do all the compliances properly, right? Now, another thing is, instead of replying to the show cause notice within the next 7 days, in the next 7 days, what I did was I made all the default good. That is, I filed my returns, I paid my taxes, then also the proceedings can be dropped. So basically, before the cancellation order is passed, before that you can still rectify your default, and you can, that is relating to this returns and bank account details, then in that case the cancellation proceedings will be totally dropped. Are you understanding this? Yes, and whatever will be your effective date of cancellation, that will be mentioned by the proper officer in the order that he is going to pass. And even if your registration is cancelled, please make sure you are required to pay the arrears, whatever taxes, interest, penalty, late fee that you still have to pay. Registration cancelled means I am free. It's not like that, right? Okay, now whenever your registration is getting cancelled, what about the stock that you have? What about the ITC in the stock that you have? What about the capital goods or plant and machinery, etc. that you have? What will happen in that case? Okay, so in case of inputs, whatever ITC you have, or whatever ITC you had claimed on your inputs, which is there in the stock now, or whatever ITC you had claimed on the inputs which are contained in the finished goods or semi-finished goods, that much amount of ITC, can we say that much amount of ITC you had already claimed, but now you are not going to do any outward supply. So that amount of ITC or tax payable on such stock, on such goods, output tax payable on such goods, whichever is higher, this much amount you will have to debit to your electronic credit ledger or the electronic cash ledger. Okay, means punishment. And similarly, in case of capital goods or plant and machinery, whatever ITC you have availed, minus 5% per quarter for the period of usage. 5% per quarter. This is the ITC this ITC or the tax payable on capital goods or plant machinery, whichever is higher, this much amount you will have to reverse. Do you recollect the same thing we had done? Similar thing we had done when we were doing our ITC chapter also. Right? And please understand, whatever these things, this reversal, etc. that you have to do, that need not be done at the time of giving an application for cancellation. This can be done when you are going to file your final return. And in that particular return, you can do all these things. Are you understanding this, everyone? Yes, so this was the major procedure for cancellation of registration. Now, ma'am, what about revocation of cancellation? Can my cancellation be revoked also? Yes. So now if the cancellation order has been passed, okay, whenever the cancellation order is passed, after that I will receive that particular order in my hand. Oh, then I will come to know, oh God, my registration has been cancelled. Then in that case, from that day, within a time period of 90 days, I can apply for revocation of cancellation. Means where I am telling to the proper officer, sir, please revoke my cancellation. I want to become active. right? Now, I'll have to go and apply within a time period of 90 days. And in some cases, suppose if I've got some good reasons that I could not file it within 90 days, but I genuinely wish to file it, then in that case, this period can be extended by the commissioner or an authorized officer for a further period of maximum 180 days. Okay, initial was 90 days, your maximum extension of 180 days. You can go and make an application to the proper officer. Sir, please revoke my cancellation and please make it active, right? Then after that, try to understand this. See, this revocation of cancellation is applicable only when the cancellation was done by the department. See, when you voluntarily apply, then there cannot be any revocation. You only told to cancel and now you are only telling to revoke. Nonsense. So only when the department cancelled it, only then you can go within a time period of 90 days from the date when you are receiving this cancellation order. You can either go it on the you can either do it on the common portal or you can go and do it in the facilitation center. Right? Then after that, whenever my application is received by the department, that is by you, then in that case, within 30 days, you will say what to do, what not to do. Okay, if you feel that my grounds are justified, okay, you will do the revocation. If you feel that my grounds are nonsense, then you will reject it. Are you understanding this? Yes. But if you are rejecting it, again you will have to give me a show cause notice within a time period of 7 days. Okay, within a time period, you will have to issue a show cause notice to me, and to which I am supposed to reply, and then finally my application will be disposed of. Are you understanding this? Yes. And what if Acha, before this what if also, I will make the above time periods clear. See, whenever I received the cancellation order, from that day within 90 plus 180 days, I will have to go and inform to the department that I wish to revoke. Right? Then whenever I am going and making an application, from that day, whenever the officer is receiving it, from that day within a time period of 30 days, either it can allow the revocation or it will stay with the cancellation order within 30 days. Okay, that is the time period available with the department. But if department is rejecting, okay, if it is rejecting my revocation application, then it will have to first issue me a show cause notice. Right? And to this show cause notice, I will have to give a reply within a time period of 7 days. Whenever I am receiving the show cause notice, within 7 days, I will have to reply. My reply has reached the department. Whenever my reply reaches the department, final decision will be taken within a time period of 30 days. Are you understanding this? Yes. Okay. Then after that, let's say, my registration was cancelled because of non-filing the returns. Okay, let's say because of non-filing the returns, my registration was cancelled. Okay, now I wish to go for revocation. So they are telling that in this case, if you want to go for revocation, please make sure that you go and file the returns first. Okay, before applying for revocation, please make the default good. That is, whatever returns you want to file, please file those returns, because you can still file the returns for the earlier period. Whenever cancellation happens, you can file the return for the date prior to cancellation. After the date of cancellation, for that period, you cannot file the return because the portal will not allow you to file the return. Right? And in such a case, first rectify the defaults, pay the taxes, then only apply for revocation. Are you understanding this? Yes. And now in this case, please try to understand. They have given a point that, okay, you will have to file a return. Of the previous periods before and make the default good, etc. Now here there was a common issue. Okay, there is a common issue that after the date of cancellation, the portal does not allow you to file the returns for the next period, but for the earlier periods you can still do it. Right? Now just try to understand here, everyone. Now let's say this was the date. Okay, this was the date from which the returns were not furnished, and hence your registration got cancelled. Okay, I'll remove these markings, you will understand then. Yes. Now, let's say for this particular period, this yellow part, you did not file the return and hence your registration was cancelled from with effect from this date only. Okay, not from retrospective, but with effect from this date, your registration was cancelled. Okay, now if you want to go and apply for revocation during this period, then please make sure that you have furnished the return for this earlier period. Right? Can we say before cancellation? For that period, we can still furnish the return. So for this period, please furnish the return. Only then you can apply. Okay. Now listen, the law is very, very clear that for this period, you will have to file the returns before applying for revocation. Okay, before applying for revocation. But when you practically go and check on the common portal, okay, what is the issue there is, they are theoretically telling you that you can file the returns for the early period. But when you go on the GST portal and you check, then they are not allowing you to file the returns. Okay, even for the earlier period, they are not allowing you to file the returns. So they are telling you, okay, sorry. For revocation, then don't file any particular return. For revocation, don't file any particular return. You can apply for revocation. And if we are revoking your cancellation, then from the date of revocation, within a time period of next 30 days, please file all these earlier returns. Are you understanding this? Yes, this is a common issue. This is a problem. This is a problem of the GST portal. Theoretically, they are telling you that for the earlier period, before cancellation period, you can still file the return. But practically, when we see that, are you able to file the return? So, no, you are not at all able to file the returns. Right? And what if the registration has been cancelled with retrospective effect? Now, see, just try to understand. What if it is cancelled from retrospective effect? Let's say, the returns were not furnished from this date till this date. So now here the cancellation was done. Okay, and here when the cancellation was done, it was done with retrospective effect from the earlier date. Okay, so now can I say on this date my cancellation is done, and that too with effect from this date. So can I say my return, my full period return is pending now. Now can I go and apply for revocation? Theoretically, they will say that please file the return, then only apply. But when I go to the portal, anyway, my cancellation has been done. So the portal is not allowing me to file the returns. So now they are telling, okay, if your revocation is accepted, then within the next 30 days, please go and file the return for this entire period. Are you understanding this? Yes. Are you understanding this? See here, everyone, return for this period to be filed before applying for revocation, and return for this period is to be filed within 30 days of order of revocation. Yes, so the conclusion is, whenever your cancellation happened, okay, whatever was your effective date of cancellation, from the date of cancellation till the date of revocation. From the date of cancellation till the date of revocation, for this period, you will have to file your returns within a time period of, because after date of cancellation, you are not allowed to file any returns. So this has to be filed within a time period of 30 days from the date of revocation. Are you understanding this? Yes. Yes. Okay. So these were the pointers. These were your pointers or the provisions relating to revocation, cancellation and all these things. Yes, manageable till here, everyone? Okay, so this was all about our registration chapter. Yes, please do the question answers from this chapter. You get theory questions from your bonus questions. Yes, thank you so much. Okay, so let's start with the revision of our next chapter, that is tax invoice, credit notes and debit notes. Yes, simple chapter, scoring chapter. Generally, the question that we get from here, repeated kind of questions and highly manageable. Okay, so bonus chapter. Okay, three things we are going to do in the chapter mainly, as you can see from the heading. First part is everything is going to be about the tax invoices. Second part is going to be your credit notes and debit notes, and third part is going to be your altogether part, which talks about e-invoicing and dynamic QR code, etc. Right? Now, let's start with the first one, that is tax invoice. Now, when I talk about tax invoice, section number 31 comes to the mind, right? 31 of the CGST Act talks about the tax invoice as to what will be the format of the tax invoice, or what all things are mandatorily required to be recorded in the tax invoice. Then what is the time limit for issuing the invoice, how the invoices are required to be issued, then can we consolidate some invoices, etc. Those things we are going to discuss in this particular part, section number 31, read with rule number 47. First, let's do the time limit within which we are required to issue the tax invoice. So this time limit we have done same in case of our time of supply chapter, if you recollect. Let's quickly revise it still. Okay, so now when your supply pertains to goods, okay, when your supply pertains to goods, at that time, when the supply involves movement of goods, the invoice should be issued before or at the time of removal of goods. When the goods are being removed from the supplier's end, before or at that time, the invoice should be made. Okay, suppose if the supply does not involve movement of goods, if supply does not involve movement of goods, then in that case, invoice is required to be issued before or at the time when the goods are made available to the recipient. Let's say goods are here only, okay, and from here only you are just telling that, okay, from now onwards, recipient, you are the owner. So before you give the delivery to the recipient, or before you give the ownership to the recipient, on or before that time, you have to prepare the invoice. Okay, you have to issue the invoice. Then in case of continuous supply of goods, that is, let's say continuous supply of gas, etc., or any material, any sort of goods, then in that case, either the supplier will be issuing the periodical statement or the recipient will be making the periodical payment. So at the time of on or before that periodical statement or periodical payments, right? And the last one, that is when the goods are sent on approval basis, goods are sent on sale or return basis, approval basis, etc., then in that case, the other person is given a time of maximum 6 months to either accept it or reject it. If he has accepted before, then whenever he has accepted, at that time you will have to make the invoice. If he has not communicated anything till the end of 6 months, then at the end of 6 months, it will be assumed that the other person has accepted it. So we will have to issue the invoice. And if the other person has communicated that he doesn't want the goods, he has rejected the goods, then anyway there is no supply, so there will be no invoice there. I hope I am clear here, everyone. Yes, and similarly, when you are taking the goods outside India, or when you are sending the goods to some other state for exhibition, that is not for selling the goods, but you have just sent the goods, then again the same 6 months criteria is going to apply. Okay, so when you are sending, at that time you will not require the invoice, because at that time the supply is not done. But can we say when you are sending the goods, there should be some document which is evidencing the movement of goods. So for that purpose, delivery challan as well as Eway bill will be used. But invoice is not required at that time. Invoice will be required only when supply is materialized. I hope I am clear till here. Yes. Okay. Similarly, in case of services, when are we required to issue the invoice in case of services? So normally whenever a registered person is providing any taxable services, before the provision of service, means before the completion of service, or maximum within 30 days of provision of service, the invoice should be issued. Suppose if the supplier is an insurance company, banking company, including NBFCs, financial institutions, etc., then in that case, instead of 30 days, we will change it to 45 days. So they are given some extra time to issue the invoice. Okay, suppose if there is any supplies between distinct persons, okay, any supplies between distinct persons in case of insurance, banking, telecom companies, etc., then in that case, invoice should be issued before or at the time of recording the service in the books of accounts. Whenever you are recording the service, or whenever the supply is done from that quarter end, till that time the invoice should be issued compulsory. This was a specific point which was talking about supplies between distinct persons. Okay, and yes, very important point, that is rule number 47A. In case of reverse charge mechanism, if the supplier is registered, okay, then he will issue the invoice as per the first point. But if the supplier is unregistered, okay, supplier is unregistered, but the recipient is registered, then the recipient will have to issue an invoice, right? He will have to issue an invoice. He will only do the payment to the government, and then he will take the ITC of the same. So that recipient will have to make an invoice within a time period of 30 days from the date of receipt of supply. He is receiving the supply from the supplier. So from that day, he will have to issue an invoice within a time period of 30 days. Okay, and here recipient, registered recipient will also include such a person who is registered only for the purpose of TDS also. Okay, that person is registered solely for the purpose of TDS. Still can we say that person is a registered person under GST at least? So even he will be considered as a registered recipient, right? Okay, last 2 points, that is in case of continuous supply of service, Okay, let's say mobile bill, okay, mobiles, telecom services, internet services, etc. Then in such cases, if the due date is known, then on or before the due date, the invoice should be issued. If the due date is not known, then whenever we are going to receive the payment from the recipient, on or before that day, we have to issue the invoice. Or if the payment is linked to some completion of event, that is, if 10% work is done, then 10 lakh rupees is to be paid. If it is linked, then in that case, on or before completion of that milestone event. Okay, so as soon as the 10% gets over, on or before that day, you have to issue the invoice for that 10% portion. I hope I am clear. Yes, and the last one, that is cessation of supply of service. Say for example, if you were getting some service and all of a sudden there is a cessation, there is a stoppage in between, then the day it stops, on that day you will have to issue an invoice for the work done before. Okay, that will be the last day for issuing the invoice. Manageable till here? Yes, this was nothing but the time limit within which we are required to issue the invoice. Now, in what format the tax invoice should be there? So for that there is no specific format, but there are certain mandatory fields which should be present in your tax invoice so as to make it a valid tax invoice as per the GST law. I have provided a summary table in our book for all the different types of documents, so you can just refer it, not to be by hearted. Okay, now what all things are supposed to be compulsorily mentioned in the tax invoice? One specific thing which I want you to know is, suppose if the recipient is an unregistered person, and if the value of supply is more than or equal to 50,000 rupees, then even if he is unregistered, then too his name and address along with the state's name should be present in the invoice, even though he is unregistered. But if the value of supply is less than rupees 50,000, then in that case, whatever details you want to write in the invoice, that is okay, no problem, and the unregistered recipient can still ask you to write your proper details in the invoice, and you will have to comply with the same. Okay, one more point which we had already studied in some of the chapter before was, in case whenever the supply is done through eco, or if there is any supply in the nature of OIDR services or any other online services, then whenever you are providing it to an unregistered recipient, do you recollect? Place of supply chapter we had done. At that time, irrespective of the value of supply, okay, no 50,000, no less than 50, nothing. Irrespective of the value of the supply, you have to mention the name of the recipient, and most importantly, the address of the recipient, which should at least contain the state of the recipient. I hope I am very clear till here, so that we can properly decide the place of supply in such a case. Right, now on the invoice, like HSN is also required to be mentioned. In HSN, how many digits are we required to mention? So suppose if the supplier's aggregate turnover in any of the preceding financial year, if that is less than or equal to 5 crore, then in that case, for B2B supply, compulsorily 4 digits. For other supply, it is optional whether you want to write 4 digits or whatever you want to write. And if your aggregate turnover in any of the preceding financial year was more than rupees 5 crore, then in that case, you, for any sort of supply, now means you are a big person, so for any sort of supply, you will have to write 6 digits of the HSN. Are you clear with this? Yes. Okay. Then after that, invoice is generally issued in 3 copies: original for the recipient, duplicate for the transporter, and triplicate for the supplier. But in case of services, there is no transporter, so original for the recipient, duplicate for the supplier. Manageable till here? Yes. Okay. Now going on to the other special cases. First one, which talks about the revised tax invoices. This we have done in our registration chapter also. Now let's say a particular person was till now an unregistered person, and now his turnover exceeds the threshold limit for registration. So can we say the day the turnover exceeds the threshold limit, on that day he becomes liable for registration? From that day, within a time period of 30 days, he is required to go and apply for the registration. Now let's say within 30 days he goes and apply for the registration. So can I say he will be granted the registration in some days? Now let's say he is granted registration on another date. Now, the day when he is granted the registration, what will be the validity, from which day it will be effective? It will be effective from the day when he was liable for registration, right? That is the day when his threshold limit was crossed. So, its registration will be valid from the day it was liable for registration. So, for this interim period, can we say on papers now this person is a registered person, but from the day he became liable for registration till the date of grant of certificate, he was not having his GST IN. So, he had issued the normal invoices, but now because his registration is valid from the day he was liable for registration, can we say for this interim period, he will have to issue the revised tax invoices? Right? Now, ma'am, interim period means from where to where? Interim period means from the day he was liable for registration till the date of grant of registration, he will have to issue the revised tax invoices. Are you clear with this? And these invoices are required to be issued within a time period of 30 days from the date of grant of registration certificate. So, within 30 days, you have to start preparing the revised tax invoices quickly. Now, can we say during this period we would have done some B2B supplies also, and we would have done some B2C supplies also. For B2B supplies, you will have to issue individual invoices to the recipient. But for B2C, can we say it will become really a task to give individual tax invoices to everyone? So they are telling here that in case of intrastate, okay, in case of intrastate B2C supplies, whatever is the value of supply that you have done, you can prepare consolidated revised invoices, because it is B2C anyway, the recipient is not going to avail the ITC. Right? Now, in case of interstate, if the value, interstate B2C supplies, in that case, if your supply is only up to rupees 2,50,000, then state-wise consolidated revised invoices you can prepare. Okay, if the value is more than, okay, for each supply more than rupees 2,50,000, then in that case recipient wise consolidated invoices you can prepare. Like daily you need not prepare an invoice. Recipient wise you can prepare an invoice if the value is more than rupees 2,50,000. Yes. Now again, what all things should be there in the revised invoice? Again, I have put it in the summary table. Okay, another thing. Now, when is tax invoice not required? So they say that let's say the supplier is a retailer, is a small shopkeeper, etc., and he is providing some goods or services whose value is less than rupees 200. Okay, if the value is less than 200 and if we are supplying it to unregistered person and he doesn't even need the invoice, then in such cases all such invoices can be consolidated and a single invoice can be made at the end of the day. But provided the recipient is unregistered and he does not require an invoice, then in that case you can prepare a consolidated invoice at the end of the day. But multiplexes cannot do this. They will have to issue customer wise invoice. I hope I am very clear with this, everyone. Yes. Okay. Then after that, going to the next one, that is bill of supply. When is bill of supply required? Bill of supply is required to be issued if you are a composition dealer or if you are supplying any exempted goods or services. At that time you will issue the bill of supply, where you will write on the top, in case of composition we had studied that he is a composition taxable person not eligible to collect the tax on supplies, right? And in bill of supply only the value is there is no tax that they can collect. Yes. Now, what if you are doing a taxable supply as well as an exempt supply? Then you need not issue. Let's say you are doing a taxable supply and exempt supply to a same person. Then in that case, you need not issue separate invoices. You can prepare a document called as invoice cum bill of supply, which can be used for taxable supply also plus exempt supply also. Okay, now two more things, that is, one is receipt voucher and the other one is refund voucher. Let's say if you have received advance from any person regarding any supply of goods or services, if you have received any advance money, then you are required to issue the receipt voucher, right? Then you are required to issue the receipt voucher. And now, suppose if that supply could not happen, okay, if that supply could not happen, the deal got cancelled, etc., then you will have to refund back that money. Along with the refunding back that money, you will have to issue the refund voucher. Understanding this? Yes. Okay. Then after that, the next one, that is invoice and payment voucher, very important from RCM point of view. Again, we are going to consolidate all the points relating to RCM and its invoicing, etc. So now whenever, in case of reverse charge mechanism, if the supplier is an unregistered person but the recipient is a registered person, then the recipient will be required to prepare an invoice. Okay, just like we studied, he will be required to prepare and issue an invoice on himself within a time period of 30 days from the date of receipt of supply. Right? And another thing, then he will go and make the payment to the government, and then he will take the ITC of the same. Are you understanding this? So he will be required to prepare an invoice also, plus can we say he will be doing the payment to the supplier? For that he will be issuing a payment voucher to the supplier that so and so amount of payment has been done. Understanding this? Yes. Okay. Then comes the next thing, that is delivery challan. Now generally, when is delivery challan required? Can we say whenever there is a transportation of goods happening? Okay, whenever there is a transportation of goods happening, maybe for a reason of supply or for reasons other than supply. Supply means sale is done. Reasons other than supply, let's say you are sending the goods, not selling, sending the goods. At that time also delivery challan is required. Principal to job worker, delivery challan is required. Right? Or your supply of LPG, where you do not know how much quantity of gas the other person is going to take. So where the quantity is not known, at that time you will simply issue the delivery challan. I hope I am clear till here. Yes, and the details of delivery challan, what all things are required to be written in the delivery challan, that is written here in your notes. That is one time read, you can just refer it. Right? Okay. Now, along with the delivery challan, you are also required to always accompany it with the Eway bill. Okay. So, whatever details are there in the delivery challan, that detail should be specified in the Eway bill. Okay. Now, there are some cases where tax invoice can be issued after delivery of goods. Normally, what did we study? Tax invoice is required to be issued on or before the removal of goods. Now, in some cases, tax invoice can be issued even after delivery of goods. Example, let's say you had initially sent the goods and then later the other person accepted your goods. So later you will be issuing the tax invoice. That is one case. Another case, when the goods are sent in knockdown condition, completely knockdown condition, semi knockdown condition, or the goods are sent in lots or batches, then in that case, initially the supplier will send the goods, he will give the delivery challan, he will give the Eway bill, he will give the copy of the tax invoice. Okay, supplier will first prepare the tax invoice, but he will not send the original copy to the recipient now. He will send the original copy of the invoice to the recipient only when the last installment or last lot of the goods is delivered. If government is smart, na, supplier is required to issue the invoice now, so supplier will be liable to pay the tax on it now, but recipient will be able to take the ITC of the same only after the last lot is delivered. I hope I am clear till here, everyone. Yes. Okay. Then after that, there are some 4 cases. Okay, there are some 4 cases. This 4 is very, very important because again this reference is going to come in e-invoicing as well as dynamic QR code. Okay, now there are 4 people who can issue any document in lieu of tax invoice. That is, in place of tax invoice, they can issue any other document. These 4 people. First one, insurance company, banking company, financial institutions including NBFC, they can issue any other document, and that any other document can be called as an invoice. Example, insurance companies issues that premium receipt. That premium receipt can be considered as a tax invoice. Okay, so they are exempted. Similarly, GTA issues as a receipt about the goods that are going to go into transportation. That receipt containing the required details, that itself will be considered as a tax invoice. Then any person who is supplying us passenger transportation service. Example, Indian Railways. Indian Railways issues us the ticket in which all the details are mentioned. That ticket itself will be considered as the tax invoice. And the last one, movie theaters, multiplexes who display the movies, etc. They give us the ticket, electronic ticket is there, or you can go and take it from the counter, etc. On that ticket, all the details about taxes, etc. is mentioned. So that ticket itself will be considered as the tax invoice. So there are these 4 people who can issue any document instead of the tax invoice. I hope I am very, very clear till here, everyone. Yes. Okay, now going on to the next part of the chapter, that is credit and debit notes. Okay, so in which cases credit and debit notes are required to be issued? First of all, very big confusion that every student faces is, ma'am, who will issue these notes? So in any case, credit note and debit note will always be issued by the supplier, never by the recipient. It will always be issued by the supplier. Now, in which cases what document will be issued? So credit note. So let's say if at all we have wrongly recorded more value of supply in the invoice. Okay, we have recorded more amount. So now we'll have to reverse it. That time issue credit note. Or let's say we have charged higher rate of taxes or higher amount of taxes in the invoice. Or let's say we have charged anything. Let's say we have charged something wrong in the invoice which shouldn't have been charged. Okay, or let's say when there is a case of sales return, or let's say if the recipient is not happy with the quality, so he's bargaining now with you. So in all these cases, credit note, whenever we want to reduce the value, okay, whenever we want to reduce the original value, at that time credit notes are required to be issued. Right, and whenever the credit note is issued, always the supplier's tax liability is reduced, and correspondingly even the recipient is required to reverse the ITC. He would have taken more ITC, right? He would have taken more ITC. So now that ITC is required to be reversed. I hope I am clear till here. Yes, and what is the last date of declaring the credit note in the return? What is the last date for that? So that is 30th November from the end of that year in which the original supply was made. Original supply was made in this year, then whatever is going to be the next 30th November after the year end, that date or the date of filing the annual return, whichever is earlier. This is the last date of declaring the credit note in your return. If not, then the credit note is not valid. It cannot be further declared. Right? Similarly, when will debit note be required? Whenever you want to increase the value of supply. Okay, let's say I have written lesser value in my invoice, or I have charged lesser tax in my invoice, or any similar reasons where I have to increase the value of the supply, then the supplier will be issuing the debit note. Okay, now can we say because of debit note our tax liability will increase? Yes, our tax liability will increase, and correspondingly even the recipient is going to get more amount of ITC. So here they are telling that whenever they want to issue the credit note, they can issue. Okay, government is at benefit only, so there is no time limit. So whenever you want to issue the debit note, you can issue the debit note, and whenever you are issuing the debit note in that tax period's return, you can disclose the debit note. Are you clear with this? Yes. And then in your main book, the summary table is there, summary of the formats, like what all things should be there in which all documents. I have made a full summary, but please don't invest your time here. This is, even if you don't study it, that is absolutely all right. Right? Now going on to the second last concept of the chapter, that is e-invoicing. Now when is e-invoicing? When is e-invoicing mandatory? So first of all, you are a registered supplier and your turnover, your aggregate turnover, single pan, all the offices, if your turnover in any of the preceding financial year from 17-18 year onwards, if it exceeds rupees 5 crore, okay, more than, if it is exceeding rupees 5 crore, then in that case, e-invoicing will be mandatory for you for all the B2B invoices and exports. B2B and exports, not for B2C, only for B2B and invoices and exports. I hope I am very clear with this, everyone. Yes. Now, ma'am, how does this process of e-invoicing happen? So, e-invoice, normal, you will prepare your invoice in your own software. Then the data is sent to the IRP. Okay, the data is sent to the IRP, that is Invoice Registration Portal. Invoice Registration Portal. The data goes to IRP. From IRP, the IRN is generated. IRN stands for Invoice Reference Number, a 64 character hash that is generated. And then IRP, the portal, digitally signs the e-invoice and a QR code is generated. Okay, that QR code is generated, and whenever any officer wants to verify, then he can simply scan that QR code and he will be able to see that e-invoice. I hope I am clear till here. Yes, that QR code is not for payment. This is just for viewing the e-invoice. So very important doubt, ma'am, is e-invoice prepared on GST portal? No, e-invoice is not prepared on GST portal. It is prepared in your own software, right? And then the data is just sent to the GST portal, so that the portal will sign the e-invoice and your QR will be generated. Another very important thing is, once your e-invoice is generated, automatically the data goes to the GSTR1. Okay, the data goes in your return, so there is no duplicacy, there is no manual intervention here. I hope I am clear with this. Yes, and one more thing, one more advanced thing here is, the data goes to the supplier's GSTR1, that is, it will be shown in supplier's sales, and correspondingly it will be shown in the recipient's purchases, and the ITC will also be reflected. So are you understanding how the things are getting linked here? Okay, now who all are exempted from e-invoicing? Which all suppliers? Okay, which all suppliers are exempted from e-invoicing? So 4 people, same 4 people who were issuing any other document other than tax invoice, that banks, etc., then GTA, then passenger transportation service, and then that cinema halls. Those 4 people are exempted, and plus 2 more people. That is, one is SEZ unit, okay, not SEZ developer. Okay, but the units within the SEZ, even if they are big people, no need to issue the e-invoice. And then government department and local authority, even these people, even if these people are big, by big I mean aggregate turnover in any of the preceding year more than rupees 5 crore, still these 4 plus 2 people, still this 4 plus 2 people will be exempted from the requirement of e-invoice. I hope I am very, very clear till here. Yes, okay. Another thing, e-invoice is required only for B2B supplies. It is required only for B2B supplies and exports. See, in exports, even if the customer will be considered as B2C, because he is outside India, he is not registered under GST, still they will be, still for exports, we will have to make e-invoice. That is mandatory. It is contradicting, but it is still mandatory. Okay, and for B2B, anyway, it is mandatory. And in B2B, by B2B, I mean that even if the recipient is a person who is registered only for the purpose of TDS, still he will be considered as a registered person, and if we are issuing an invoice to him, it has to be an e-invoice. Manageable till here? Yes? Okay. Same things are written here, everyone. Yes, now going on to the last concept of the chapter, that is dynamic QR code. Okay, dynamic QR code. Now what do you mean by this dynamic QR code on B2C invoices? See, listen, e-invoice is okay. Okay, that is done. Dynamic QR code is altogether a different concept. Please do not link it. It is totally opposite. So in dynamic QR code, what is the condition here? Now let's say if you are a big supplier, you are a registered supplier, you are a big person. Ma'am, how big? So if your aggregate turnover, again aggregate turnover in any of the preceding financial year from 17-18 onwards, if that exceeds 500 crores, not 5 crores, 500 crores, then in that case, such a registered supplier, whenever he is doing B2C supply, okay, whenever he is doing B2C supply, in that case, he will have to print or he will have to make a QR code. He will have to offer a QR code to the recipient for doing the payment. Okay, and that too he will have to offer a dynamic QR code to the recipient at the time when the recipient does the payment. Imagine now when you go to Chroma, when you go to Lifestyle, when you go to Pantaloons, etc. for shopping, imagine you are at the billing counter and then they tell you that the amount is, let's say, 5,000 rupees. Then you say, okay, I will pay via GPay. Then they will, give you that device, and when you scan on that device, automatically in your GPay, the amount is pre-filled. Okay, such when you scan the QR code and if the amount is pre-filled in that, then such a QR code is called as a dynamic QR code. Okay, sometimes you go to a small shopkeeper, etc., and he gives you the GPay. You have to manually fill the amount. Now, that is static QR code. Here we are not talking about static QR code. We are talking about big people dynamic QR code. Okay, so they have to compulsorily make the dynamic QR code available to the buyer through digital display, so that the other person will be enabled to make the payment online, so that he can make the payment digitally online. So only for B2C supplies, your QR code is mandatory. I hope I am clear with this. Okay, then who need not, like which big supplier is exempted? Which big supplier is exempted from the requirement of dynamic QR code? So 4 plus 1, 4 remains the same. Okay, banks, GTA, passenger transportation service, and multiplexes, and plus one more, that is any person who is supplying OIDAR services. Any person who is supplying OIDAR services. Any person who is supplying OIDR services, even that person need not fulfill this requirement of dynamic QR code. Acha, one more very important thing, whenever I am telling you these people are exempted, means we are talking from the supplier point of view, not from the point of view of the recipient. Manageable till here? Yes. And how is this QR code generated? So the supplier, when he is doing the invoicing, he will be putting his own details, he will be putting the details of the recipient, his name, state, etc. He will be putting his own bank details from in which he wants to receive the payment. All these are embedded in that dynamic QR code for which is available for payment. And also, yes, definitely the bifurcation of taxes and the value of supply, everything is put there, and finally then a dynamic QR code is generated. I hope I am very, very clear with this. Okay, sometimes it can so happen that it is a prepaid supply, that is before the invoice is made. You must have seen now, many times you are first required to do the payment, and once the payment is successful, then the bill is generated from their machine. Then in that case, even if the supplier had made the dynamic QR code available for you, okay, even if it is not printed on the invoice, but he made the dynamic QR code available to you, and a cross reference is written in the invoice that the payment was done via online mode, etc. Then also it will be assumed as if you have fulfilled the requirement of dynamic QR code. Okay, and sometimes it can so happen that first you will ask for invoice and then you will do the payment. Then whenever the supplier is giving you the invoice, on that the dynamic QR code should be printed. Very clear with this? Yes. Acha, sometimes it can so happen that, let's say the shopping is for 5,000 rupees and you have a coupon of 1,000 available with you. So can we say you will be required to do balance payment of 4,000 rupees only? So the dynamic QR code should be generated only for that balance 4,000 rupees. I hope I am clear here. Yes, and one very important thing is dynamic QR code is not required when the payment is going to be received in Forex. See, dynamic QR code, everyone here pay attention. Dynamic QR code is required for all the B2C supplies. And can we say export is also B2C supply because the recipient is unregistered? So in that case, now ma'am, in case of export, can that person scan the QR code here? No, he cannot, because the payment is going to be received in Forex. Okay, so here the invoice may be issued without having a dynamic QR code. It will make no sense in giving the QR code to him. So that is exempted. Understanding this? Yes, so these are some of the cases which talks about dynamic QR code. What you have to remember is who is eligible for dynamic QR code and who are exempted from dynamic QR code. Even if you remember that much, it will be more than enough. I hope I am very, very clear with this. Yes, so hardly in 30 minutes we have completed the revision of this chapter. I hope this was helpful for you everyone. Yes, do let me know if the revision lectures are helping you in some or the other way. Yes. Okay, and yes, once you are done with the revision, then please go and try the question answers. It will be even more helpful for you. Okay, fine. Okay, so let's start with the revision of all the important concepts under this chapter, that is accounts and records and Eway bill. Simple chapter but important. Yes, we get to see some more the other question from this chapter in the exam most of the times. Okay, so now two parts, accounts and records, Eway bill, full concentration. Okay, we'll have a quick overview of all the important concepts. So first of all, accounts and records, two sections, section number 35 and section number 36. Now, purpose of this particular part, why are we required to maintain the accounts and records? So they say that under GST, we do self-assessment. We calculate how much is our sales, we calculate how much is our purchases. On that basis, we determine how much is our outward supply, how much is our ITC, and then whatever is the balance tax payable, we pay the tax. If there is a refund, we carry forward it to the next tax period. So now, whenever the proper officer asks us, or whenever they have a doubt as to what will be the, like, have we paid the tax properly or not, etc., then we'll have to prove ourselves. And we'll be able to prove only when we are maintaining certain records. Right. So now the question here arises under section 35 is, first of all, which books of accounts are we required to maintain, what records are we required to maintain, and where are we supposed to maintain, and who is required to maintain. So can we say every registered person? Okay, every registered person will be maintaining the books of accounts at his principal place of business. Okay, at his principal place of business. Now let's say if this particular person has more than one place of business, then in that case for the main books of accounts will be maintained at the principal place of business. If he has other place of business also, then books relating to that other place will be maintained at that other place of business. Okay, so your normally your books of accounts, normally your books of accounts will be maintained at the principal place of business, and here itself you will be maintaining the additional place of business books. Now, if you have more than one place of business, then that books of accounts will be maintained at the respective places, right? Then we had studied a specific point which was talking about supply of goods through auction, like tea, rubber, coffee. For this, I had told you in the main lectures that generally these are sold through auction. So now the supplier, that is the manufacturer, will send his products, will send his the samples, tea, rubber, coffee, etc. to many of his warehouses at different places in India. He will send the goods. The broker or the auctioneer will come. They will evaluate the quality of the product, and then they will set an auction. So now in this case, there will be many warehouses. Yes, there will be many warehouses, meaning that there will be many places of business. So now they are telling that it won't be practically possible to maintain the books at multiple warehouses. So in this cases, after informing the commissioner, you can maintain the records relating to that warehouse in the principal place of business itself. So this is an exceptional case basically, right? Okay, then what are you required to maintain? The most important thing. So they are telling that normally every registered person, okay, normally basic requirement, every registered person is required to maintain details relating to production of goods, okay, inward supply of goods and services, outward supply of goods and services, details of the stock of goods that is available with him, ITC that he has availed, okay, how much is the output tax payable and how much amount he has paid. So everything relating to stock, everything relating to purchase sales, everything relating to taxes, that is ITC, output tax payable and balance tax payable. These are the details that every registered person is required to maintain. Are you clear with this? Yes. Now, this was given by section number 35. Apart from this, rules have also told every registered person to maintain some extra details. Now, what are those extra details? Now, they will have to maintain the details relating to goods imported, goods exported. Then they will have to maintain the details about those supplies on which tax is payable under reverse charge mechanism. Then they will have to maintain the records of invoice, bill of supply, delivery challan, debit note, credit note, etc. Then how much advances have been received, how much advances have been paid, right? Then after that, from whom you have received the goods or services, to whom you are going to supply, those details are required to be maintained. Then where have you stored your goods, the addresses of that place, all these details, okay, all these details they are required to maintain. And specifically two more things in detailed manner you have to maintain. One is stock of goods, opening stock, purchases, closing stock, goods, outward goods, goods lost, goods destroyed, everything. Okay, that is one thing. And second thing is details of tax, same way. How much was your opening ITC, how much new ITC have you availed, how much ITC you are not eligible for, how much amount of taxes you have paid, all those things. So stock and tax details you have to maintain in detail, but stock and tax details are two such details which composition dealer is not required to maintain. Yes, then going on to the next 6 people. Okay, I had made this summary. Agent, manufacturer, service provider, works contractor, custodian or clearing and forwarding agent, and owner or operator of warehouse. What details are these people required to maintain? Now, agent who is working for the principal, he will have to maintain 5 details. Authorization, the permission from the principal to act on his behalf. Then goods or services received on his behalf, goods or services provided on his behalf, accounts, hisab kitab with the principal, and how much amount of tax he has paid. Okay, these 5 details the agent is required to maintain. The next one is what details the manufacturer is required to maintain. Achha, one more thing. Now, if these people are registered people, anyway they have to maintain the details which we studied already, right? These are the additional details which or special details that they are required to maintain. Now, manufacturer will have to maintain monthly production details. Okay, again, monthly production detail means how much was manufactured, how much raw material was used, how much is your input raw materials, how much is your output, how much is the WIP, how much wastage happened, all those details you have to maintain properly. Okay, similarly, service provider. How much goods did I use in providing you the services? How much input services did I take for providing you the services? And what are the services and how much is the value of services that I have provided it to you. These details a service provider is required to maintain. Okay, similarly, for a works contractor, a person who is executing works contract. Now, he will have to maintain the details, the name and address of the person for whom I am executing the works contract, my boss, kind of. Okay, or my customer for whom I am doing this works contract, their name and address. Then how much goods and services have I received? How much goods and services have I utilized? How much payments I have received for doing this works contract? And name and address of such person from whom I have received goods or service. Understanding? Very, very specific details. Then custodian or clearing and forwarding agent. Let's say the custodian is the transporter or any person who is having the custody over your goods, or clearing and forwarding agent, generally he is there in case of customs, na? So he will have to, he will be maintaining the details about the goods handled by him. Whatever goods he is handling, whatever goods is there under his custody, he will have to maintain the details about the same, right? And the last one, that is transporter or owner and operator of a warehouse. Now, transporter's work will be to take the goods from the consignor, yes, and then supply the transport the goods to the consignee. So these two people will have to maintain some common details, that is consignor details, consignee details, and details of goods that is going to be transported or that is there under their control. They will have to maintain the details about the same. Now, specifically for transporter, how much goods have you received for delivery? Okay, how much goods have you already delivered and how many goods are still in transit? You will have to maintain these details, right? Similarly, owner or operator of a warehouse, how much goods have you received? How much dispatches you have done? How much goods is still kept in your warehouse? And if you are keeping the goods in the warehouse, you would be keeping goods of many people. So you have to properly place the goods owner wise, and within owner wise also you have to prepare it. You have to maintain it item wise, so that whenever the proper officer wants to do the inspection, he will be able to do it. Right? These were the points which we have already studied. I hope I am very, very clear till here, everyone. Yes. Okay, then after that comes the next part. What is the next part? Now, how are we supposed to maintain the accounts? This is very, very simple. You can maintain it manually by a signature, authenticating by a signature, or you can maintain it in the electronic form, authenticated by the digital signature. But if you are maintaining it electronically, make sure you have proper backups. Backup is such that you are able to restore the data whenever required. Yes, then after that, whatever password etc. is there, you have a proper secure system, and whenever the proper officer wants to access it, you are able to give the passwords also. Whenever he is asking you the printout from the data, you are able to retrieve the data from that electronic format also. Right? And if at all there is any correction, now when you are maintaining any data, whenever you are maintaining any data, maybe manually or maybe electronically, then you will have to maintain a trial log of the same. That is, if you have done some correction, then in that case, what was the original thing that was written? What did you delete? What did you re-enter? All those logs are normally available in the software, so that you will have to maintain. Are you understanding this? Yes. Okay. And what if we if we fail to maintain? Then till financial year 24-25, we had section 73 and 74. Now onwards, we will be punishable under section number 74A. Am I clear with this, everyone? Yes. And then comes the last section, that is section number 36, which talks about period of retention of accounts. For how much time should we be retaining it? So this should be retained for a time period of 72 months from the due date of furnishing the return of that year. Now, when we are talking about financial year 25-26, then whatever for this year's records, it should be maintained for how much time? So, whatever is this year's due date for filing the annual return, 72 months from there, that is the time period till when you will have to maintain the records for the financial year 25-26. Okay, and suppose if for this year, the registered person is going under some appeal, he's fighting, or some investigation is going on, or the court case is going on under GST, then in that case, whenever that gets disposed of, from that day for a period of 1 year, you will have to maintain it. Okay, so 72 months from the due date of filing the annual return for that year, or 1 year after the disposal of the case, whichever is later, means you will have to maintain it for a longer period of time. I hope I am clear till here, everyone. Yes, that was your section number 36. Section number 36 is important. Please remember. Manageable, everyone? Yes. Okay. Okay, so let's go ahead to the next part of the revision, that is about Eway bill. Everyone with me? Yes, section number 68 read with the rules. Yes, now Eway bill. What do you mean by Eway bill? Everyone, now we had too much of theory. Let's try to consolidate in a very simple manner so that everything is also covered and in a quicker manner. So now in case of Eway bill, Eway bill is such a document which evidences movement of goods. That is, whenever movement of goods is happening from one place to another, GST law says that Eway bill is compulsory. Okay, subject to some terms and condition, that is a different thing, but Eway bill is compulsory. That is basically an evidence that whatever you are transporting from one place to another, that is not illegal, that is, it is legal, and proper tax procedures etc. have been followed. Okay, now what is the format for this Eway bill? It is GST EWB 01 on the portal Eway bill gst.gov.in. On this particular portal, Eway bill can be generated. Okay, so now whenever there is going to be a movement of goods from the supplier to the recipient through a transporter, okay, or I can simply say whenever there is a transportation of goods, even if it is done through a transporter or on my own account, Eway bill is required. So can I say the supplier, if the supplier is a registered person, okay, if the supplier is a registered person and if he is arranging for the transport, then supplier will be required to generate the Eway bill. Okay, if supplier is unregistered but the recipient is a registered person and he is arranging for the transport, then recipient will be required to generate the Eway bill, and in some cases we can tell the transporter itself to generate the entire Eway bill. Right, now you must be remembering that in Eway bill there are two parts, part A and part B. Part A contains all the details relating to recipient and the supplier and the recipient, as if who is the supplier, what goods are getting transported, what is the value of the goods, what is the rate of GST on that, how much is the tax payable, to whom the goods are going, who is the recipient, address along with the pin code, etc. Okay, all these basic important details relating to supply, this will be mentioned in part A of the Eway bill, which will be filled either by the supplier or by the recipient, right? And second part of the Eway bill is part B. Part B contains the transporter's detail. Okay, so generally part B is required to be filled by the transporter only. Transporter will fill the part B. It will contain his vehicle number. It will contain the other details of the transporter. Are you clear with this? Yes. Okay. Now, ma'am, when is Eway bill required? So, whenever there is a movement of goods for supply of goods. Okay, maybe it is a sale of goods or for reasons other than supply. Reasons other than supply means I am simply sending some goods. Then also Eway bill is required. Principal is sending it to the job worker. Then also Eway bill is required. So, for the reasons of supply, for the reasons other than supply, or when I am receiving some goods, from an unregistered supplier, means I am the recipient. Can I say I will have to pay the tax under this on RCM? Then in that case also, then I will be the person responsible for the Eway bill. So, when the goods are sent for supply, when the goods are sent for reasons other than supply, or whenever we are sending it whenever it is being sent by an unregistered supplier to a registered recipient. In all the cases, e-way bill is required if the consignment value exceeds rupees 50,000. Okay, now ma'am, what do you mean by this consignment value? Consignment value is nothing but the value determined under section 15, valuation. Value determined under section 15 along with the taxes and cess, including GST. Okay, along with GST and cess, but this will exclude the value of exempt supply. If exempt supply is mentioned separately, then that value will be excluded here. So whatever valuation we did as per section number 15, whatever adjustments we did, all those will be included, and that value plus GST, that will be considered as the consignment value. Okay, I hope I am very, very clear with this. Yes, so if all these conditions are fulfilled, then in that case, e-way bill requirement is mandatory. Okay, now for this 50,000, there is an exception. Okay, there are two exceptions. Now, if there is interstate, this exemptions, two exemptions which are there, those are there only for interstate transactions. If there is a principal sending some goods to the job worker, principal sending the goods to the job worker, and if the value, or forget about the value also, principal sending the goods to the job worker, interstate, okay, irrespective of the value, e-way bill is mandatory because it is interstate. Okay, had it been intrastate, then we'll check the limit of 50,000. Okay, and second one, whenever there is a transfer of handicraft goods done by such people who are not required to get themselves registered, and if there is interstate transfer happening, then e-way bill will be mandatory irrespective of the value. Okay, unregistered person is transferring handicraft goods. Okay, unregistered, why? Because they were not liable for compulsory registration. If this interstate thing is happening, then irrespective of the value, e-way bill will be required. Okay, see, e-way bill is required, that does not make it taxable. It is just an evidence showing movement of goods. I hope I am clear till here, everyone. Yes. Then one more special point about bill to ship to model. Do you recollect? A was selling the goods to B, B was selling the goods to C. A to B, B to C, and then movement of goods was happening from A to C. Then here they are telling, since movement is happening only once, then in that case, any of the one supplier can generate the e-way bill. I hope I am clear with this, everyone. Yes? Okay. Now listen, can we say any person who is making the e-way bill, or who is generating the e-way bill should be a registered person? Okay, then only he will be having his GSTIN, and only then he will be able to generate the e-way bill. I hope I am clear with this. Yes. Now let's say if the supplier or recipient, if any one of them is registered, they can generate the e-way bill. Once they have generated the part A of the e-way bill, they will give it to the transporter to complete it basically. Now, can there be a possibility that transporter is unregistered? Possibility. Yes. So now in that case, how will he complete the part B then? Then for that he will have to apply for a transit number or transporter ID. Okay, then he can use this transit or transporter ID and he can complete the part B. Okay, can there be a possibility that the transporter is registered in only one state? Okay, then he can use his one GSTIN and he can fill the part B. Can there be a possibility that a transporter is registered in multiple states? Yes, then in that case, can I say he will be having multiple GSTIN? So in that case, he will have to first apply for a common enrollment number, unique common enrollment number using any one of the GSTIN, and then using this enrollment number, he can complete the part B. Okay, so transporter, even if he is unregistered, apply for transit. If he is registered in one state, no problem. If he is registered in multiple states, then first apply for unique common enrollment number. Use that number to fill the part B of the e-way bill. I hope I am very clear till here, everyone. Yes? Okay. What information will go in e-way bill that we have already discussed? Part A, details of consignor, details of consignee, details of goods. Part B is going to be all the transporter details. Are you clear with this? Yes, sometimes it can so happen that part A as well as part B both are filled by the transporter only. Okay, example, when the goods are supplied through Amazon. Okay, when the goods are supplied through Amazon and Amazon is only doing the shipping. Amazon has stored the goods in the warehouse and it is only doing the shipping. then in that case, what will happen? Then in that case, the supplier can tell the Amazon to do all the e-way bill formalities. I hope I'm clear till here, everyone. Yes, and please try to understand. First part A will be filled. Okay, first part A will be filled by supplier or the recipient. Then there will be a temporary acknowledgement number that will be generated. That will be shared with the transporter. Transporter will then complete the part B. Okay, once the transporter completes the part B, only then the e-way bill can be generated. Yes, now there are some cases when there are some people who are mandatorily required to generate the e-way bill. Okay, now let's say I am the supplier, you are the recipient. I am sending the goods to you through my own conveyance. Means there is no transporter involved, or I have hired some vehicle and in that I am sending it to you. There is no transporter involved, right? Or let's say I am sending it to you by a public conveyance. I am putting it in a bus or something like that. Then in that case also e-way bill is mandatory. Okay, you cannot have the excuse that transporter is not there, so we will not prepare the e-way bill. No. Okay. Then secondly, let's say if the goods are handed over to the transporter for transportation and the supplier or the recipient has not filled part A, then also e-way bill is required. So ma'am, who will fill? Transporter will have to fill both the parts, part A also as well as part B also. Yes, and in case of when the goods are transported by railways, air or vessel, when the goods are transported by railways, air or vessel, then in that case e-way bill part B have to be filled by the supplier or the recipient only. Okay, railways, airline companies and vessel shipping companies, etc., they will not prepare the part B for you. Okay, so for that you will have to do, you cannot have the excuse that they are not preparing, so e-way bill is not required. I hope I am very clear with this. Yes, okay. Then after that, a few other points now. What are the other points? Now, first of all, see, whenever there is a transportation happening, the transporter will always have to carry invoice copy also, and he will have to carry the e-way bill also with him. But when the transportation is happening through railways will carry the invoice, but they will never carry the e-way bill. Okay, they are not required to carry the e-way bill, but once the train reaches the destination and the recipient comes to collect the goods, at that time he will have to show the e-way bill, only then the railway will give you the goods. Okay, that is one point. Second point, if your consignment value is less than rupees 50,000, then you have the option to still generate the e-way bill. See, it is required only when the consignment value exceeds 50,000, but optional you can generate it even below that. Yes, and then after that, we discussed something about this unique enrollment number. Right? What did we discuss about this unique enrollment number? Now, do you recollect that handicraft point that we studied? Handicraft point. In that case, the supplier was not registered because he was not liable for compulsory registration. Now, in this case, e-way bill was mandatory. If e-way bill is mandatory, he is not having GST-IN, then he can apply for the unique enrollment number and then he will have to generate the e-way bill. Okay, similarly, so let's say if there is an unregistered person and he says that I want to generate the e-way bill, again he can apply for the unique enrollment number and he can generate the e-way bill. See, government wants data. So they are giving you the way out. Okay, no problem. If you don't have GST, use enrollment number to generate the e-way bill. I hope I am very clear with this, everyone. Yes, okay. Then one last exemption here. The last exemption here is there is one such case where part B is not mandatory. Okay, one such case where part B is not mandatory, that is if there is a movement of goods happening by road, and that too within the same state or union territory, and if the distance is up to 50 kilometers, from where to where? Distance from the consignor's place to the transporter's place, or the distance between transporter's place to the recipient's place. If this distance, if any one of the distance, okay, if it is less than or equal to 50 kilometers, then in that case, part B is not mandatory. Part A mandatory. Part B, transporter's detail, is not mandatory. I hope I am very clear with this. Yes, okay. Now, sometimes there can be a possibility that the transportation requires multiple modes. like first by road, then by railways, then by ship or something like that. Okay, then in that case, can we say, can there be a possibility that transporter is same but the modes are different? So can we say every time the vehicle details will keep on changing? If vehicle details will keep on changing, then it is a responsibility of the transporter to keep on updating the details in part B, and you can amend it whatever number of times you wish to change it. Okay, but before the further movement in goods start, before that the updation should be done. Are you clear with this? Acha, one more possibility is, can there be a change in transporter also? Can there be a change in transporter also? So can we say we'll have to, the old transporter will have to assign the e-way bill to the new transporter, and once the e-way bill is assigned to the new transporter, then the new transporter will have to put the details in that. Okay, new transporter will have to put his new details in that. I hope I am clear. Yes. Okay. Now let's say in a single vehicle, a transporter is carrying multiple consignments of multiple people. Possible? Can we say whatever number of invoices he is carrying, against every invoice, against every eligible invoice, e-way bill should be there? Yes. So can I say he will be having multiple e-way bills also with him? So what he can do is, the transporter can go to this e-way bill portal and he can generate a consolidated e-way bill. Okay, for his reference, he can generate a consolidated e-way bill which comes in GST EWB 02. Okay, now this is optional, this is not mandatory, and this does not have any big relevance. So, but they have just given a provision that if you want to generate a consolidated one, you can generate a consolidated one. Yes, and yes, one more thing. Whatever data the supplier or the recipient is putting for e-way bill, that will straight away go to the GSTR1, that will straight away go to the GST returns. Okay, similarly, suppose if e-invoicing is applicable to the supplier, then first you will generate the e-invoice, you will generate that IRN, from there the detail will come to the e-way bill, from e-way bill the data will go to the GST returns. Okay, auto population of data, this is what they are trying to do. Yes. Okay. Now, once part A is generated by the supplier or the recipient, then we'll have to give that temporary number to the transporter so that he can fill the part B. Okay. So part A will have a validity of 15 days. That is, within 15 days, transporter will have to fill the data. Okay. Otherwise, again start from the scratch. Right? And suppose if you realize that there is some mistakes in the e-way bill, can it be edited? Can it be rectified? No, you will have to cancel the e-way bill. Okay, now it can be cancelled within 24 hours of generation. But if any officer has verified your e-way bill, then in that case cancellation is not possible at all. Yes, once the e-way bill is generated, finally once the e-way bill is generated, then in that case e-way bill has a validity. Within that validity, the movement of goods should get over. Otherwise, questionable. So within a particular time period, your e-way bill will get expired. Until that time, your movement of goods should get completed. Now, ma'am, what is the validity? If the transporter is using a heavy over-dimensional cargo or multimodal cargo where one of the mode is going to be by ship, then in that case what will happen? Then in such a case, for every 20 kilometers or part thereof, you will be given 1 day. Okay, if you are not using ODC, then in that case for every 200 kilometers you will be given 1 day. Are you clear till here? Yes, so whenever the e-way bill is generated, from there 1 day, one or whatever number of days will be the validity, that much you will get. And most important thing here is the validity. Validity will start from a relevant date. Now, ma'am, what do you mean by relevant date? We have taken examples on this in our main lectures, in our full course lectures, that suppose if the e-way bill is generated at 6 p.m. in the evening, then in that case, and if the e-way bill was generated at 6 p.m. and let's say if the validity comes to 1 day only, then in that case, let's say it was generated on 10th November at 6 p.m. Okay, then the validity will not get expired on 11 November 6 p.m. It will go till the midnight. That is midnight of 11th November and 12th November. So because of this midnight provisions, you get some extra time, right? This is what we had already studied. Now, can we get some extension if e-way bill expires? Yes. Now there are two types of extension. One is which is done by the commissioner. If the commissioner thinks that it is required, he will extend it for some category of people or for some category of goods or services. Or otherwise, if suppose there is any natural calamity or there is some war-like situation due to due to some law and order, or if there is some accident, or if there is some destruction of the vehicle, etc., then in that case the transporter can extend the validity. He can just record the reasons on the portal and he can extend the validity within 8 hours of the expiry. Once it has expired, within 8 hours he will have to extend it. Yes. Acha. Now another thing, very important thing. Part A was filled by supplier and the recipient. Then they gave the temporary number to whom? To the transporter. Transporter filled the part B. Once he completes the part B, then it again goes to the supplier or the recipient to accept it, final acceptance. Okay, so they will have to accept it within 72 hours from the time when it was made available to the supplier or recipient, either 72 hours or before the delivery of goods, whichever is earlier. Within this much time, they should either accept it or reject it. If they are not taking any action within this much time, and in that case, it will be assumed as if you have accepted the e-way bill. And yes, once the e-way bill is generated, it is applicable throughout the country. Okay, it is applicable throughout the country. I hope I am clear till here, everyone. Yes, okay. Always remember, multiple invoices, multiple e-way bill. Okay, let's say if I am sending goods to the same person, but I have issued 2 invoices, then in that case 2 e-way bills are required. Please don't do this mistake. Okay, then we had studied some situation where e-way bill is not required. We had studied some type of goods, etc. So your LPG was there, kerosene oil was there, then your jewelry was there, except imitation jewelry, coral was there, currency is there, used household items, used personal effects, etc. For these, e-way bill is not required. Similarly, when it is getting transported in a non-motor conveyance, that is example cycle, bicycle, etc., which is non-motor, then when the goods are transported from customs port to its warehouse or from its warehouse to the custom port, or when the goods are going in transit cargo through India to Nepal or Bhutan, or from Nepal or Bhutan, again no e-way bill is required. Then for alcohol and those 5 petroleum products, no e-way bill is required. For schedule 3, no supply, no e-way bill is required. Whenever any goods are exempted from GST, on that also no e-way bill is required, except de-oiled cake. Do you recollect that? Yes, for canteen stores, whenever there is any supply of goods by canteen stores which is exempted by way of a notification, or whenever there is any supply of heavy water or nuclear fuels which is exempted under GST, again on that there will be no e-way bill requirement. Whenever there is a movement of defense items, no e-way bill required. Whenever the consigner is government or local authority and they are sending it through railways, no e-way bill will be required. Whenever empty containers are being transported, no e-way bill is required. If any state government comes up with a rule that in our state, if you are doing the transportation up to this so and so value, no e-way bill, then state rules will prevail. Okay, and similarly, if suppose the consigner is taking the goods to the weighment bridge for weighing the goods, or from weighment bridge again to the consigner, then in that case, if the distance traveled is up to 20 kilometers, then again no e-way bill will be required. Transportation of empty cylinders, again back to the source, no e-way bill will be required. So these were some cases where e-way bill is not required at all. Manageable till here? Yes. Acha, now whoever is whoever is a transporter, whoever is the person in charge of that conveyance, whenever he is transporting the goods from one place to another, he will have to carry that invoice copy or bill of supply copy or delivery challan along with him, and along with that he will have to take the e-way bill also. Okay, e-way bill, there are 3 methods. Either he can take it, the physical copy of it, or he can take the e-way bill number, even that is sufficient, or he can map it, that just like your FASTag, he can just stick it on the conveyance. Sticking on the conveyance is not applicable for railways, airways and ship. sticking on the sticking that RFID on the conveyance is not applicable for those. So for those people, they will have to, like, railways will anyway not carry your e-way bill. So for airline company and shipping company, they will either carry the e-way bill hard copy or the e-way bill number, right? Okay, this IRN point we have already discussed. If e-invoice is applicable, then first the data comes from IRN to the e-way bill portal. From e-way bill portal, it goes for your GSTR1 return. Yes, and if you are not carrying e-way bill, that does not mean you don't have to carry anything. Okay, then in that case you will have to carry. If e-way bill is not applicable to you, then in that case still you have to carry the invoice, bill of supply, or the delivery challan. Yes. Now, when the goods are getting transported, then in that case, can any proper officer stop you and do the inspection? Very much. Okay, they can intercept any conveyance to verify the e-way bill as well as the goods. So they can have the RFID readers, just like toll plaza, that automatically the money gets debited. Similar kind of a concept. So RFID readers, through RFID readers, they can check your e-way bill. And if they have any doubt, then in that case, they can start the inspection also. Okay, if they are stopping your vehicle for more than 30 minutes, then the transporter has to inform it on the portal, because for more than 30 minutes, then can we say your validity is getting over, validity of e-way bill will be getting over. Right? And another thing is, whenever they are stopping for doing any inspection, then the proper officer will have to prepare a summary report and submit it within 24 hours of the intervention, and then within 3 days of such inspection, he will have to submit a final report on the portal. Okay, and again, whenever this 24 hours and 3 days is going to get over, we'll have to take it till the midnight. Okay, we'll have to take it till the midnight. I hope I'm very, very clear. And once the physical inspection has been done, if physical verification of your vehicle is done, then again no other officer in that state or in other state, they can stop you. Are you clear with this? And yes, whenever the documents are not matching, okay, whenever the documents are not matching with the goods, etc., then only those where there is a mismatch, only those can be verified, only those can be physically inspected, not the ones which are matching. Okay, so only the problem area can be checked, not the entire consignment. I hope I am very, very clear with this. Yes, and 30 minutes point I have already told you, transporter will upload this data online. And now, if there are some defaulting suppliers, please be very careful with this. If there are some defaulting suppliers, then they will be blocked from generating the e-way bill. Ma'am, what do you mean by defaulting suppliers? Now, if they are registered under composition scheme and they have not filed GST CMP 08 for 2 consecutive quarters, self-assessed tax payment not done for a period of 2 quarters, then they are defaulting. If you are registered under regular scheme but you haven't filed your, if you haven't paid your taxes for 2 tax periods, that is either 2 months or 2 quarters, okay, or if you are again registered under regular scheme but you haven't filed your GSTR1 return for 2 tax periods, or if your registration has been suspended. If any one of the pointer is met, then in that case, you will be considered as a defaulting supplier and you cannot generate the e-way bill. Okay, you as a supplier cannot generate the e-way bill, but your recipient or the transporter can still continue to do the same, and you can, in some cases, you can get some relief from the commissioner. I hope I am clear till here, everyone. Yes, and then last circular that we had done there was, what was the last circular? That whenever the recipient is using transporters go down for transporters warehouse for storing the goods, then his warehouse should be shown as your additional place of business. So when the goods comes from supplier to the transporter, for that time one e-way bill will be required, and later when it is coming from his warehouse to our place, at that time another e-way bill will be required. I hope I am very, very clear till here, everyone. Yes, hardly in 35-40 minutes we are able to revise the entire chapter. Manageable? Yes. Okay, then let's start with the revision of the next chapter, that is payment of tax. Everyone ready? Okay, because we have taken TDS and TCS separately, so mainly we are going to do 3 sections in the chapter: section number 49, section number 50 and section number 53, right? Section number 49 basically talks about the payment of tax, how payment of tax, interest, penalty, late fee, other fees is going to happen under GST. So for this purpose, mainly we have got 3 ledgers. First one is your electronic cash ledger, second one is electronic credit ledger, third one is electronic liability register. Okay, let's go one by one. First of all, about electronic cash ledger. Okay, whenever electronic cash ledger is just like my wallet. Okay, it is just like my wallet. This is such a ledger which is maintained on the GST portal. Whenever I have to pay any taxes, okay, whenever I have to pay any taxes from my pocket, then in that case I can deposit the amount in this electronic cash ledger, and then the amount which is deposited in the electronic cash ledger can be used for making the payment of taxes, interest, penalties, etc. Okay, I am talking about electronic cash ledger. So first I will remove the money from my bank account and then it gets deposited in the electronic cash ledger. I can pay by a single challan. Okay, my IGST, CGST, SGST, tax, penalty, interest, etc. All the major heads and all the minor heads, all those payments I can do in one go, and whenever I do the payment, it gets credited in the electronic cash ledger. Okay, it gets credited in the electronic cash ledger. Now, whenever I am supposed to dispose of or discharge my liability, see, one is I have accumulated all the amount in the electronic cash ledger, but I haven't paid it against my liability. So now when I am going to pay it against my liability, then it is going to be debited. The electronic cash ledger is going to be debited, right? So when I am depositing from my bank account to cash ledger, the cash ledger will be credited. Then I am using that money to pay off my liabilities. At that time, it is going to be debited. Now, ma'am, how do we deposit the amount in electronic cash ledger? So you can do it by online mode, by net banking, by UPI, by your IMPS, by credit card, by debit card from your bank. You can use those methods and you can put the amount in the electronic cash ledger, or alternatively you can do it by going to the bank also, by giving a NEFT or RTGS, or by doing the over the counter payment. But for over the counter payment, there is a restriction of rupees 10,000 per challan per tax period, right? And in some cases where the recovery of taxes is involved, or where the government has told that okay, we are allowing over the counter payment, or when the deposit is to be done by the government department, in such cases the 10,000 limit is not applicable, right? Now, whenever you are depositing the amount in the electronic cash ledger, you will have to use a challan. Okay, you will have to use PMT 06, GST PMT 06 challan, in which you will be filling all your figures. Okay, that is your how much amount of taxes to be paid, how much amount of interest is to be paid, how much penalties to be paid, and that too for different heads, for IGST, CGST, SGST, so on and so forth. Okay, once you generate this challan, then CPIN, okay, CPIN, that is common portal identification number, is generated, which is 14 digit, and once this CPIN is generated, means your challan will be valid for a period of 15 days. That is, after generating it, you can pay the amount within a time period of 15 days. Once the amount is paid, then the SIN and the BRN is generated. Okay, SIN and the SIN is challan identification number, BRN is bank reference number. This is generated, which is used as reference, right? Acha, now under GST, because everything is online now, manual and physical challans are gone, gone. Now only electronic challans are there, and by going to the GST portal only you can do the payment of this. I hope I am very clear with this. Yes, acha, sometimes it so happens that there is some technical issues, etc., and maybe the amount got debited from your bank account, but it is not showing in your electronic cash ledger. Then you can raise the grievance. Okay, you can raise the complaint on the GST website with the proper officer in form number GST PMT 07. Okay, 07 you can use to raise the issue. I hope I am very clear with this. Yes. And one very important thing, please remember here, is when we are talking about electronic cash ledger, that is my money. Okay, that is my wallet. That is, I have just transferred the money from my bank account to this electronic cash ledger. So electronic cash ledger can be used for payment of taxes also. It can be used for payment of interest also, penalty also, late fee also, other charges also. Okay, that can be used. It's not that it can be used only for taxes. No, electronic cash ledger is my ledger. You can remember it that way, right? Okay, now let's say while depositing the money in your electronic cash ledger, there was some mistake. Okay, some erroneous thing happened. Let's say instead of putting the figure in the column of CGST, you put the amount in the column of SGST or IGST, or instead of putting it in the tax column, you put it in the penalty column. Anything, something haphazard has happened. Then in that case, then in that case they are telling that no problem, your money is already with the government, so you can change the head. Okay, you can transfer the amount from one head to another head. You can rectify your mistake now by using form number GST PMT 09. Okay, you can do that. That is one case. And another thing is, if you have any amount available in your electronic cash ledger, then you can even transfer that amount to your distinct person. You can even transfer your amount to the distinct person, provided there is no outstanding liability at your end. If there is outstanding liability at your end, then they will tell you first pay that. Okay, if you do not have any outstanding liability, then you can discharge, then you can transfer that amount even to your distinct person. No issues in that. I hope I am very clear with this. Otherwise, there is no restriction. You can transfer from one head to another head. There is no problem at all. Yes, which form did we use? We used form number GST PMT 09. Right? This was all about your electronic cash ledger. And yes, this transfers etc. can also happen only in cash ledger. Huh? It cannot happen in the electronic credit ledger. You cannot transfer ITC, input tax credit of CGST to input tax credit of IGST. No, that is not allowed. Whatever transfers etc., whatever we have discussed till here, that is going to happen only in case of electronic cash ledger. Right? Then going on to the next one, that is electronic credit ledger. In case of electronic credit ledger, okay, electronic credit ledger is nothing but a statement where all your ITCs are reflected, all your input tax credit is reflected. Yes, so whenever ITC we can avail, once our transaction is done, we can avail the ITC. If you are availing the ITC, as soon as you avail the ITC, it is credited to your electronic credit ledger. Then when you use the ITC, it is debited to the electronic credit ledger. Okay, so when we are getting it, it will be credited. When we are using it, it will be debited. And yes, please remember, whatever figures you have got in electronic credit ledger, that pertains only to the tax amount. That cannot pertain to tax plus interest plus penalty. No, input tax credit we get only of the taxes paid, right? Yes, and another thing is, this ITC, this also you can use it only for payment of taxes. ITC you cannot use it for payment of interest etc. ITC is only of the tax portion, so you can use it also only for payment of the tax portion. Are you clear with this? Acha, in what sequence the ITC should be utilized etc. we have already studied in the first chapter. Rule number 86A and rule number 86B we have already done in the ITC chapter. You can just check it out from there. I am not repeating it again here. I hope I am clear till here, everyone. Yes. Acha. Now let's say for example, if you have claimed some refund. Okay, this is a common point for credit ledger and cash ledger. Okay, if you have taken some refund, if you have claimed some refund from cash ledger, let's say there is some unutilized amount kept in the cash ledger, and if you want to take a refund of the same, then in such a case, can we say you will have to debit the electronic cash ledger? Yes, you will have to debit the electronic cash ledger. And suppose if the refund application is rejected, then if you had already debited, then now you will have to recredit that amount. You will have to nullify the entry, na? Yes. Similarly, in case of electronic credit ledger, suppose if there is some ITC there and you have filed the refund application, then in that case, first you will have to debit the electronic credit ledger. And later, after debiting, if your application has been rejected, then you will have to recredit that amount. Are you clear with this? Yes, mathematically, accounting wise, logical. Okay, done. And now the last register. Last register is about the electronic liability register. Okay, so electronic liability register. Now, whatever are your liabilities, you will record it. Whatever is the amount payable, be it taxes, be it interest, anything. Whatever is payable, please record it on the debit side of the liability register. Okay, record it on the debit side. And once you are paying it, please remove it by writing it on the credit side. See, you can pay off the liability from electronic cash ledger. So cash ledger you will debit and liability ledger you will credit. Or alternatively, credit ledger you will debit and liability ledger you will credit. Okay, this is how your liabilities will be paid. Now, ma'am, is there any sequence of paying the liability? So yes, first of all, you have to pay the self-assessed tax, not the demand tax, but the self-assessed tax of the previous period. Okay, previous months, previous quarter, whatever. pay it for the previous period. Then pay the self-assessed tax for the current period. And then if you have received any demand notice, etc., if there is any tax liability due, then pay the demand notice. Are you clear with this? Yes, simple everyone, manageable till here? Yes, and now after this, going on to the next section, that is section number 50. I hope till here it was clear for you everyone. Manageable till here? Yes. Let's start with the revision of section number 50. Okay, section number 50 talks about interest on delayed payment of tax. Section number 50 and rule number 88D. Okay, now let's do one thing. Section number 50 we will divide in 3 parts. Okay, section number 50 we will divide in 3 parts. Part number 1 is such a case where you have not filed your GSTR return on time. That is, you have not filed your GSTR return on or before the due date, and there is some tax payable. Okay, there is some tax payable and you have not even filed your return, means you have not even done the payment of the taxes, and you have filed the return belatedly. If you have filed the return belatedly and there is some tax payable, then can we say there will be some interest applicable there? Yes. Now, let's say your output tax payable is, let's say for example 1 lakh rupees, output tax payable 1 lakh rupees, and you have got some input tax credit, let's say of 60,000 rupees. Okay, so can we say this 60,000 we will use it against the output tax liability, and through cash ledger now we will have to pay balance 40,000. So interest will be attracted only on this balance 40,000. Okay, why is it not attracted on the gross 1 lakh rupee? Because out of 1 lakh, 60,000 ITC that you claimed, can we say that amount is anyway kept with the government? If that is kept with the government, then on that we are not liable to pay any interest. Therefore, interest will come only on the net liability. Okay, this interest will come at the rate of 18%, that is the interest rate at present, and this will come for what period now? Okay, it will come for what period? So whatever was the original due date, can we say by that date we should have done the payment, but we did not do the payment by that day. So immediately from the next day after the due date, immediately from the next day after the due date till the actual date of payment, from the next day after the due date till the actual date of payment, you will be liable to pay the interest. I hope I am very clear till here. Yes, this is the first part. This is the first part of interest. Okay, and then there was a small amendment here. Acha, let's say now in our case, whatever figures I gave you, 1 lakh rupees, 60,000, 40,000. Do you recollect the figures? Yes. Now in this case, let's say 40,000 was the net tax payable. What if you had deposited 40,000 in the electronic cash ledger before the due date of filing the return? Before the due date, you did not use that amount to pay the taxes and file the return, but you had deposited some amount in your from your bank account to the electronic cash ledger before the due date of filing the return. Means, can we say that amount is also kept with the government now? So, if that 40,000 was already deposited in the electronic cash ledger, and just the mistake that happened from you was you did not file the return, then in that case, can we say that 60,000 of ITC is anyway kept with the government? This 40,000 is also deposited in the electronic cash ledger. So in that case, no tax, no interest will be payable, because here the net tax liability will be considered as 0. Are you understanding this? Yes? Okay. Then after that, second part. Okay, second part is such a case where interest is payable. Okay, under the same subsection 1, the interest will be payable. But what mistake happened here is, the return which you had filed. Okay, the return, let's say for the month of April, the return for the month of April was due. You paid the taxes, you filed the return. Okay, whatever was the due date, as per the due date, you filed the return. But later you come to know that some transaction was missed. Maybe some transaction was missed in that particular return, or there is some tax payable pertaining to that return now. Pertaining to the month of April, there is some tax which is still due. Now the original return was filed on time, right? So the first part of interest will not be applicable. So for this they are telling that, okay, let's say later we realize that 30,000 rupees of tax was short paid. Okay, 30,000 rupees of tax was short paid. So now you will have to pay it. Okay, see, return was already filed earlier, that is gone. So now can we say for the further months, whenever you are filing the return, at that time you will pay this balance tax. So let's say 30,000 rupees was the tax short paid. So can we say interest will be applicable on this entire 30,000? Yes. So 30,000 multiplied by 18%, multiplied by what period? Again same period. The due date was that, right? The due date is already gone. So the day succeeding the due date, that is the day after the due date till the actual date of payment, you will have to pay the taxes. The only difference here is in the first one, we were paying the taxes, we were paying the interest on the net tax liability. Here we are going to pay the interest on the gross liability. Whatever amount is short paid, whatever total amount is short paid, on that you will be paying the interest. Are you clear till here? And the duration from where the interest meter is going to start, that remains the same for the first 2 points, right? And the last one is when is interest, in the third case, when is interest payable? So let's say if you have wrongly availed some ITC, okay, wrongly availed some ITC and wrongly utilized the ITC, availed also as well as utilized. See, government does not have any big issue with you if you simply wrongly avail the ITC. The problem will start when you start wrong utilization of ITC. So if you have wrongly utilized the ITC, then interest will be applicable same at the rate of 18%. Okay. Now interest will be applicable at the rate of 18% on the amount of ITC wrongly utilized. From what period to what period? Now see, they say that whenever you have wrongly utilized the ITC, you will have to pay it back to the government, you will have to reverse it back, right? So from the date of wrong utilization, till the date of reversal, from the date of wrong utilization till the date of reversal, you will have to pay interest at the rate of 18% on the amount of ITC wrongly utilized. Are you clear till here? Now the question arises, ma'am, what do you mean by date of wrong utilization? Now date of wrong, let's say I took wrong ITC in the month of April. Okay, I took wrong ITC in the month of April. So can we say when I filed the return for the month of April, at that time I wrongly utilized it? So whatever was the due date for the month of April, or the actual date of filing the return for April, whatever was the due date for April as per government, due date or the extended due date, sometimes government extend it, na? So whatever was the due date or the actual date of filing the return for that month, from there till the date of reversal, your interest is going to be applicable. Are you clear with this? Yes. So if you had filed the return, for that particular month, you wrongly utilized it. So from the due date or the actual date of filing the return till the date of wrong utilization, from there your interest meter is going to start, and at the rate of 18% it is going to be applicable. I hope I am very, very clear with this. Yes, the only thing here is, one thing that is very, very important is, you should have started utilizing that particular ITC. If you have not yet started utilizing that ITC, no interest. Okay, but if you have started utilizing that ITC, wrongly availed ITC, then the interest under section 50 is going to come up here. I hope I am very, very clear with this. Yes, we have got many questions in our question bank. You can just try the questions on this. Yes. Okay. In the book also we have got many questions coming up here. I hope I am clear till here, everyone. Yes. So this was all about your section number 50. And now going on to the last clarification. There were two things which they had clarified in the chapter. One was about wrong availment of ITC, the one that we just now discussed. Wrong availment of ITC. What happened in case of wrong availment of ITC? You should, if you have wrongly availed the ITC, you should not start utilizing that ITC. Now, when I use the word ITC will include everything. CGST also, SGST also, UTGST also, and IGST also. Okay, everything will come. Not only a particular type of tax credit, all the types of tax credit will come under the word ITC. That was the first clarification. But second clarification said that compensation says ITC will not come up here. Okay, compensation says ITC will not come up here because compensation says ITC can be used only for compensation says liability. Are you understanding till here? Manageable, simple? Yes, okay, it's done. Okay, so let's start with the super quick revision of the next chapter, that is TDS and TCS under GST. Yes, section number 51 and section number 52, as you already know. Now, whatever revision I'm taking, again, I'm taking from your notes itself, so that whenever you're studying from the notes, you can relate to the things which we are scrolling here during the lectures, and it will be very, very simple for you. Okay, let's start with the first one, section number 51, which talks about TDS under GST. Now, section number 51 says that whenever there is a supplier who is supplying some taxable goods or services to some specified recipients, then in that case, when the recipient is going to do the payment to the supplier, then he will be required to deduct TDS under GST, and then after deducting that TDS, he will be required to pay that TDS to the government, right? This was the basic funda. Now, ma'am, who should be the supplier? So, supplier can be any particular person. He should be supplying some taxable goods or taxable goods or services to the recipient. Now, the most important thing here is who should be the recipient. That is, who will be responsible for deducting the TDS, or we can say who will be the deductor. So, who will be the deductor? Let's try to understand that. Deductor can be any central government or state government department, any central government or state government establishment, but some ministries of defense will be excluded there. Okay, then there can be a local authority, then there can be governmental agencies, then there can be some other notified persons, like what? Like any notified body or notified board or notified authority which is set up by an act of Parliament, or any other person which is, or any other body, statutory body, or any other authority or board which is established by government. Okay, which is established by government with, if established by government, with how much? With 51% of their participation or control. So basically something that is under the control of the government, any such board or any such body or any such authority, right? Or any society which is established by the central government, any society which is established by the central government or the state government and which is registered under the Societies Registration Act. Okay, similarly, if the recipient is a PSU, public sector undertaking, then also TDS provisions will be applicable. And lastly, very important point here is, if the recipient is a registered person. Okay, if the recipient is a registered person who is going to receive metal scrap supplies, means the supplier is going to supply metal scrap to the recipient, and both of them are registered, then the TDS provisions will be applicable. Okay, so again I am repeating once again, who should be the recipient if we want to attract the TDS provisions, right? Who should be the recipient? So recipient can be any central government or state government department or establishment, or it can be any governmental agencies, or it can be any local authority, or it can be some notified persons. Now within notified persons, who are the 4 notified persons? First one, any authority, any board or any body which is set up by an act of Parliament. In this also 51% government participation is required, or any such authority, board or body which is established by government, means not necessary it is set up by an act of Parliament or state legislature, but any such authority, board or body which is set up by central government or state, by any government, central government or state government, with at least 51% participation. That is one thing. Or society established, registered under Society Registration Act, or PSU. And the last one was your registered person receiving supplies of metal scrap from another registered person. If these people are the recipient, then in that case TDS provisions will be applicable under GST under section number 51. Okay, but then there were 2 cases. There were 2 cases where TDS under GST provisions will not be applicable. First one, if there is any supply happening between 2 PSUs. Recipient is also PSU, supplier is also PSU, whether they are distinct persons or not doesn't matter. right? And the second one is if there is supplies between these four notified persons, then four notified persons, authority, body, board, last 4 points. If there is supplies of goods or services taking place between the persons mentioned in these clause A, B, C, D, then in that case also TDS provisions are not applicable. But very important exception here is if the supply pertains to metal scrap. Okay, if the supply pertains to metal scrap, even if it is done between these A, B, C, D kind of people, basically between two registered people, then in that case TDS provisions will be applicable. So they are not leaving the metal suppliers and the recipient from the purview of TDS, right? Now, supplier can be any person, recipient is the specified persons, supplier is supplying taxable goods or service to this recipient. This recipient, when he is doing the payment, okay, not when he is entering into the contract, but when he is doing the payment to the supplier, at that time he will be responsible to deduct TDS at the rate of total 2%. Whenever it is an intrastate supply, IGST TDS at the rate of 2%, or if it is intrastate, then CGST, SGST 1% TDS will be deducted. But for that there is a condition that the contract in which they have entered into, okay, the contract which they have entered into, that value of the contract or the value of taxable supplies in the contract should be exceeding more than rupees 2,50,000. If up to 2,50,000, if exactly equal to 2,50,000, then no TDS will be applicable. Okay, now there can be a possibility that initially you have entered into a contract of 2,50,000 and then you are slowly executing the contract and the payment is done in 50,000 rupees installment. TDS will be applicable. For TDS, you have to check the entire contract value. I hope I am very clear with this. Yes, and one very important exception we had studied was when is GST under TDS not applicable. So GST under TDS is TDS under GST is not applicable when the location of supplier and place of supply, is in one state, but location of recipient is in another state. So there will be practical issues of taking the credit, etc. So in this case, TDS provisions will not be applicable. I hope I am very clear till here, everyone. Yes. Okay, then this recipient will be deduct at the time of making the payment to the supplier. He will be deducting TDS from that. That TDS he will be going and depositing it with the government maximum by 10th of the next month. The month in which he is doing the deduction, next month ka 10th. Before that day, he will have to go and deposit it with the government, and then he will also be required to issue. He will also be required to issue a TDS certificate to the supplier so that the supplier can take the credit of the same, and once the supplier takes the credit of the same, it will be reflected in their electronic cash ledger. Do you recollect we had done this earlier also? Yes, these are the basic things that we had studied. And yes, any person who is liable to do TDS deduction, he will have to get himself compulsorily registered as a TDS deductor, that we have already studied under the registration chapter. Manageable till here, everyone? Yes. And this is the summary of the supply for metal scrap provisions. For this, I have already put a separate video on YouTube. So basically here we had combined the provisions of metal scrap pertaining to RCM registration and TDS provisions. Just remember one thing, okay? Now that we are doing TDS chapter, I am just explaining you that leg, that whenever there is a supply from one registered person to another registered person, then in that case, first of all, forward charge mechanism will be applicable. That is, normal tax on that supply. Normal tax will be paid by the supplier only under forward charge mechanism. But when the recipient is doing the payment to the supplier, at that time he will have to deduct the TDS. Okay, that part we are doing. And if you want to go through this, entire summary, then I have put a separate video for that. So this was all about your TDS provisions, overview of the TDS provisions. Then going ahead to the TCS provisions under GST section number 52. Okay, now here we have to, before we get into the TCS provisions, we need to recollect the provisions relating to ECO, which we had done in the charge of GST chapter. Do you recollect whenever the ECO was providing supply of, or whenever the supplier was providing notified services, five notified services through the e-commerce operator to the recipient, then in that case 9(5) was becoming applicable, and we had studied earlier that when 9(5) is applicable, then TCS provisions will never apply. Okay, so ma'am, when will TCS provisions apply? So whenever the supplier, see there is a supplier, then there is the eco, and then there is a recipient. Okay, eco is the in-between platform person. So when the supplier is supplying some goods, okay, when the supplier is supplying some goods through the eco, or when the supplier is supplying some other services through eco, not notified services, any other services through the eco to the recipient, then in such cases TCS provisions will be applicable, and eco will be responsible. Eco will be responsible to collect the TCS and remit it to the government. Are you clear with this? See, just try to understand this. Under section number 9.5, who was responsible to pay the tax? Entire tax was paid by the eco. Okay, entire tax on that supply was paid by the eco. So there is no question of TCS. Right? Eco was anyway doing all the reporting and he was paying all the taxes. But when eco is not paying the taxes, that is when 9.5 is not applicable, then in that case TCS provisions will be applicable, right? So again, when there is supply of goods or when there is supply of other than notified services through eco, then only when eco is there in between, only then the TCS provisions will apply. Let's say I am selling some product through my own website, then TCS provisions is not applicable. But when I am selling it through eco, at that time the TCS provisions will be applicable. TCS rate was amended some time back, so now the new TCS rate is total 0.5%. okay, that is 0.25% plus 0.25% CGST and SGST. Right? Now this amount of 0.5% or this rate will be applied on what? So this will be applied on the net value, okay, on the net value of supplies done through the e-commerce operator. Ma'am, now what do you mean by net value? So first of all, in case of net value that we take, that is the value of supplies, obviously excluding the taxes, okay, excluding the GST and excluding the cess, means the actual value, the basic value of goods or services that will be taken. And net value means, let's say there are some goods returned happened during that month, so that goods returned will be subtracted there. So net after sales return, whatever is the value done, on that the TCS provisions will be applicable. I hope I am very clear with this. Yes. Now, do you recollect that those 5 services, the 5 notified services, what were the 5 notified services? Transportation of passengers through motor cab, motor taxi, etc. Then second one was your accommodation services, then housekeeping services, then restaurant services in specified premises, and then last one was transportation of passengers through omnibus. Do you recollect that? When those 5 things were falling under section number 9.5, at that time eco was responsible to pay the tax. Okay, eco was responsible to pay the tax, so TCS provisions was not at all applicable, right? But when eco is not required to pay the tax, okay, when eco is not required to pay the tax, at that time TCS provisions will be applicable. Are you clear with this? Yes. And one very important point I want to tell you here, where the mistake happens. Okay, where the mistake happens, just try to understand this point. In case of accommodation service and housekeeping service, we had studied this in the eco, in that charge of GST during the eco provisions, that when the main supplier is registered, okay, when the main supplier is registered under GST, then in that case eco is not required to pay the tax. Okay, there the main supplier will pay the tax. If main supplier will pay the tax, then can I say 9.5 is not applicable? Yes, then in that case, can we say now TCS provisions will be applicable? So only under your accommodation services and housekeeping services, when the eco is not required to pay the tax, then at that time eco will be required to collect the TCS. Okay, so just don't blindly see accommodation, housekeeping, okay, 9.5 TCS not applicable. No. Okay, for those 2 points you have to be very clear. I hope I am clear till here, everyone. Yes. Now, what will be the rate of TCS? Rate of TCS will be, as I told you, 0.5%, 0.25, which will be calculated on net value of taxable supplies of goods and other services. Net value, net means after sales return, and value means obviously only the basic value of goods or services, not including the GST, cess, etc. Same applies for TDS also. For TDS also, what happened? For TDS also, when you check that contract value 2,50,000, that is excluding GST. Please remember, there cannot be TDS on GST, right? So it will be excluding the GST. Now, can we say here, see how the people are placed here. Can we say supplier is there, eco is there, and recipient is there. Recipient will be doing the payment to the eco. Eco will be passing on that payment. Eco will be passing on that payment to the supplier after deducting his commissions. Right now, when he is deducting his commission, at that time itself, he will be required to retain some amount of TCS. And when he is retaining this amount of TCS, this TCS, he will have to then go and deposit. He will have to then go and deposit it to the government again by 10th of the, on or before 10th of the next month. Are you clear with this? Yes, and one more important point is when you are calculating net value of supplies, there can be a possibility that in the current month, there was, let's say, a sales of 1 lakh rupee. From that, you have to subtract the sales return. Let's say the sales return pertains to the previous month. And by chance, the sales return has exceeded the actual sales. Sales return is more than the sales. Then can I say my net value will come in negative? So they are telling, ignore this negative. There cannot be any negative TCS. Okay, and you cannot even carry forward it to the next month. So there will be no TCS liability for the current month. Are you clear with this? Okay, now whatever TCS the eco is retaining and paying it to the government, that has to be paid by 10th of the next month, maximum by 10th of the next month. And eco will be liable to also file a monthly statement in form GSTR 8, in which he will be showing as to how much supplies was done through the e-commerce operator and all those details, right? Acha, another thing is, whenever eco is collecting this TCS from the supplier and paying it to the government, this cannot be paid by using electronic credit ledger. Okay, this has to be paid to the government using electronic cash ledger only. That is a compulsory thing. Please try to remember this point. Yes, okay. Eco is also required to file an annual statement, that is in form GSTR 9B, which will be filed till 31st of December of the next year. Let's say all the transactions of the current year that we have to report by 31st December of the next year. That talks about the annual statement. We'll study more about it when we do the returns chapter. I hope I am very clear till here, everyone. Yes, so these were the important pointers under your TCS. And the last one was a clarification which was issued where they say that let's say if there are multiple e-commerce operators, okay, let's say there is a supplier, then there is a supplier side e-commerce operator, then there is a buyer side e-commerce operator, and then there is the buyer. Okay, so can we see there are two ecos involved? If there are two ecos involved in the picture, then responsibility of TCS will be on whom? So responsibility of TCS will be on whom? It will be on the supplier side eco, because that person will be the person who is going to pass on the money to the supplier. Are you clear with this? So when there are multiple ecos, then the supplier side eco will be responsible for all the TCS provisions. I hope I'm very clear till here. Everyone done? Yes, simple, manageable. So I think within 15 to 20 minutes, maximum within 15 to 20 minutes, we have revised the entire TDS and TCS provisions. Yes, okay. Okay, so then let's start with the revision of the next chapter, that is returns. Returns under GST. Which all returns we are required to file, what are the due dates for the same, etc. We are going to study in this chapter. Now, let's start first with your GSTR1. Right? GSTR1 is a statement which shows all your outward supplies. All your outward supplies are reported in GSTR1. Now, who all are required to furnish this GSTR1? So every registered person under GST except for 6 people. Okay, that is except for ISD, except for NRTP, except for a composition scheme person, except for TDS, like tax deductor, except for tax collector, and except for the person who is supplying OIDR services. Leaving these 6 people, I'll just mark it on the board if you want. Okay, except for these 6 people. every registered person will be required to file, this GSTR1. Again, this is going to be filed on electronically on the GST common portal, or in some cases, if there is a facilitation center of the GST, then we can go to the facilitation center. If approved by the commissioner, then we can go and file the return there. The form in which it is filed, that is GSTR1. In GSTR1, it is required to be filed. Now, what is the due date, ma'am? So, due date depends upon, first of all, the periodicity. Now, GSTR1 has two periodicity, that is either you can file it on monthly basis or you can file it on quarterly basis. That depends on your GSTR3B, that depends on the GST return, that is GSTR3B. Whatever is your periodicity for GSTR3B, that is going to be the periodicity for GSTR1. Okay, so ma'am, who can opt for quarterly, who can opt for monthly, that we will do once we come to the GSTR3B. Right? Now, if you are filing your GSTR1 on monthly basis, then in that case, due date will be 11th of the next month. Right? And if you are filing your GSTR1 on quarterly basis, then your due date will be 13th of the month succeeding the quarter. That is, as soon as the quarter gets over, next month's 13th will be your due date for furnishing the GSTR1. Okay, benefit of putting the details in GSTR1. Now, whenever I as a supplier or I as a registered person, I am putting all my outward supplies in GSTR1, then in that case, correspondingly, can we say it will also get reflected in someone's purchases? Right, it will automatically get reflected in someone's purchases, and the other person will be getting the ITC on that basis. Right, okay, so that was the purpose. So from GSTR1, the data goes to GSTR2A and 2B, and then ultimately the data goes to GSTR3B also. This is how they have tried to do the automation. Okay, then going ahead to the invoice furnishing facility. You must have heard about it, IFF. IFF is mainly applicable only for the people who have opted for QRMP, that is quarterly return, monthly payment. If you have opted for QRMP, then IFF is one of the facility that is available to you. IFF stands for Invoice Furnishing Facility. Okay, now everyone who is filing the returns on quarterly basis, let's say I am filing my GSTR1 on quarterly basis, then can I say that will lead to delay in getting the ITC to the recipient? Like, I will be filing the returns of all the 3 months together, right? But my recipient will need the ITC on monthly basis. So for that purpose, the GST department is telling you that I know you are going to file the return on quarterly basis, but if there is any such person who needs the ITC early, then in that case, you can upload the details of the invoice in the invoice furnishing facility. Okay, now see, when we talk about 1 quarter, then in that case 3 months are there. So for the first 2 months, of the quarter, you can use this IFF and you can report your B2B invoices. Okay, you can report your B2B invoices in this IFF. Yes? Right, so the details of the first 2 quarters will be put in the IFF, and once you put the details in the IFF, it will be automatically reflected in the recipient's GSTR2A and GSTR2B, mainly GSTR2B, so that he can get the credit of the same. IFF facility is not available for the 3rd month of the quarter, because anyway now you are going to, after the 3rd month gets over, anyway you are going to file your GSTR1. Okay, and this IFF is not mandatory. It is just an optional facility given to you if you want to furnish your B2B invoices details in the IFF so that your recipient will get the ITC early, then in that case you can go ahead with the same. I hope I am very clear with this, everyone. And yes, whatever details you have already put in your IFF, you need not repeat the same details in GSTR1. That is very logical. Right, now there will be a few people who will be debarred. Okay, important answer. There will be a few people who will be debarred from furnishing details of the outward supplies or outward supplies in the GSTR1 and the IFF. Means you have done some kind of a default and then the system is not allowing you to put the details in GSTR1 or the IFF. So in that case, they have listed 5 such cases. Okay, the first case is, let's say if you are a monthly return filer and if you have not filed your GSTR3B, okay, the final return, if you have not filed your GSTR3B for the preceding month, then in that case you cannot file your GSTR1 for the current month. Okay, that is one thing. Another thing, let's say if you have opted for the QRMP scheme and if you have not furnished GSTR 3B for the preceding period, okay, then for the preceding period, then in that case you cannot file your GSTR 1 for the current period, or you cannot furnish the details in your IFF also. Another thing, let's say if there is some difference in liability between form GSTR 1 and form GSTR 3B, that is, let's say the tax liability in your outward supplies in GSTR 1 is more than your outward supplies in GSTR 3B. See, in GSTR 3B now we are going to calculate our final tax payable, etc. also. So in GSTR 3B purposely I have shown my sales less, and in GSTR 1 I have shown it more. Can we say there is going to be a difference in liability? Then in such a case, as per rule number 88C, either you have to pay the difference in the tax liability, or you have to explain the difference to the GST portal, to the GST department within a time period of 7 days. Okay, if you have not even paid the differential liability and you haven't given any explanation also, then in such a case you will be debarred. Okay, similarly, if there is any difference in the ITC that you are claiming and the ITC which is shown in your GSTR 2B, if there is any difference, so again you have two solutions. First is you either pay the difference or reverse back the difference, or secondly you give the explanation. If you have not done both of it, then in that case, as per rule number 88D, so in that case you will be again debarred. And the last one is, if you have not furnished your bank details as studied in our registration chapter, if you have not furnished the details of a valid bank account, then in that case you will not be allowed to furnish your GSTR 1 or IF. I hope I am very clear with this. Yes. Okay. Now the due dates that we had already studied, 11th of the next month, 13th of the month succeeding the quarter, etc. Can we say GSTR 1 can be filed only after that month is over, or only after that quarter is over? Let's say I am a monthly filer. Okay. So for the month of April, from 1st April to 30th April, I have to report this particular data. So this reporting cannot be done during the month of April. This can be done only after the month ends. So from 1st May you can start filling the details, right? So before the end of the current tax period, you cannot furnish your GSTR 1 except in two cases. First case is if you are a casual taxpayer and if your business has closed in between, right? And second one is if your registration has been cancelled. In case of cancellation of registration, it can be done even before the current tax period. I hope I am very clear with this, everyone. Yes, these are small pocket areas which can be tested. Okay. Then after that, what are the contents? What are the contents of GSTR 1? So your basic details will be there. B2B invoices will be there. B2C invoice details will be there. Then your the documents which are issued, those will be there. Debit note, credit note details will be there. Amendment tables will be there. Then your advances received, advances paid, etc. or advances received or advances adjusted, those details will also be there in the GSTR 1, right? Okay, then after that, another thing is, now when you are furnishing your IFF, okay, I have already told you about this. When you are furnishing your IFF, in that not all the invoices should be posted, only the B2B invoices, because the purpose of IFF was to give the credit early to the recipient. So B2C will anyway not be taking the credit. So only B2B invoices will be put in the IFF. Right, B2B invoices and its corresponding debit and credit notes that can be posted in your IFF, so that it is easy for the recipient to take the ITC of the same. Right, now when we talk about your GSTR 1, so what will be furnished in your GSTR 1? So all the details of the invoices and the revised invoices, okay, all those like B2B also, B2C also, debit notes also, credit notes also, all those details will be put in your GSTR 1. Okay, GSTR 1A we will study. I'll tell you those points related to that later on. Now, when you are putting the details in your GSTR 1, are you supposed to put invoice wise detail like 1111 invoice details, or are you supposed to put all the details? So they are telling that, see, whenever you are doing B2B supplies. Okay, B2B supplies, be it interstate or be it intrastate, doesn't matter. You have to furnish the details invoice wise. Okay, you have to furnish the details invoice wise, because only then that person will be able to take the credit of the same. Right. Now when we talk about B2C, in case of B2C, if it is interstate, other state, if it is interstate, and if the invoice value exceeds rupees 1 lakh, okay, if the invoice value exceeds rupees 1 lakh and if it is B2C interstate, then in that case you have to again furnish invoice wise details. Okay, I know here the recipient is not going to take the credit of the same, but because the invoice value exceeds rupees 1 lakh, then in the case of B2C interstate, you have to put the details invoice wise. Okay, now what about rest of it? So rest of it you can do the consolidation. That is, now what is left? Can we say interstate B2C where the invoice value is up to 1 lakh, that is left? So if interstate B2C invoice value up to rupees 1 lakh, so in that case for every state sales that you have done, state wise and within that rate wise, okay, state wise as well as rate wise, you can furnish the information. And lastly, intrastate B2C, you can just consolidate it, and rate wise you can just furnish the information. I hope I am very clear till here, everyone. Yes, so invoice wise, within invoice wise, what is going to come? First of all B2B is going to come, and B2C interstate invoice value more than rupees 1 lakh, that will be coming here. I hope I am very clear with this. Yes. Okay. Yes, and whenever we are discussing about putting the invoice details, means you are not uploading the invoice, you are just filling the invoice details in the return. Now again, are we supposed to report the HSN also in the GSTR1? So yes, HSN is also required to be reported. HSN requirement is same that is there in the invoicing. That is, if your aggregate turnover, annual aggregate turnover in the preceding financial year, if that is up to 5 crore, then 4 digits. If it is more than 5 crore, then 6 digits, right? And one more bifurcation. If it is up to rupees 5 crore, for B2B it is 4 digits, for B2C it is optional whether you want to report or not. Are you understanding this? Yes. Okay. Then going ahead about the new return, that is new statement, that is GSTR1. Okay. Suppose if we have filed our GSTR amendment document is GSTR 1A. Okay, that is what we are going to study here. Now, let's say I have already filed my GSTR 1. Okay, and after filing the GSTR 1, I realize that there is some mistake. Okay, there is maybe some more amount is shown or less amount, whatever. There is some mistake in the GSTR 1 that I have furnished. Then in that case, for that period before filing the GSTR 3B, I have an option to file the GSTR 1A, and whatever are the corrections, I can show it in my GSTR 1A. So this is a quick solution, right? Like quickly, let's say I filed it on 11th and let's say on 12th I realized that there is a mistake. So till now I would not have filed my GSTR 3B. So in that case, immediately what I can do is I can file the GSTR 1A for that particular tax period. But yes, mind you, whatever details you are putting in your GSTR 1A, that will not be reflected in the GSTR 2B of the recipient for the same month. It will be reflected for the next month. Are you understanding this? It will be reflected for the next month. It will not be reflected in the GSTR 2B for the current month itself, right? And this option is available only once for a particular tax period. For one tax period, you can file GSTR 1A only once. I hope I am very clear with this, everyone. Yes, again it will be filed electronically only. There is no other way for that. Are you understanding this? Yes. So whenever you are a monthly filer, then whatever is the due date of filing the GSTR 3B for that particular month, before that you have to do this GSTR 1A, so that the correction will be automatically accumulated in your GSTR 3B. Are you understanding this? Yes. Okay. Now going ahead, What about prior period amendments? Now see, GSTR 1A that you are filing now is going to be for the current tax period only. Okay, later if I realize, oh, there was a mistake for that particular month or that particular quarter, then that cannot be rectified by way of GSTR 1A. For that you will have to use the amendment tables. Okay, for that you will have to use the amendment tables, and then you will have to do the rectification, right? And the maximum time period within which such rectification is possible is in whichever year that mistake was there, that year ends. From that year end, the next 30th November. So 30th November after the year end or the date of filing the annual return, whichever is earlier. This is going to be the last date for the correction. Are you understanding this? Yes, and a very, very important thing, that is, even if you do not have any entry, okay, even if there are no entries in the tables of GSTR1, even if there are no transactions during the particular tax period, still if you are a registered person, you have to continue filing your nil GSTR1, that is mandatory. If you do not have the access to the portal, etc., as of now, they have given you the SMS facility. You can use the SMS facility and you can still file the nil return, but filing that is mandatory. If you do not do it, then late fees will be applicable. I hope I am clear with this, everyone. Yes. Okay. Then after that, due date we have already studied. 11th of the next month, 13th after the quarter ends, etc. That is the normal due dates for filing it. But if you are not filing it and if you are delaying it, etc., then maximum you have to file it within a time period of 3 years from the due date of furnishing such details. That is 3 years from the due date, 3 years from the original due date. Within that much time, you have to compulsorily furnish the GSTR 1. Okay, after that the portal will not allow you to file it. I hope I am clear till here, everyone. Yes, this was mainly about your section number 37, which was mainly talking about GSTR 1. Yes, now going on to the next section, that is section number 38, where they are talking about receiving the ITC or receiving the input tax credit. So in GSTR 2A, all your inward supplies, okay, all your purchases, all your inward supplies will be reflected, and this is a read-only statement, and this statement is updated on real-time basis. As someone files the GSTR 1 or 1A, it will automatically keep on coming in GSTR 2A. Okay, now the most important document here is your GSTR 2B. GSTR 2B is such a statement. First of all, it is a static statement. Okay, it gets generated on a particular day. It is a static statement in which your ITC will be reflected. Okay, based on the information, if someone would have filed the information in GSTR 1 or 1A, on that basis, the data will come in your GSTR 2B, and only on the basis of GSTR 2B, you can take the input tax credit of the same. I hope I am very clear with this. Yes, so someone is putting the details in GSTR 1, that data will come to you. Someone is putting the details in IFF, that details will come to you. Someone is putting the details, or someone is rectifying the details by way of GSTR 1A, even that data will be reflected in your GSTR 2B, and it is generated only once in a month. Okay, it is a static statement. On a particular day only it can be downloaded, and it is not updated on real-time basis. I hope I am very, very clear with this, everyone. Yes, now ma'am, it will, first of all, it is generated on which day, it is made available on which date, and secondly, it will contain the data for which period. Okay, so now let's say we are talking about, let's say if the supplier, let's say if someone has filed the return on monthly basis, okay, on monthly basis, then can we say GSTR 1 that person would have filed, GSTR 1 that person would have filed by 11th of the next month, right? So, now if someone is filing the return on quarterly basis, then in that case, he will be filing the GSTR 1, and for the first 2 months, he can even file the IFF. Now, again, the time limit for filing the IFF is 13th of the next month, and for quarterly also, once the quarter gets over, can we say in that also, the return will be filed on 13th of the next month when the quarter gets over. So can we say maximum till 13th, of the next month, the data should come, like till 13th, the data should come in your GSTR 2B. So the system is going to wait till 13th of the next month, and immediately on 14th of every month, on 14th of every month, the GSTR2B will be available for download so that you can take the ITC. Okay, this is common for all. On 14th of every month, GSTR2B will be available for download. Now, ma'am, in this GSTR2B, the data will be from which date to which date? So, whatever data was filled till 13th, can we say that data will be there in this GSTR2B? Right? So, we can say in case of quarterly, whatever details was filled till 13th, or can we say 14th of the last month? From 14th of the last month till 13th of the current month, can we say whatever data is filled during this month, that will be available in your GSTR2B? Similarly, in case of monthly people, can we say all the data filled till 11th of the current month? From when? From 12th of the last month. See, till 11th, whatever data you are filling, that will be available in GSTR2B for the previous month, right? So, from 12th of the last month till 11th of the current month, whatever data you are filling, that will be available in the GSTR2B. I hope you are very, very clear with this, everyone. Yes? Okay. So this was the time, first of all, this was the date on which the GSTR2B is made available, and whatever data is filled during this date. Okay, whatever data is filled during this date, that data will be available in your GSTR2. Are you understanding with this? Yes? Chalo, then let's go to the next returns, everyone. Now comes the most important return, that is your GSTR3B. Now, who is required to file your GSTR3B? Same as GSTR1. Every registered person except for those 6 people will be required to file your GSTR3B. This is just like a summary. Okay, in your GSTR3B, the data comes from 2 places mainly. One is your GSTR1 and second one is your GSTR2B. And GSTR2A obviously. So, can we say in this case, all your outward supplies will be shown in GSTR3B, all your inward supplies will be shown in GSTR3B, all your ITC will be shown in GSTR3B. So ultimately it is going to give you a full summary as to how much amount of outward taxes payable, how much is the ITC available, and how much is the balance tax payable. Everything will be shown in this GSTR3B. Okay, now GSTR3B, again, like I told you, it can be filed on monthly basis or quarterly basis. Whoever is filing on monthly basis, the due date is 20th of the next month. GSTR1 due date was 11th of the next month. 3B due date is 20th of the next month. Similarly, for quarterly people, for those who have opted for QRMP scheme, the due date can be 22nd or 24th of the month after the quarter ends, 22 or 24, depending upon where your registered office is. Okay, depending upon the states, they have given 2 due dates, some states 22, some states 24. Okay, GSTR1 due date for quarterly was 13th, and GSTR3B is 22 or 24. Okay, now ma'am, can you elaborate more on this QRMP? So QRMP is such a scheme where the government says that okay, if you are a small person, kind of a person, then in that case you can file your returns on quarterly basis. Ma'am, how small? So QRMP scheme can be opted by those taxpayers who are having aggregate annual turnover, single pan, one pan, multiple offices, all the turnover taken together, if that is up to rupees 5 crore. Okay, if that is up to rupees 5 crore in the preceding financial year, then that person can opt for filing the returns on quarterly basis, but they will have to pay the tax to the government on monthly basis, right? So can we say because of this there will be a reduction of burden, on the taxpayer, because instead of 12 monthly returns they will have to file only 4 returns in a year. Yes, and one very good thing that they have told here is QRMP scheme can be selected GSTIN wise. Now let's say I am registered in the state of Maharashtra and I have my another office in, let's say, in Tamil Nadu. Then in that case we both are distinct persons. Okay, but in that case, one of my office can select QRMP, another can go for monthly, no issues in that. See, government will not have much issues here because anyway it is going to receive the payment on monthly basis. I hope I am very, very clear with this. So up to 5 crore QRMP, if more than 5 crore, then you will have to go for the monthly basis only. Are you understanding this? Okay, and then there will be a see, once let's say initially you were there under monthly system and now you want to come under QRMP, so you will have to choose that option on the GST portal that you want to come for the QRMP, and for that there is a window that is open. Okay, there is a time frame, there is a window that is going to be open. So what is that window? What is that window? So for whichever quarter you want to opt, okay, for let's say you want to opt for April to June, okay, so then you will have to go to the preceding quarter. Okay, you have to go to the preceding quarter, second month of the preceding quarter. Second month of the preceding quarter, can we say we are talking about April to June, so preceding quarter will be Jan to March. So from 1st of February, second month February, so from 1st of February till first month of this quarter end. First month of this quarter, first month means can we say April, and month end, so till 30th April. So from 1st Feb to 30th April you will have the option on the GST portal to choose for the QRMP scheme. I hope I am very clear with this. So first day of the second quarter, first day of the second month of the preceding quarter till the last day of the first month of the current quarter, this is the time period during which you will have to choose for the QRMP scheme on the portal, and you don't have to keep on choosing every now and then. Once you have chosen for QRMP, you can continue with that till the time your aggregate turnover exceeds rupees 5 crore, or if you voluntarily want to come for monthly scheme, then that is a different thing. Otherwise you can continue under the QRMP scheme, right? And as soon as during a particular quarter your turnover exceeds rupees 5 crore, then in that case you will have to automatically start filing your returns on monthly basis. Are you understanding this? Nil GSTR 3B is required to be filed in the same manner just like we did for our nil GSTR 1, and same way normal due dates are given to you, but max it has to be filed within a time period of 3 years from the original due date. I hope I am clear till here. Yes, and another thing is, what about rectification? So first of all, please understand there is no concept of revised GSTR 3B etc. So if you want to do any changes, it can be again done through the amendment tables only. Are you understanding this? And yes, if suppose the authorities have found out, something about the incorrect details that you have put in the return or during scrutiny, during inspection, then you are not allowed to now do the rectification. Okay, imagine the government finds out some issues and then you say, okay, no problem sir, I will revise it. No, not allowed. Okay, only when you yourself have discovered some issue, only then you can do the rectification. Yes, and again the time limit for rectification is same, 30th November after the year end, or annual date of filing the annual return, whichever is early. I hope I am clear till here. Yes, now let's go to the other returns everyone. Now GSTR 4, okay, GSTR 1, 2A, 2B, 3B is done. Now going ahead, that is GSTR 4, which talks about composition supplier. So any person who has opted for the composition scheme, that person will have to again pay the taxes on quarterly basis by using a return called as GST CMP 08. GST CMP stands for composition 08. This will be filed on quarterly basis. This is mainly for payment of tax. Okay, and as soon as the quarter gets over, next month 18th, okay, by 18th of the next month you have to file this particular return. And once all this tax payment etc is done, once all these things are done and once the year ends, then you will have to file the annual return also. That will be in form GSTR 4, and that has to be filed till 30th June. Okay, 30th June after the year gets over. Are you understanding this? Yes? Okay. Again, these people are required to file nil return. Composition taxpayers are required to file nil return, just like we have studied for GSTR 1 and GSTR 3B also. Yes, and even if earlier you were there as a regular person and now you have come into composition, still now you will have to file the old period's return also. You have to complete filing that, and then you will have to continue with the return filing under the composition scheme. And similarly, if you are now exiting from composition scheme, that is you're going from composition to the regular one, then also you have to finish filing the returns under the composition scheme. Some more returns, everyone. GSTR 5. GSTR 5. 4 we have already done. GSTR 5 talks about NRTP return. NRTP is required to file the return on monthly basis, right? By 13th of the next month or within 7 days from the date when the registration is going to get over. Suppose if it is the last month return, then within 7 days from the end of the registration. And rules say that you have to, instead of by 13th of the next month, you have to file it by 20th of the next month. Yes, similarly GSTR 6, which is applicable for ISD, Import Service Distributor. Okay, they will also have to file the return in form number GSTR 6, in which they will disclose all the details about the credit taken and the credit distributed. That has to be filed by 13th of the next month. Okay, and yes, nil return for them is mandatory. Please remember, nil return for ISD is mandatory. Then going on to TDS. TDS deductor is required to deduct the TDS and paid by 10th of the next month. So when they are paying, at that time they will have to file the return also, that is GSTR 7. That has to be filed on or before 10th of the next month, right? Even if there was no tax deducted, then to nil return filing is mandatory. Then going on to GSTR 8, which was talking about TCS. When ECO was collecting the TCS, again he will have to collect that TCS and pay to the government on or before 10th of the next month. Nil return here is not mandatory, right? And the last one, that is GSTR 5A. GSTR 5A talks about return which is filed by the OIDR service provider who is situated outside India, and if he is providing the services in India to a NTOR, non-taxable online recipient. So they will have to file the returns by 20th of the next month, and nil return here is mandatory. I hope I am clear till here, everyone. Yes, and now I am again jumping to few other returns, final return, etc., which we had done towards the end of the chapter. Yes, so final return. Who is required to file the first return? First of all, first return will be filed. First return will be filed again by every registered person. As soon as this turnover exceeds the threshold limit, he is liable for registration. Do you recollect we had studied something about revised tax invoices? It has to be issued from a particular period till a particular period. So can we say these people will be filing their first return, and when they are filing when they are filing their first return, in that first return they will have to put all the details of their revised tax invoices, ITC available, and so on and so forth. Okay, then going on to GSTR 9. GSTR 9 is nothing but the annual return. Annual return is not required to be filed by 5 people. Casual taxable person, NRTP, Input Service Distributor, TDS, TCS. We can take it as 2 points, and the last one is any department of central government, state government, local authority whose books are audited by the CAG. Right? These people are not required to file the annual return. Apart from that, everyone will be filing their annual return, and the due date of filing the annual return is going to be 31st of December of the next year. And yes, whoever's turnover does not exceed rupees 2 crore, they are now exempted from filing the annual return. It is going to go in GSTR 9 through a common portal, right? Similarly, ECOs who are collecting the TCS, they will be required to file an annual statement in form number GSTR 9B by 31st December of the next year again. Right? And yes, whoever's aggregate turnover in the current financial year exceeds rupees 5 crores, they will have to file a self-certified reconciliation statement where they will be reconciling their books of accounts with the figures available on the GST portal. Right? Again, same people, casual taxable person, NRTP, ISD, TDS, TCS, government department or local authority. These people are not required to file this self-certified reconciliation statement in form number GSTR 9C. That is not required. I hope I am very, very clear with this. So just don't make a mistake here. Figures are different. For annual return, whenever you are checking the figure, you have to check it for the current financial year. Same applies for the self-certified reconciliation statement. I hope I am clear till here. Then going on to the next one, that is final return. What did we study for final return? Any person whose registration has been cancelled is now required to furnish a final return in GSTR 10 through the common portal, and that has to be filed within 3 months within 3 months of two dates. Which are these two dates? Date of cancellation or date of order of cancellation, whichever is later. From here, within a time period of 3 months. From here, within a time period of 3 months, we will have to file the final return. Right? And last is the persons who are having UIN. They will have to file the return in GSTR 11. Okay. Now let's say Indian embassies or United Nations, etc. Whoever is having their offices here in India, whenever they are taking any supplies from us, can I say we would have charged GST to them? So they will want the refund of the GST. For taking that refund of GST, they will have to file the GSTR 11. I hope I am clear till here, everyone. Till here, basically, all your returns, all the types of GST returns are done. Right? Now I am going on to the left out parts in the chapter, everyone. That is due date. Due date for payment of tax was one of the things that we had left in between. Here it is. Due date for payment of tax. That is, what is the due date of payment of tax? So when we talk about GSTR 3B, monthly people, okay, GSTR 3B monthly people, the due date of filing the return is linked with due date of payment. Do you recollect what was the due date for payment, due date for filing the GSTR 3B? In case of monthly returns, it was 20th of the next month. So 20th will also become the due date for payment. Same way for TDS and TDS, GSTR 7 and GSTR 8, even that is linked with the payment. Okay, for composition also, GSTR CMP 08, that quarterly basis 18th of the next month, that will be the time period for payment of taxes. Now coming on to GSTR 3B quarterly. When you are filing the GSTR 3B on quarterly basis, so for the first month and for the second month, the due date is going to be 25th of the next month, and for the third month, it is going to be linked to the return, that is 22nd or 24th of the next month. This is going to be the due date for payment in case you are filing your GSTR 3B on quarterly basis, right? Okay. Then again, NRTP. Okay, for NRTP, again the due date is linked with the payment. Due date for payment is linked with due date of filing the return. For NRTP, we studied 13th of the next month or 7 days from the end of registration. Whatever was the due date for filing the return, same will be the due date for making the payment. And yes, please don't forget, we have studied NRTP and casual taxable people are required to deposit some amount of advance tax because their registration is going to be a temporary registration. Are you understanding this? Yes. Now, what are the options available? What are the options available for making the payment? See, other people, they will have to use their electronic cash ledger to do the payment. Now, for QRMP people, there are two options available. One is fixed sum method and second one is self-assessment method. When we talk about fixed sum method, means you will have to pay a fixed amount. You will have to pay a fixed amount of tax. Now, let's say if you had filed your return on quarterly basis for the previous period, then whatever amount of tax you had paid during the last quarter, multiplied by 35%. Multiplied by 35%. This is the amount of tax that you have to pay compulsorily for the current period. Okay, suppose if you had filed the returns on the monthly basis, if you had filed the return on monthly basis for the previous period, then whatever was the total amount of tax into 100%, that much amount of fixed sum of tax you will have to pay. Okay, this is for the first 2 months of the quarter. This is for the first 2 months of the quarter. For third quarter, for third month of the quarter, anyway you can do the self-assessment and then you will have to pay the taxes. And if you have paid this much amount, okay, if you have paid this much amount, then in that case, they cannot even collect interest from you, right? Later, if we come to know that there is some shortage, etc., they cannot collect any interest from you because this is the amount which the system had calculated for you. Okay, whereas when we go for self-assessment method, you are assessing how much is your output tax payable, how much is your ITC, and then you take out the balance amount and then you do the payment of the taxes. Okay, so in that case, if there is a shortfall, then you will be liable to pay the interest. I hope I am very, very clear with this, everyone. Yes, so your this thing, fixed sum method is done, self-assessment is done, interest discussion we have already done, right? Then after that, going ahead, that is, what if there is any default in furnishing the GST return? So they will be issued a notice. You have to reply to the notice within a time period of 15 days, file the return or give some explanation. If not, then the interest, penalty, late fee, etc. will get started. Now, what is the late fee for filing the return? They have prescribed the late fees for different types of return. Different late fees are applicable, right? Okay, and then I am going to the GSTP. Goods and service tax practitioner. In case of goods and service tax practitioner, he is such a person. He is such a person who is approved by the GST department or who is approved by the common portal to act as a GSTP. So GSTP is basically, he is a qualified person who is also clearing some examination conducted by NACIN, right? And after that, he is eligible to have clients, and then he can work on behalf of the clients. He can file the returns on behalf of the client. He can do the registration amendment. All these things can be done by the GSTP, and he need not use the user ID and password of the client to do the work. He will be using his own GST user ID and password. So now what is the basic criteria? Basic criteria is he should be an Indian citizen, right? He should be a person of sound mind. He should be not adjudicated as an insolvent. He should not be convicted by any court, and he should be fulfilling certain qualifications. Yes. Now, what are the qualifications that they require? So, out of any three, you can fulfill any one. That is either a retired tax department officer having worked for at least 2 years with a rank of not less than Group B gazetted officer, or say, already enrolled as a sales tax practitioner or a tax return preparer under the indirect tax law for a period of at least 5 years, or if he has any of the below qualification. Now, within qualification, out of these 5, he can be any one. Either he is a degree holder or a PG degree holder under any of the fields like commerce, business management, business administration, etc., or equivalent foreign degree, or he has cleared any examination conducted by the government for that behalf, or if he has cleared any degree examination of Indian university or any foreign university recognized, right? And last, if he has passed the final exam conducted by our institute, ICAI or ICSI or Cost Accountants of India, then in that case, just having this degree is not sufficient. He will have to get himself enrolled as a GSTP, and he will have to clear the examinations conducted by NACIN, and only then he can act as a GSTP. Right now, what all things he can do? So he can file the GSTR1, he can file the GSTR3B, he can generate the Eway bill, he can do the amendment or cancellation of enrollment, he can opt for composition scheme, he can withdraw from the composition scheme. But for a couple of things, you will need extra approval from the taxpayer, that is for filing a refund application, and whenever you are amending or cancelling your registration, at that time also you will need prior approval from the taxpayer. Then you can even appear before the department as an authorized representative, okay, if the case is into appeals, etc. All these things can be done by the GSTP. I hope I am very clear with this, everyone. Yes, and this is how the GSTP works. So first, you will have to, if you want to become a GSTP, you will have to apply on the GST portal. Then your application will be scrutinized. If everything is okay, then you can qualify as a GSTP. If your application is rejected, then in that case they will give you the reasons why they have rejected it, and till the time they reject it, till that time you can validly hold the position of a GSTP. And yes, just like I told you, NACIN examinations you have to clear, only then you will be considered as a GSTP. And even if you were enrolled as a tax practitioner under the old law, still you have to clear the exams conducted by NACIN within a time period of 30 months. Okay, so if you were there under the old law, and now if you want to continue under the old law, you can continue for a time period of 30 months. And if you want to continue further, then within these 30 months you have to clear the examinations conducted by the NACIN. I hope I am very clear with this, everyone. Yes, so this was all about your GSTPs. I hope I am very clear till here, everyone. Yes, manageable.